Birla Navya Avik Phase 2 project in Gurugram, and this JV has got all the approvals from the regulator in Haryana. So keep an eye on these stocks.
Thank you so much for that, Sudarshan. A whole host of stocks in focus on the back of news flow. On that note, we're going to slip into a very short break. Up next, US President Donald Trump's details and his plans to impose tariffs on auto pharma imports. Let's watch out for that. We'll give you more on this update after the break. Welcome back. Thanks for staying tuned into Power Breakfast on CNBC-TV18. Let's move on in a fresh development on the US SEC investigation on the Adanis over an alleged securities fraud and a $265 million bribery scheme. The SEC has sought assistance from India's Ministry of Law and Justice under the Hague Service Convention to serve its complaint to Gautam Adani, Sagar Adani, and a letter has been accessed by Reuters. And what it's saying is that the SEC in its letter has stated that they have served notice of the lawsuit to the group and their lawyers, and it will continue its efforts to serve the defendants. And in some major political and geopolitical updates coming in, officials from the United States and Russia met in Saudi Arabia to discuss the prospects of ending the war in Ukraine. Notably, there were no officials from Ukraine or Europe to represent at the meeting. In a major shift in their approach to the war, both countries have agreed to explore economic and investment opportunities that could arise from ending the war in Ukraine. Now, US President Donald Trump's recent comments had also suggested that Ukraine supplies the United States with rare earth metals in exchange for aid. Meanwhile, speaking to the reporters, Ukrainian President Zelensky said that they would not accept the results of talks on ending the war with Russia that were held without presence of the Ukrainian at the table. Let's also listen in to Donald Trump's comments on the same.
Much more confident. They were very good. Russia wants to do something. They want to stop the savage barbarianism. I mean, what's going on over there? It's soldiers are being killed by the thousands on a weekly basis. It's ridiculous. Well, I think I'm really disappointed in what's happened. I've been watching this for 3 years. It's a war that would have never happened if I was president, and I've been watching these people being killed at levels that you've rarely seen, not even close, since the Second World War. And I'm very disappointed. I hear that, they're upset about not having a seat. Well, they've had a seat for 3 years and a long time before that. This could have been settled very easily.
Okay, that was the word coming in from the President of the United States. But on that note, we're going to slip into a very short break. Up next, we have Manisha Gupta, who will tell us what's happening in the world of commodities. So stay tuned in for that.
Good to see you. Have you been?
Very good. One of those massive roads today.
So much longer, much more. For 2025, it's going to very one time.
Let's talk about Canva's startup story.
220 million people that use Canva as a product as well. They launched with 5 languages in 2016. They then ratcheted that up to 100 languages in 2017, including Hindi, Tamil. I think India could be huge, so it's our 4th biggest market at the moment. I think it could reach the #1 position, very soon. We've been able to move large parts of the company towards thinking in an AI-first manner.
Interesting.
24 million right now. So,
Breaking news. The last few years have really been about the shiny objects, and 2025 is probably going to be much more about real use cases.
we've now matured our ML and our AI teams to adapt to this new technology, and we've pivoted every product team inside Canva now to think AI first.
India and the Gulf Cooperation Council, we are at this moment negotiating about having a free trade agreement. As far as Qatar is concerned, both sides are exploring the possibility of signing a free trade agreement in future, and that was one of the discussions that took place in this round of talks. As far as the strategic partnership establishment agreement is concerned, it actually elevates the present state of bilateral relations to a strategic level. What we are looking at is deepening cooperation in the fields of trade, energy, investment, security, as well as in the regional and international fora. As you know, within the GCC, India has got signed strategic partnerships with UAE, Saudi Arabia, Oman.
Welcome back. Thanks for staying tuned into CNBC TV18. Let's move on and go across to Manisha, who's waiting by to tell us what's happening in the world of commodities. What are we watching out for today? Manisha, crude continues to be in focus.
Well, it does, yes, Vinny, because it's a third straight day of gains into this one. The drone attack on Russian pump station has added premium to prices. And then Russia and US also are engaged in diplomatic talks to end Ukraine war. So markets are waiting for what comes out of that. In the meanwhile, it is also about OPEC and allies, which are yet to decide on how they want the month of April. Are they going to increase production or not is something that the street will take cues from. In the meanwhile, a cold snap in US also has hit supplies, and that seems to be supporting the crude oil prices right now. But I want to quickly touch upon metals also, because we've seen some gains in pockets here. Gold is very close to its all-time highs. Silver prices gained up by 2% overnight. Aluminum is trading at a 1-month highs. Iron ore prices at a 4-month high. So we are looking at gains coming back into metals in a very strong way as well.
Okay, surely keeping an eye out on the metal space as well. Thanks so much for that, Manisha, and thank you so much for the update on crude as well. But let's move on now and talk about the latest update that we have coming in. As Prime Minister Modi held a summit with visiting the Emir of Qatar, both nations have agreed to elevate the trade relationships to a bilateral strategic partnership in this meeting. Trade, investment and energy were the key focus areas of discussion. Both countries committed to doubling the bilateral trade to $28 billion within the next 5 years. Listen in to Arun Kumar Chatterjee, Overseas India Affairs Secretary, on the India-Qatar partnership.
Both sides have today agreed to elevate the relationship to a strategic partnership, and India and Qatar have signed an agreement in this regard today. Trade, investment and energy were among the major topics of discussion between the two leaders today. The trade today between India and Qatar is about $14 billion annually. Both sides have agreed to set a target to double this in the next 5 years.
And moving on, the Supreme Court will hear a petition today challenging the new law of Election Commission's appointment. Now, the petition was filed by the Association of Democratic Reforms after opposition leader Rahul Gandhi protested against the appointment of Gyanesh Kumar as the new chief of Election Commissioner, stating that it is disrespectful and discourteous to make a midnight decision when a case is pending before the Supreme Court. Okay, and just quickly looking at what the Asian market is doing now, while Shanghai has actually picked up pace and started gaining 0.4%, the other markets, ASX 200 Australian market, Hang Seng Taiwan Index, all of them continue to see a decline. So very, very mixed opening. Most of them are actually falling in trade. And Nifty implied open, that's also indicating a red start for the Indian markets. At the start of the show, it was down 17 points. Now also it's down almost 15 points in trade. So keep an eye out on the Nifty implied open. That also is suggesting that Indian markets could see a red start coming in. A lot of commentary came in from Trump as well. Possibility of those tariffs coming in on auto, semiconductors and pharma. We could see some bit of a jitter in the market. So keep an eye out on that. Nifty implied open indicating a red start. And as of now, that's what we're watching out for. But with that, we're going to wind down this edition of Power Breakfast on CNBC TV18. Don't go anywhere. Up next, you have Bazaar Morning Call to take you through the next action.
Kuwait.
Ranbir Alabadia has been spewing dirt, has shown the dirt in his mind, has been vomiting on air. Why should we protect you? Ominous words coming in from the Supreme Court aimed directly at Ranbir Alabadia post the India's Got Latent controversy. So that entire controversy involving Ranbir Alabadia, Samir Raina, moving to the doors of the Apex Court. The questions we're asking: who's the one who's knocked on the doors of the Supreme Court? What reliefs are they seeking? What did the Supreme Court have to say about it? And what are the reliefs, if any? What are the protections, if any, that the Supreme Court has granted? Well, to begin with, it's Ranbir Alabadia who's knocked on the doors of the Apex Court seeking protection. Mind you, he's facing at the very least 3 FIRs that at least we know of: Maharashtra, Guwahati, as well as Jaipur. And what's interesting is that, and that's an interesting side story, representing him in the highest court of the country is none other than the son of Justice D.Y. Chandrachud, the last Chief Justice of India. It's Abhinav Chandrachud that's appearing for Ranbir Alabadia. Now, Abhinav put up a valiant argument, a valiant battle here before the Apex Court, where he argued that he's not at all defending the comments or the conduct of Ranbir Alabadia, but rather he's citing multiple FIRs, that this is tantamount to an abuse of process. Also going on to say that not just Ranbir Alabadia, but even his mother, his associates are beginning to receive death threats, and that is something that requires the intervention, the protection of the highest court of the country. Now, there were 2 very clear halves to the hearing. In the first half, the Supreme Court absolutely squarely condemned the content as well as the conduct of Ranbir Alabadia. The Supreme Court said that he's been spewing out venom, he's been vomiting, and that this does not call for intervention or protection of the Supreme Court. Further, the Supreme Court went on to say that as far as the conduct itself is concerned, it would bring shame to fathers, to mothers, to parents, to society in general. In fact, the Supreme Court then went on to say that just because Ranveer Alabadia is popular, that is no grounds, that is no reason for him to take liberties with societal norms, to openly flout them, and that this behavior should be squarely condemned. In fact, the Supreme Court did not stop there. It said that the Supreme Court has not been sitting in some ivory tower. It has been, in fact, going through social media. It knows that these comments came not originally from Ranveer Alabadia, but from an Australian show, and that this is something that is not acceptable here in India, that such conduct which reflects on society, which reflects on his own thinking, is not something that the Supreme Court will look very kindly on. But having said that, the Supreme Court also said that we have constitutional courts in the country. It is not a kangaroo court. It is not a court of public opinion. And it is on that count that the Supreme Court, taking note of the fact that there have been previous instances of multiple FIRs against senior journalists such as Arnab Goswami, senior journalists such as Amish Devgan, the Supreme Court, keeping in line with that precedent, has granted the twin protection to Ranveer Alabadia after that hearing. Number one, he cannot be arrested, at least as far as the FIRs that have been registered so far. Jaipur, Guwahati, Maharashtra.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Wednesday morning, middle of the week, markets looking a little better. A flattish kind of day yesterday. Can we see a repeat performance today? I think that's essentially what we'll watch out for. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, morning folks. Yeah, slightly better for the market, but never a dull moment with Mr. Trump. Those tariff headlines are coming. Now we're adding some new industries and new sectors to the mix. So looking interesting as always.
Well, and hopefully there's some kind of peace deal between Russia as well as Ukraine. Yeah, that's the hope, and hopefully that does take place for the good of humanity, for the good of the markets, for the good of the world. I think that's something we'll try.
Absolutely. And, maybe something we hear by the end of the week. It was expected last week. Let's see what comes of it. But as always, let's start from the beginning. U.S. equities had no problem. I mean, they were not massively higher or anything, but the S&P and the NASDAQ ended at fresh all-time highs, closed at new all-time highs. The S&P was up about a quarter. The NASDAQ was up a little less than that, but new highs. Now, and that's essentially been the state for the world markets as well, as I put out day before yesterday. If you look at aggregator world equity indices, I mean, they're not at highs or maybe very close to all-time highs. So it's global is a bull market in that sense, not a raging bull market, but a bull market nevertheless, which is at new highs. Now, the 10-year in the U.S., the benchmark bond yield was up 7 basis points. It's a meaningful move, back about 4.55%. The dollar index went up as well. 107 or so is where it kind of left off. Oil prices were also higher, just about $76 a barrel. Now, on that Russia-Ukraine bit, and we've been sort of reporting on this last few days. So officials met in Saudi Arabia where they discussed a peace plan. And there's been lots of back and forth. This is, of course, Mr. Rubio and the Russian foreign minister who met. And, of course, I mean, the general agreement between them has been to keep Ukraine out of these negotiations. European leaders have been meeting in Paris, separately, and they've been trying to figure out, well, where do they fit in? Mr. Zelensky, of course, according to media reports and statements that we have, is furious that he doesn't have a seat at the table in that sense, their fate is being decided. But it is what it is, and will we see a deal? There was also the statement there was agreement between both Russia and US that elections need to be held in Ukraine first before anything can before a durable, lasting peace can be found. I think some more meetings, etc., discussions to take place today, Wednesday, and I think we'll report as things go on. But things are moving there. That's the important bit. Trump, of course, more comments coming through. He said auto tariffs could be 25%, and tariffs on pharmaceutical products could be 25% plus. So President Trump was speaking in Florida, and he was speaking as, he started speaking when U.S. markets were trading, then he sort of kept speaking after U.S. markets. And actually, if you look at U.S. futures, they've ticked up a little bit post that. Interestingly, Trump mentioned India once again. And that's, something to watch out for in the context of tariffs, in the context of, trying to curtail spending, etc. He said, as part of a comment, he said one of the highest taxing countries. So again, something to keep an eye out on. April 1st, April 2nd, of course, is the date which is being put out in terms of those reciprocal tariffs, etc. Now, markets yesterday, just to tie in the levels, at a flat day. Nifty did not, importantly, breach Monday's lowest point. And that's a good thing. So support similar stays at 22,620 and 22,775. 22,775 is Monday's low. So that's the first sort of support zone which you'll need to sort of watch out for, 620 to 775. On the way up, the 40 hourly is 23,014, which will be the first resistance. We're not very far away from that. And after that, you get to the daily averages. The first one is the 23,240 is the 20-day moving average for the Nifty. Step by step, as I've been saying, the Nifty Bank needs to close above the previous high, which is 49,836. That's a swing high, I think, that we saw on the 13th of February. So 49,836. And Monday's low for the Nifty Bank will be important, 48,525. Again, we're not very far. We're barely 1% away from those levels on the Nifty Bank as well. So that's, it was a quieter session yesterday, and maybe a good thing, but lots of individual stocks moved. We'll discuss many of those as we go on. GIFT Nifty will give you a sense of how we are likely to start. It's flattish, neither here nor there. Surabhi.
Yeah, it was a funny statement, right? Mr. Trump saying, I like India, I like those people, they have plenty of money, I like their prime minister, but those tariffs are too high. Do we really need to be, paying for them? So, yeah, I guess a lot of this, back and forth and brinksmanship is going to continue in the run-up to the 2nd of April when we get the real numbers, and let's see what happens in the back-channel parlays. Anyway, so the thing is that Asian markets have not exactly taken over the positive handover from Wall Street, because there is a little bit of flash red across Asia today, and there's profit-taking, general profit-taking in markets like, Taiwan and Hong Kong, which have been doing extremely well. In fact, if I look at it, the Japanese market is down a little more. It's falling about 0.4% at this point in time. But there's some green on in areas like mainland China. Shanghai is positive, and there is Singapore that's higher. Markets obviously taking a bit of a breather because the dollar index has moved back above 107. That's one factor to track. Lots of data out in the region as well. Now, this Tankan survey in Japan that's very widely tracked, the Reuters Tankan survey, and the business sentiment continues to improve. All the data points coming out of Japan have been so strong, whether it's inflation numbers or GDP numbers, etc. And the Tankan survey says that the business sentiment is at the highest since November in Japanese manufacturers. So that's good news. Some rate cut action this morning. New Zealand has cut rates by 50 basis points. This is the fourth time they've continuously cut rates. In step with the Reserve Bank of Australia, the Australian Central Bank had cut by 25 basis points yesterday. So more rate cuts across the region coming through. Just a word on oil. The reason we also have that bid up to 76 on Brent is because there was a drone strike. Even as those peace talks are underway in Saudi Arabia, there was a Ukrainian drone strike on a Russian oil pipeline, which apparently supplies 1% of the global oil. And because of that, some displacement of the Kazakhstan oil that's coming through. And that led to a bit of a geopolitical risk premium going higher. So let's see how it plays out. For us, yesterday was a good day because we got that consolidation. The 22,800 level managed to hold. And not just that, mid-cap saw the first hint of some buying, large mid-caps. There was some bargain hunting going on in stocks. So let's see if we see more of that today or not. On the flows picture, there's been enough back and forth on this big number. We all got so excited. The first glance of positive buying coming through. But we all know that it's been skewed by the Bharti block trades, and the calculations seem to show that there's net buying, foreign buying of about 5,300 to 5,500 crores in yesterday's Bharti block, because of which the numbers are slightly skewed. But for what it's worth, it is a buy number both on the DII side and the FII side, net buying of 4,786 crore rupees. Just want to end by talking about Hexaware. Hexaware is back again on the street. After delisting in 2020, the company's coming back. We know it's a full OFS by Carlyle, but the numbers are interesting. The issue, just to jog your memory, didn't get too much of an overwhelming response. It was, oversubscribed by 2.6 times. The company delisted at 475 rupees a share. it's coming back to relist. The higher end of the price band is 708, and if it lists at 708 or thereabouts, we're talking about a market cap of in excess of 43,000 crore rupees. So interesting. We'll watch out for this. And speaking of OFSs and IPOs, just a reminder, we'll be in conversation with the investment banking head of Nomura on the show today as well. We'll take this forward and talk about whether we can see more of these issuances, whether PE is going to have a great run with the listed markets as well in the rest of 2025. So that's coming up. But I guess, Nigel, it wasn't too bad. Yesterday, we managed to see some consolidation, a little bit of buying as well.
Well, that's right. I've heard a lot of positivity actually in the last 18 hours or thereabouts, and that's been after a while that Bharti Airtel block, the FIs, they're putting in money. You'll have to skew the data this way and that and slice and dice the data. But even if they're coming in by the block, the FIs are not deserting India. So that's one point. The other point is we had Jay Bala yesterday towards the end of trade, and he's been very, very bearish. He also is not ruling out a bit of a bounce. So a lot of positivity is what I've heard in the last 18 hours or thereabouts. But let's take stock of how the markets are doing. And one point is India has been underperforming, and we've been making this point, and everyone's been noting that India in the last 6 months or so, we have relatively underperformed. There had to be some kind of reshuffle that's taken place with regard to emerging market flows. Well, that's possibly taken place. And, remember, this is a function of the performance of an index. So the weightage of MSCI India in the emerging market context, that's come down a little bit. So just take note of that. You're talking about that. That's already reflected in the numbers. The live indicator we had in yesterday's trading session was the premium on the Nifty. That came down a little bit, but there was unwinding of positions is what we saw on the Nifty, or maybe there were some shorts that did cover out. So the Nifty open interest was lower, while the Nifty bank open interest was more or less flattish. So those were the FNO cues that we got in yesterday's trading session. How does positioning stand? Well, the FIs in the FNO market as well as the clients, not too much movement. So I'm just taking the absolute number. The clients remain net long, the FIs remain net short, and this is at an extreme level. We need to see some good news. These guys will scamper for cover. For now, they have been, on top of it, and they have been on the right side of the trade. But if we can get some positive news and flows as well stabilize, then in fact, these guys will be in trouble. Moving to the options data, the 23,000 call, fairly active in trade yesterday, 20 lakh shares getting added there. Premium close to around 100 rupees. It's come down from around 150, 200 rupees, so that's important. And on the downside, the 22,700 put as well, fairly active. Premium at around 50 rupees came down to around 35 rupees or thereabouts. So the levels you're looking at, the quadruple support, so that sort of call we have been talking about, 22,700, 22,750. Important we don't break this mark. Otherwise, we're in for a deeper correction. Till this is holding out, you have that hope that maybe the Nifty bounces a couple of percentage points even from these levels. First level of resistance, going by the options data and going by what we've seen in the past, 23,100. That's the important mark that you're looking at. And yesterday, one disappointment was the Nifty Bank in the previous trading session. It did fight back quite well. From around that 48,500 odd mark, it came towards that 49,300. Yesterday, we couldn't cross that. So you want the Nifty Bank to get past the 20 DMA. That's what will cause a lot of shorts to cover, because there are a lot of shorts that are stacked in the Nifty Bank as well. So keep an eye on that mark. That holds the key for me. And the Nifty then can gradually make its way higher. So let's keep an eye on that. And the breadth of the market yesterday was fairly okay, as you mentioned earlier.
All right. Well, let's hope for quieter days, right, where the market will settle down, and then we'll pick it up from there. Now, Trump, of course, talking about tariffs, etc., and that sort of press conference, freewheeling kind of conversation, and mentioning India again. So just want to play that out, and then we'll bring in our guest.
I probably will tell you that on April 2nd, but it'll be in the neighborhood of 25%.
What about semiconductors and pharmaceuticals?
It'll be 25% and higher, and it'll go very substantially higher over a course of a year. But we want to give them time to come in because, as you know, when they come into the United States and they have their plant or factory here, there is no tariff. So we want to give them a little bit of a chance.
Jeffrey Dennis is with us, independent emerging markets commentator. Jeffrey, good to have you back on the program. And by the way, another separate part of that press conference, he did mention India as well. Once again, talking about why are we sending some amount of money, and but also that tariffs are very high, one of the highest taxing countries, etc. The thing is, our exports to the US, India's exports to the US are not very large at all. Actually, amongst emerging markets, our exports to the US are probably, as a percentage of respective countries' GDP, it's perhaps the smallest, one of the smallest. But that is true, but it is also true that tariffs are one of the highest. So maybe tariffs will go up. But impact, because exports are very small, are pretty manageable. They're going to be small in that sense. How do you see this, Dennis? What's the implication really for markets?
Well, the data I've seen shows that India has the 10th biggest trade surplus versus the US, which means it's not really right in the forefront, I think, of Trump's focus from that point of view. It's obviously a smaller deficit, or I should say India's surplus is a smaller surplus than China has, that Vietnam has, that Korea has, etc. So I don't think that's the issue. As you rightly say, India doesn't export that much to the US. But obviously, Trump is on this tariff gig now, reciprocal tariffs, if you want, if you like, where he's saying, if countries overseas have got high tariffs, which India does have, well, we're going to put high tariffs on their imports as well. Now, it's been the case for many years, as you will know, that developing countries trying to build for the future from a low base, very often do try to protect their infant industries, which is a classic economic argument, with tariffs. It's always been the case that poorer countries, developing countries, emerging markets have higher tariffs, than developed economies. And I think that it is what it is. I'd be very surprised if India is absolutely right in the forefront of this reaction that Trump is coming up with. I think he's focused a bit more on other countries, frankly. But yeah, he has mentioned India, so we have to watch it.
Yeah, absolutely. And India has been responding as well by lowering tariffs on things like Harley-Davidson bikes and bourbon whiskey. So some of it is already happening. Jeffrey, hi, good morning. But, beyond tariffs, the other problem and worry for India has been this homegrown slowdown that, frankly, came out of the middle of nowhere. I don't think the market was ready for it, and therefore the correction. What do you make of it now? We've just gone through another earnings season. The forecasts, for GDP growth for the next year range between 6.5% to 6.8%, so to speak. Do you think this is just a temporary blip and therefore a good buying opportunity for Indian equities, or could this be more prolonged?
I think it is a good buying opportunity for Indian equities, but there's a lot in your question, if I may say so. First of all, I suspect that the drop in GDP growth has been too precipitous. It isn't really quite as bad as those latest numbers would have indicated. I think that will also be, to a certain extent, supported GDP growth going forward by the fact that the RBI has now begun to cut interest rates, although how much more they're able to cut interest rates remains to be seen. And also because there were some tax cuts, of course, in the budget. So there is some policy support here. So I fully expect to see Indian GDP growth stabilize, possibly bounce up a little bit. It is still the best by far GDP growth in the emerging market arena. And yes, earnings, of course, are very important, but I do simply think that the sell-off you've had so far this year is getting a little bit overdone. I think there's one other point that I'd like to make on this, and that is that in the event that there is some sort of ceasefire between Russia and Ukraine, peace settlement down the road, what does that mean? That means Russian sanctions on Russia come off, and that probably brings Russian oil supplies up quite considerably, and that's going to put downward pressure on the oil price. So I think oil is going to stay quite soft over the next several months, and that will obviously be helpful for Indian inflation.
Well, indeed, Jeff, that's the hope. If there is a deal out there and there is a peace deal between Ukraine as well as Russia, lower crude prices, a tailwind for the Indian macros as well. But Jeff, what do you make of it? In the last 6 months or so, everyone's talking about the Indian markets relatively underperforming if you're looking in comparison to the North American markets, or even if you're looking at China. Do you think bulk of this underperformance is done now? And from here on, given the price correction that we have seen and given the realignment we have seen, do you think Indian markets can outperform among the emerging market basket?
I think they will start to recover this underperformance. I think it'll take a little bit of time. I mean, with China, which has done so well this year, there's a number of things going on, which are sort of individual events, if you like. First of all, you've had the AI news out of China a couple of weeks ago or so ago, DeepSeek. You've also had the other day Xi Jinping meeting some of the business leaders, which he's not done for a long period of time. That created good sentiment. And of course, you've had a situation where a lot of investors decided to go into 2025, particularly once the dollar started to drift lower, by closing their underweights in China and getting more bullish. And that process, I think, has probably gone some distance. Now, for me, the Chinese fundamentals are still poor in terms of the property sector and in terms of the lack of consumer spending growth. So I think this rally in China will blow itself out. And I do believe when that starts to happen, India will start to get a bid again from FII investors. And although obviously India is expensive, I would tend to think from here, India will start to cut that underperformance against emerging markets and even against China over the next several weeks and months.
All right. A good conversation as always, Jeffrey. Appreciate your time here on CNBC-TV18. Thanks indeed. Well, let me just quickly run you through what interactions we've got lined up here over the next 2 hours. So 8:30, you'll hear from the management of ABB India. We discuss on earnings which came through. Of course, the call was a little softish as well. 9 o'clock, Gaurav Malhotra of Access Capital talks about the block deal in Bharti Airtel. Of course, I mean, what's happening with that Vodafone issue, I mean, a lot dependent on that as well. 9:20, Pratik Gupta of Kotak Equities will be our market master of the day. 9:30, you'll hear from the management of NHPC, third quarter numbers and more. Kim's Hospitals will be speaking with us at 9:40. We have Nomura's investment banker joining us to talk about deals in 25 and, of course, supply, which is lined up and how that shapes up. And, of course, 10:15, Lata will be talking about the markets, equities, Sridhar Sivaram of Enam Holdings for that.
Let's take a quick break, but we've got a lot of stock-specific action we're tracking for you. We'll get to that in just a bit in our special Top 10 segment. We're looking at Vedanta, TTK Prestige, Varun Beverages, RBNL, Mahindra Life Space, Unichem Laboratories, and Transformers and Rectifiers. 7 stocks reacting to good news, while we have Oro, Pyramil, both of them pharma, and IRB Infra will be reacting to negative news flow.
Be arrested basis those FIRs. Further, the Supreme Court has also said that no further FIRs, at least as far as the India's got latent controversy is concerned, will be filed against the person in question, which in this case happens to be Ranveer Alabadia. But there are some tough conditions that the Supreme Court has imposed. Number one, Ranveer Alabadia will appear as summoned by all of these authorities. Number two, Ranveer Alabadia will cooperate with all these investigating agencies, will not interfere, will not interrupt. Number three, he will not do any further shows in the interim. That is something that the Supreme Court said as an afterthought, but very clearly pointed in the direction of Abhinav, in the direction of Ranveer Alabadia, that no further shows for now. And also importantly, has put restrictions on overseas travel for Ranveer Alabadia, saying that you will need to deposit your passport at the local police station. So strict conditions being imposed on Ranveer Alabadia. But nonetheless, the Supreme Court, after that flurry of condemnation, granting that protection to Ranveer Alabadia.
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India's sales this year and may want to start it with affordable range of electric cars. Currently,
Welcome back. So once again, let's get to the cues across Asia. The little mix this morning. You've got some buying in the mainland Chinese market. Hong Kong is cooling off after its recent big surge. And then the other regional markets are also flashing a little bit of red. So some caution. Let's get the implied open up. and see which direction we could go in, considering the consolidation that the market has had. So absolutely flat, in sync with the rest of the regional markets as well. Let's now move to stocks and talk about of course, the big names that you have to keep on your radar. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Nigel, you go first. Vedanta, the restructuring is happening?
Well, that's right. The reports have indicated that Vedanta has got the green signal coming in from the creditors, which will be good news. The formal report will come in, I think, sometime later today. Remember, they had to get around 75% of the approval of the creditors. And in fact, it appears that's pretty much happened. So we'll wait for the official confirmation. Before the time being, we're going by reports. Remember, this entire process started in September 2023, and it's been, gaining momentum from there. It's got actually a little bit delayed, because earlier, when I spoke to Mr. Anil Agarwal in 2024, he had told us here on CNBC-TV18 he expects it to happen by the Q4 of FY25. However, the management in the last interaction that they had with CNBC-TV18 had said that by Q1, FY26 is when it will take place. Why is this important? It unlocks value, and the majority of the value unlocking will be done for the aluminium business, which will derive its true value, and that's around 41% of its EBITDA. So good news coming in for Vedanta. Expect the stock to open up in the green. Well, moving to Mangalam, he's tracking a couple of companies, TTK Prestige and Varun Beverages. Morning, Mangalam, tell us more.
Good morning. So TTK Prestige, the company has committed about 500 crore rupees over the next 3 financial years, starting from the next quarter itself, towards capex and operational expenses of the company. They've, earmarked capex worth nearly 300 odd crores and operational expenses with regards to, strengthening their distribution channel, brand positioning, etc., to about 200 odd crores. So the company is just given a provisional update out here where they're saying that, going forward over the next 8 quarters, that might be a bit of a dent on their EBITDA. Assuming that it's spread across 3 years, it could mean close to around 20-25 crores per quarter in terms of an EBITDA hit. But the fact that there is commitment coming in from expenditure is a good thing for TTK Prestige. See mild green on the stock today. Also see mild green on Varun Beverages, because CRISIL has gone ahead and upgraded their credit rating. But that was largely expected because the debt of the company came down year on year, both from a long-term standpoint and a short-term standpoint. And that also was because the company had raised about 7,500 crores via QIP in November itself. So as you can see, the balance sheet has strengthened and ratings revision has happened. Just a mild green for Varun Beverages as well.
All right, Mangalam, thank you very much for that. Let's just talk about some of the other stocks in news as well. Vinny is standing by with that list. Vinny, good morning.
Good morning. So firstly, we're keeping an eye out on RVNL. We're expecting a green here. They've signed an order, received a letter of intent coming in from 554 crore order, which is from the rail infrastructure development. This is the time period of 2 years. And recently, the company had also spoken about maintaining their guidance when they spoke to CNBC-TV18 of their revenue of 22,000 crores. While 9 months has been muted, they're expecting good execution to pick up, and seems like more order wins coming in. So RVNL, we're expecting green here. Aurobindo Pharma, red is expected here. The US FDA had conducted a pre-approval inspection in one of its facilities in Andhra Pradesh. So yes, they've received 5 observations on this one. Inspection was carried out between Feb 10th to Feb 18th. So a bit of a red is what one could watch out for. Not a very important facility for Aurobindo Pharma. Piramal Pharma, expecting a red here as well. They have received a form 483, 6 observations in this, and this is for its Turbhe facility. And this is the US FDA had conducted a good manufacturing inspection for this plant. Again, not a very big plant for Piramal Pharma, but we will see red because of the observations that they've received. Mahindra Life Spaces is in focus as well. We're expecting green here. Now they have announced that they are starting a redevelopment project in Mahalakshmi in Mumbai. The gross development value for that is around 1,650 crores. And this is a partnership with Livingstone Infra Private Limited. So keep an eye out on Mahindra Life Spaces. Lastly, Unichem Lab, we're expecting green here. They have received an upgrade in terms of rating from ICRA to an A+, ICRA A+, from previous rating of ICRA A, which was assigned to one of its bank facilities of 180 crores. So keeping an eye out on Unichem Lab as well.
All right. Thanks very much, Vinny, for that. Let's quickly head to Vivek now, who's watching out for a couple of stocks as well. Vivek, good morning. Which ones are these?
Well, good morning. A couple of stocks on the back of news flow. First on the list is Transformers and Rectifiers. The company received orders of a little over 166 crores. This is from Hyosung T&D India. This is for supply of single-phase coupling transformers and single-phase for the TBCB projects that the company had won. When you're talking about the order book of the company, remember at the end of Q3 stood in excess of 3,680 crores. Remember, the company has given a guidance of 2,000 crore, 3,000 crore and 4,500 crore respectively by the end of FY25, 6 and 7. When you're talking about the operating margin guidance that the management has given, expected to remain in excess of 17%. The other stock on the radar, some negative news flow coming in as far as IRB Infra is concerned. There has been a creation of additional pledge by one of the promoters, which is Sudha Maiskar. A pledge has been created on close to 14.2 lakh shares. A pledge has been created in favor of Bajaj Financial Securities. Remember, as per BSE data, a little over 55% of the total promoter shareholding is pledged with various financial institutions.
Thank you, Vivek, for that. Well, let's do a quick recap of all the top stocks that we just discussed. The ones with positive news flow: Vedanta, TTK Prestige, Varun Beverages, RVNL, Mahindra Life Spaces, Unichem Laboratories, and Transformers and Rectifiers. While you have Oro Pharma, Pyramid Pharma, IRB Infra that will be reacting to negative news flow. So those are all the top stocks you need to track. But let's hop across to Manisha Gupta. She's standing by to tell us about all the action from the commodity markets. Morning, Manisha.
Morning, Nigel. Thank you for that. I'll start with the crude oil prices, which have gained for a third straight day. Well, there are reports of drone attack on Russia pump station. Remember, Russia and US also are engaged in diplomatic talks to end the Ukraine war. And then it is also about cold snap in US that also has hit oil supplies there. And then the markets are waiting for OPEC and allies' final decision on their output plans from April onwards. So jittery, but we are looking at support continuing here. The precious metals and the base metals in the Asian markets today have started on a stronger note. Gold is trading very close to its all-time highs of $2,940 an ounce. We have seen silver prices gain up by 2% overnight. Iron ore is trading at a 4-month highs. Aluminum prices are trading at a 1-month highs. And we also have seen some support come in case of steel prices in the overnight market. So good going for most of these commodities.
Okay, all right. Got it, Manisha. Thank you very much for that. That's the commodity setup for the morning. Just to quickly go back to the Asian screens, like I've been saying, it's a morning of slight profit taking across many of the markets. The Japanese market, for instance, is down about 0.5%. Hong Kong, which has had a stupendous move, 15-16% in the last 1 month. So you can't blame the market for taking off just about 0.25% this morning. But there is buying in mainland Chinese equities. Shanghai is the only positive market in the region right now. Otherwise, even Singapore is fizzled out. Taiwan's lower, as you can see out there. So that's what's going on. Just a quick check on the dollar index, because, along with this profit taking, the other news is that the dollar index managed to recover to 107 again in overnight action. And even now, the DXY is just around that 107 handle. That's the way things are set up at this point in time. Let's now move on and talk about, the first company on our radar this morning. ABB India reported a robust set of numbers for the fourth quarter, Q4 calendar year 24. Now, the company saw a beat across the board, but the management commentary has been a little muted about the order inflow and the guidance going forward. In the conference call, the management has said that there will be moderation before the next cycle of growth kickstarts. Our colleague Vivek caught up with the ABB India's head and managing director Sanjeev Sharma and the company's CFO TK Sridhar, and began by asking about the quarter gone by and whether the company manages to maintain its margins at around 19%. Take a look.
Margin expansion is what I was mentioning that in this call as well. I think almost 5 to 6% came from operating efficiencies, from buying efficiencies, then from the pricing mechanism to the market, and also making sure that we are clearly hedged against the risks what we see in the in our order book and the backlog execution. So I think this was the impact which we had a positive in this particular quarter. But I think, and also by the same time, when you increase the revenues, you also have certain increase in the cost, specific costs, which increased by 1%. So overall, 5 to 5% movement in the PBT percentage was basically attributable to the leverage of scale and a better operating efficiency is what we have been doing consistently year after year, and also a favorable positioning in the market.
Understood that.
And now coming to the question is whether this is sustainable. And I think it's important to understand that the markets are starting to ease out at this point of time. So I think the broad range in which we had probably given an indication is 12 to 15% is where we see the PAT coming in, because based on the mix of orders based on the forex volatility, what you have, and the pricing ability in the market.
Understood that. So forex volatility, market trends, all of that will impact the quarterly performance going forward. But you've given us a broad range in terms of PAT margins expected to be in the range of 12 to 15%. Well, overall, it was a very strong quarter. And if I could bring in Sir as well. First up, order inflow on a year-on-year basis looked optically lower. But we also understand this was coming off a lower base. The ABB in the last 2 years that we saw actually saw quarterly order inflow run rate of close to 3,300 to 3,400 crore. Now, going forward, will this be the new normal, somewhere in the range of 27 to 2,800 crore?
I think as we look forward, we should also look what we had in last 5 years. ABB in India grew 22% CAGR on orders in last 5 years. We had an expansion of revenues at a rate of 20.3% CAGR in last 5 years. And our profitability went up 3 times in last 4 years. So that shows that the strategy that we have been putting in place, a long strategy that we are putting in place for India is working for us. And this is a 75th year for ABB in manufacturing and contributing to the group in innovation from India, and we will continue to take that forward. And we are long on India, and our perspective is next 25 years, wherein there's a declared intent by the government that they want India to be a developed country by 2047. That will mean there will be an expansion of per capita, there is an expansion of infrastructure, expansion of industrial base, and also a lot of new products which are imported right now, they'll be manufactured in the country. And ABB is in that sweet spot of supplying electrification products, motion products for energy efficiency, process automation, and robotics automation. So that will stay as a focus, and that's how we will continue to do it. I'm not really the right person to tell you what is going to happen in next quarter, but I can definitely give you a very strong commentary about what we see is going to happen in the next 5 years.
Mr. Sharma, let me ask you some more questions. As far as the order prospect pipeline, you've given a very strong commentary in terms of the kind of spends you expect. So could you break down those spends for us? Number one, how is public capex looking, especially in the segments you're operating in? You've given us a strong commentary, especially when it comes to private capex and the kind of order inflow that or order visibility that you're seeing. Can you quantify it for us in some manner? And which segment looks better? Is it the public or the private capex?
On the public and private side, I think last year, 2024 especially, because of, it assumed because of the elections as well as disruptions because of the monsoon, the public capex was muted a bit, which was riding high in past years. So which had an indirect effect on our books because we don't participate directly in the government spend, but we do participate through the players who supply into those projects. So there was a muting effect, but at the same time, there are new market segments, namely data center, electronics manufacturing, the renewables. They continue to expand and continue to give us quite a robust growth in our books. And the traditional market segment like metals, mining, for our part, the capex and the opex was strong for us, and we continue to take benefit there as well. And of course, the mid segment, which are quite steady, there we found that segments like water, pharma, food and beverage, we continue to gain traction. So as I explained to you earlier, we operate 18 business models in the country, 18 business divisions, which are exposed to 23 market segments. That gives us quite a robust base in terms of continue to capture the growth that we see across segments.
Understood that. Mr. Sridhar, let me bring you in now. First up, order backlog currently in excess of 9,350 crores. So 9,380 crores is the exact figure. What is the kind of revenue visibility that you're seeing with the current order book? We understand that this order book typically consists of short cycle orders. So maybe for the next year, year and a half, you have visibility. Going forward, how are you looking to replenish the order book so that we can have longer term visibility?
I think Sanjeev's commentary on the markets and the orders, I think, is a fact which will be focusing on the order intake for the current year. But I think the order backlog, which we have at this point of time, is 9,350 crores, will be executed almost 65 to 70% over the next 3 to 4 quarters in this particular year of 2025. And the balance will, of course, move over to 2026 because it's a project-based execution cycle which we need to manage. So in the meantime, whatever orders which we get during the year, that will also be converted to revenues. So, and hopefully, I think if the market keeps up the momentum as what we see, I think we should still look at a double-digit growth on revenues as what we go forward.
All right, well, that's the ABB management in conversation with us on the back of the numbers which were reported. Well, we'll take a quick commercial break here. Deven Choksi will be with us with some fundamental stock conversation. Stay tuned, coming up.
Car is the Model 3, costing $30,000 or 26 lakh rupees in America. And Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year but cancelled at the last moment. Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk and other EV makers a concessional 15% duty as opposed to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk be able to secure lower tariffs from India without a manufacturing commitment? That remains to be seen. For the moment, what we know is that Elon Musk had a very positive 50-minute meeting with Prime Minister Modi in Washington, D.C.
Carefully.
Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Well, we've listed on all the top stocks for you to track. Deven Choksi, the MD at DR Choksi FinServ, joins us on the show. Hi, Deven. Good morning. Good to see you in as always. Deven, let's talk about Vedanta. You know, it appears the creditors have given the green signal. We'll wait for the official confirmation later today. But, at around this 415, 420 rupees, what would you do? Would you buy into the stock? Because there's a special situation that's playing out. The Indian rupee as well as weaker, which bodes well for them because that's net a positive on their operational performance. Your take.
Hello, good morning. Exactly. I think probably the split is happening in these 5 units, and that's a very good thing to happen. Couple of points. From the business perspective, I think you are inviting some of the quality investors into the company, including the financial investors, who would like to take the exposure into respective vertical, which up till now, I think due to the combined structure, I think they were prevented from that particular exposure taken because of the mandate of the fund. So that looks really positive, the additional fund flow coming in. And on the trade side, I think the situation is improving and improving better because of also the currency depreciation, as you rightly mentioned. The actual impact of all that, I think will still take time to figure it out. But I believe that I think this was an overhang as far as I think the stock price is concerned. And with this overhang going away, probably I think we should be seeing a gradual to smart recovery in this particular stock price going forward, because the rest of the fundamentals remain absolutely intact. And I believe in some of the expansion programs which they have wrapped up their sleeves up till now will probably get unfolded going forward. So remain relatively more confident on the prospect side than before as far as its demerger is concerned.
Okay, so that's Vedanta in focus. Devan, hi, morning. Good to have you on the show. Your thoughts on Bharti Airtel and what is happening here with this block trade? Obviously, it got lapped up by institutions. That had to happen. But just, what do you see ahead? Because, this is Mr. Sunil Bharti Mittal, him selling a small chunk of the stake. Is it strategic, tactical? And what's your call on the stock, given that the tariff hikes have finally started happening?
Yes, Suvi, good morning. I think on the fundamental side of the business, things are looking pretty decent now. Given the kind of growth in the business that they are experiencing at the same time, I believe that the likely ARPU, which is going to be the main driver for the business in the current financial year and the next financial year in particular, is expected to be somewhere in the vicinity of around 220 plus. And that's where probably we are likely to see the larger amount of participation into the what is called the earning proposition also for the company. I believe that I think this particular transaction may have different objectives. One of them could be to have more number of financial investors coming into the transaction, and second would be, of course, the promoter's own requirement of funds for investing elsewhere. So that is where probably I think we are seeing these transactions come through. But more importantly, the business outlook remains more positive as far as the telecom business per se is concerned.
All right. No, absolutely. And, we'll keep an eye out on this one. Lots of, of course, the chatter yesterday around Bharti was, of course, about Bharti was also with regards to that question, right? When will FIIs return? And of course, they did return, but to buy about 5,000 crores worth of Bharti stock in that block yesterday. So we'll see how that goes. Deven, two other names which we highlighted during closing with some data, etc. One is Zentech, which has lost about 20% in 2 days. The other is RateGain, which has also lost about 20% in 2 days. But it's been that kind of a mid-cap, small-cap market. But these are especially very brutal corrections we've seen. Both had reported numbers recently. And if you track either Zentech or RateGain, what would your thoughts be?
So, Prashant, specifically not getting into a particular stock or the stocks, but the point remains that today, due to severe amount of stress in the portfolios of investors, the choice is very obvious to swap the stocks, I think, from weaker ones to the stronger ones. Proposition out here is you are getting some of the frontline stocks, the large cap stocks at a valuation which are quite compelling. And should the FIIs return, probably the underlying promise is that the large cap ones could be the preferred choice at that point of time. So obviously, I think those which are weaker stocks, not going to perform as weak on the pricing front, are definitely finding an exit. And today the investor is not waiting for secondary to get an exit. Whatever is sellable, they sell it on a given day itself at a whatever price. And that's what I think is creating this kind of panic situation in so many mid-cap and small-cap stocks at this point of time. But I believe that I think the fundamental shifts are happening from some of the weaker stocks to the stronger stocks, given the kind of valuation advantage that you are getting in the market today.
Deven, just wanted to get your thoughts on Hexaware. If you saw the company and the kind of growth rates that they're clocking right now, we know that this is Carlyle selling, and it's one of those strange things, right? They went away in 2020, they're back in 2025, seeking much higher valuation. I was just checking the exit price. Delisting price used to be 475 rupees. Now they're coming at 708. That's the upper end of the price band. Your thoughts, in case you had a look at the issue?
I'm not looking into it, so I'm unable to give any comments at this point.
Okay, but Deven, overall, mid-cap IT, yesterday, there was some bargain buying that started in stocks like LTI Mindtree, Persistent, some hint of recovery in IT. Would you be a buyer, large cap, mid cap, anything?
Indeed, absolutely. I think some of the mid-cap companies, and particularly engineering R&D stuff, I think they look interesting and brilliant. Also, from the point of view that the customer segment to which they are catered to, they are pouring in regular orders into them. So, as a result of which, 3 to 5 years of execution visibility is available today in some of the mid-tier companies, and that's where we remain largely confident. Of course, I think the advantage of the currency depreciation would be actually for 1 quarter or so. But overall, if you see the objective, the growth is likely to happen in this particular niche segment where they are operating with some of their customers' problem-solving propositions. In my viewpoint, I think this could be, a better choice compared to some of the large-cap IT companies in the portfolio. And that's where probably you started seeing the buying returning back into discounters as I see it.
Okay, all right. Deven, just hold on to that thought. Just want to mention to our viewers as well that today is the 19th of February, which is a clearing holiday because Chhatrapati Shivaji Maharaj Jayanti is today. So that's why clearing of shares will not be happening. It's a clearing holiday for the exchanges as well. So delivery could be a little bit delayed. So just keep that in mind. Well, Deven, I want to ask you about the auto pack. CLSA has come out with a note today. They're saying that, Tata Motors post that fall. They're very, very positive on the stock. I think they have a target price of around 930 rupees. The stock, I think, has come off close to around 40% from the peak. What's your view on Tata Motors? And Mahindra over the weekend, so much of buzz, great response to the, their EV launch. But I think there is this looming fear that Tesla comes in, they could disrupt the market. They'll come in at a price point that will hurt some of the Indian makers. How do you approach both these two names? Mahindra, Tata Motors, and your preference between the two?
Yeah, Nigel. I think both these companies to me looks absolutely attractively positioned. Tata Motors, as you rightly observed, I think has corrected significantly. Despite of the fact that on the fundamental side of the business, I think they've taken all the corrective steps which are required to be taken, including, I think, the separating out of the businesses, passenger vehicle business in the financial year 25-26. That is also on the way. And at the same time, I think the penetration that they have created through the vehicle portfolio that they have, I remain distinctly positive about the prospects going forward for them. In a way, I think the correction in the price is a big time opportunity as I see it, because fundamentals are not going away. The discretionary spending is acting at the same time, and one remains confident about the prospects going forward. Mahindra is a classic case. I think they have been cornering significantly large amount of bookings in the new vehicle launch, collecting money upfront in advance to a greater extent, I would say. And you're getting the advantage of visibility of business for next 1.5 to 2 years easily. So obviously, I think a 20% plus kind of rate of growth the company is going. Correction in the price definitely expected because of the its fairly value. But if at all, I think you get a chance at a lower price, like how you're getting currently at Tata Motors, it would be a good buy opportunity for M&M as well.
Okay, all right, Deven. Thank you very much for joining in with some perspective on all these stocks and themes that we've spoken about. You have a good day, and we look forward to again connecting soon. Time to take a break. On the other side, what about technicals? Can you consider long trades in this market? We'll get some perspective with Sudarshan Sukhani and Mitesh Thakkar.
From electric mobility to space cooperation was discussed.
China was very cheap and on the margins, especially with the DeepSeek. I think this has really rekindled hope. And by the way, their Xi Jinping is meeting the corporate investors and business people as well. So I think this is kind of bringing back the hopes that China may not be as against the capitalism as earlier thought out to be, right? So I think all this combined, plus I think Indian market was good, fairly valued, good story, but there's no surprise there. There's no big trigger. It's good, but not for the time being, right? So if you're invested, that's fine, but otherwise there might be short-term money might be chasing, China for the time being, right? And US, by the way, right? So there's no, I mean, it's a popular trade. It's I don't know whether it'll be right or wrong, but currently the trade is go long US, long China. Second is the credit growth in India. It has come to 11-12%. If RBI is able to just manage this economy in the manner that monetary policy and fiscal policy work in tandem, and the credit growth comes back to 15 to 18%, that's a thing to watch. I have always maintained a positive stance on India. It is just on the margins, where do you go underweight, overweight? Look, that's what the world does. If $100 start from US, 80, 70 go to US, 20 go to Europe, 10 go to emerging markets. Within this 10, about 2 comes to India. That's the 20% allocation. So about 1 trillion, about 20 billion goes to India. That is the long-term equation. That is how the numbers stand.
Okay, welcome back. There's, 8 minutes to go for the pre-open session. Let's welcome in Sudarshan Sukhani and Mitesh Thakkar are with us to run us through what they'd want you to do. Now, the Nifty managed to not go back to Monday's lows. I mean, at least that's small mercies. And it was a quieter session, which is also welcome. Mitesh, first the indices, as we always do, take stock. How would you trade them? And then we'll get to stocks.
Morning, Prashant. It's the same levels, because the Nifty has been bouncing off from levels around 22,800 time and again. Yesterday, I think the low was exactly that. So I think that level does remain crucial. Also is the fact that, if you take the 20-day average on the Nifty and, you add a 3-4% kind of a band, I think that's also around this 22,750, 700 mark. So I suspect, and there's put concentration as well. So multiple factors suggesting that in case we can, hold on to this level for another couple of days, we might actually see a stronger bounce back rally, but that is something which we'll know in the next couple of days. For the timing, keep watching 22,800, 750 zones, and every time it's there, and I've said this before as well, take a 70, 80 point kind of a stop and attempt a long, try to take profits closer to about 23,100, 150 zones.
Okay, all right. That's the approach that Mitesh is taking. Morning to both of you gentlemen. Sudarshan, what about you? What's the trade? On the indices, anything?
Yeah, good morning. Well, the indices continue to be confusing and depressing both. The markets are failing to rally. Every time we see a rally, we see significant selling coming in. And then the second point is that we are into a huddle, we are into a narrow range. The markets are going through narrow range, volatile days. Narrow range are worrying in a downtrending market. There is a strong possibility that the ranges that we are seeing can break on the downside. Even in the US, momentum has absolutely flagged. There is some minor rally, but the large ranges are missing. So everywhere, volatility is shrinking in anticipation of a big move. Now, we don't know where that big move would be, but it is possible it could be on the downside. So whatever happens at this point, there is no buying. Stick with stocks, stay away from the index.
Okay, let's hear your stocks then, Sudarshan. What are the stock calls you have for today?
Well, at least they are mixed. I have some buys also. First, I start with BHEL, which is an intraday short, stop over 190. Angel One, which is another intraday short. I believe brokerages will be going through a difficult period, and all the charts are weak. Stop above 22.45. Two buying ideas. One is TechM, which is giving a very attractive basing pattern. Now, that pattern may or may not work if the whole broad market starts coming down. It's worth finding out. Buy with a stop under 1665, and Berger Paints, which is actually outperforming and going up while the broad market is going down. That's a buy, the stop under 480.
TechM and Berger are longs and Angel is a short. Got that, Sudarshan. Mitesh, what about you?
I have a mix of buys and sells as well. On the buying side is Cyient with a stop at 1445 for targets of 1520. Tata Motors is a conditional buy. If it clears 688, some reversal can happen. Buy then with a stop at 679 for targets of 705. And on the selling side is HUL with a stop at 2320 for targets of 2240. And L&T Finance is a sell as well. Keep a stop at 138.5. Look for targets of 129.
All right. Gentlemen, we'll speak again soon. Thank you very much for now for joining us with that update. Well, I think we'll just take a quick break here. 4 minutes to go for the pre-open session. We're going to come back with the pre-open in a bit. We'll also have Gaurav Malhotra of Axis Capital to talk about that block which happened in Bharti yesterday, big numbers. And of course, what's happening in the telecom space overall. Stay tuned.
Welcome back. We'll start getting our pre-open rates in the next couple of minutes and we'll see how it goes. But now let's move to a really, really interesting story. And I'll start this story by first looking at the M&M chart. Now, everybody has been looking at Mahindra & Mahindra fall for the past couple of days. And this is the 7-day performance. Look at the price damage, 13% down in just 7 trading sessions. And this at a time when the company launched its EVs, declared some great booking numbers as well, 30,000 plus bookings. So when all is well, then why is the M&M stock falling like this? It's down about 15% from its peak. Now let's get the answers with our colleague Parikshit, because he's been picking up a lot of exclusive inputs around the buzz surrounding Tesla's entry into India. Parikshit, good morning. So is it happening? Is Tesla coming in?
Well, definitely. The entry seems on the cards. We have been told by our sources over the last few weeks that Tesla is looking at an India entry in 2025. They're also launching a low-cost, affordable electric vehicle range, which will be around 20,000 or 25,000 US dollars, and those are the cars which could make their way to India's shores first. And we're now told that the India entry and retail operations could begin as early as April this year. We heard from our sources that they've zeroed in on locations in BKC in Mumbai and AeroCity in Mumbai, where they would like to start their operations, sales operations only in the first phase, because we believe they're considering importing from Berlin into India and selling them. We are also hearing that they have not committed to manufacturing as yet, even though they continue to weigh their options. At the same time, they are committing to increasing sourcing from India much more. So for 2025, they would have imported $1 billion worth of electric vehicle components from the Indian ecosystem, Indian component makers and suppliers, and this could significantly go up in the next few years. What we are also hearing is that Tesla has been hiring. Of course, they're looking for about 13 or 14 roles for the India market. This includes sales advisor, store supervisor, a PCB design engineer as well is what they're looking at. So let's see what happens over the next few months. But of course, it's going to be very interesting. And Elon Musk is also likely to come to India with Donald Trump this fall.
that graphic, right? 70% tariffs. And of course, the company is expecting those tariffs to go down. So that's the main thing. How much, where will that tariff rate drop down to? That'll determine the cost of that car on the roads and, of course, consequently, competition for players like Mahindra, etc. By the way, we had Anish of Mahindra with us and we asked him about Tesla's imminent entry. Listen in.
We are happy to have competition in India. It will help the electric segment grow as well. The key for us, as we've always maintained, is that what we've seen the government do is take all actions that essentially foster make in India. That's the most important part. If India becomes a dumping ground for the rest of the world, whether it's in steel or automobiles or anything else, that's going to be negative for the economy. So as long as every maker in the world is making in India, that's a better outcome for us.
Okay, so that was Mr. Anisha a while back, just when we were discussing the M&M earnings. Just very quickly, to wrap up this story, Parikshit, the pricing, you said that they could be looking at coming in at around $25,000, right? That's X of the duties. So, I mean, rough math, that translates into about 22 to 23 lakh rupees. Even if you add the duties, this looks like a very competitive price point, doesn't it?
It is a competitive price point, and they know that they have to grow their market share all around the world. One of the reasons why they are coming to India is because they face a lot of competition from Chinese BYD in all markets, and they need more geographies where they can increase their sales. One of the reasons why they're bringing a low-cost car is because they would want more people to buy their EVs. You're absolutely right. Even if they bring a $25,000 car to the India market, that will still attract duties. And currently, the duties for imported cars, fully built imported cars, up to $40,000 is still 70%. The government has reduced customs duty on cars, luxury cars, costing over $40,000. But as far as cars up to $40,000 goes, the tariff rate is still 70%. Even if this goes down significantly, there will still be some amount of tariff, and the car would cost around 30 or 35 lakhs. This market in India is still very small. It's about 1 or 2%. But yes, there are a lot of players in this space. You've got Mahindra, which is launching their EVs. You'll be competing with the likes of Mercedes and others. And most importantly, we should tell our viewers that today there is a very important meeting that the Commerce Secretary
got that. Parikshit, let's just talk about the other one as well, right? Sources are telling you that the Commerce Ministry is today called an interministerial meeting on US-India bilateral trade ties. Tell us about that.
Correct. So the Commerce Secretary, who is the senior-most bureaucrat in the Commerce Ministry, he's chairing a meeting with regard to automotive tariffs. Now, this is an interministerial meeting where you'll have officials from Niti Aayog, the Prime Minister's Office, Ministry of Heavy Industries, Road Transport, and they will be discussing what kind of concessions can be given under the bilateral trade agreement. This will be the first meeting that will be held after the Prime Minister's visit. This meeting is solely regarding automotive tariffs, and something important could emerge.
All right. Thanks very much for that, Parikshit. Appreciate it. Let's talk about the telecom space now. This is, of course, the Bharti block, which happened. Big one. FIs have bought about 5,200 crores worth of stock in that block. Gaurav Malhotra is with us, Executive Director at Axis Capital. Gaurav, good to have you with us here. Thank you for your time. I mean, just first thoughts on the block which has happened. It's a big one. And, you know, it's kind of answered that question. What will FIIs buy? When will they return? Well, they came back to buy that block yesterday, even if they're not buying anything else at this point in time. But, you know, just your thoughts on the block itself and the trajectory ahead for the company.
See, the thing is, you know, from our perspective, you know, telecom is in a very, very good position right now, the telecom space, and Bharti as the market leader is benefiting from that, right? So you have a situation in which the earnings growth momentum is very strong. The visibility of this earnings, which in the current market environment is also very important, is also very high. Right. The company from the perspective, you know, while from a valuation perspective, it is not that cheap, but, you know, there are enough catalysts. So in the third quarter, you know, management alluded to maybe bumping up the dividend a little bit. You know, that would also act as a catalyst. So from our perspective, you know, obviously the stock has done very well. And in this weak environment, it has outperformed quite massively. But even at an absolute level, we do feel that there is upside on the name on the back of the very strong earnings. The EBITDA CAGR is going to be around 18-19% over the next 3 years with very strong confidence. So that's the way we are sort of thinking about Bharti today.
Okay, all right. Hi, Gaurav, and good to see you. Gaurav, I wanted to ask you about, this promoter selling. How will the street take it? It's happened more often than once. They need to fund that BT acquisition. So how much more money do they require? Do they think they have to sell a little bit more? And your take on this?
Yeah, actually, quite a bit of the selling bit in the promoter group, which is happening, is actually on that restructuring in which Singtel's and Sunil Mittal family stake had to sort of be equitable over the coming few years. So we are not really thinking too much from that perspective. And what we had done in our work some time back, right? The British Telecom acquisition, which you're sort of talking about. If you just look at it, the kind of dividend which the dividend yield of British BT Telecom, right, versus the kind of interest payments which will probably be having to make paid for that acquisition, I think so that's almost equitable. So you really don't need to sort of liquidate or monetize any of the Airtel stake to fund that kind of a transaction. That has been as per our working.
Okay, so then, I mean, you don't expect them to sell anything more, right? You're saying that they can be amply funded via the dividends.
BT is like a self-funding acquisition.
Gaurav, on the other one, which is this Vodafone idea, right? And the dues and, there's been so much talk. I mean, even after the budget, when my colleague Shireen spoke with the secretaries, etc., and asked that question, well, it's up in the air. We don't know when it'll happen, how it'll happen, etc. But hope's alive, and it's important not just for Voda, but for the industry and even players like Indus, etc. Any thoughts?
See, it's always very difficult to take a call on these kind of, news flow, right? From our perspective, the way we are thinking about it is that, there is obviously uncertainty on Vodafone. What happens with the AGR, what happens with the debt raise. Do note that the debt raise is now quite delayed. And while they have enough money in the kitty to sort of fund their capex for this year and maybe next, but beyond that, obviously the debt raise becomes critical. So for now, so that's why our negative. That's why we have a negative view on Vodafone. Just there are too many imponderables for us to sort of take stock of. And then obviously Indus is a beneficiary or gets impacted one way or the other. So if there are uncertainties on Vodafone, then obviously the same thing sort of holds true for Indus. So while Indus will have good free cash flow yield, etc., but we still are sort of neutralish on that name precisely because of issues with Vodafone. Almost 35-40% of incremental revenues of Indus over the next 3 years are premised on Vodafone doing the network expansion the way they have sort of alluded to in the last 5-6 months.
Okay. All right, Gaurav, thank you very much for that perspective. Much appreciated. We'll leave it there for now this morning. The pre-open rates are in, and we are seeing some profit taking in line with our neighborhood because Asian markets were also cooling off, like we've been telling you. Right now, it's a 100-point cut on the Nifty. That's what the pre-open is suggesting. Similar for the mid-cap index, and pretty similar for the Bank Nifty as well. So everything in sync. Let's go back to, that's the mid-cap index. Let's go back to our technical experts to get some final trading ideas. So Darshan, what would your 9-10 call be?
Well, first, I had explained do not go long in the index, and I am repeating that. BHEL is an intraday short with a stop above 190.
Okay, BHEL is a short call. Got it. Mitesh, just remind us of your index call as well and the stock, 9-10.
So on the index, I maintained that try to attempt long is around 22,870 zone with a 70-odd point kind of a stop loss. That still remains. And on the stock side, HUL is a short call with a stop at 2321 for targets of 2240.
It's a lower start. I mean, the Nifty will come up on your screen and it's a 100-point cut straight off the bat this morning, at least at the end of the pre-open session. So we're back at about 22,850. Not being able to clear that zone in a convincing manner, right? 22, under 800, around 800. Okay, let's talk about one more pack. And this is a note written by Macquarie on the CDMO companies, contract research companies in the pharma space. Vinny, take it away.
So absolutely, we have a positive note coming in from Macquarie initiating coverage on most of these CRDMO companies. Now, obviously, they believe that this sector is at an inflection point. They see an improvement in terms of profitability, return ratios for these players, and overall, those CDMO players are trading at a premium valuation. We have seen a run-up coming in these stocks in 2024. They believe that the company will still be offering a better growth in terms of EBITDA growth, twice the growth that they're expecting in the next 3 years, as well as a better return on investments is what they're watching out for. That also is 2 times versus their global peers. So that is why the premium valuation, they believe, is something that is justified. Now, what will drive the growth for these companies going forward? One, increased pharmaceutical outsourcing, moving out of China to coming to India is what they're expecting. There's also drug pricing pressure that is coming in. That could be some bit of a benefit coming in for these CDMO players in India. Other than that, geopolitical factors are there, leading to a restructuring in terms of the supply chain for the pharma sector is a positive. Now, in terms of the preference of their liking for CDMO players, they like Divi's Lab first, Suven, Blue Jet Healthcare, and then Syngene. They've initiated coverage on all these companies, outperform rating, and have given a target price for this as well. So for Syngene, target price is at 835, Blue Jet is 1,000 rupees, Suven Life is 1,500, while Divi's, they believe, could reach 7,400.
Okay, thanks a lot for that, Vinny. Well, let's hop across to Sudarshan. Sudarshan, CLSA believes after that 40% correction in Tata Motors, the prospects look up, I believe. Tell us more.
So Tata Motors stock is down more than 40% from the record high hit in July 2024, and it's the biggest underperformer if you look at all the companies in the auto pack. Now CLSA has come out with a note upgrading the stock with a high conviction buy from accumulate, and target is unchanged at rupees 930 per share, implying an upside of around 36% from current levels. And this upgrade is mainly on the basis of valuation. What it says that JLR is trading way below its normal multiple of 2.5x, and at current price, that's Tata Motors is trading around rupees 680 per share. So at current price, implied per share value of JLR is rupees 200 per share. But if you look at the CLSA's target, in that target of rupees 930, as per CLSA, value of JLR is around 450 per share. And because of that, it believes that there is enough cushion against impact of US tariff and weak demand or margin that company has been highlighting. So even earnings for Q3 were weak, and we are expecting that even Q4 is likely to be weak because of geopolitical issues and demand concerns.
So thank you very much for that. Mitesh, by the way, did we address Mahindra with you? Any thoughts on the stock price? Actually, even Tata Motors. Tata Motors, of course, has been underperforming for a while, as we pointed out. M&M, of course, sharp cut 5 days, 15%.
So, Prashant, M&M, if you look at the last 1.5 years of history, 2,700 is the level from where the stock has bounced back on at least 7 or 8 occasions. And on the upside, it's failed to clear 3,200 on many times. So I think it's looking like a range. 2,700 to me remains a very important support level for M&M. And I think from there, you might see a reversal happening on the upside.
Okay. I think we've got market open coming up in about a minute or so. So let's just stick with prices. Mitesh will talk to you again a little later. I think we've got a 100-point cut on the Nifty. The low, of course, has been made at about 22.7. I think it was 775, which was the low, which was made on Monday. And of course, we've not sort of revisited that. But this morning, we are starting a little lower. Some pressure is what one is expecting, or rather going into it. Look at Aurobindo Pharma at the bottom of the screen. Stocks down meaningfully, 4%. Piramal Pharma. Actually, if anything, the one pack which stood out yesterday was the pharmaceutical sort of stocks. A lot of them did quite well, and actually Monday and yesterday.
22,725, Prashant. 22,725.
725, not 775. 22,725 is Monday's low, and I mean that was lower than the January lows, which is about 786 or so. So I mean that's still about 100 points away from where we left off yesterday. Then we got market open coming up, and what do we have? First rates up on your screen, 22,820. The Nifty Bank is down about 0.5%, 48,860. We've got the IT index, which is down about 0.25%. The Sensex is down 0.4300 points lower. It's all red. I mean, actually, very few stocks in the green. About 5 names in the green, and everything else in the red is what you have. 0.5% lower, 112 odd points in the red at this point in time. So it's a negative start sort of kick things off. Let's get down to stocks. Surabhi.
Yeah, and it's a little worse off than what the pre-open was indicating, because the broader market cut is already twice as much as the Nifty. So much for hoping for some stability. But anyway, let's see. It's an early start. Maybe we see some pickup later on. In the 0.5% Nifty decline, the highest are pharma stocks, and we know why, because, you know, the president, US president himself has said the tariffs are coming, 25% on pharma imports into the US. So this one is a bit of a no-brainer trade that's playing out. There's absolute fear. Look at the stock prices there. Cipla, Lupin, Dr. Reddy's, doesn't matter, Sun Pharma. Pharma is down big time. That's the first headline. The other stocks that are falling include Adani Ports, there's Power Grid lower, there's M&M, which is again lower about 1.5%. Trent is declining. The large cap big boys are not offering much support at this point in time. Reliance is down 0.5%. Stocks like ICICI Bank also lower by a little over 0.5%. Infosys, yesterday tech was a good support, and you know, that's not quite the trend this morning. Tech is either negative or flat. So TCS, Infosys are on the red side of the screen. Stocks like HCL Tech are sitting on the fence. There's absolutely no sign of buying really. NTPC and Tata Consumer are the only two stocks which are up more than 0.25%. Other than that, it's just a trickle. It's a down morning, 120, lots of pressure, and we're again down to testing the zone of 22,800.
Well, that's right, Surabhi. But from the broader markets, let's start off with some stocks that are reacting in the green. 63 Moons Technologies, yesterday on the BSE, they had spoken about a one-time settlement scheme. So that's why that's one of the few stocks that's opened up in the green. It's up 2.5%. You have Reddington. That was a relative underperformer when we had that big bull run. But in the last few trading sessions, it's done well, actually, Reddington. The results were quite good. The management commentary as well was good. And that one, in fact, is up. Gillette, shaving away, looking good. Volumes fairly good as well. 50,000 volumes in the first minute itself for a counter of that size. And the stock is up close to around 3%, so it's building onto those gains. Borosil Renewables, that's the other one. We had the management, Mr. Keruka, who joined us yesterday. He's saying brace for margins closer to around, that 25 to 30%, which hasn't happened in the last many quarters. So the street likes that as well. That stock is up and about. RVNL, as I said, I think it's bouncing back. You have a couple of other names like Equinox India. That stock is up. IRDA as well, mildly in the green. But I'll tell you what, when you have a start closer to the support level, sometimes it's a blessing in disguise, because you could see a pullback from there. We were down 130 points. The 22,800 is the low of the day. The good news, though, is that at least in the first few minutes, you have a fair number of stocks that are advancing. Advanced decline ratio pretty much even Steven, with few more stocks advancing than declining. So let's see how this goes.
All right, absolutely. 100 points lower, 22,850 is where we find ourselves at. And more stock-specific conversation in the broader markets, etc. as we go along. Let's welcome in Pratik Gupta, who's with us, CEO and co-head at Kotak Institutional Equities. Pratik, good to have you with us here. Good morning. Thanks for your time. So with just the key takeaways from the conference, Pratik, at the margin, while the correction perhaps was not caused by the fear of tariffs, I don't think that's the case. I don't know if you disagree. But now all this talk about tariff is a spanner in the works, right? I mean, look at this pharma thing. Now you got to look at which company gets impacted more. I mean, it just complicates the picture, right? Even if stocks have fallen. And muddies the waters in that sense. Just your thoughts, Pratik.
Yes, hi. Good morning, Prashant. Just firstly, as far as the conference is concerned, we're still in the midst of it. Another 2 more days to go. But as expected compared to last year, while the turnout is still very, very strong, we have about 200 plus foreign investors, about 700, 800 domestic investors. But the mood is definitely a lot more downbeat, a lot more cautious, circumspect. Although nonetheless, given how stock prices have fallen in the last few weeks, there is a lot of interest in checking if this is a time to buy or there's more downside. In some cases, investors meeting their portfolio companies, just trying to figure out what the outlook is like. So the conference, the mood is definitely a lot more downbeat compared to last year or even a few months back when we were hosting a lot of other investors coming into India. As far as the Trump tariffs are concerned, yes, we agree with you. And that is one of the reasons why I guess globally we're seeing a bit of a slowdown. When there's uncertainty, typically businesses tend to pull back. They hold back on their investments, their expansion plans. And that actually is the bigger damage than perhaps the direct impact of the Trump tariffs. There could always be some walking back, or there could be renegotiations. And, one day there are tariffs, the other day they're, postponed. So those kind of things keep happening and will likely keep happening. We will live in a more volatile world. So in that scenario, what we are seeing is globally and including in India, we're seeing the private capex cycle sort of getting pushed back a bit, which in turn is obviously a bit negative for some of the capital goods companies in India. But that is definitely impacting the growth environment globally and even in India to some extent.
Any conversation, Pratik, around Tesla specifically? Anything you picked up at all? How are investors? I mean, Indian auto companies are, they're in everyone's portfolios, right? A big one, Tata Motors, Mahindra. Any talk around this one?
Just some. I mean, I think it's early days. It'll take time for them to ramp up, and obviously they'll be catering more to the relatively, mid to higher end segment. So less of a concern, and also a lot of the domestic auto companies, their stock prices have fallen a lot. So in fact, we're seeing, despite Tesla's entry, a lot of investors meeting these companies and looking to buy these stocks as the outlook is perhaps not as bad as feared, and Tesla's entry will take some time to have an impact. So not as concerned, to be honest.
By the way, on the market, there's intense volatility in the first 5-7 minutes of the open. The Nifty fell 120 points and it bounced back. The cut was hardly 25-30 points. Now again, it's sliding down about 1%. So it's really going all over the place. The good news is the mid-cap index has shown a very, very good recovery. From a 1% decline, look at the mid-cap index. It's actually positive now. So there's a lot of bottom fishing that's going on, bargain hunting. I just want to pull up some stocks. Look at Hitachi Energy. So what are people buying? Where are the bargain hunters going? Hitachi Energy, Redington, Electra, Green Tech. A lot of PSU stocks are seeing a lot of buying today. Pull up a Garden Reach, shipbuilders, a lot of defense stocks, actually, even the private sector names like Data Patterns, etc., up and about. And on the volume charts, it's really PSUs all the way. RVNL, RailTel, these are the stocks. So PSU seeing buying, some defense stocks seeing buying, and overall a recovery in mid-caps. Let's see if this can sustain. Pratik, hi. Great to have you on the show, and thank you for joining in this morning. On the sectors that get impacted by tariffs, for instance, pharma. I mean, the knee-jerk reaction this morning was sell pharma because Trump is saying 25% tariff. But how would you navigate it? What is the house call on areas like pharma? Because otherwise, there's relative safety. It's perceived to be relatively safe. But now with companies being big exporters, you have, another uncertainty out there.
Sure. So I think as far as pharma is concerned, there are hardly one or two companies which are almost 90-100% dependent on the US, for example. Most Indian pharma companies will have a mix of a US business, European business, other global markets, and a very strong India business. So our view is always, or has been for the last several months, that focus more on companies which have a large domestic presence, because there the risk of tariffs is a lot less. Second, even where there are tariffs, companies which have a very strong product pipeline or strong brands or a sort of very strong market share in their respective generic products, we believe that they'll be able to pass on the impact of the tariffs. India still remains one of the lowest cost drug producer in the world, especially for generics. So to that extent, we're not as concerned. And thirdly, from a valuation perspective, especially in the context of the overall market as such, we find the pharmaceutical sector now looking relatively attractive. Most of the large cap pharma companies in particular are trading in their sort of mid-20s on a one-year forward PE, and earnings growth is in the mid-teens. These are generally companies with strong balance sheets, very good ROEs, very strong free cash flows. So we like the pharma sector now, especially given the correction that's happened over the last few years, despite the Trump tariff threat.
All right. Hi, Pratik. Let's look inward, because President Trump's tariffs is creating a lot of uncertainty on pharma, which you mentioned, like autos and the other sectors. Let's look inward. Let's talk about sectors I think we have briefly spoken about in the past, and you were hinting towards some kind of positive stance. Insurance companies, they haven't really done much. And my colleague Yash had put out a piece yesterday. He was talking about valuations being far more palatable. What's your view on that space? Do you think that could be the pocket to hide in, where valuations are there, in your favor? There's that penetration argument that we keep making out here. Do you have a split verdict out there? Your view on the insurance stocks?
Nigel, yes, we've liked the insurance sector, and that rationale hasn't changed much. This is a sector which, for the last few years, has been has taken a lot of knocks. There were, we had the COVID-related claims, we had the taxation changes, we had the surrender value issues, and there were all kinds of. Now you have the composite license threat. So the sector's been going through one issue or the other for the last few years. And as a result, the stocks haven't done much, and therefore the valuations now are looking very, very attractive from a compared to the broader set. And as you rightly said, yes, the penetration is still very, very low, a long way to go. So for investors who have a slightly longer term horizon, let's say 3 to 5 years, the life insurance stocks in particular are something we like. And I think along with that, I would say not just the insurance stocks, even some of the other financial stocks, especially the large private banks, or even some of the mid-cap private banks, the way they've come off in recent weeks. While the growth may not be great, but valuations have come off a lot. And we don't see the kind of worries which are out there on asset quality or NIMs or the growth is still decent. It'll be, low double digits, something in most cases. And we think the asset quality concerns at this point in time are a bit overdone. And more importantly, again, valuations are somewhat more attractive in the entire financial stack. Insurance is definitely one of them, but also I would highlight the private banks and some of the large NBFCs as well.
Private banks and some NBFCs as well. Just a quick word on, and we have a banker coming up a little later on the program, but again, any feedback on supply this year, equity supply this year, Prateek? Because, there was LG was lining up for a big one, and some estimates are the supply could be, and I think Atul Mehra of Axis was telling us $55 billion worth of supply this year lined up. But I mean, these numbers change and self-correct depending on what the market situation is, right? What have you picked up, Prateek?
Absolutely, Prashant. As you rightly said, these numbers self-correct. The sellers are not there at any price. If there is a $55 billion pipeline, and I would agree, yes, there's a long list of companies which either want to go public, or there are PEs or promoters who want to sell their, offload their stakes to some extent. But it's not price insensitive. So at current prices, we think the supply pipeline, especially on the block side from the PEs and promoters, that will get pushed back unless there is some end of fund, the private equity fund is reaching its end of life. Those are different situations. But otherwise, typically you tend to see the supply gets pushed back. And that always adjusts with the demand environment. When demand is very strong, when the markets are very bullish, you'll see a lot more supply coming in. When markets are down, sentiment is very negative, buyers are demanding a much bigger discount, then the supply sort of dries up or gets pushed out. And you'll tend to see IPOs which will happen. Kotak, as you know, is one of the biggest banks in the IPO space. We still have a long list of IPOs, but most of them are probably later in the year. So let's see how markets pan out. We think things will stabilize in the next few months, and that's when you'll see a lot of these IPOs and blocks and QIPs happening again. I would just say actually QIPs may be a bit less because there was a lot of opportunistic capital raising happening in the last 6 to 9 months. So it'll be more IPOs and blocks in our view in the coming financial year rather than QIPs.
Interesting. All right, we'll keep that perspective in mind, Prateek. But before we let you go, on the market per se as a whole, you just said that you were expecting things to maybe stabilize and start easing out over the next few months. But really, what is the call? I mean, for the rest of 2025? Range-bound market, more downside, and are you in the camp that's really hopeful of a quick earnings recovery? I mean, the hope is now on Q4 and Q1.
So as far as earnings are concerned, no. We think the outlook is unfortunately still quite bleak, at least in the short term for the next 1 or 2 quarters. In fact, on the consumer side, some of the companies we've been meeting, they're still guiding for a weakish quarter in the March quarter. And I think even the June quarter may not see a sharp recovery. So the earnings side, we're still somewhat conservative. We think we'll see modest earnings downgrades. At Kotak, for the Nifty, for example, we are projecting about a 15% earnings growth for the Nifty in FY26 and another 14-15% in FY27. We think there could be some modest downgrades to FY26 earnings estimates. As far as the market as a whole is concerned, I think the large cap space, we think there is value emerging over there. That's a segment we typically like. We don't see too much downside over there. But the small and mid caps, by and large, and there will be exceptions, but by and large is still trading at expensive multiples, the small cap index in particular. The other thing to keep in mind is the investor sentiment, and especially among the foreigners, where one, you've had the very strong US dollar, the Trump tariff uncertainty, earnings growth slow down. And by the way, I should also mention the capital gains tax in India is also now beginning to bite. When when they were seeing a 20% expected return in India with a very stable currency like what we saw in the last 2 years, capital gains tax of 10% or even 12.5% didn't matter. But now with the return expectations have come down to perhaps just 10, 12, 15% in the current year, then the capital gains tax of, even for a long-term investor, about 14% including surcharge cess, that starts beginning to bite. So pretty subdued sentiment for the time being, but these are market cycles. We'll go through this period for a few months, and then hopefully we'll start seeing the government capex ramping up in the second half, and a lot of the Trump-related uncertainty will settle down. So that's why we're expecting a slightly better second half.
All right, so mood a little bit subdued, Prateek, but large caps could be coming to those levels that look pretty attractive, and a couple of sectors that you like and themes that you like: pharma, large private sector banks, insurance companies, and select NBFCs as well. So sometimes these timings of uncertainty, they provide some opportunities as well. Thanks a lot for joining in, Prateek. Hopefully the next time around when you join us, things will be a little better in terms of the mood for the markets. On that note, let's move on to our next management, the management of NHPC. The numbers actually had many, many one-offs. To understand what went on in the past quarter, how is demand shaping up, what are the projects that are coming on stream, we have with us Mr. R.K. Chowdhury, the Chairman and Managing Director at NHPC. Hi, Mr. Chowdhury. Thanks a lot for joining in. Well, your numbers had a lot of one-offs, so just give us a few brief details. How is demand on ground for hydro? Could you tell us that? And also your capex, I think, for the year was at around 12,000 crores. I think you've done half of that in the first 9 months. For this year, what do you end up with in terms of capital expenditure?
Yeah. Basically, during this 9-month result, the mainly one-off is 198 crore because there was a court case of pay anomaly. So it was in the favor of the employees. And because of that, 198 crore we have booked to the profit. And one more 102 crore we have interest on the arbitration award. So that is the mainly two figure which has brought down our PAT during this 9 months. The capex, regarding capex, we have 11,672 crore. During this year, our capex target is there. And for that, we have already spent 8,000, around 300 crore. And we are hopeful that during the remaining period of this financial year, we are going to achieve almost 80 to 90% of our capex target. Next year, our capex target is 13,000 crore. So we are on the growth path. And we have lot many projects in the pipeline. So that's why our capex will be 13,000 to 14,000 crore in the coming years. So that is there. The hydro going well. Yes, there is a lot of push by the government. There is a lot of incentives for the hydro sector by the government of India. And that's why we are moving ahead. During this year, we are going to, I am glad to share you, we are going to commission our long construction project, 800 megawatt Parvati 2 hydroelectric project in Himachal Pradesh. During the next month, March, we are going to commission. And we are also going to commission the Suvansi Lower 2000 megawatt project. It was also since construction, since long years. So that is there.
So Parvati 2 in this quarter itself, right?
Yes, yes. Parvati 2, 800 megawatt in this quarter. And I will share you after commissioning of the Parvati 2, what Parvati 2 will generate, apart from the Parvati 2, our generation from Parvati 3 will also increase by more than 1,000 million units annually. So Parvati 2 water will go to the reservoir of Parvati 3 and it will enhance the annual generation of Parvati 3 also. So a big boost for the annual generation for NHPC.
Okay, sir. So you're saying that you could be achieving about, at least 90% of your stated capex target for FY25. You've given us the capex numbers for next year. The numbers are looking good, the capex numbers. But the street is wondering when earnings will really start catching up, as a lot of these big projects start getting in the execution phase as well. On, is there any visibility or any guidance that you can share with us in terms of top line growth and earnings growth, say over FY26?
Yeah, I will share that our projects, the total hydro projects under construction is around 14,000 megawatt. Out of that, the under construction project of NHPC is 9,314 megawatt. So 67% of the country's under construction hydro projects we are working. And these projects, one by one, as I mentioned, Parvati 2, we are going to commission. Suvansi Lower, we are going to commission. Then next financial year, we are going to commission around 2,700 megawatt. And with this, the installed capacity is going to increase. And with this, naturally, our earning is going to increase. So during the next financial year, the result will come and our earning will be much more higher than the current financial year.
Sir, you're talking about commissioning. If you could just repeat that number and also tell us, for a lot of these new projects, have you already signed the power purchase agreements? And what are the tariffs that are being discussed? I mean, are they higher than, say, your blended tariffs right now?
Yes, for the PPA, power purchase agreement, for all the upcoming projects which are going to be commissioned, the power purchase agreement long term, it is for 40 years. The PPA is signed for all the projects and the tariff is as per the CRC guidelines. So whatever the cost to rupees 4 to 5 rupees per unit. So based on the completion cost of the project. So these are the there and a lot of upcoming projects. So I will share you that our Kamla project 1720 megawatt, the Suvansi Upper 1605 megawatt. So these projects construction activities are going to start. The Uri 1 stage 2 240 megawatt, Dulhasti stage 2 260 megawatt. And Kirthai to 930 megawatt. These are the projects in the pipeline. So the construction activities are going to start very soon. We are going to publish the bid NIT for the works of these projects very soon.
All right, very quickly, sir, before we let you go, what's the update on the green arm listing? When do we see that happen? What is the current capacity and what's the commissioning pipeline as well?
The renewable projects, we have 261.7 megawatt so far out of the 6 projects, 5 solar and 1 wind power. Wind power is 50 megawatt and solar is 211.7 megawatt. Apart from that, we have a few construction projects, 1490 megawatt under construction solar projects. And beyond that, we are working on 1200 megawatt solar park in the Uttar Pradesh, Jalon. We are also working on 145 megawatt solar projects in Uttar Pradesh. So these are there. So we are planning that our NHPC Renewable Energy Limited, we are going to list it in another 2 years.
Oh, 2 years. Okay. All right. Well, thanks a lot, Mr. Chaudhary, for joining in and filling us in with all of those details. We'll keep an eye out on all those cues that you've given us. By the way, actually, the markets are looking pretty good. I know it's the first 20 minutes itself, but it's a good-looking screen, right, guys? I mean, if you look at the number of stocks advancing in comparison to the number of stocks declining, that's giving you some heart. A few stocks, Zen Technologies, the stock that's got pummeled in the last few days, that's pending buy orders now. That's up close to around 10%. Hexaware, I think it's listed. We have got the initial rates that are coming out. Hexaware, the initial price, I think, it lists at around 745. IPO price is around 708 rupees. So on the NSE, it appears there's a mild premium. Artica team will update on that front as well. Should, come up for you on the screen. And I think in the last few days, there was no premium, if you're looking at the parallel market as well. So Hexaware could have a decent listing, guys.
I mean, the first time, I think, advanced decline, as you pointed out, in many days now is some 3:1, actually almost 4:1. Otherwise, we're kind of used to seeing numbers which are, massively sort of on the negative side. And by the way, a lot of the defense names as well, maybe if you want to put up Mazgaon Dock, it's the top volume traded gainer right now. Zentech, again, I mean, in that same space, data patterns is up 9%. So Mazgaon Dock, Zentech, data patterns, Garden Reach Shipbuilders, Bharat Dynamics, that's BDL, and a few others. So a fair bit from the defense space, which is starting to move up as we speak. Look at something like a Tata Investment Corporation. I mean, Tata Investment Corporation is it's aggregation of listed companies, listed holdings. And that's up, that's telling you, right? I mean, that's up 14% right now. And big volumes, huge volumes right now. KRN, which is a fairly recent listing, is up about 4%. And I think we did mention Hitachi early on, which is looking up as well. We'll take a quick commercial break here. We're going to come back with the management of Kim's on the other side. So more earnings and future outlook conversation coming up in just a bit. Stay with us.
Clearly today, financials looks interesting category from a valuation front. We are possibly at a bottom in terms of what we've seen historically on financials. Earning growth is on track. Even last quarter or so, financials continue to report a nice earning growth. In fact, if you look at quarterly, financials are almost 40% of NSE 500 profits. So it's a large, profit surprise or profit growth coming from that segment. Financials are interesting. Yeah, consumers can be a nice sweet spot for, a lot of volume growth, stroke profitability growth, because post budget, that large number of 80,000 crores to 1 lakh crores range for tax saving by, individuals, which can flow into consumption related activities. If you look at markets, whatever concerns of, valuations were more in the, the larger market, like small cap, mid cap indices had these challenges of valuations. I think on a large index, Nifty, reasonably, comfort on valuation front, plus all those factors you mentioned, economy on a better track, especially, the December GST collection was pretty good at, double-digit collection growth we saw for quite some time. So yeah, macroeconomic.
Okay, welcome back. We are about 34 points lower, but the market breadth, etc., is looking much better, and that is welcome relief, really. Let's stay with the earnings picture. Kim's Hospitals is the company we're speaking with next. Revenue growth was healthy, but margins were under pressure. Occupancy also declined on a year-on-year basis. How is FY26 looking like? What's the growth outlook, and what's the picture going to be? That's the question. Bhaskar Rao is Chairman and Managing Director at Kim's Hospital. He's joining us right now to take some questions. Mr. Rao, good morning. Great to have you with us here on the program. Thank you very much for your time. You know, I think one of the reasons why maybe profitability, etc., has remained a little sluggish on a year-on-year basis has been because of Sunshine and the Nagpur operations. If you can start there, sir, what is the ramp-up looking like? When will you be done? And just run us through those two, and then we can look at the whole picture for the company.
See, basically, the Sunshine is mainly an orthopedics one. Most of these procedures are elective, especially in this quarter is a dull quarter. All electives will keep postponing it. So that's why, as such, Kim's Sunshine is doing very well. And as we expected, in the last quarter two did very well, and even the quarter four also is going to do well. So as we expected, the ramp up is going on very well. Because of the last dull quarter every year, and especially in orthopedics this quarter on a historical basis, that's why it is not there. Otherwise, on the company side, doing very well. The quarter always is dull because we added another 700 beds this quarter. That's why the occupancy looks showing little decline. Apart from the historical Q3 will be little dull.
Okay, all right. Hi, Mr. Ravan. Thanks a lot for joining in. So with these 700 beds, what is your total capacity as of now? And also, you're sticking to that guidance, right? Revenue should double in the next 3 years. That's correct?
Yes, the number of beds will be around, census beds will be 4,300. As of now, with the adding of these 700 beds extra. And non-census beds will be another 1,000 beds. So these 5,300. And the revenue, what we are looking in the next 2 years, it will definitely grow as we promised, because the next 6 quarters coming in the next 2 years or 8 quarters, okay, the most important like Bombay and Bangalore are going to operationalize, and we are expecting a good ARPOBs in those two regions. Nearly 1,000 beds are coming in these 3 places. 2 units in Bangalore, 1 unit in Thane. And then the existing O&M contracts, what we have taken, that also going to show some growth in the next 2 years.
So Rao, Bangalore and Thane combined 1,000 beds, right?
Yes.
And when is that likely to come up? Is there a little bit of delay here in terms of starting of operations?
So basically, we were thinking of end of this first quarter. Maybe definitely it will be in the May, June. We can able to start because of after the completion of the project, we need to apply a lot more permissions from the government and all. We are on the job. The construction work is almost 95% is done. Simultaneously, we are applying for those things. So to prevent the loss funding, so once everything is done, then we want to board the consultants. Consultants are also ready to board. So when even if you advance 1.5 months, is a huge cost for the loss funding, especially the consultants. The other staff are start recruiting. I think May definitely will start functioning.
Sorry, just to look at the sort of talk about Kerala as well quickly. I mean, you've got strong operations there. Overall, what will be the bed capacity, sir? I mean, by the end of FY26, by the end of FY27, just give us a sense, because you're really expanding. The Bombay, the Karnataka, of course, is big focus area. Bangalore, Thane, which you spoke about. Just give us an overall sense.
Usually it will be around 7,000 beds, excluding the O&M beds. O&M beds will come another 1,000 beds by 27. So it will be so another 1,700 beds will come Bangalore, 1,000 beds here, and then maybe some in Kerala. And some of the beds, additional beds, are going to add in Andhra, like Srikakulam, Anantapur, Kurnool, Ongole, and Rajahmundry. And these areas will be able to add 7,000 beds by 27, maybe 1,000 beds, another O&M contract beds.
So total 7,000 beds by end of FY27. FY27. Got that.
Yes.
All right. Thank you very much, Mr. Rao. Appreciate you joining us, and good luck as you continue to execute. Surabhi.
Okay. All right. That's the latest from Kim's Krishna Institute of Medical Sciences. The market, by the way, is flashing some green. So it's a very decent recovery given the big cut. We were, remember, down 125 points at the open. And from there, the bulls have managed to climb their way back up. So it's looking good. And now they're going to be taking aim at the 23,000 mark. Well, what does the next couple of months, the remaining 10 months of this year at least, look like for deal activity, given the kind of sentiment in the secondary market? We have a special guest joining us here in the studios, Amit Thawani, who is MD and, of course, also head of investment banking at Nomura. Amit, great to have you here in the studios with us. Thank you so much for joining in.
Thank you, sir.
When we met in person last, it was December.
Yeah.
And, there was a lot of talk about hope and what the new year will bring. What the new year has brought about are challenges, whether it's currency depreciation, whether it's the equity market, whether it's tariffs. So what do you make of the overall sentiment and how that's spilled over into Deal Street?
Thanks, Surabhi, for having me on the show. When we met in December, we did discuss that markets are looking somewhat high and at least overheated in certain areas. To that extent, if you see, there has been a correction. Does it overly worry people like us? The answer is no. We still feel that the deal activity will play out. Currently, there's a lot of uncertainty with respect to US and the tariffs and how the entire thing pans out. But net, if you read the global commentary, if you read, the right quality of literature, you will realize that India is going to be a net beneficiary in a number of ways. From a Deal Street perspective, if you see, despite all the volatility, despite all the, talk around, serious volatility impacting markets, Indian retail not spanning out, etc., we've had large IPOs which have actually happened.
Yeah.
Whether it's Hexaware, whether it's Dr. Agarwal's, whether some of the others. And the pipeline in terms of IPO activity looks pretty strong. I know it's a brave statement to make.
You know why? If I could just come in over here, and you're saying that the deal pipeline activity still looks strong. I'll give you a number that one of your peers, who was in conversation with the bankers at Axis a couple of days back, they gave us a number which made us all sit up and take notice. They said that you can still expect supply of 50 to 55 billion coming to the market across IPOs, across all kinds of ECM deals. Now, is that still possible? Is there appetite? And what do your numbers or your rough calculations say?
So I don't want to get bogged down to a number, but I think last year there was IPO activity about $16 or $18 billion, whichever estimate you take, and blocks of about $20 billion, roughly, which was the highest activity on block side. We normally expect Deal Street to revive with blocks, which is already underway. Yesterday there was a large block that happened. I'd be sort of assuming a deal activity of anywhere between $35 to $40 billion happening, over the course of next 12 months, or 12 months could become 16 months. I think your audience should also realize, deals can sometimes take a little longer. So it's not about deals getting called off or deals getting sort of out of question. It's more about sometimes timing that you have to play into. And overall, the quality of the supply of paper is quite good. Which means that if in a particular month you're not able to price it, you'll price it the next month.
Absolutely.
That's how we see it.
Amit, morning. 35 to 40, that's the total equity supply you're talking about, right? So that's already a little lower than what we heard earlier. But those numbers...
These numbers pan out. You ask them in the second half of this year, this number could be higher.
And I think it's also a function of the market, right? They self-correct and they go up and they go down, and all that will happen.
And what happens is also, you see, as you have seen a sudden rush out of liquidity, you'll see a rush off in liquidity also. So these things happen nowadays. So you have to play it by the art.
But we've had a few years of extraordinary markets, right? You wouldn't disagree with that. It's just incredible the amount of sales we've had from, not just the primary market, but promoters, early investors, PE, funds, for a variety of reasons. I mean, it's been natural. Everything is cyclical, right? Everything reverts back to mean, one way or the other. You think this is going to be that year? What is your sense, Amit?
See, people are forgetting the quality of supply has been pretty good. There may be a bit of pricing aspects which are...
on supply, quality supply will be wiser in a couple of years from now. I mean, it's been good. I don't disagree. It's not been crappy like in earlier cycles. But
so
there's
once
been
you
a lot
have
of
a
supply.
quality of supply which is good, as I said, there can be timing mismatches on issuances. Issuances are not going away. You could have a scenario where 1 or 2 months extra taken to price an IPO just because of volatility conditions or liquidity conditions, but the IPOs happen. It's a matter of sometimes a bit of more push into the market and waiting for the right liquidity conditions to price them. But the IPOs will happen.
All right. Amit, I wanted your view on this.
We are also becoming a deeper market. Let's not forget, we are not today almost a $5 trillion kind of a market cap country. So you cannot compare that just because the last 3-4 years there's been a good amount of supply, so it has to flat out.
No, actually,
it's a function of liquidity, like you're saying, and with the kind of domestic institutional liquidity in the market. But the question is, with the market sentiment and the market being as challenging as it has been, whether you're confident of seeing that kind of liquidity to push through the blocks, the deals, and the QIPs.
Last year also, FIs were significant net sellers on the secondary market.
I wanted to ask you on that.
But they were significant buyers on the primary
Exactly.
market.
So I wanted to ask you on that,
So
right?
these are cycles. These are trading patterns that investors will follow for themselves.
But the only thing is that the bigger fear is that will supply overwhelm demand. I mean, markets always overdo things, right? You will agree.
So that's what I said.
So,
it will pan out. So if you're getting too much supply in a particular month, it may not happen that month. It may take 2 months more. So it will roll over. Some amount of supply will roll over.
Because if somebody like Narain, for example, he said this on a public platform. I think he was reminiscing about the late 90s. I mean, that big bull market was ended by too much supply. I mean, it died. I mean, the market died.
It also ended up with a lot of crappy supply.
But as I said, we'll be wiser in hindsight, right? A few years down the line.
Is much better.
Well, you look at the last 5 years.
Yeah.
The quality of supply is much better.
So, Amit, I wanted to ask you about this, because on a day-to-day basis, we track the FI flows in the secondary market, and they have been negative. But as you mentioned, yes, a lot of that money actually has gone into the primary market, in QIBs, IPOs, etc.
And they made money.
And so if this supply is going to continue, if we're going to see the IPO market is going to be very, very vibrant, the FIs actually have a reason, right? They're making some space in the secondary market, and they're pumping back that money in. So do you think that we could see more of the same? Or, the other point of view is if the market's a little bit subdued, the IPO market gets a little bit subdued, which in turn could force the FIs not to sell so much. Your take?
So it is also sectorial dependent. It cannot be broad brushed.
Okay.
There will be pockets of market where investors may be just net sellers, period. There is just overpricing, a perception, or otherwise is that it's overvalued, and they'll be net sellers. They may not participate in IPOs also.
Okay.
But these are sectorial rotations. These are market cap rotations that every market gives you the opportunity to enter. So large caps are right now, seen as a favored bet. Now, are there enough large cap IPOs coming to the market? The answer is yes. So will they find favor in the market? The answer is yes. So these are cycles you have to play along. As I said, as long as there is no material challenged supply coming to the market, I think the market will absorb. There may be time periods which might get elongated.
On the kind of issues, just to complete this point, that we have to talk about M&A as well, which is the other big piece that you track. But just to complete this piece, in terms of the kind of deals that we'll see in the ECM space, last year's big headlines was, say, a Hyundai coming and listing in the Indian market, and the issue got, sailed through beautifully, right? There's a lot of, buzz around LG now. But the market sentiment, again, is a little different. So what are the kind of marquee headline, IPO deals or even exits that, maybe large PE exits that we can watch out for in the next couple of months?
Oh, definitely. There are bank-led NBFC IPOs. There are tier 1 large cap financial sector IPOs, which are in the coming. There are a number of large private equity, healthcare services related IPOs, and these are not sectors which are overly cyclical. These are largely defensive sectors. and they will find receptivity in the market. So watch out for healthcare services space. Watch out for large financial space.
Okay. You know, speaking of deals, look at these guys. They went away in 2000. Now they're back, and they're back at a much, much better price, 739, and that's a good premium, about 4-5% in a market like this over the
and an IPO which was not necessarily hugely oversubscribed.
Absolutely. I think till the last date wasn't subscribed as well. So that's a very, very good listing actually. And if you track, you know, the grey market premium as well, till yesterday it was absent. You know, it moved into a bit of a discount over the last few days as well.
Incidental.
So 5% uptake is good. 745.
And they're going with the Chariots of Fire
to what
theme.
we were talking.
You know, they're going with the Chariots of Fire theme, one of the most classic pieces of music there. That's a big comeback by Hexaware. But you were completing the points of, you know, we will still see some big global listings in India apart from the...
Definitely there are in the works. Definitely. Okay. Sometime, as I said, it's a question of timing. Hyundai was also in the making for a while.
Yeah.
So
LG is the next one.
There are many of them.
Yeah. So, but
there are many of them. Let me put it that
way. Do you think what's motivating them? Some of these larger sort of Indian subsidiaries of MNCs to list here.
2 or 3 factors, right? I think it's spoken of. One is obviously the valuation multiples. There's clearly a valuation arbitrage. It actually re-rates the parent in some ways. Second, a lot of these are large, matured, well-run businesses in India. They ought to have a local Indian identity in terms of a listing. It also helps in terms of corporate governance, disclosures, in terms of employee retention, etc. So I think these are well-documented reasons, and I think it's catching up the fancy.
Number one is valuation.
It's an important one. It's a very important one. From the parents' perspective.
There's nothing wrong with it, but it's just...
It's a very important one. And why should not be?
And sorry, we're going on with these equity market questions, but I'm coming to the M&A deals in just a bit. Last question on ECM. You know, the last 2 years saw a lot of new businesses list as well, you know, whether it was platform companies, consumer companies, you know, big names in the renewable space, and you folks worked on, you know, some of those deals as well. Any more sunrise big issues coming in? And again, I don't think this market would have the appetite maybe for loss-making companies right now. What's the mood in terms of the financial quality that you have to bring to the secondary market?
So there are 2 themes. Clearly, anything to do with clean energy related verticals, and it's both the infrastructure ownership businesses as well as businesses linked around that, especially given, you know, again, you can call it China plus one or supply chain benefits that India is getting. A lot of them are also export driven, and they will find receptivity in the market. It's a segment which was non-prevalent in the Indian markets for a while. We opened up that segment with Wari last year, and in many ways we see supply of paper coming in and around that area. The question around loss-making sort of tech-driven businesses, actually a lot of them are not necessarily today just a story. They are real businesses with real sort of business models which are working well. They may be loss-making, but that's simply because they're supporting growth.
Sure.
It's a very different cycle from 21-22.
Sure.
And I think the market will support them. Maybe right now the market is a little subdued for that. But as I said, these liquidity conditions, market conditions change.
So Amit, now coming to M&A, which has also been very, very active.
Yeah.
For 2025, what are the kind of big mergers and acquisitions? Inbound, outbound, what are we in for?
Clean energy will be active. It had been somewhat subdued last 18 months. Clean energy related deals will be active, albeit it not be just another international player coming and buying. It will be a lot of domestic consolidation as well in and around clean energy related sectors. You will see some financial sector activity, which had been kind of not so much last year, but it has always been in spurts. I think we are at the cusp where a lot of players in the financial sector realize the need for consolidation. You will see continuous activity around broadly industrials, and that's pretty broad, right? So it's auto related, it's some of the industrial sectors related activity. I don't particularly see too much of outbound, but in pockets, yes. There will be pockets of that. Last year, there was some activity around outbound, both on the pharma space, on telecom side. So that will be in pockets. I think the question you might also want to ask me is what happens to inbound? Strategic. Is it a very big playbook? The answer is no, but it's an important playbook to watch. It has been that way for the last 3-4 years. and you will see inbound activity, strategic, from Asia, from Europe, coming into India.
All right, Amit, we'll leave it there. Thank you very much. Good conversation. Appreciate you coming down to our studios. And look forward to our next one.
Thank you for having me.
Thank you. All right, well, let's just look at the market, which, by the way, is in much better shape as compared to the last many days. 30 points higher on the Nifty. But more importantly, it's some 5:1 advances to decline ratio. Mitesh is back with us. Mitesh, what do you make of the price action so far?
I like it a lot. Earlier in the day also I said, and I've been saying this for the last few days, that anything close to 22,800, 780 zones should attract buying. I think that's again happened. And with every bounce back, while we haven't seen a big reversal as yet, I think the hourly indicators are getting slightly stronger, and that could, eventually lead to a stronger bounce back. I suspect 23,100, 150 is the first zone to watch out for on the upside. Once we start clearing that, then I think, we'll have more comfort with aggression on the long side. But for the timing, it does look like that we might head towards those levels. With that, I have a few buy calls. Bosch Limited, I think from extremely oversold levels is trying to reverse. So buy here with a stop below 27,100 and look for a target of around 28,400 to about 450 on the upside. And the other one which I like is BPCL. BPCL, I would want to see the stock clear these levels of 255 half, 256. It's trading at about 254 half. So buy about 256 with a stop below 251, and I think the first target on the upside should be around 268 to about 270.
Okay, all right, got it, Mitesh. Thank you very much for that. We will take a quick break on that note, and now we'll come back with more in just a bit.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour.
Welcome back. So the equity market has managed to recover from the opening cuts. Let's figure out what's happening in the world of commodities. We have Manisha joining in with the latest. Manisha.
Well, thank you for that, Surbhi. I'm looking at the gold prices because we're trading yet again to very close to all-time highs of $29.40 an ounce. Well, there is tariff uncertainty, which has continued to drive safe haven buying in case of gold. Add to that the geopolitics and the way that we've seen global central banks continue to buy gold. Actually, global central banks have been net buyers in the last 15 years when it comes to gold prices. And then the investment demand also has been on the stronger side. When you look at the price increases, well, gold has been gaining for 7 straight weeks. Now, that is a chart that tells you on what we've done in sense of prices. So after 28% of gains in the previous year, we are up by 12% in gold prices for 2025 as well, clearly outperforming various other asset classes. Also, when you look at the kind of gold buying that has been happening in US has been quite strong. We do understand that a lot of banks had gotten shut there and they're buying gold from various global markets to give delivery onto the COMEX exchange there. So that really tells you on what the US markets have done. 5th of November, that is when the US President Trump was chosen. So we know that date, 532 tons, is what US was holding in sense of gold in its inventories at that point in time. By the end of December, this had gone up to 681. By the end of January, and that is where the tariff conversation was pretty high, we saw the gold holdings on COMEX gain up to 1,000 tons. So double off where we were on 5th of November. And then by 14th of Feb, that's the latest data that I have, we've gained up to 1,164 tons. And the markets do believe that by the time it's end of Feb, you could be looking at 1,200 tons in sense of gold holdings in case of COMEX there. I want to put out another chart that tells you the kind of imports that we've seen from Switzerland, that is the biggest exporter in sense of gold, on how those numbers have moved. Now, as you can see, we've seen Chinese and Indian numbers continue to decline for the month of December. But when you look at the US numbers, that's a big jump that you've seen. And that would tell you on what we've seen in sense of December. January numbers are expected to be on the stronger side as well. This is the kind of imports that we've seen from Switzerland, as you can see, last year to this year. And that number, while has declined in India and China, as you can see, the US numbers have been much on the higher side. This is a move when it comes to gold from futures to physical. UBS, HSBC, JP Morgan, all of them actually have been getting in gold into US, and those numbers clearly tell a story there. I also want to take you through on what Goldman Sachs has said in a report that came in yesterday. They're talking about 2 scenarios, and both of them, by the way, are bullish. Goldman Sachs says that they expect the gold prices to go to $3,100 an ounce, and this is on the back of ETF buying and central bank holdings as well. But they also think that the prices can go much higher, up to $33 an ounce as well, if the policy uncertainty and tariffs persist. But here, I also want to show you on what Capital Economics, as a report, has put out. They believe that the prices will go to 3,000, but they also expect the prices to decline all the way to 2,750 by the time it's 2025 closing curtain. So clearly, very volatile gold prices going forward. But at this point in time, this is the best Trump trade that you've seen in 2025 till time.
All right, Manisha, thank you very much for that. Absolutely one-way rally as far as precious metals, gold specifically, is concerned. We'll take a quick commercial break here. We're going to come back and Market Master segment on the other side. Lata will be in conversation with Sridhar Sivaram on markets. And where do we go from here? That's coming up.
On YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India's sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing 30,000 US dollars or 26 lakh rupees in America. And Tesla is considering launching a more affordable electric vehicle at 25,000 US dollars or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges.
Welcome to our Market Masters segment. Well, the markets is top of the mind, so no point discussing economy at this juncture, the manner in which the Nifty is plumbing new depths, or the persistent selling by the foreign funds has left everyone connected with markets weary. So here's a person who has seen many cycles. Joining me to give us some advice and some context of what we are facing is Sridhar Shivram, Investment Director at NAM Holdings. Sridhar, thank you very much for dropping in. And I can't tell you how many people will be, hanging on to everything you say, because there's a nervousness and unhappiness in the market. So first up, are we anywhere near the bottom, you think?
So Lata, it's always very difficult to, predict short-term movements in the market. But as we discussed even last time, that 25, there's a lot of uncertainties, and Trump is being just one of them. So what happens to tariff, how that plays out in the market. I think currency is the other issue, how our currency plays out. And my fear is that the currency can take the market up or down. If we have a stable currency, then the markets can be stable. If we have a volatile depreciating currency, if China does anything. So many variables. So in my view, 25 could be sort of the negative year. We had had 8 positive years, and it's highly possible that 25 is the year where we get negative returns, but it forms a base for the future. I mean, you can't have one-way markets. So I think in my view, this is quite healthy. We had a lot of froth. Some of it is already gone. We think some more is left in the small cap space. So that's how markets are. I mean, it's volatile. It's never one way.
No, we must come to the real story, the growth story, which, the India growth story itself remains. It's a question of the delta, faster or slower. But before I come to that, just one more question, since I will know whether the shoe is pinching you and how much. Are you in cash now, or are you reducing cash levels, or are you increasing cash levels? What's the position?
Yeah, so as a house, we do have some cash. We've been bearish, or we've been cautious since September of last year. And I think some of it is getting utilized as we speak. As I said,
getting utilized. So
yeah, it is. And as I said, that there is opportunity right now, but there is also uncertainty ahead. So you don't want to put all your money to be used up at the same time. So it's a wait and watch, but at the same time where you get opportunities, we are looking to add. So 25 will be a challenging year. So I think everybody will get opportunities if you have cash, and if stocks which have strong earnings growth may fall lesser or even go up. So it's left to individuals to figure out. So
the micros will dominate.
Micro will dominate. Macros are not very favorable. Let me put it that way.
Okay, fine. Let me get to the micros, but in a macro fashion. See, while we must blame currency and Trump tariffs and what China will do next kind of milieu, we can't get away from the fact that our earnings growth slowed and slowed precipitously. Low single digits. When did we last see that? Yeah. So what is your sense about earnings growth? Is it just going to be as good as nominal GDP?
No, so we've had great. So Lata, we've had great earnings growth. If you go back, say, leave FY25, if you take 21 to 24, we had almost, almost 20-25% earnings growth. For the first time in my history, I saw analysts upgrading earnings because every year we normally start at 17-18% and then either we go down 1 or 2% or we stay there. It was in the last 3 years we had significant outperformance. That has reversed in FY25. We think that FY26 numbers could also get revised downward because there is some slowdown in consumption. We saw the FM also using the budget to boost consumption. So there is some slowdown in consumption. Even capex spending hasn't really picked up as much as one would have expected. So I think there's a macro headwind within India. Also, there are some macro headwinds. This happens in a market. I mean, you know, every market, every country goes through cycles, and maybe we are heading into one of those cycles where things are tough. But then we emerge from there, right? So that's how the markets also emerges. So,
but isn't this combo very good? We have a budget that has given us 1 lakh crore more taxpayers. So each one of us has got some 60,000 to 1 lakh rupees more to spend. As well, the liquidity is improving. As well, rates are headed down. Is that combo good enough to pull us out of the rut of the third quarter earnings?
So Lata, all tax cuts are welcome. But if I remove my selfish views, which is that I also got tax benefit.
80,000 more.
I think, you know, a petrol diesel cut would have been a far better way of doing it because only 2 crore people benefited from the tax cut. Am I going to spend more out of that 50-60,000? Possibly no. It may just go into my bank
Especially when
account.
the wealth effect is eroding.
Yeah. So I think a petrol diesel cut would have immediately gone into the system and it benefits the entire 140 crore people. But if I'm in the FM shoe, it's a very difficult shoe to you know, handle. So I cannot really complain. Everybody will have their own views. This is my personal view that would have been a better way. Will all this have an impact? I think it will take time. Liquidity is something every banker is screaming. I think we need more liquidity. So if you speak to bankers, they say that what has happened is very good, but we need more of that. Rate cut, I think 25 basis point for that to have a transmission effect. See, today's newspaper is talking about corporates raising rates to get into the bond market. So there is no transmission effect. In fact, increased liquidity will have better transmission effect than a signal of a 25 basis point that we got. So we'll have to see how this plays out. But I think we are in the right direction. There is a cyclical slowdown. RBI and the government are on top of it. And it'll play out over a period of time.
Yeah, no, it's not very easy. You can't have an helicopter like Bernanke said and drop money.
Yeah, exactly.
Liquidity will take its time to get into the system. And you know, when we asked the SBI chairman, he said the rate cut will be transmitted maybe 2 quarters later.
Yes, exactly.
Right now, people are desperate for deposits. So, okay, you did say that this is going to be a micro year. Where would you look at?
So, as I said, in a micro year, so to start with large caps, they look far better. Even now, when we see some of the mid caps or the small caps, we very, very rarely invest in small caps. They still look quite expensive. From their own historical perspective, also keep in mind that we think earnings will also get cut. So there is a double whammy for them as the economy slows down. Otherwise, it is really stock specific. We do like financials. So that's a segment that we like. Discretionary consumption is the other one. As you mentioned that the top 2% of India gets more cash, more money in their hands. We think it'll more...
So hotels, airlines...
Yeah, so we think it'll be more discretionary. It won't be staples. I mean, I'm not going to buy more soaps because I got, you know, 50,000 rupees more. It'll be more discretionary. Okay. So we think discretionary spending is a segment that one should look at. The rest is very stock specific, Lata. Almost every segment has some impact of the tariffs if it were to come. So one has to tread very carefully and how this will
Yes,
move
tariff.
out.
2 questions I'm reserving. One, let me ask the first one, more important, gold.
Yes.
You know, you were the big one who advised us and I took your advice, you know, to put some money in gold.
Yes.
You think, Manisha just tells us that there are Goldman Sachs expecting $3,100 as well.
Yeah.
It's still good to be there.
So Lata, I'm very bullish on gold, and it's more an asset allocation call as far as I have made, which is that at least 10% of your financial savings should be in gold. And one of my primary reasons for being bullish in gold is that it's a hedge against our currency. I do think our currency heads to 90 maybe in years' time and 9 months' time. Even if gold does nothing, I still get 4-5% more. But a caution here is that gold is up 40% in dollar terms in the last 1 year. We cannot expect gold to do the same every year. So it's easily possible that it consolidates. But if I look at the 20-year gold returns in rupees, it's up about 13.7% CAGR. Sensex is roughly the same. If you add the dividend, maybe the Sensex is up by about 50 to 75 basis points. So gold has matched, stock returns over a very long period of time. So I'm not so worried about what happens in the short term. It's an asset allocation. I'm still very bullish.
No, I take your point that we must also look at capital economics saying that gold will settle at 2750. And I think that's a sane call. Yes. We cannot see it move one way. But now to the tariffs. How are you tackling it as an investor? Do you avoid, say, textiles? Textiles, actually, ours is very small. And we don't have, they tariff our textiles more than we tariff theirs. Auto parts, forgings, electricals. Which ones would you avoid?
We can't avoid. At this stage, a lot of the policy is evolving. And we think that this is a negotiating tactic that Trump and the administration in the US is using. Unfortunately, India is on the wrong side. Our tariffs are high. One of the statements that Trump keeps making is that Harley-Davidson is tariffed at 100%. How many people use Harley-Davidson? Why can't we just make it zero? I mean, it's stuck in his mind. So I think it's the policymakers have to seriously think that if in pharma it is the high-priced cancer drugs which are tariffed at 70%, make it zero, because our entire industry of generics will benefit so much more than few people who can afford 2 lakh rupee drug. So I think this is something that the government will have to seriously weigh in. These are solvable problems, and some bit of tariff will be expected. US average tariffs are 2.5%. They're extremely low. Countries were having free lunch for too many years. I think it's time to pay back or to readjust your tariff. And I think if we are smart, we can, position ourselves strategically to benefit us and also to benefit US.
Actually, this is a big challenge for the Indian diplomatic service and the Indian economic policymakers to change the narrative in perhaps President Trump's mind.
And I don't think it's that difficult. I think
there are
doable.
Some low-hanging fruit.
It is doable, and you can get this done, and it can benefit larger part of Indian economy. Maybe a few companies here and there suffer, but it can't protect everybody, right?
Yes.
So I think it's doable. I hope better sense prevails.
Okay. Well, we are going to have a very detailed Indianomics on, the tariffs, exactly where the reciprocity can be used to our advantage and where we can give in. So wait for that. Tomorrow, 10:15, is this detailed discussion on how to wade through the tariff problem. Sridhar Shivram, pleasure having you with us. Thank you very much for dropping in and reminding us that gold is still a very good asset allocation strategy. Of course, it will be a micro market going forward, at least in 2025. On that positive note, let's wrap up on Bazaar. The market is in the green and very good gains coming in the mid-cap space. Chartbusters will take the action forward.
In the event that there is some sort of ceasefire between Russia and Ukraine, peace settlement down the road, what does that mean? That means Russian sanctions on Russia come off, and that probably brings Russian oil supplies up quite considerably, and that's going to put downward pressure on the oil price. So I think oil is going to stay quite soft over the next several months, and that will obviously be helpful for Indian inflation. Trump is on this tariff gig now, reciprocal tariffs, if you want, if you like, where he's saying, if countries overseas have got high tariffs, which India does have, well, we're going to put high tariffs on their imports as well. Now, it's been the case for many years, as you will know, that developing countries trying to build for the future from a low base, very often do try to protect their infant industries, which is a classic economic argument, with tariffs. It's always been the case that poorer countries, developing countries, emerging markets have higher tariffs, than developed economies. And I think that it is what it is. I'd be very surprised if India is absolutely right in the forefront of this reaction that Trump is coming up with. I think he's focused a bit more on other countries, frankly. But yeah, he has mentioned India, so we have to watch it.
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India's sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing $30,000 or 26 lakh rupees in America. And Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without
Aurobindo Pharma's Andhra unit receives five observations from the US FDA following a pre-approval inspection. The stock tanks over 5%, though recovers, currently down 3%.
Piramal Pharma's Turbhe facility also received 6 observations from the US FDA. The stock, though, recovers from lows to trade mildly in the green. It's up now close to around 2%, but has recovered close to 6% from day's low.
US President Donald Trump's comments on a possible 25% tariff on pharma imports and concerns over the ability to clear US FDA inspections see pharma stocks correct. The pharma index is actually underperforming today.
Hexaware Tech lists on the exchanges at a price of around 745 rupees a share, which is a premium of around 5% to its issue price. The stock currently at the day's high, 7% higher.
RVNL wins a 550 crore rupee order to build 9 railway stations. The stock is higher by 10%.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. And after a while, if we get all the top indices up for you on the screen, the Nifty Bank, the Sensex, the mid-cap index, small-cap index, all of them in the green, and after a while we're telling you that the breadth of the market is in favor of the number of stocks that are advancing. It's been a while, but at least for the time being, we're holding above the 23,000 mark on the Nifty, and the Nifty Bank above the 20 DMA. Manglam, it could be a bounce from oversold levels, but you'll have to take it right. I mean, the selling was getting excessive on the downside. Various stocks came to attractive levels, and today, in fact, we are seeing that the bulls are fighting back. Just one point with the Nifty Bank. I want to pull up the 20 DMA with the Nifty Bank. Last couple of trading sessions, we have been hovering around that mark. By the end of today, I would like to see the Nifty Bank comfortably above these levels. Maybe hold on to these gains of 500 or even build on to that. So I think that's important from the headline index. But the party in the broader markets is good.
The party in the broader markets after a big slide is good in today's trading session. Whether it's a bounce back from oversold levels or not, we will most definitely keep an eye out on sustaining this up move. For the Nifty, staying above the 23,050 mark will be extremely crucial because of the kind of call writing that we've seen at 23,000 as well. So if we can close above 23,000 and 23,050, maybe there could be a case for these call writers to cover their positions. As we move along, just keep an eye out at the bottom of your screen as well. Ola Electric has said that there would be a dip in registrations in the month of February, speaking about some negotiations with a bunch of agencies, and as a result of which there could be a bit of an impact in sales. Though we did have the management of Ola Electric join us last week, speak about a very strong, very near future where the company did see their gross margins and market share expand. So this is something which will be important in light of the management management commentary that had come by from Ola Electric. Let's go across to Chandan Taparia, who is the derivative and technical analyst at Motilal Oswal Financial Services, for a quick view on the market itself. Chandan, there has been a bounce from oversold levels. It was due for a long time, but the market was consolidating around levels of 22,800, 22,750. Now that the bounce has come, the question is, what do you do?
Good morning, Mangalam and Nigel. Thanks for having me. So finally, after a long time, most of the indices are heading upwards and showing the color of prosperity and the green. We were waiting for this reversal from long time, but the follow-up is required. The good part is that index has taken support at the lower band of falling channel. But again, the momentum and follow-up is required. So we have reversed from key levels, which is a 38.2% retracement of the entire previous major rally. So I believe 22,720, 22,800 could act as a major support to extend the recent recovery towards 23,333 to 23,500 level. So expecting further 300 to 500 points movement in this recovery mood of the market. If I look at the other data setup, India VIX is slightly down. FI's long short ratio is near 14-15%, which has to recover, led by short covering from FIs. So I think these 2 or 3 important triggers has to be in line to get the recovery and the further swings in the market. Looking at the Bank Nifty index, which managed to hold the multiple support near 48,800, 49,000, has potential to spikes towards 50,000 and above 50,000. Short-term stability could be there. So expecting 23,333 in Nifty and 50,000 marks in Bank Nifty in this recent bounce back move of the market. And at the same time, selective stocks could do well.
Let's talk about the selective stocks then, Chandan. What are the calls you have for us?
Yeah, so I'll select with selective name from the different sectors. First trade will be buy on UPL, one of the strongest counter. Technically, it has completed a pole and flake pattern, which has a bullish implication. We have seen build-up of long positions and some short covering trigger could be there in the counter as we head towards the expiry, monthly expiry week. From last couple of days, supports are gradually shifting higher. So expecting further rally. One can buy with support of 630 and UPL can head towards 666 marks. Second trading area that will be buy on Zomato. The stock has bottomed out. From last 6 weeks, multiple supports were seen near 203 to 206. And formation of symmetrical triangle on the lower time frame also indicates some up move. So with support of 222, this counter can head towards 242 marks. Apart from these two names, Indian Hotel could be one bottom out counter after the corrective move of last 5-6 weeks. It has bottomed out near 882 and supports are visible. Some bullish divergence can take it to higher levels. So with support of 725, we can see Indian Hotel to head towards 770 marks.
All right, Indian Hotels and Zomato along with UPL are buys that Chandan has. With that, we'll slip into our special segment. Before we take that break, Khushbu Rai Gupta joins in from Money Control Pro to tell us an idea for profit.
In today's idea for profit, we have Nestle India, a market leader in coffee led by the famous Nescafe brand. Also, despite intense competition, Nestle has been able to maintain market leadership in the noodle category and baby food. But in the chocolate format, Nestle has gained number 2 position in the domestic market. Nestle is focusing on strengthening and protecting its high-margin core business, that is milk and nutrition, which contributes around 40% to the domestic sales. The company is also investing behind the new growth businesses. The expanding of manufacturing base and the rural footprint with the rural strategy and the entry into pet care and adult nutrition will be growth and margin accretive in the medium term. The recent earning performance of the company was marked by moderate volume growth and margin compression due to the high inflation and competitive headwinds. However, we view that Nestle is a good play on the packaged food business and it will be a key beneficiary of the urban demand revival given the consumption boost in the budget.
Right, with that, we'll slip to a short break. Don't go anywhere, though. On the other side, we have the management of transformers and rectifiers joining in to discuss their recent order wins, the outlook for the business, and their third quarter results.
Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is, before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year but cancelled at the last moment. Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk and other EV makers a concessional 15% duty as opposed to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk be able to secure lower tariffs from India without a manufacturing commitment? That remains to be seen. For the moment, what we know is that Elon Musk had a very positive 50-minute meeting with Prime Minister Modi in Washington, D.C., where everything from electric mobility to space cooperation was discussed.
Ranveer Alabadia has been spewing dirt, has shown the dirt in his mind, has been vomiting on air. Why should we protect you? Ominous words coming in from the Supreme Court aimed directly at Ranveer Alabadia post the India's Got Latent controversy. So that entire controversy involving Ranveer Alabadia, Samir Raina, moving to the doors of the Apex Court. The questions we're asking: who's the one who's knocked on the doors of the Supreme Court? What reliefs are they seeking? What did the Supreme Court have to say about it? And what are the reliefs, if any? What are the protections, if any, that the Supreme Court has granted? Well, to begin with, it's Ranveer Alabadia who's knocked on the doors of the Apex Court seeking protection. Mind you, he's facing at the very least 3 FIRs that at least we know of: Maharashtra, Guwahati, as well as Jaipur. And what's interesting is that, and that's an interesting side story, representing him in the highest court of the country is none other than the son of Justice D.Y. Chandrachud, the last Chief Justice of India. It's Abhinav Chandrachud that's appearing for Ranveer Alabadia. Now, Abhinav put up a
Welcome back. Well, let's focus on another stock that had a very, very good run, but from the top, it's seen some kind of selling pressure. We have transformers and rectifiers. You pull up a chart, you'll see that from those highs of around 700 rupees, it came down to 350 rupees. Today as well, the stock is up close to around 5% on the back of a good order win. To help us out with what's the way ahead, we're joined by Mr. Satyen Mamtora, the Managing Director of the company. Hi, sir. Good morning, and thanks a lot for joining in on CNBC-TV18. Some part of the street was a little bit nervous because your order inflow slowed down a little bit in Q3. But good to see you won an order in Q4. So give us a couple of numbers then, since the order book is looking quite good. What do you end this year with in terms of revenues? The profitability has been quite good. You've been talking about 14%, but I think you're better that. So the trajectory on that. Revenues for this year, FY26, as well as what kind of margins can you achieve?
Yeah. Good morning, everybody. We are pleased to announce that we have secured another significant order for STATCOM transformers. STATCOM transformer is crucial for voltage stability and reactive power compensation. This order particularly is prestigious for us. We have now a total of 26 STATCOM transformers in our order book. And with the latest order, we have now our order book position is at 4,200 crores. We are also pleased to inform you that we will be delivering these STATCOM transformers in the next 15 months.
Right. Okay. So what does it mean, sir, since you're sitting on a healthy order book? what kind of revenue numbers can you achieve in this year as well as the next one? You're going to be executing this one itself in the next 15 months. And also, I'm looking at a couple of brokerage notes. They are talking about Nuvama for one. They are saying that by the end of this year, you'll be close to around 200 crores of PAT. And they're talking about by FY27, your PAT will be more than 500 crores. Do you think it's possible?
Yeah. So this current year, we will be closing at around 2,000 crores. And next year, our lookout is for 3,500 crores total. So we should be touching somewhere around 500 crores PAT in the next 2 years.
Next 2 years, FY27. Got that.
All right, 3,500 crores in the year after. And that's interesting because, that takes your quarterly run rate a lot higher than what you've been doing in the first 9 months of this year itself. For you to actually do 2,000 crores in this year, you would have to do close to around 650 crores in the fourth quarter, and that run rate maintaining over the next year as well. But let's talk about, the industry at large. You got orders for Strat Voltage, but you've also, started a new production line for high voltage transformers. Just wanted to understand what is the demand-supply mismatch in the world for transformers, and if you could give us a sense of, at what particular voltage transformer is something that the street is looking at in terms of high demand. What's the capacity coming on stream in the world for these transformers?
So, see, we are putting up a new plant for IDTs, that is transformers for solar and green hydrogen. This plant would produce about 150 transformers a month for solar and green hydrogen. The rating of this transformer would be around 12.5 MVA, and our total capacity expansion with this new expansion will be around 15,000 MVA. Furthermore, we are looking at expanding our current capacity from Moria plant to 20,000 MVA, which should put us at around 65,000-70,000 MVA in terms of manufacturing capacity.
All right, that's about your capacity. But from an industry standpoint, is there any more capacity coming from others? And what is the demand-supply gap?
A lot of people have announced that they are putting up more capacities. But by end of by 31st March, the only capacity that will be more capacity that will be created will be by us. And remaining others are saying that they will be adding capacity by 2028.
Okay, and what is the annual demand for transformers in the country, and what is the supply for the same?
So the annual demand for the transformers in the country currently is at around 450,000 MVA.
Okay, all right.
And the supply is close to 380,000 MVA.
Okay, supply is close to 380 and demand is over 4.5 lakhs. So there's a shortfall of about 70.
Oh, that bodes well then, sir, for your business, with regard to an outlook. But I believe your total bid pipeline is something in the vicinity of 17 to 19,000 crores. Normally, how much of what you bid for you achieve? If you could give us the rough success ratio.
Total inquiries that we have currently is around 18,000 MVA. And out of this, around 20,000 MVA is which we are thinking of converting in the next couple quarters.
No, we're talking about in rupees crore. If you could, give us a sense of the inquiries are in rupees crore instead of MVA, sir?
So around 18,000 crores is the current inquiry that we have in hand.
Okay.
Out of which around 20%, which we will be converting into orders.
So around 3,600 crores of orders could be due out of this total inquiries. Is that correct?
Yeah, that would be in the next 2 quarters.
All right. And what about your backward integration? I believe that would add a couple of 100 basis points to your margins as well. If you could give us a sense of
that would add a couple of basis on our margins. But if you look at it, we have currently developed our first 245 kV bushing. This will help us in EHV transformers, in delivering EHV transformers. So apart from the the business that comes out of this, we will be able to manufacture more transformers because of the lack of raw material that we have. So 100%, we are moving towards 100% backward integration so that the backward integration can support our manufacturing capabilities for increasing our production in transformers.
Okay. And also, sir, very quickly, you had an enabling resolution for a QIP, 750 crores. I don't know whether those plans are still on. The price, first of all, has come down. So do you have any plans to raise money by QIP?
It is an enabling permission that we have taken from the board.
Okay.
We are looking at opportunities. If we get any opportunities for inorganic growth, we may look at QIP. Currently, it is just an enabling
all right.
provision.
And next year, margins would be 17-18%?
Somewhere around 15 to 16%.
Okay, all right. We appreciate you joining in, Mr. Mamtora. Thanks a lot for joining in. We'll keep an eye out on all these numbers that you've given us. Wishing you well, and we look forward to chatting up with you at the end of this quarter to track the progress of the company. For the time being, though, we slip into a short break, come back, continue to focus on markets that are holding with solid gains. Right. Is just a click away. The all-new CNBC-TV18 app. Financial world updates at your fingertips. The QR code is up for you on the screen. You can scan it, download the app, or you can also get it from the Play Store or the Apple Store as well.
Very good. One of those massive words today.
Let's talk about Canva's startup story.
220 million people that use Canva as a product as well. They launched with 5 languages in 2016. They then ratcheted that up to 100 languages in 2017, including Hindi, Tamil. I think India could be huge, so it's our 4th biggest market at the moment. I think it could reach the #1 position, very soon. We've been able to move large parts of the company towards thinking in an AI-first manner.
Interesting.
24 million.
Breaking news. The last few years have really been about the shiny objects, and 2025 is probably going to be much more about real use cases.
We've now matured our ML and our AI teams to adapt to this new technology, and we've pivoted every product team inside Canva now to think AI first.
A valiant battle here before the Apex Court, where he argued that he's not at all defending the comments or the conduct of Ranveer Alabadia, but rather he's citing multiple FIRs, that this is tantamount to an abuse of process. Also going on to say that not just Ranveer Alabadia, but even his mother, his associates are beginning to receive death threats, and that is something that requires the intervention, the protection of the highest court of the country. Now, there were 2 very clear halves to the hearing. In the first half, the Supreme Court absolutely squarely condemned the content as well as the conduct of Ranveer Alabadia. The Supreme Court said that he's been spewing out venom, he's been vomiting, and that this does not call for intervention or protection of the Supreme Court. Further, the Supreme Court went on to say that as far as the conduct itself is concerned, it would bring shame to fathers, to mothers, to parents, to society in general. In fact, the Supreme Court then went on to say that just because Ranveer Alabadia is popular, that is no grounds, that is no reason for him to take liberties with societal norms, to openly flout them, and that this behavior should be squarely condemned. In fact, the Supreme Court did not stop there. It said that the Supreme Court has not been sitting in some ivory tower. It has been, in fact, going through social media. It knows that these comments came not originally from Ranveer Alabadia, but from an Australian show, and that this is something that is not acceptable here in India, that such conduct which reflects on society, which reflects on his own thinking, is not something that the Supreme Court will look very kindly on. But having said that, the Supreme Court also said that we have constitutional courts in the country. It is not a kangaroo court. It is not a court of public opinion. And it is on that count that the Supreme Court, taking note of the fact that there have been previous instances of multiple FIRs against senior journalists such as Arnab Goswami, senior journalists such as Amish Devgan, the Supreme Court, keeping in line with that precedent, has granted the twin protection to Ranveer Alabadia after that hearing. Number one, he cannot be arrested, at least as far as the FIRs that have been registered so far. Jaipur, Guwahati, Maharashtra, he cannot be arrested basis those FIRs. Further, the Supreme Court has also said that no further FIRs, at least as far as the India's Got Latent Controversy is concerned, will be filed against the person in question, which in this case happens to be Ranveer Alabadia. But there are some tough conditions that the Supreme Court has imposed. Number one, Ranveer Alabadia will appear as summoned by all of these authorities. Number two, Ranveer Alabadia will cooperate with all these investigating agencies, will not interfere, will not interrupt. Number three, he will not do any further shows in the interim. That is something that the Supreme Court said as an afterthought, but very clearly pointed in the direction of Abhinav, in the direction of Ranveer Alabadia, that no further shows for now. And also importantly, has put restrictions on overseas travel for Ranveer Alabadia, saying that you will need to deposit your passport at the local police station. So strict conditions being imposed on Ranveer Alabadia, but nonetheless, the Supreme Court, after that flurry of condemnation, granting that protection to Ranveer Alabadia.
We started the show with the key indices recovering, and we started to question whether that sustains or not. We got the answer in 20 minutes itself. It's seeing some bit of sell-off from the highs. The Nifty is now in the red as we speak. The mid-cap index, no such problems, holding up. We have, the Nifty, which has been led lower by the IT stocks. Yesterday it was the IT stocks that pulled up the frontline indices in absence of the Nifty Bank outperforming. But today the Nifty Bank, as you can see, is outperforming, whereas the IT index has dragged the frontline index down. Not by much, just a smidge from the highs. But we'll keep an eye out on how this day progresses, especially given the strength that we've seen in the Nifty Bank itself.
The Nifty Bank needs to conquer the 20 DMA. We're back around those marks. You wanted to build on from there. Breadth of the market, still not too bad. But we are done on Chartbuster. Stay with us. Trading Hour comes up next.
India and the Gulf Cooperation Council, we are at this moment negotiating about having a free trade agreement. As far as Qatar is concerned, both sides are exploring the possibility of signing a free trade agreement in future, and that was one of the discussions that took place in this round of talks. As far as the strategic partnership establishment agreement is concerned, it actually elevates the present state of bilateral.
Hello, good morning. You've tuned into Trading Hour, coming in live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala, with me is Vivek Iyer. Vivek, good morning, and seems like a good morning shaping up, at least for the broader markets for sure, because they're outperforming. Nifty also is trying to make that recovery from the day's lowest point. 22,900 is what we're managing to hold on to. So doesn't seem like a bad day coming in, but I think second half is every day when we see that fall or a change in the move coming in. And pharma today also continues to be under pressure.
Right.
We have those commentaries that came in from Trump that he could be imposing some tariffs on the pharma sector, the pharma imports, and possibly around a 25% tariff. Around that neighborhood is what the rate they've spoken about. So pharma clearly today is among the top sectoral losers, down almost 1%. Any of the pharma names you pick up, Aurobindo Pharma, Dr. Reddy's, all of them are down and out on trade. Cipla is trading with cuts of almost 1%, recovered from the day's lowest point, but still down 1% in trade. What's holding on to gains today is Realty. Nifty Realty is managing to hold on to almost 2% gains. So that is interesting to watch out for in terms of a moves that is coming in. Now, in terms of overall what's supporting the market or contributing to the Nifty 50 today is the private banks. So whether you look at ICICI Bank, HDFC Bank, Kotak Bank, Axis Bank are among the top Nifty 50 contributors. Vivek, interesting day coming in because these banking names have seen a good recovery with the market supporting the Nifty as of now as well.
Right.
But pharma is where we're seeing the pressure.
Good morning, Vinny. Like you mentioned, a significant amount of volatility. The good part is we saw very sharp recovery intraday. What's actually given up a bit of gains in the last half hour or so is actually names like names from the IT pack. So names like TCS, Bharti Airtel have lost a little bit of steam, but largely markets have continued to hold on to the gains. The mid cap and the small cap index doing quite well in the session. Nifty continuing to hover around the 22,900 to 23,000 levels. 22,800 is the support that most of the technical analysts have said that shouldn't be breached as far as bulls are concerned. IT stocks are the ones in focus. Remember, today we have a very important listing, Hexaware, that listed with a premium, so that is some positive news flow. But remember, overnight we also saw the results of Capgemini, and those results were not too encouraging. They've actually guided at just flat growth for the coming year on the back of muted demands is something that they've highlighted. And on the back of that, Indian IT companies will take slightly mixed cues given the fact that they were hoping for a much stronger recovery coming in. Like you mentioned, generic pharma companies have taken it on the chin. Quite a lot of them have also recovered from the day's low, but names like Aurobindo, etc., really saw quite a bit of sell-off at the open. And what is making a comeback? We need two sectors that you look at quite closely. Railway stocks today have made a sharp comeback. Defense stocks have also made a sharp comeback. So names like RVNL, Garden Reach, Ircon, IRFC, all of these stocks trading with gains of over 5.5%. But we have to keep in mind that they saw a very steep sell-off in the recent past.
Some time back, they were on that red and, you were wondering where they're going to be headed. Absolutely. But surely that's what we're keeping an eye out on in terms of the market. But on that note, let's also talk about another stock that's in focus today and get this show started with that is Tata Motors. Now, Tata Motors right now is trading muted just with gains of 0.2% off the day's highest point. But this is in focus today on the back of a note from CLSA. Sudarshan is here to give us the details of what the brokerage note is highlighting. Good morning, Sudarshan.
Good morning, Vinny. So today's stock is trading currently with minor gains, but if you look from 52-week or say record high that stock had hit in July 2024, from that level, stock is down more than 40% and it's the biggest underperformer in the auto pack. And this because of the continued weak earnings. Q2 was weak and after that even Q3 earnings looked very weak. Now today CLSA has come out with a note. It has upgraded the stock to high conviction buy from accumulate and target remains unchanged at rupees 930 per share, and that implies an upside of almost 36% from current levels. And this upgrade is mainly on the basis of one reason, that is the favorable valuation. Company says adverse near-term outlook gives a scope to enter at a favorable valuation, and it's at the if you look at the historical average, it's trading much below the historical average, especially JLR's historical average is 2.5x and it's trading much below that. Also, JLR's value in Tata Motors stock price at this level is around rupees 200 per share, and in CLS's target of rupees 930, JLR's contribution is around rupees 400 per share, and that's the reason JLR believes that there is enough cushion available if there is any impact that might come from tariff or weak earnings that company might see going forward. So because of this mainly valuation, CLSA has upgraded Tata Motors.
Thank you so much, Sudarshan. So it's a high conviction outperform rating that CLSA has as far as Tata Motors is concerned. They're not overtly worried as far as tariffs too are concerned. Well, moving on, Mitesh Thakkar joins us for a quick technical check of the market. Good morning, Mitesh. Thank you so much for joining us. How are you reading markets currently? The volatility index is the only one that's spiking up consistently.
Good morning. So today, incidentally, the VIX is flat, but I think that's also because of the recovery which we have seen from low. Timing again, we have seen 22,800, 22,780, 750 zone come into play, and the market has been able to hold on to that and rebound. And my sense is that once we start getting past 23,100, this rebound can turn into a short-term up move, which could then be very positive. So for the timing, I think try to buy near 22,800 with a 70-80 point stop loss. And if we get past 23,100, then I suggest adding on to long positions and looking at 23,350 as the possible target area. So there is a long bias. The downside worry will happen once we see a closing below 22,780.
Okay. And Mitesh, what are your top picks currently? What are you looking at in the market?
I have one sell and one buy. TCS is somehow breaking down. So TCS is a sell call. Keep a stop at about levels of 38, 35, 38, 38 over here, and look for a target of around 37.10. And UPL is a recommendation on the long side. Disclaimer, we have some positions, so there's vested interest. I have call option positions in UPL. But looks like after a sideways activity, the stock is breaking out. So buy here with a stop at about 637 and look for a target of 675.
Thank you so much, Mitesh. So UPL on the long side and TCS on the short side are recommendations for the sale. Let's now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.
To a strategic level. What we are looking at is deepening cooperation in the fields of trade, energy, investment, security, as well as in the regional and international fora. As you know, within the GCC, India has got signed strategic partnerships with UAE, Saudi Arabia, Oman, and Kuwait.
make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to...
Welcome back to Trading Hour. Well, let's now shift focus to the commodity space. Manisha Gupta joins in, and today we are focusing on crude.
Thank you for that, Vivek. Yes, we are, because today is the third straight day that we are looking at crude oil prices continue to trade firm. It's holding above $75 a barrel. Well, there are a couple of supply disruptions that we have seen that seems to be supporting prices on your screens right now. One is the drone attack on Russian pipeline. Well, due to this, the pipeline that goes via Kazakhstan is losing almost 30 to 40% of crude oil, which is amounting to nearly 380,000 barrels per day. Now, this is a premium that the crude prices seem to be carrying right now. Not just within Russia, but the U.S. cold snap also has led to a North Dakota pipeline getting frozen, and that is losing 150,000 barrels per day as well. So these couple of supply disruptions is what is adding on to prices. Apart from that, the street is also watching out for some concrete statements coming in from OPEC and allies. Remember, OPEC and allies are expected to increase production from the month of April, but there have been some statements suggesting that they may not do that and they would continue with current production because the crude oil prices haven't really run up to 75 or 80 as targets that they have been talking about. So that's another thing to watch out for. Apart from that, there are conversations as well happening between US and Russia, Israel and Hamas as well when it comes to ceasefire and ending of war going forward. If that happens, you could be looking at more crude oil coming into the markets if the sanctions actually go away. So that's another thing to watch out as well. Apart from that, it also has to do with the US dollar index, which is slightly on the weaker side, trading below 107. That in turn also seems to be supporting prices from where they are.
Okay, Manisha, thank you so much for that. But on that note, we're actually going to slip into a very short break. And after the break, we'll come back and talk to the management of the new listing, that is Hexaware Technologies. So don't go anywhere. We have the management to talk to us about the plans going forward.
Very good. One of those massive roads today.
Is an IPO the next logical step in this journey?
I think it is the next logical step. When we need to take that step, I don't know. We have been very cognizant about getting investors who are as excited about every part of our vision as we are.
You don't have managers in the company?
We have what we call coaches.
Yeah.
We take a very coaching mindset into people's growth at Canva. Part of our grander plan of the two-step plan, which is step one, build one of the most valuable companies in the world, which we're well on the way to doing. And step two, probably the more important step, is to do as much good as we can. We're up to 24 million subscribers now, so grows pretty rapidly.
Not just law, but a little bit of DJing in your previous avatar as well.
I've not given up on it. It's still a distant dream, and I inflict it on every Canva party that we have. I have to get up and DJ.
You're the DJ, is it?
I am, yes.
Before crafting your investment strategy. How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
In the event that there is some sort of ceasefire between Russia and Ukraine, peace settlement down the road, what does that mean? That means Russian sanctions on Russia come off, and that probably brings Russian oil supplies up quite considerably, and that's going to put downward pressure on the oil price. So I think oil is going to stay quite soft over the next several months, and that will obviously be helpful for Indian inflation. Trump is on this tariff gig now, reciprocal tariffs if you want, if you like, where he's saying, you know, if countries overseas have got high tariffs, which India does have, well, we're going to put high tariffs on their imports as well. Now, it's been the case for many years, as you will know, that developing countries trying to build for the future from a low base, very often do try to protect their infant industries, which is a classic economic argument, with tariffs. It's always been the case that poorer countries, developing countries, emerging markets have higher tariffs, than developed economies. And I think that, you know, it is what it is. I'd be very surprised if India is absolutely right in the forefront of this.
Welcome back to Trading Hour. Well, like we mentioned at the start of the show, one sector that is in focus today is the entire IT pack. We had the listing of Hexaware and we'll speak to the management shortly. But what's also transpired overnight is actually the results of Capgemini. And like we mentioned, the commentary there was quite muted, especially in terms of the demand environment. On the back of that, remember yesterday, quite a few mid-cap IT stocks did very well in the session. And today, most of them are seeing a return back to base. They're seeing some selling pressure emerge. So look at, first up, you know, the main name that's seeing quite a bit of a selling pressure emerge is actually TCS. The stock is down over 2% in the session. And even as we speak, it's trading near the day's lowest point. Other names that are seeing selling pressure, look at LTI Mindtree, look at Infosys, look at L&T Tech Services. These are some of the names today that are witnessing some selling pressure emerge. On the other hand, like we mentioned, we will speak to the management of Hexaware Technologies. Remember, it made a steady listing on the bourses and rallied up to 6% post-listing. Sri Krishna Ramakarthikeyan, who is the CEO, and Vikash Kumar Jain, who is the CFO at Hexaware Technology, join us now. Thank you so much, gentlemen, for joining us. Mr. Ramakarthikeyan, once again, congratulations on what's a very strong listing, even in a tepid market. Now that you're listed onto the exchanges, we are expecting some more numbers from the last time that we spoke. What is steady state revenue growth, top line growth, and how's the demand environment looking like currently, especially in the light of what transpired at Capgemini yesterday?
Well, Capgemini, I think, is another data point in one of many that points to a slowly improving demand environment. And, you know, they've quoted actually that some of the administration policies lead to uncertainty. But that's because they actually have a lot of manufacturing in their business. In our case, manufacturing accounts for just about 16%. That's the industry that gets first order impact from tariffs. For us, 84% of business has no first order impact from tariffs. So actually, we are quite bullish about administration policies on our overall demand.
Right, sir. Gentlemen, good morning. This is Vinny joining in the conversation as well. You know, what I also want to know, Vikas, is in terms of the company's growth. Good growth in the last 4 years, 13.72% approximately is what we're seeing, which is very good. And this is despite the 2% CAGR growth that we've seen in the top 5 clients. So now what we want to understand is that what is the outlook in terms of growth? The top 5 clients, what is the growth outlook for that as well? Going forward, what are we expecting?
First of all, I'd like to clarify one data point. The top 5 clients, which you're calling at 2%, are not like-to-like comparisons. It's a comparison of top 5 clients in the previous years versus the top 5 clients in the current years, which are different sets of numbers. So the growth on a like-to-like basis for top 5 clients is higher than the 2%. The second question, in terms of the outlook scenario, we expect that the top 5 clients will continue to grow, but the pace of the growth is going to be slower than the overall company average. And that we think is better for us because we are reducing our dependencies just on few clients, and it is much more broad-based growth.
Understood that. Ramakarthikeyan, last time you spoke, you were in our studio last time once the IPO had opened up for subscription, and you gave us very bullish commentary as far as the demand environment is concerned, especially for you. And you said that you would grow 2 to 3x the industry average. Could you quantify that, and where are you seeing demand actually emerging, given the fact that you have significant exposure to the BFSI space?
Like I said, our history is that we've grown 2 to 3 times, but you're absolutely right that we continue to remain bullish, that we will outgrow the industry quite a bit. I think demand for us at this stage, I will describe it as secular across all of our industries, except for manufacturing and consumer. And frankly, I think that was before the Trump era threat of tariffs. And I think tariffs will potentially or have the potential to make it slightly worse. But I'll say outside that pocket, our demand is secular. All of our industries, financial services, banking, insurance, healthcare, high-tech, professional services, travel, pretty much everything except manufacturing.
What I also want to understand is, what we're looking at, that you seem to have prioritized a bit more in terms of verticals or clients were largely tech sourcing spends, while diversifying them from the subscale ones, such as the travel one as well. So which is the other balancing you're wishing to do? Anything that we can watch out for in terms of that front as well? Mr. Karthikeyan?
We are not in 20 verticals. Okay? So I think, the 6 we are in, all of them are important. We would like all of them to fire equally well at the same time. And right now we think firing and one is a lot of environment and macros impacting it. But we would like, there's no sense of prioritization between them. All 6 are important. Likewise, we offer just 3 tech services, and all of them are important and material.
Vikas, let me bring you also into the conversation. One thing we want to understand is, in the run-up to the IPO, there were quite a few one-off expenses that you had mentioned that had impacted your EBITDA margins. That is one important question. Do you expect any of them to recover once again post-listing? And secondly, you've also seen significant erosion as far as the rupee is concerned, or a depreciation as far as the rupee is concerned against the dollar. Does that also help margins?
So the first one, in terms of the exceptional items, the reason we presented them as exceptional items is they are truly one-off in nature. We have one cost which is associated with ERP implementation. That will continue for a quarter or 2. Once we go live, that will also stop. So they are truly one-timer in nature. In terms of the rupee depreciation, all things remaining constant, rupee does help our P&L significantly because a major chunk of our cost is in INR base.
Understood that. Mr. Ramakarthikeyan, one question that most of the investors on the street want to know is, you continue to have a strong holding as far as the private equity investor is concerned. And one worry typically when new IPOs hit the street is that they look to pare down the stake at regular intervals. Has there been any plan or any conversation as far as the private equity investor is concerned? Do they have any timeline, or will they continue to be long-term investors in the stock even post-listing?
Three things I would say. First, there's no timetable from Carlyle. Their funds have enough life. Their investment in Hexaware is still just over 3 years old. Two, they will continue to hence be investors for a fair bit of time. And I think third, most importantly, when we looked at different markets for listing, our biggest consideration was, can Carlyle sell down in the market without impacting all other investors? And the answer for us was a resounding yes. The amount of new capital generated in India, roughly 20,000+ crores of new investable capital every month, that's a lot of money. And Carlyle's stake sell down is not going to make an impact in such a deep market.
Given that you have very, very strong growth aspirations, remember in the last 10 years, you've almost grown at a CAGR of 12.5%. This is pre-delisting, post-delisting, and even in the run-up to the IPO. Do you feel to continue that kind of growth, there needs to be an inorganic acquisition? Any targets on the horizon? Any tuck-in acquisitions expected?
So we think our ambition is to do better than what we've done in the past. Okay. We've overcome some structural limitations, most important size. Okay, a smaller company is harder to grow faster because people are concerned about size. We've crossed that. We've reduced our client concentration. That's another important structural problem we've got past. So our ambition actually is to do better than what we've done in the past. I think inorganic can further add to that growth. It is not the reason, it's not the basis on which we feel confident about growth, but that will add to and make our growth even faster. Our M&A strategy is focused around capability acquisition. We have a list of important capabilities that we want to focus on for acquisition.
Okay, gentlemen, thank you so much for joining in with us on the show today, and good luck with the listing, and hope to see you all more often on the channel. Thank you so much for that. That was the management of Hexaware Technologies joining in with us. But on that note, we're going to slip into a very short break, and after the break, we will discuss market fundamentals with Sundaram Alternate Assets. So don't go anywhere.
Trump is coming up with. I think he's focused a bit more on other countries, frankly. But yeah, he has mentioned India, so we have to watch it.
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing $30,000 or 26 lakh rupees in America, and Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year but cancelled at the last moment. Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk and other EV makers a concessional 15%.
Welcome back to Trading Hour. Well, we are now joined by Madan Gopal Ramu, Fund Manager and Head of Equity at Sundaram Alternate Assets, discuss market fundamental and its top sectoral picks. Thank you so much, Mr. Ramu, for joining us. First up, what have you made of the earnings season that just went by, and post-earnings season, which are the top themes you're betting on?
Clearly, the earnings season has been muted. In line with expectation, there are no positive surprises. The large caps are suffering on earnings front very clearly. Single-digit, mid-single-digit sort of a growth. Almost 75% of Nifty sectorally are suffering from a very low sort of a growth. We think there will be some improvement in Q4, but I don't think Nifty 50 large cap has any particular potential to deliver more than sort of 10% growth, because 75% of this sectoral weights are clearly seeing less than 10% sort of a growth. So that's what we see from the large cap space. But if you look at the Nifty mid cap, there are two buckets that we see. There are companies, almost 40% of Nifty mid cap earnings. Companies are delivering more than 15% sort of a growth. 60% less than that, but clearly almost like if you take a 150 stock universe in Nifty mid cap, almost 40% of it, 40-50 stocks are delivering still 15% plus growth, which is substantially higher than what large caps are able to deliver in India. So today, with the way the market is seeing correction in mid cap space, which is a very sharp correction, last time during 2017 to 2019 when mid caps corrected, it was almost 30% over a period of 2 years. But within 2 months time period, we have seen a similar correction this time. There seems to be no differentiated sort of selling here. Irrespective of earnings, there seems to be a selling to just book profits. We feel some value zones are starting to emerge in the mid-cap space. Again, it is restricted to the pockets where earnings growth is very strong within the mid-cap. Mid-cap still has almost 40% of the stocks which are not able to deliver even a 10% growth. So that needs to be kept in mind. So clearly, there is a selling across is creating value zones in mid caps, in our opinion.
Absolutely. There are some value zones created in the mid caps. So what I also want to understand is in terms of when I'm looking at the allocation, and this is as the report that we had on January, you do have good exposure in terms for healthcare as well, ranging between somewhere around 10 to 15% across portfolios. Now, given the current scenario that we are seeing, or worries around the tariffs coming in from the US side, would you be making any changes on that front?
So our holding in healthcare is completely different from what is represented in Nifty. Nifty has mostly generic pharma. Probably Divis is the only CDMO player. We have a CDMO company called Newland Laboratories, and we have a healthcare company called Aster TM. So completely different companies which are having a very low representation of generic pharma. Generic pharma, we are generally negative about the long-term growth potential, given that Revlimid, a large product which is sitting in the numbers of most of the companies in the Nifty, we feel that earnings growth is going to be muted, except for one or two ideas there. But if you look at the CDMO opportunity, particularly if you look at a stock like Newland Laboratories, they have clicked upon a very large blockbuster drug where they are suppliers, API suppliers to one of the global majors. Stocks like this needs to be thought very differently and needs to be taken a different view. These cannot be looked at from quarter to quarter. And today somebody is selling it. I think already some value is getting created in some of these names. So CDMO, in our opinion, is a big opportunity because we see that some blockbuster drugs globally, some specific Indian CDMO players are supplying to these companies. So if you can identify those names and invest into it and wait for 2-3 years, you have a big money to be made. And luckily now in this market correction, people are not differentiating between these ideas and other companies, right? So clearly when I said value zones are getting created, these are certain value zones where you can see that's very clearly coming through. Aster DM is a steady 15 to 20% compounder in our opinion. It is also merging with other two. There is a plan to merge with other two hospital chains, which is likely to create a meaningful size in terms of beds and something like it can move from a small cap to mid cap at some point of time. Valuation is attractive at this point of time post the correction. And decent growth in ARPA, Kerala market in which the company is operating is doing great, even Karnataka market. I think this is a more of a special situation sort of a thing where a merger can create a meaningful upside to the investors if they can get in and wait through the period where the merger happens and then the synergy benefits realized over the next 2 to 3 year time period.
Okay, sir. Just a quick word in terms of IT. You made some exit in terms of mid-cap IT. So anything specific that you don't like IT? Just a quick word on that.
So IT last year, we got a good entry level. We looked at only from a 1 year perspective. We got Persistent and Coforge at a really good bargain during a period in Q1, I believe, where they corrected meaningfully. But now the valuations have gone pretty high. We are positive on IT space, particularly mid-cap, but valuations is a concern. In large cap, earnings is a concern. So that's not giving us opportunity in the large caps to enter at this point. If we see some correction happening, meaningful correction happening, we might probably look at some large caps. But mid caps clearly valuations above 40, 45 times 1 year forward. We thought that there's some money to be booked there and probably reallocate to some other opportunity during the year.
Thank you so much, Madan Gopalan. Mid-cap IT valuations continue to remain a concern. Let's now slip into a short break. Dr. Kunal Damesha from Macquarie Capital joins us next to discuss their new coverage on the CDMO space and also Trump's move to likely impose a 25% tariff on pharma imports.
Close to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk be able to secure lower tariffs from India without a manufacturing commitment? That remains to be seen. For the moment, what we know is that Elon Musk had a very positive 50-minute meeting with Prime Minister Modi in Washington, D.C., where everything from electric mobility to space cooperation was discussed.
Ranveer Alabadia has been spewing dirt, has shown the dirt in his mind, has been vomiting on air. Why should we protect you? Ominous words coming in from the Supreme Court aimed directly at Ranveer Alabadia post the India's Got Latent controversy. So that entire controversy involving Ranveer Alabadia, Samir Raina, moving to the doors of the Apex Court. The questions we're asking: who's the one who's knocked on the doors of the Supreme Court? What reliefs are they seeking? What did the Supreme Court have to say about it? And what are the reliefs, if any? What are the protections, if any, that the Supreme Court has granted? Well, to begin with, it's Ranveer Alabadia who's knocked on the doors of the Apex Court seeking protection. Mind you, he's facing at the very least 3 FIRs that at least we know of: Maharashtra, Guwahati, as well as Jaipur. And what's interesting is that, and that's an interesting side story, representing him in the highest court of the country is none other than the son of Justice D.Y. Chandrachud, the last Chief Justice of India. It's Abhinav Chandrachud that's appearing for Ranveer Alabadia. Now, Abhinav put up a valiant argument, a valiant battle here before the Apex Court, where he argued that he's not at all defending the comments or the conduct of Ranveer Alabadia, but rather he's citing multiple FIRs, that this is tantamount to an abuse of process. Also going on to say that not just Ranveer Alabadia, but even his mother, his associates are beginning to receive death threats, and that is something something that requires the intervention, the protection of the highest court of the country. Now, there were two very clear halves to the hearing. In the first half, the Supreme Court absolutely squarely condemned the content as well as the conduct of Ranveer Alabadia. The Supreme Court said that he's been spewing out venom, he's been vomiting, and that this does not call for intervention or protection of the Supreme Court. Further, the Supreme Court went on to say that as far as the conduct itself is concerned, it would bring shame to fathers, to mothers, to parents, to society in general. In fact, the Supreme Court then went on to say that just because Ranveer Alabadia is popular, that is no grounds, that is no reason for him to take liberties with societal norms, to openly flout them, and that this behavior should be squarely condemned. In fact, the Supreme Court did not stop there. It said that the Supreme Court has not been sitting in some ivory tower. It has been, in fact, going through social media. It knows that these comments came not originally from Ranveer Alabadia, but from an Australian show, and that this is something that is not acceptable here in India, that such conduct, which reflects on society, which reflects on his own.
Welcome back. Thanks for staying tuned into Trading Hour on CNBC-TV18. Now let's shift focus and put the spotlight on the pharma sector. Today we're seeing pressure coming in because of the comments that have come in from President Donald Trump, and he's spoken about maybe putting some tariffs on imports coming in from pharma sector of 25%. But other than that, we also have a note that's coming from Macquarie where they've initiated coverage on CDMO players, and they're quite bullish on the outlook for CDMO players. Now to talk about that, we're joined by Dr. Kunal Damesha from Macquarie Capital to discuss all of the new coverage as well as the whole sector as a whole. Thank you so much, Kunal, for joining with us on the show. You know, Kunal, first I have to start with Trump tariffs, the threat that is coming in on that front. And because of that, we're seeing that sharp fall coming in the markets. And specifically, the pharma sector has been a bit jittery because of that. What are your thoughts coming in on this front? How do you see this impacting pharma companies as well as CDMO players, right? Because they also do have exposure coming in from that side. A lot of clients of theirs and innovators from there come in. So any impact that they would also be facing because of this?
Sure. So I believe this tariff threat is basically aimed at bringing some manufacturing onshore to the US market. And if you read the comments closely, the president has also suggested that he will give some time for the chip manufacturer as well as pharma companies to move their manufacturing to US. So my view is it is more of a threat to kind of bring some manufacturing and some more jobs to the US market rather than actually imposing tariff. Because in my view, actual tariff imposition is impractical. So the way I look at it is from a two segment perspective. One is the generic segment, which is where most of the Indian companies currently operate. And these generic products currently make up for almost around 90% of the drug volumes in US. And out of that 90%, Indian companies account for 47% of drug volumes. So if they put such a high tariff of 25%, I believe that a lot of these Indian generic manufacturers would kind of stop supplying products where they don't make money, because the profitability of the US generics business is not that high now after years of price erosion, right? So, if the tariff comes in, there will be, cut down of supply. And on that, there will be more drug shortages in the US, which are already at a high level. If you compare the last 10-year drug shortages, current drug shortages are higher than that. So there'll be more drug shortages. In turn, that will again push back the drug pricing up. So it's basically a cycle that could play out. But at this point, I think such a steep tariff, the generic companies would exit, in some of the products where they don't make money. Now, coming to the large pharma companies, right, which the branded drugs, if there are tariffs, on the supply they get from some of the CDMO companies, what they can do is kind of take the price hikes. And if again that is also pressured by let's say Inflation Reduction Act, which reduces drug prices in US, then they are basically kind of sandwiched in a way. So my sense is it's impractical. And the third aspect is moving one molecule from one plant to another. Typically takes between 3 to 5 years because it's a regulatory process involved. So 1 to 2 years to make the plant, then 6 to 12 months to generate stability and validation data, then submit the new data to the US FDA, which will take another 10 to 12 months to approve, and it might also include pre-approval inspection of new facility. Right, so it's a long gestation projects.
Dr. Kunal, so I think you've made the point quite clear. At this point of time, putting a 25% flat tariff on pharma imports into the USA is impractical, especially given drug shortage worries, especially given price erosion worries, and also the amount of time physically it will take to go ahead and relocate to the USA. Well, one particular theme that you've written on today and you've initiated coverage on quite a few stocks is actually the CDMO theme. Towards the end of 2024, we saw quite a bit of a rally amongst most of the Indian CDMO companies in anticipation of the imposition of the US Biosecure Act. That appears to have been put on hold or maybe delayed for the time being. What are the thoughts on the sector and why have you initiated coverage? What do you like about these particular set of companies?
Sure. So I'll just first address the US Biosecure Act. Obviously it has been put on hold as of now because the older administration could not get it approved by Senate. But the damage through the US Biosecure Act is already done. The strategic discussion about outsourcing of their supply chain among the large cap pharma companies, mid-size and small-size pharma company have already changed. If you look at, we have done an analysis as to how the new RFP inquiries for Indian companies have grown by more than 100% over the last 1 year, right? And that continues in the recent time, despite Biosecure Act not becoming final legislation. At the same time, if you look at the revenue expectation for some of the Chinese CDMO companies like WuXi AppTec, WuXi Bio, has been revised downward by consensus in a meaningful manner because the inquiries which our Indian companies are getting, those are basically taken away from the Chinese CDMO companies. So while the act or legislation is not passed, I think the damage is already done. Things are already moving, in favor of Indian CDMOs, as well as we have also highlighted on the large molecule biologic side. A lot of these new projects are moving towards Samsung Biologics, which also is covered by Macquarie.
Right. Kunal, what is also interesting, like you were mentioning, right? So China Plus One, what we always talk about, has started already coming into play, while because you're seeing these Chinese players already seeing a reduction coming in, we're seeing more RFQs coming in. Have they won your thesis behind investment, specifically in terms of the names that you have given? What is it behind the logic and why are you looking at these companies in the CDMO side? And have any of these companies actually started receiving those orders? Have those inquiries actually turned into orders?
Sure. So I would start with the top-down analysis, and Indian CDMO sector as of now is the fastest CDMO sector growing. At almost around mid-teens kind of CAGR, and we believe that Indian CDMO sector, which currently has around 4% market share, will capture around 5% market share globally in the next 3 to 5 years. So that is basically a lot of these positives coming in, and if at all, let's say US Biosecure Act gets implemented in its current form, I believe that this 14% CAGR for the industry would accelerate to 18% CAGR, and the industry could just triple in size from what it was in 2023 to almost 22 billion in 2030. Right, so there is a huge top-down tailwind, secular growth tailwind for the sector. What I am looking at in my coverage is companies which are focused on the product rather than services, and companies which are focusing on high-tech CDMO segment. So within the CDMO segment, entire CDMO segment, there are certain sub-segments which are growing at a very fast pace, like antibody drug conjugates, oligonucleotide, peptides, GLP-1. So based on our segmentation of this industry, we like the companies which are product-focused and high-tech segment-focused to see the maximum growth. And hence, we are forecasting roughly 20 to 25% top-line CAGR for 3 of our product-focused companies, Divi's Labs, Suven Pharma, and Blue Jet Healthcare. And there will be a lot of operating leverage, which will drive meaningful bottom-line growth as well for these companies.
Thank you so much, Dr. Kunal, for joining us. So 4 companies, as far as Macquarie is concerned, in terms of initiation today, and all 4 of these stocks are doing quite well in the session. Thank you once again for joining us and giving us our views on both the initiating note as well as tariffs as far as the entire pharma space is concerned. Well, time now for a short break. We put the spotlight on Exide Industries on the other side and decode if there are exciting times ahead for the stock.
Something that the Supreme Court will look very kindly on. But having said that, the Supreme Court also said that we have constitutional courts in the country. It is not a kangaroo court. It is not a court of public opinion. And it is on that count that the Supreme Court, taking note of the fact that there have been previous instances of multiple FIRs against senior journalists such as Arnab Goswami, senior journalists such as Amish Devgan, the Supreme Court, keeping in line with that precedent, has granted the twin protection to Ranveer Alabadia after that hearing. Number one, he cannot be arrested, at least as far as the FIRs that have been registered so far. Jaipur, Guwahati, Maharashtra, he cannot be arrested basis those FIRs. Further, the Supreme Court has also said that no further FIRs, at least as far as the India's Got Latent Controversy is concerned, will be filed against the person in question, which in this case happens to be Ranveer Alabadia. But there are some tough conditions that the Supreme Court has imposed. Number one, Ranveer Alabadia will appear as summoned by all of these authorities. Number two, Ranveer Alabadia will cooperate with all these investigating agencies, will not interfere, will not interrupt. Number three, he will not do any further shows in the interim. That is something that the Supreme Court said as an afterthought, but very clearly pointed in the direction of Abhinav, in the direction of Ranveer Alabadia, that no further shows for now. And also importantly, has put restrictions on overseas travel for Ranveer Alabadia, saying that you will need to deposit your passport at the local police station. So strict conditions being imposed on Ranveer Alabadia, but nonetheless, the Supreme Court, after that flurry of condemnation, granting that protection to Ranveer Alabadia.
Welcome back to Trading Hour on CNBC-TV18. Now let's move on. An Exide Industries stock price has seen a roller coaster rise since its EV battery supply agreement with Kia and Hyundai was signed last year. Sudarshan is here to tell us more about this. Sudarshan, are we going to be seeing exciting times for the stock going forward and the company? What's the outlook there?
So it's been an interesting last 10 months for Exide Industries. Why do I say interesting? Let me first tell you a few pointers. First, stock is now back to levels before the Hyundai and Kia agreement. Second, P/E ratio is now same as it was before the Hyundai and Kia agreement. Third, company continues to invest in its EV arm and total investment so far is now at rupees 3,300 crore. And fourth, first phase of lithium ion cell manufacturing unit to begin production this year. Now let's come to the stock move. Remember April 5, one day ahead of the Kia and Hyundai agreement, stock was trading around Rs 321 per share with 1 year forward P ratio of 21 times. On April 8, 2024, company announced an agreement with Hyundai and Kia for battery supply to their electric vehicles, and the stock moved 17% higher, recording its biggest single-day gain in nearly 20 years. So after that, come to Feb 17. So basically in June 2024, stock moved sharply higher, hit record high of Rs 620 per share with P surging to 40 times. But those gains have been erased and now stock is back to levels seen before that Hyundai and Kia agreement. So the question is, why this stock fall? Has anything changed in relation to Hyundai and Kia agreement? Well, the answer is no. Company has recently formalized the term sheet and signed binding agreement. If you remember, most brokerages had turned bullish on the stock post that agreement, saying this can be a re-rating event for the company and can help it sign more agreements with global and domestic OEMs. Brokerages like Nomura and JP Morgan had announced a sharp increase in target price. JP Morgan had even increased EV battery business valuation from Rs 25 per share to Rs 173 per share, and Nomura had raised multiple value lithium ion cell capex at 3 times book value, and that is in line with leading global peers. But now, after 10 months of that agreement, most brokerages are still positive on the stock, with 50% of total brokerages covering the stock as per Bloomberg data have a buy call with target as high as Rs 570 per share. But the key question remains, why this fall in the stock price if nothing major has changed? Well, the brokerage firm B&K Securities, on writing report on Exide Industries, has given 3 reasons. First, there is an overall slowdown in the EV industry. Second, there is a lack of visibility in the near term for further tie-ups with OEMs that everyone was expecting. And second, there has been a drop in lithium-ion battery prices. So what will be the focus now going forward? If Exide Industries manages to sign more agreements, and how does the EV story play out? That will be the focus for Exide Industries.
Thank you so much, Sudarshan, for joining us and giving us a complete 360-degree view on what exactly transpired as far as Exide Industries is concerned. But with that, it's a wrap on this edition of Trading Hours. Stay tuned. Halftime Report is up next.
India and the Gulf Cooperation Council, we are at this moment negotiating about having a free trade agreement. As far as Qatar is concerned, both sides are exploring the possibility of signing a free trade agreement in future, and that was one of the discussions that took place in this round of talks. As far as the strategic partnership establishment agreement is concerned, it actually elevates the present state of bilateral relations to a strategic level. What we are looking at is deepening cooperation in the fields of trade, energy, investment, security, as well as in the regional and international fora. As you know, within the GCC, India has got signed strategic partnerships with UAE, Saudi Arabia, Oman, and Kuwait.
US President Donald Trump says he will impose 25% tariffs on pharma and auto, spooking stocks in early trade, but the low likelihood of him following through on this given implications for US consumers sparks a reversal.
The Neath Port Talbot Council clears Tata Steel's proposed investment in an EAF, that's electric arc furnace, at Port Talbot with an investment of £1.25 billion, including a grant of $500 million from the UK government. The stock perks up.
Hexaware marks its return to the bourses with a listing at a premium to the offer price of 708 rupees per share. The strong listing despite muted subscription of less than 3 times with high institutional interest.
Sources tell CNBC-TV18 that Bharti Enterprises will use the proceeds from the sale of shares in Bharti Airtel on Tuesday to refinance its acquisition of British Telecom. Hello and welcome to Halftime Report. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And Mangalam, in a long while, we haven't had this sort of a screen, particularly at midday. So pretty good. Normally we focus on the first few hours, that checking on margins, what's getting triggered, where it's getting triggered. Not too bad today. 23,000, the bulls will take it.
We spoke at 10:30. The Nifty was 23,040. It's managed to hold on to that 23,000 mark, so that's a positive. Between 10:30 and now, what has changed is the mid-cap index. It's done even better. At that time, it was around 1.2% higher. Now 1.7% higher, with a lot of stocks actually making highs of trade. Look at BEL. It's a frontliner, doing a lot better. L&T, a lot of these cap names or capital goods names are doing a lot better. And then we have a lot of the capital market plays as well picking up. We have Angel One, which has moved to the high point of trade. A lot of long positions being added on BSC as well. So we'll keep an eye out on markets as we progress. A good recovery from lows is what we've seen in today's trading session after a big drubbing that we've seen in broader markets as well. But let's focus on the auto space, and that's because, everyone's buzzing with the idea of Tesla coming to India. Following Elon Musk's meeting with the Prime Minister, electric vehicle manufacturer Tesla is looking set to make its foray into India. We understand retail operations could start soon. Parikshit joins in with the details. Parikshit, earlier you had pointed out that they're looking for, employees for their retail ops in India, and now you gather that they may start soon.
That's right. We're learning from sources that they could start operations as early as April this year. And this could mean that they would import cars from Berlin and sell them in the Indian market. We also learned from sources that Tesla has zeroed in on locations in AeroCity in Delhi and BKC in Mumbai for starting company-owned showrooms. This had been the plan for some time, and Tesla had been scouting for locations in India last year as well. So the idea is to start retail operations as soon as possible and then consider and lay out a roadmap for manufacturing in India, something that the Indian government wants them to do. Now, what we're also learning is that the US automotive industry and also Tesla believe that India's tariffs on fully built cars could come down even further. Currently, the import tariff on fully built cars into India is about 70%, and the government believes, and the US government believes, that because of the threat of reciprocal tariffs, several countries, including India, may further lower their tariffs on automobiles. So this is what Tesla is hoping for, and these reciprocal tariffs may kick in from the 1st or 2nd of April. So this would coincide with their India entry. We're also picking up that Tesla is significantly going to increase sourcing from India this year. If they are sourcing about $1 billion from India, next year it could be even more. So let's see what happens, but clearly the plans are afoot and the hiring is taking place to begin retail ops as soon as possible.
Take that point, Parikshit. Thanks a lot for that. What stood out for me was the fact that it would start its operations in Mumbai in BKC. They've identified a showroom around BKC itself. Nigel, not too far away from your house. It is, very close to the Apple store as well. So maybe, when you're going down to buy an Apple phone, might as well look at the Tesla car as well. Not too expensive given the first, rates that are coming in, 25,000. That would mean about 21 lakh rupees.
That tells us about the phase of life we are in, Mangalam. You're saying it's not too expensive. For me, it is very, very expensive. So I would love the car.
I meant not too expensive for you.
I've been very, very lucky to have driven the Tesla in the United States, and I'll appreciate the car and appreciate all the beautiful vehicles that we're going to be seeing on the road. But for now, it's left at appreciation. And neither will I be buying a new Apple phone. But Mangalam, that's the phase of life you are in. And I wish you well, brother.
All I can say is, the only time I sat in a Tesla was when I was in the US and I booked a car. I booked an Uber. And that is when the Tesla came in and I was happy not driving it, just sitting behind one itself. But whether that will, cause flutters among Indian players or not, we have Mahindra Group CEO and Managing Director Anish Shah telling us that the company is happy to have competition in India. He spoke to CNBC-TV18 last week. He joined us in our studio, and this is what he had to say about Tesla's entry into India.
We are happy to have competition in India. It will help the electric segment grow as well. The key for us, as we've always maintained, is that what we've seen the government do is take all actions that essentially foster make in India. That's the most important part. If India becomes a dumping ground for the rest of the world, whether it's in steel or automobiles or anything else, that's going to be negative for the economy. So as long as every maker in the world is making in India, that's a better outcome for us.
Okay, all right. Well, let's get in Gurmeet Chadha, Managing Partner and CIO at Complete Circle. Hi, Gurmeet. Good day, and thanks a lot for coming on the show. Gurmeet, what do you think? I mean, everyone over the weekend was celebrating what Mahindra has done with that EV launch, appreciating the numbers, and bam, the stock is down 10%. You could say that maybe the street wanted a higher number, which I don't know how probable would that be, or the fear that Tesla could come in and disrupt the market. What do you think?
Hi, Nigel. Always a pleasure. I think it's the latter. I think it's the Tesla's announcement of hiring and setting up showrooms in Delhi, Mumbai, and a few locations to begin with, and President Trump talking of tariffs on auto. So it's a bit of a combination. I don't think so. It's an apple-to-apple comparison. You look at Tesla's revenue mix. Automotive is 77-78%. Battery storage services is the next 13%. And if you then take leasing and energy credits, etc., and then they have different plans on Cybercab, which is the $25,000 segment, which are the robo-cabs and autonomous driving. M&M, on the other hand, is a completely different ballgame. 55% is automotives and 23-24% is farm equipment. 11-12% is financial services, and the balance is industrial. Also, the best-selling model for Tesla globally used to be Model 3 last year. This year is Model Y, right, which is roughly priced at about 70-80 lakhs. 70x showroom, which means about 80-90 lakhs. And here the best-selling model is Tata, which is Punch and Nexon, which is around 14-16 lakhs. So I don't think so the price points really match. Even Model 3, the price would be more upwards of 40 lakhs. So I think the price points are much higher, and they are just launching. The bookings will start, the ecosystem will develop. They are still not making here. They're just, promising to secure components here. So I think it's a bit of an overreaction in my view. And the size of EV market in India, we sell 40 lakh cars a year. EV is not even 5% yet. We haven't sold 2 lakh cars last year.
While you say there is overreaction, would you then actually be, realistic and maybe perhaps borderline greedy and look to buy into these dips as well, Gurmeet? Because, typically what happens, and this is what we've seen through experience, not a lot of foreign players in a lot of segments have been very successful in India. We've seen that with retail, barring QSR, where you have, McDonald's and Domino's doing well in India, that too with Indian franchisers. We haven't seen a lot of foreign brands actually succeed in India. In automobiles, you have Hyundai, which has done well, but then again, because of the massive ecosystem that they have in India and the price points at which they are. So would you look to buy this dip, because Tesla's entry may actually, like Anish Shah said, grow the ecosystem, grow the infrastructure, and pave the way for the lower priced models to actually see a better sort of volume growth?
Absolutely, and as I said, it's always a win-win. When we were in banks, we had foreign banks coming in. When I was working with Alliance Mutual Fund, which is Nippon, we used to say that Fidelity and Franklin will take away all the market. It just happens. Even then there is this offline-online debate. Bangla, in India, 50 crore people have never ever been to the mall, and we are still discussing e-commerce versus offline. So I think India is a very complex, different market. And I think the entire ecosystem will grow. Tesla coming here, see, China, the reason for BYD's success is the battery cell and the overall ecosystem. A good player coming in actually strengthens the ecosystem. The adoption will pick up, the awareness will pick up, the tech know-how will pick up, because a lot of the sourcing will happen domestically. So I think it's a win-win. There's no need to be negative on M&M or Maruti and suddenly think that Tesla is going to come and overnight things are going to change. Maruti, mind you, people have been so negative, still commands almost 50%, 48% market share. So I think different market, different price points, different revenue mix. I think it's a win-win. And any weakness in M&M especially, which has done so well, their market share in tractors is now 44%. In 3.5 ton and less LCV, they are almost 50%. In SUVs now, they are almost back at 22-23%. Overall improvement, good asset allocation. So I'll be constructive on M&M if it's more focused towards M&M. And as I said, it's a win-win. It's not this versus that.
Okay, all right. What about Tata Motors? Since we have you on auto stocks, Tata Motors has come down 40% from the top. I was reading a CLSA note today, and they were saying that the valuation that the street is giving to JLR is around 200 rupees, while they are giving it a value of around 400 rupees. So do you think post this correction, you like Tata Motors as well? And in the pecking order, how would they place? You briefly spoke about Mahindra & Mahindra, Maruti, as well as Tata Motors. How do you place them?
So in that order, I think M&M and then Tata Motors. And, typically we don't buy stocks when they are 40-50% down and write obituaries around them. I remember it was sub 100 in COVID, and the same was written. I think there is a structural change happening in Tata Motors. I think once the US and China numbers pick up, right now there's a lot of headwinds in terms of how Europe is doing. China is now supposed to be coming back. China is the largest market as far as margins go. If you look at their order book, especially the mix, it's very favorable. The Defender Sports and the RR mix is increasingly becoming better. They're cutting debt. At some point of time in India, there will be some value unlocking with the EV segment getting hyped off and commercial vehicles and passenger segment also. So there's a bit of a unlocking happening with the restructuring which will happen in Tata Motors, and it's transitioning from from a pure play ICE to in fact right now it has the best powertrain. It has diesel, it has EV, it is now getting into hybrid, and there are a lot of new launches coming, even the SUV front. So I think it would not be right to write it off below 700, and I think I'll be very constructive. But in the pecking order, as I said, M&M and Tata Motors, I'll become more constructive when the broader macro indicators like the CV numbers, the overall cap board, the government spending picks up. So at the CV thing, which is right now dragging also a little bit.
Right. Just finally, before we let you go, when everyone looks for gold, you sell shovels, right? So if everyone's looking at the EV space, are there any auto ancillary plays that may benefit from the ecosystem increasing and Tesla's coming to India?
Also, I think we've written off completely auto ancillaries which are only into IC engines. Remember, after India, Ukraine was the largest supplier of auto components. And technically, because of EV and clean energy, there is very little capex which has happened. So I think if you see there are a lot of auto ancillaries where they are doing a lot of good stuff on the overall component system. So whether it is Uno Minda, it's corrected 30% plus from the peak despite posting about 250 crore PAT. It's getting into JV in terms of making some new equipment on auto. So they are in everything. They are in the accessories, which is your touch screens and airbags and car seats. And then they're also in the switches and horns, which is the lighting business. Then you have something like a Sandhar technology, which is now making a smart lock. And I would be also looking at something which is, making into battery storage and how this EV ecosystem, evolves. Because I think India will continue to be a hybrid market. It will be a combination of maybe, the regular ICE, hybrid, CNG and EV. It will not be one way like other markets have been.
Okay, all right. Thanks a lot, Gurmeet, for joining in, giving us your take in terms of the auto stocks as well as some of those auto ancillaries. By the way, as we're having that chat, there was a flash at the bottom of your screen on Maharashtra Seamless. We're seeing increasing trends at some of these stocks that have come out drastically from the top. There is some kind of promoter buying, and even on Maharashtra Seamless, close to around 5.5 lakh shares have got bought by the promoter, and that's over the last 3 or 4 days or so. So that's the disclosure on the exchange. And as we speak, the stock is more or less flattish. Though if you pull up, on a longer term, you'll see that it was at around 900, 950 rupees. And from there, Maharashtra Seamless has seen a bit of a pullback. So promoter buying some kind of support coming in there. The street normally likes that. Okay, all right. Well, time to slip into a short break. But as we do that, here is some good news for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or scan the QR code that comes up for you on the screen in just a bit.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades.
Welcome back. You're watching us here on Halftime Report. Let's get you our special Insight Edge segment. This morning we spoke with the management of Transformers and Rectifiers India, the stock which is surging in trade today. What was the insight that Vamakshi got from the conversation with the management? She's bringing it to us. Vamakshi.
Well, Mangalam, the management sounded fairly optimistic. They said that, with the current order win coming through of 166 odd crores, the order book now stands at 4,200 crores for the company. In fact, they also highlighted that the STATCOM transformers will be delivered in the next 15 months. They have a revenue guidance of nearly 2,000 crores for FY25. This is expected to rise to nearly 3,500 crores in FY26, and their net profit is expected to come in at nearly 500 crores over the next 2 years. Now, talking about the demand-supply gap, what the management highlighted is that demand is far overshooting supply. They said that in the country, the demand for transformers stands at 4.5 lakh MVA and the supply stands at nearly 3.8 lakh MVA. So there's a supply gap of almost 70,000 MVA. In fact, they also highlighted that 18,000 crores of inquiry is under pipeline. They expect a strike rate of nearly 20%, which roughly translates to 3,600 crores of order inflows over the next 2 quarters. So that bodes well for the company. Now, what they've also highlighted is that they are moving towards 100% backward integration. This in turn has a positive effect on their margins, and they're expecting margins to improve to levels of 15 to 16% in FY26. So overall, when you look at the commentary that came through from the management, they sounded quite optimistic. And let's also go ahead and listen into some snippets of that conversation.
We are pleased to announce that we have secured another significant order for STATCOM transformers. STATCOM transformer is crucial for voltage stability and reactive power compensation. This order particularly is prestigious for us. We have now a total of 26 STATCOM transformers in our order book. And with the latest order, we have now our order book position is at 4,200 crores. We are also pleased to inform you that we will be delivering these STATCOM transformers in the next 15 months. This current year, we will be closing at around 2,000 crores. And next year, our lookout is for 3,500 crores total. So we should be touching somewhere around 500 crores back in the next 2 years.
All right, take a short break. Come back on the other side. We get in some technical strategies, trading strategies that come by from SBI Securities.
The most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
In the event that there is some sort of ceasefire between Russia and Ukraine, peace settlement down the road, what does that mean? That means Russian sanctions on Russia come off, and that probably brings Russian oil supplies up quite considerably, and that's going to put downward pressure on the oil price. So I think oil is going to stay quite soft over the next several months, and that will obviously be helpful for Indian inflation. Trump is on this tariff gig now, reciprocal tariffs, if you want, if you like, where he's saying, you know, if countries overseas have got high tariffs, which India does have, well, we're going to put high tariffs on their imports as well. Now, it's been the case for many years, as you will know, that developing countries trying to build for the future from a low base, very often do try to protect their infant industries, which is a classic economic argument, with tariffs. It's always been the case that poorer countries, developing countries, emerging markets have higher tariffs, than developed economies. And I think that, you know, it is what it is. I'd be very surprised if India is absolutely right in the forefront of this reaction that Trump is coming up with. I think he's focused a bit more on other countries, frankly. But yeah, he has mentioned India, so we have to watch it.
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency.
Welcome back. You're watching us here on Halftime Report. Good time to get you an FNO update at the midday. We have the frontline indices which are doing well. The Nifty is holding around that 23,000 mark, just below it now as we speak. It's the IT index which is dragging the index, whereas the Nifty Bank is supporting the frontline index. What's happened over the last 3 trading sessions is that the Nifty has made slightly higher lows, and that's a positive. Today's low was 22,815. Yesterday's low, 22,801. And the previous day's low, 22,725, telling you that maybe we are in the process of bottom formation itself. And every time that happens, as you can see on your screen, you know, the broader markets outperform, and that's exactly what's happening today as well. The mid-cap and the small-cap indices is doing well. The advanced decline lines tell you the story of the day. 2,100 stocks which are in the green for about 500 stocks which are in the red itself. The other positive of today's trading session is the India VIX. With the markets moving higher, the broader markets doing well, you would want the India VIX to, come down a little bit. And that's what happened today. Not by much, but even if it's 1.28%, bulls would take that because that indicates some sort of put writing. And that's exactly what's happened at the 22,800 mark after the Nifty has made 3 consecutive higher lows. So 22,800 put fairly active. On the way up though, 23,000 call still has a lot of writers, and 23,200 call, which has the maximum open interest, comes into play ahead of expiry tomorrow. The key level to watch out for, Nifty Bank holding above the 20-day moving average, the Nifty Bank about 200 points away from the 20-day moving average.
Okay, all right. Well, let's get in. Sudeep Shah, Head of Technical and Derivatives Research at SBI Securities. Sudeep, hi, good day. Good to see you in. After a while, we have so much of green on the screen, particularly with regard to the broader markets. What do you think? We're good for more, or do you think lower levels are coming?
Good afternoon, Nigel. Good afternoon, Mangalam. Nigel, I feel we are on course for a relief rally now. The kind of momentum that you are seeing throughout the day, right from the opening first tick, we have seen a lot of volatility, but it was the mid-cap index, it was the small-cap side, the broader markets, which from lower levels, right from the word go, has shown some kind of a recovery and from oversold zones. So I feel that yes, while the larger, the broad Nifty as well as Bank Nifty might not have that bigger move, but decent enough rebound rally could be there in mid caps as well as the small caps. And coming to Nifty levels, 22,800, 22,750 zone now becomes a very important support. Last few days, the indices have been holding that. And even the last week of January, we have seen that bottom holding out. So I feel that Nifty, till it holds 22,750, 22,800, could rebound back up to 23,300, 23,400 in the coming few sessions.
Okay, not ruling out a bigger bounce from here. So that's good. Okay, Sudeep, what about individual stocks? What are you tracking?
Nigel, the first stock that I have on my radar is HDFC Bank. Now, we feel that with the Bank Nifty outperforming in the last few sessions, HDFC Bank plays a pivotal role here, and we expect Bank Nifty to move up to 50,300, 50,500 in the coming few sessions. So here we feel that HDFC Bank, which was doing well in the last few days, we have seen good follow-up action also from lower levels. Could move up to 1770, 1790 zone. This could be bought with a stop loss at 1700 on the downside. And one mid-cap stock that we like, and that has been outperforming even the mid-cap indices also, is Taj GVK Hotels. Now here the stock is on an uptrend. Last several few days, the entire trading range has been engulfed. And we feel from here, 395 would act as a decent stop loss, and the stock could move up to 435 to 450 levels.
All right, Sudhir, thank you so much for joining in and giving us your stock picks and individual, indices as well in terms of call. Let's move on. Before we take that short break, a small programming note for our viewers. CNBC-TV18 and HSBC India are back with Season 2 of the SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations now open. All you got to do is scan that code and submit your entry for the SME Champions Award Season 2.
Good to see you. Have you been?
Very good. One of those massive roads today.
So much longer, much more. 2025 is like a very volatile.
Is an IPO the next logical step in this journey?
I think it is the next logical step. When we need to take that step, I don't know. We have been very cognizant about getting investors who are as excited about every part of our vision as we are.
You don't have managers in the company?
We have what we call coaches.
Yeah.
We take a very coaching mindset into people's growth at Canva. Part of our grander plan of the two-step plan, which is step one, build one of the most valuable companies in the world, which we're well on the way to doing. And step two, probably the more important step, is to do as much good as we can. We're up to 24 million active subscribers now, so grows pretty rapidly.
Not just law, but a little bit of DJing in your previous avatar as well.
I've not given up on it. It's still a distant dream, and I inflict it on every Canva party that we have. I have to get up and DJ.
You're the DJ, is it?
I am, yes.
Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India's sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing $30,000 or 26 lakh rupees in America, and Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year but cancelled at the last moment. Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk and other EV makers a concessional 15% duty as opposed to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk be able to secure lower tariffs from India without a manufacturing commitment? That remains to be seen. For the moment, what we know is that Elon Musk had a very positive 50-minute meeting with Prime Minister Modi in Washington, D.C., where everything from electric mobility to space cooperation was discussed.
Ranbir Alabadia has been spewing dirt, has shown the dirt in his mind, has been vomiting on air. Why should we protect you? Ominous words coming in from the Supreme Court aimed directly at Ranbir Alabadia post the
Welcome back. Since the broader markets is doing well, let's focus on a couple of names. Venus Pipes, that stock is surging in trade. Investec, they have initiated coverage with a buy rating and a target price of around 1,665 rupees a share. They note that the stock trades at around 9.7 times EV upon EBITDA, which they believe offers significant upside. And their target price is at a multiple of around 14 times. They anticipate that the EBITDA CAGR over the next few years will be roughly around 21%. Now, they're making three big points. First up, they say that Venus has increased its stainless steel pipes as well as tubes capacity by around 3 times over FY23 to FY24, which helped the company increase its market share to around 7%. They also point out that their volume growth has outpaced every other player in the industry, as they've reported close to 33% volume growth over the last 5 years or so. That's between FY19 to FY24. Going ahead, Investec, they expect Venus growth momentum to continue. They are building in roughly around 20% volume growth over the next few years on the back of capacity expansion in both welded as well as seamless capacities. Point number 2, they point out that Venus has focused on backward integration, which has boosted the profitability. The company has its hollow pipes capacity, which serves as a raw material, and it's helped it de-risk from dependency on imports, and that's what's aided profitability as well. And because of this backward integration, they have realized cost savings on an EBITDA per ton of around 56%. In FY24, if you compare it with FY22. They've also pointed out that there was an anti-dumping duty on hollow pipes, which would have impacted profitability. But this particular, headwind was avoided because they're backward integrated, and it's resulted in strong profitability. Finally, they know that the company's expansions will come on stream in the coming year, that's FY25 as well as FY26. They're expecting the ROCE to decline from around that 19% that was reported in the previous fiscal year, that's FY24, to come down to around 17 to around 19% in the next 2 fiscal years. So putting all this together, the stock is excited in today's trading session. Need to keep in mind as well that the stock has seen a sharp correction from the recent peak, but now Investec believes that it's come out to attractive valuation. So that's why they've initiated coverage on this name.
All right, so that's about Venus Pipes. The other one that I'm looking at is TTK Prestige, because the board yesterday approved an investment of nearly 500 crores towards operational and capital expenditure for the company over the next 3 years. It starts from the 4th quarter of FY25 itself. The funds will be deployed over the next 3 financial years, with 300 crores going towards capex and expenditure towards operating, which is basically branding, positioning, strengthening their distribution chain, etc., being about 200 odd crores, to which the company has also said it may result in transient impact on operating EBITDA margins over the next 8 quarters. Now, assuming that this 200 crores is equally deployed over the next 8 quarters, it makes about 25 crores per quarter, which is about 3.5 to 4 percentage points of margins being eroded. So that is something that they're preparing the street for, but they're saying that this would strengthen the brand going forward itself. So the street is looking at the brighter side of this and not at the EBITDA margin depletion over the near future, but the fact that the company is going ahead and strengthening its position both from a capital expenditure and an operational expenditure standpoint. The stock holding up mildly in the green, though like all other stocks, this one too has seen a cut from the highs. Take a short break now, come back on the other side. We have Manisha Gupta joining in with Colin Shah, who's the MD at Kama Jewelry.
Controversy. So that entire controversy involving Ranbir Alabadia, Samir Raina moving to the doors of the Apex Court. The questions we're asking, Who's the one who's knocked on the doors of the Supreme Court? What reliefs are they seeking? What did the Supreme Court have to say about it? And what are the reliefs, if any? What are the protections, if any, that the Supreme Court has granted? Well, to begin with, it's Ranveer Alabadia who's knocked on the doors of the Apex Court seeking protection. Mind you, he's facing at the very least 3 FIRs that at least we know of: Maharashtra, Guwahati, as well as Jaipur. And what's interesting is that, and that's an interesting side story, representing him in the highest court of the country is none other than the son of Justice D.Y. Chandrachud, the last Chief Justice of India. It's Abhinav Chandrachud that's appearing for Ranveer Alabadia. Now, Abhinav put up a valiant argument, a valiant battle here before the Apex Court, where he argued that he's not at all defending the comments or the conduct of Ranveer Alabadia, but rather he's citing multiple FIRs, that this is tantamount to an abuse of process. Also going on to say that not just Ranveer Alabadia, but even his mother, his associates are beginning to receive death threats, and that is something that requires the intervention, the protection of the highest court of the country. Now, there were 2 very clear halves to the hearing. In the first half, the Supreme Court absolutely squarely condemned the content as well as the conduct of Ranveer Alabadia. The Supreme Court said that he's been spewing out venom, he's been vomiting, and that this does not call for intervention or protection of the Supreme Court. Further, the Supreme Court went on to say that as far as the conduct itself is concerned, it would bring shame to fathers, to mothers, to parents, to society in general. In fact, the Supreme Court then went on to say that just because Ranveer Alabadia is popular, that is no grounds, that is no reason for him to take liberties with societal norms, to openly flout them, and that this behavior should be squarely condemned. In fact, the Supreme Court did not stop there. It said that the Supreme Court has not been sitting in some ivory tower. It has been, in fact, going through social media. It knows that these comments came not originally from Ranveer Alabadia, but from an Australian show, and that this is something that is not acceptable here in India, that such conduct which reflects on society, which reflects on his own thinking, is not something that the Supreme Court will look very kindly on. But having said that, the Supreme Court also said that we have constitutional courts in the country. It is not a kangaroo court. It is not a court of public opinion. And it is on that count that the Supreme Court, taking note of the fact that there have been previous instances of multiple FIRs against senior journalists such as Arnab Goswami, senior journalists such as Amish Devgan, the Supreme Court, keeping in line with that precedent, has granted the twin protection to Ranveer Alabadia after that hearing. Number one, he cannot be arrested, at least as far as the FIRs that have been registered so far, Jaipur, Guwahati, Maharashtra. He cannot be arrested basis those FIRs. Further, the Supreme Court has also said that no further FIRs, at least as far as the India's Got Latent controversy is concerned, will be filed against the person in question, which in this case happens to be Ranveer Alabadia. But there are some tough conditions that the Supreme Court has imposed. Number one, Ranveer Alabadia will appear as summoned.
Welcome back, and joining us on the show now is Colin Shah. He's MD Kama Jewelry. Colin, hi, thank you for joining in. With gold so volatile and near all-time highs, how is the jewelry demand and investment demand looking like right now?
Thanks, Manisha. So due to, I guess, the threat of tariffs and everything which is happening globally, gold continues to be a safe haven. We are seeing a lot of physical gold actually being transferred to the US from UK. And there's a slight shortage in global markets about getting physical gold. The investment demand continues to be strong globally and in India, keeping in mind that, I guess between the dollar and gold, these are the 2 safest havens maybe left globally. So we're not seeing any dip in investment demand for gold. Actually, even the exports have been significantly double-digit higher in the month of January for gold jewelry.
For the Indian retail jewelry markets, how is that looking? Because there are reports on how that is not doing so well.
Indian retail has been slightly soft. Again, that's due to the high gold price. See, our consumers, used to buying at dips. It's a little evolved, I would say, gold consumer, since they've been so much into investment buying since many, many decades. So every time there's a dip, we see a slight, I guess, increase in walk-ins at retail stores. And whenever, the gold rate goes up, they are in a wait and watch mode till the gold price stabilizes. So right now, we've seen this spike from 2,700 levels to 2,900 levels in the last few months. And the minute the consumer sees that at 29 or 3,000 levels it stabilizes, I think Akshaya Tritiya onwards, the Indian consumer will be back to buying gold in a big way.
Colin, also talk to us about the prices itself. I mean, as you said, when prices stabilize around 2,900 or 3,000 for that matter, because when you look at various reports, we're looking at a range anywhere between 2,500 on the lower side to $3,300 an ounce on the higher side. What's your own range for this year?
My own range is that the 3,000 level will come quicker than we think it is. We last year, I would say Diwali time, thought that we may reach 3,000 by this Diwali, but I guess with the change in regime in the US and with the way Mr. Trump's been going about tariffs, gold has been going up. It's in a bull run. 3,000 levels now we think will be before Akshaya Tritiya. So it looks like it's going to cross that barrier in the short term, not so much long term.
All right. Colin, for a company like yours, where you are into gold and diamond and domestic markets and exports and lab growns as well, how are you positioning yourself with so much uncertainty, not just in the global markets, but some bit of that in domestic markets as well? So what really is your vision for 2025?
Thanks. That's a good question. But not only me, but I guess most jewelry manufacturers, we're probably that generation which saw in our 30s and 40s, many stable years where gold used to be at 325 and natural diamond prices went up 3 and 5% every year. But since the last decade, I guess we're now used to volatility in gold, natural diamonds, price volatility, and lab grown coming in a big way, and gemstone pricing going through the roof. So as a manufacturer, what we're doing, and we continue to believe strongly in, is design is still key, whether it's any category of jewelry. So we continue to invest heavily in design and work closely with our customers on co-creating exclusive collections which excite the consumer, because jewelry as a category has only grown year on year. We're also seeing a big shift towards premiumization and customization. So as a company, we're definitely part of that whole universe. And another thing which I guess, Kama and most manufacturers are doing today is they manufacture gold jewelry, platinum jewelry, silver jewelry, natural diamonds, lab grown, and gemstones. So if you're
is that diversification really good, Colin? Does that keep you afloat and in profits?
Yes, it does. Okay. It does. It keeps us afloat. It keeps us profitable, sustainable, and we are able to quickly, I would say, adapt to the changing consumer also globally. See, it's not only our industry, it's the consumer also. It's all about the consumer at the end of the day. And globally and in India, they're changing much more rapidly, I guess, across industries. And our industry is no outlier to that.
Colin, what we hear in the past many quarters now is most of the companies increasing their presence in sense of number of stores and a number of themes and designs, etc. In a market like this, how is that working out?
See, in a market like this, like India, we are still, I would say, if you take the large chain stores globally, they would have typically between 1,000 to 2,000, 3,000 stores in a particular country. In India, we're still seeing even the largest chain at 400, 500 stores. So I think there's, scope of growth considering our population size of easily being at least in 1,000 to 2,000 doors, as long as you're in every metro and B and C town in the main street, high street, or the mall. So there's still, I think, long runway in terms of number of stores which are going to be opened in our industry.
Colin, you talked about various kinds of various precious metals in sense of jewelry as well. So with gold prices where they are, have you seen silver jewelry do better than silver articles and silver artifacts?
See, there's separate categories. So there's a consumer who wants to buy diamond jewelry, and whether that's natural or lab grown, and they will buy that category. There is a consumer which buys polki, and they buy polki and natural diamond jewelry. And then there is a consumer which is only buying gold jewelry, and that I would say is the majority in India today. 80% of the jewelry being sold is still very much yellow plain gold. So that customer is not the same customer for silver. Silver is a little younger profile, teenagers, college going. And I guess once they reach a certain threshold in income level, they move to gold. So we're not seeing cannibalization of silver into the gold category, but silver by itself is growing tremendously, not only in India, but globally, because of the versatility that it offers in terms of designs. There are many kinds of, especially in the fast fashion segment, kinds of jewelry, which is only possible in silver. So that itself is giving the whole category a big boost.
Great one, Colin. Thank you so much for joining in. We'll reach out to you when we need either silver, gold, or white gold jewelry as well. Manisha, thank you for taking us through with that conversation. We'll take a short break, come back, focus on the markets once again. Nifty's just about moved into the red.
Number 2, Ranveer Alabadia will cooperate with all these investigating agencies, will not interfere, will not interrupt. Number 3, he will not do any further shows in the interim. That is something that the Supreme Court said as an afterthought, but very clearly pointed in the direction of Abhinav, in the direction of Ranveer Alabadia, that no further shows for now. And also importantly, has put restrictions on overseas travel for Ranveer Alabadia, saying that you will need to deposit your passport at the local police station. So strict conditions being imposed on Ranveer Alabadia, but nonetheless, the Supreme Court, after that flurry of condemnation, granting that protection to Ranveer Alabadia.
Welcome back. There's a fresh bout of supply coming in for the Nifty at high levels once again. 23,030, 23,050 is where, the highs are facing some supply. And this one comes in from a couple of, FMCG names. So we have HUL, which has moved to the low point of trade. Giving it company at the lower end of today's trading session is Nestle India as well. But look at Bharti Airtel. The stock did okay-ish in the open. From there, it's seen a bit of a sell-off, currently at the low point of trade for Bharti Airtel. And then we have a couple of these steel names as well. JSW Steel, for instance, has given up some of the gains from the morning, currently sitting with a mild cut from the highs. It's corrected about 1.5%. And that's exactly what the view of a lot of market guests are, is the fact that it'll be a challenging year. 2025 will be a challenging year for markets in particular and Indian markets in specific as well. Sridhar Shivram of Enam Holdings says that FY26 earnings estimates are also expected to be revised downwards after the 2 or 3 weak earnings seasons that we've seen so far. Let's hear him out.
25, there's a lot of uncertainties, and Trump being just one of them. So what happens to tariff, how that plays out in the market. I think currency is the other issue, how our currency plays out. And my fear is that the currency can take the market up or down. If we have a stable currency, then the markets can be stable. If we have a volatile depreciating currency, if China does anything. So many variables. So in my view, 25 could be sort of the negative year. We had 8 positive years, and it's highly possible that 25 is the year where we get negative returns. Micro will dominate. Macros are not very favorable. Let me put it that way. Years we had significant outperformance. That has reversed in FY25. We think that FY26 numbers could also get revised downward because there is some slowdown in consumption. We saw the FM also using the budget to boost consumption. So there is some slowdown in consumption. So gold has matched stock returns over a very long period of time. So I'm not so worried about what happens in the short term. It's an asset allocation. I'm still very bullish.
All right, even as the frontline FMCG stocks are seeing some bit of decline, look at Jyoti Labs. Jyoti Labs, actually a stock which is corrected about 40% from its highs, is now finding some buyers at the lower levels. That stock has moved higher at the high point of trade. Remember, the third quarter results were actually top quartile when it came to their performance. So the stock doing well. Barring that, the Nifty is just about hovering around the flat line because of the stocks that I spoke about, putting some supply pressure at the top. We wrap up on this edition of Halftime Report. On the other side, Business Lunch comes up with all the market action ahead.
India and the Gulf Cooperation Council, we are at this moment negotiating about having a free trade agreement. As far as Qatar is concerned, both sides are exploring the possibility of signing a free trade agreement in future, and that was one of the discussions that took place in this round of talks. As far as the strategic partnership establishment agreement is concerned, it actually elevates the present state of bilateral relations to a strategic level. What we are looking at is regional and international fora. As you know, within the GCC, India has got signed strategic partnerships with UAE, Saudi Arabia, Oman, and Kuwait.
US President Donald Trump says he will impose 25% tariff on pharma and auto, spooking stocks in early trade. But the low likelihood of him following through on this given implication for US consumer sparks a reversal. The Neath-Port Talbot Council clears Tata Steel's proposed investment in an electric arc furnace at the Port Talbot with an investment of £1.25 billion, including a grant of $500 million from the UK government. The stock perks up. Hexaware marks its return to the bourses with a listing at a premium to an offer price of Rs 708 per share. The strong listing is despite a muted subscription of less than 3 times, but the high institutional interest, that is something supporting the stock. Sources tell CNBC-TV18 that Bharti Enterprises will use proceeds from the sale of share in Bharti Airtel on Tuesday to refinance its acquisition of British Telecom. Hello, good afternoon. You've tuned into Business Lunch, coming in live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala. Thank you so much for tuning in. And this afternoon is surely turning out to be good because you're seeing green on the screen. Nifty is trading about 22,900 levels as of now. 950 mark is what it is trading at. Sensex 2 is managing to hold on to good gains. And let's look at which are the contributors coming in for the Nifty 50 today, because we did have those banking names. It seemed like that was supporting the market in terms of the up move. So Nifty contributors in terms of that, we did see the names coming in were Axis Bank, HDFC Bank, ICICI Bank, as well as L&T among the top contributors for the Nifty 50. On the drag side, we have Bharti Airtel, TCS, as well as Infosys, which is a bit of a dull side coming in for the Nifty 50. But as of now, we are seeing positive coming in there. And let's look at the Nifty Bank on that note, because Nifty Bank also is managing to outperform the benchmark indices today. Nifty Bank is holding on to gains of 0.8% in trade, holding on to that day's highest level around that mark is what the Nifty Bank is trading at. Let's look at the mid and small cap. That is also outperforming the benchmark indices today, especially the mid cap is up 1.5%, and look at small cap. 2.5% gain that we're seeing coming in for the Nifty small cap. So surely a good day and good afternoon as of now is what we're seeing for the markets. But let's move on and get started with an important story for today. Now, Donald Trump has stayed firm on imposing tariffs on imported goods. In a press conference, the US president hinted at a possible 25% tariff on auto, pharma, semiconductors. These are the names he gave. Listen in to his comments.
I probably will tell you that on April 2nd, but it'll be in the neighborhood of 25%.
What about semiconductors and pharmaceuticals?
It'll be 25% and higher, and it'll go very substantially higher over a course of a year. But we want to give them time to come in because, as you know, when they come into the United States and they have their plant or factory here, there is no tariff. So we want to give them a little bit of a chance.
Absolutely. And Nifty Pharma is one of the worst performing index in today's trading session when you look at it. And this is obviously coming after the comment we just heard from Donald Trump, right? Him saying that a likely possibility of imposing the 25% tariff is something that is impacting the pharma stocks today. Now, when you're looking at it, obviously this is a reciprocal tariff. Currently, when you look at it, India is charging 10% tariffs on pharma products that come in from US to India. Reciprocal tariff means that US also wants to charge a similar tariff on it. Now, he is given an indication right now around the 25% mark. So that is something that we are watching out for. Now, let's look at the trade balance right now between India and US for these pharma sector and pharma exports. India pharma exports to US are in 2023, this is the last data that we have coming in from WTO, is valued at around $7.6 billion. Indian pharma imports from US are at $600 million. Now, India is charging 10% tariff. US does not charge any tariff as of now on these Indian pharma goods that are exported, and US is importing from India. So there is no charge on that front. So what is the concern that is coming in? That Indian pharma companies export sales, looking at the contribution that you can see on your screens. Aurobindo Pharma 46%, Cipla 28%, Lupin 37% exposure, Dr. Reddy's 46%, and so on and so forth. You can see it on the screens coming in, and this is according to the 9-month period FY25 data that we have. So there is a certain amount of exposure that these US companies have to US. They are exporting to US, and that means there could be some impact impact on these companies. Now, HSBC has highlighted, and this is according to an HSBC report, the impact of EPS that would be on Dr. Reddy's would be 6.5%, Zydus would be around 6%, Aurobindo Pharma 5.5%, Lupin 4.5%, Cipla around 4%, and Sun Pharma 1%. Torrent is going to be around 0.8%. This is if the 10% tariff is imposed. If it's going to be higher, obviously this number could see a change. But if the 10% tariff is imposed, then this could be the EPS impact coming in. And that is why we're seeing pharma stocks are seeing a bit of a decline in today's trading session, because a possible impact if these tariffs are imposed on India or imports from pharma companies. Moving on, we also spoke actually to Kunal Dhamesha from Macquarie Capital, and he spoke about this reciprocal tariffs, what it means for these companies, and he believes it's quite unrealistic and that Trump's tariff could be a rhetoric statement that came in mainly so that companies could start shifting manufacturing to US. Let's listen into more of his views.
I believe this tariff threat is basically aimed at bringing some manufacturing onshore to the US market. So the way I look at it is from a two segment perspective. One is the generic segment, which is where most of the Indian companies currently operate. And these generic products currently make up for almost around 90% of the drug volumes in US. And out of that 90%, Indian companies account for 47% of drug volumes. So if they put such a high tariff of 25%, I believe that a lot of these Indian generic manufacturers would kind of stop supplying products where they don't make money, because the profitability of the US generics business is not that high now.
Okay, now moving on, sources tell CNBC-TV18 that Commerce Ministry has today called an inter-ministerial meeting on the US-India bilateral trade ties. I beg your pardon. Parikshit is joining in with us to give us more details on this front. Parikshit?
Well, yes, this will be the first high-level inter-ministerial meeting that will take place on the bilateral trade negotiations with the US. Now, just last week, Prime Minister Modi and Donald Trump laid out a roadmap and directed both governments to start working on a trade deal, a multi-sectoral trade agreement, and this is likely to be concluded by fall. So what is going to happen? Different ministries are going to come up with their suggestions on what can be done, which are the areas where we need to safeguard our interests in terms of exports to the US, imports from the US as well, and which are the areas where we can give them concessions. One of the areas for focus would be automobile tariffs, because this is an area of interest for the US president. He has been highlighting tariffs on Harley-Davidson and Tesla cars for many years now, even in the meeting with the Prime Minister Modi. And just ahead of the press conference in America, Donald Trump had made that remark that even though India has reduced tariffs on imported cars, they still remain very high, and it's very difficult to sell cars in India. So having said that, automobile tariffs could figure prominently. But yes, there will be officials from all key ministries. So they'll look at renewable energy, they will look at crude oil, they will look at textiles, furniture, electronic components, ICT components. So there will be a whole host of industries, even agriculture goods, where tariffs would be discussed. And we will get suggestions, the first suggestions from different departments in the government on what could be the possible contours of such a trade agreement.
Okay, Parikshit, thanks for that. But following on Elon Musk's meeting with Prime Minister Modi last week, electric vehicle manufacturer Tesla is looking to set its foot into India as well. Now, Tesla has begun hiring process in the country, but Parikshit, what lies ahead for the electric vehicle maker?
Well, what we're hearing now is that Tesla could start retail operations this year itself and as early as April. They've been scouting for showroom locations over the last 12 to 18 months, and we now hear they have identified places in BKC in Mumbai, AeroCity in Delhi, where they could start company-owned showrooms. The strategy would be to import cars from their plant in Berlin and sell them via these company-owned showrooms. Currently, the tariffs on any car that would be imported would be around 70%. So if Tesla from what we hear, is looking to bring their low-cost, affordable range of EVs into India, which would cost around $25,000 in America or 21 lakh rupees. If you impose a 70% tariff in India, the price would go up to around 37 lakh rupees. Tesla is hoping that the threat of reciprocal tariffs from Trump by April could bring down India's tariff structure even further. So they're hoping for lower tariffs. They've not committed to manufacturing as yet. They are considering manufacturing as an option, but for the moment they are looking to start retail operations in the first phase. They have committed, we're told in the last few weeks, to sourcing more from India. In this year, estimates suggest that they could source components worth $1 billion, and this could significantly go up in the coming few years. We're also hearing that both governments are trying to work out an early meeting between Commerce Minister Piyush Goyal and Howard Lutnick, who is the US Commerce Secretary and Piyush Goyal's counterpart. And that will be a pivotal movement for trade talks between the two nations.
Okay, Parikshit, thank you so much for the latest update coming in on that front. On that note, we're going to sip into a very short break, viewers, and here's some good news for you all as we sip into the break. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth financial articles, and all the updates on financial world at your fingertips. Download the CNBC-TV18 app now on the Apple Store or from your Google Play Store, or you can just scan the QR code on your screens.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Mood is definitely a lot more downbeat, a lot more cautious, circumspect, although nonetheless, given how stock prices have fallen.
Welcome back. Thanks for staying tuned into Business Lunch on CNBC-TV18. Now let's shift focus and talk about Exide Industries. The stock price has seen a roller coaster rise since its EV battery supply agreement with Kia and Hyundai was signed, and this happened last year. Sudarshan is here to tell us more about Exide. Sudarshan, are we expecting exciting times for this one?
So it's an interesting last 10-month journey, or say the full circle for Exide Industries. Why do I say so? Let me first tell you a few pointers. First, stock is now back to levels before the Hyundai and Kia agreement. Second, PE ratio is now same as it was before the agreement. And third, company continues to invest in EV arm, and total investment so far now is at rupees 3,300 crore. And fourth, first phase of lithium-ion cell manufacturing unit to begin production this year. Now let's come to the stock move. April 5, 1 day ahead of the agreement, the stock was trading around rupees 321 per share with 1 year forward PE ratio of 21 times. On April 8, 2024, company announced an agreement with Hyundai and Kia for battery supply to their electric vehicles, and the stock moved 17% higher, recording its biggest single-day gain in nearly 20 years. And the up move continued, and within next 2 months, stock almost doubled to hit record high of 620 per share with PE of 40 times. But those gains have been erased, and now stock is back to levels before the Hyundai and Kia agreement. So the question is, why this stock fall? Has anything changed in relation to Hyundai and Kia agreement? Well, the answer is no. Company has recently formalized the term sheet and signed binding agreement. If you remember, most brokerages had turned bullish on the stock post that agreement, saying this can be a re-rating event for the company and it can help it sign more agreements with global and domestic OEMs. Brokerages like Nomura and JP Morgan had announced a sharp increase in target price. JP Morgan had even increased its EV battery business valuation from rupees 25 per share to rupees 173 per share. And Nomura had raised multiple to value lithium-ion cell capex at 3 times book value, in line with global peers. Now, after 10 months, what do brokerages have to say? Well, most brokerages are still positive on the stock, with 50% of total brokerages covering the stock as per Bloomberg data have a buy call with target as high as rupees 570 per share. But the key question remains, why this fall in the stock price if nothing major has changed? Well, the brokerage firm B&K Securities, while writing reports on Exide Industries, has given 3 reasons. First, there is a slowdown in global EV industry. And second, there is a lack of visibility in the near term for further tie-ups with OEMs, whether it's domestic or global. And third, there is a drop in lithium-ion battery prices in the last few weeks. So, what's going forward? Well, we'll have to see if Exide Industries sign more agreements like Hyundai and Kia, and most important, how the EV story plays out.
Absolutely, Sudarshan. That is going to be key to watch out for the EV story as well as for Exide going forward. Thanks for that. But on that note, we are going to slip into a very short break now. Russia and United States discuss peace in Ukraine without giving Ukraine a seat at the table. Details on this story on the other side.
Very good. One of those massive roads,
So much younger, much more. By 2025, it's going to be very volatile.
Let's talk about Canva's startup story.
220 million people that use Canva as a product as well. They launched with 5 languages in 2016. They then ratcheted that up to 100 languages in 2017, including Hindi, Tamil. I think India could be huge. So it's our fourth biggest market at the moment. I think it could reach the #1 position, very soon. We've been able to move large parts of the company towards thinking in an AI-first manner.
Interesting.
24 million now.
Breaking news. The last few years have really been about the shiny objects, and 2025 is probably going to be much more about real use cases.
We've now matured our ML and our AI teams to adapt to this new technology, and we've pivoted every product team inside Canva now to think AI first.
There is a lot of interest in checking if this is the time to buy or there's more downside. In some cases, investors meeting their portfolio companies, just trying to figure out what the outlook is like. As far as the Trump tariffs are concerned, yes, we agree with you, and that is one of the reasons why I guess globally we're seeing a bit of a slowdown. When there's uncertainty, typically businesses tend to pull back. They hold back on their investments, their expansion plans, and that actually is the bigger damage than perhaps the direct impact of the Trump tariffs. There could always be some walking back, or there could be renegotiations, and one day there are tariffs, the other day they're postponed. So those kind of things keep happening and will likely keep happening. We will live in a more volatile world.
In the event that there is some sort of ceasefire between Russia and Ukraine, peace settlement down the road, what does that mean? That means Russian sanctions on Russia come off, and that probably brings Russian oil supplies up quite considerably, and that's going to put downward pressure on the oil price. So I think oil is going to stay quite soft over the next several months, and that will obviously be helpful for Indian inflation. Trump is on this tariff gig now, reciprocal tariffs, if you want, if you like, where he's saying, if countries overseas have got high tariffs, which India does have, well, we're going to put high tariffs on their imports as well. Now, it's been the case for many years, as you will know, that developing countries trying to build for the future from a low base, very often do try to protect their infant industries, which is a classic economic argument, with tariffs. It's always been the case that poorer countries, developing countries, emerging markets have higher tariffs, than developed economies. And I think that, it is what it is. I'd be very surprised if India is absolutely right in the forefront of this reaction that Trump is coming up with. I think he's focused a bit more on other countries, frankly. But yeah, he has mentioned India, so we have to watch it.
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store managers.
Welcome back. Thanks for staying tuned into Business Lunch on CNBC-TV18. Now, moving on to some national news. Gyanesh Kumar today took charge as India's new Chief Election Commissioner. He succeeded Rajiv Kumar, who completed his term on Tuesday. Meanwhile, his appointment has been challenged in the Supreme Court, which is hearing the case as we speak. The Association for Democratic Reforms, as well as the Congress Party, has flagged concerns about his appointment. And while the suspense continues over the next Delhi Chief Minister, the BJP has announced that he or she will take oath tomorrow at noon. The BJP legislature party will be meeting this evening to decide on the CM face. Among the probable names that are there, Vijayendra Gupta, Majinder Singh, Sirsa, as well as Pravesh Verma and Rekha Gupta are some of the names that are coming up over there. And moving on to some other updates that we have on the global front, officials of US and Russia met for the first time in Saudi Arabia to discuss and end the Russia-Ukraine war. NBC's Julie Sulkin is joining in with us to bring us the latest update on this one.
Just shy of 3 years since the start of Russia's brutal war against Ukraine, an intense effort is underway to end it. In Saudi Arabia, the first formal U.S.-Russia talks since the Kremlin's illegal and unprovoked invasion.
I came away today convinced that they are willing to begin to engage in a serious process to determine how and how quickly and through what mechanism can an end be brought to this war.
President Trump's Secretary of State Marco Rubio, along with his national security advisor and special envoy, at the table with their Russian counterparts in a 4.5-hour meeting, optimistic about what appears to be a seismic shift in relations. But notably absent from negotiations, Ukraine. President Zelensky reaffirming there will be no deal without the war-torn nation's input. Also not invited, European Union countries, including many that have felt the impact of Russia's aggression unfolding in their backyard. Rubio defending the move.
So no one is being sidelined here, but President Trump is in a position that he campaigned on.
It comes after Trump alarmed Ukraine and European allies when he revealed he spoke to Russian President Putin, who has long been ostracized by the West. Senators on both sides of the aisle visiting Ukraine's capital overnight.
I don't believe that any agreement can be done behind Ukraine's back.
Of course they have to be at the table. There are thousands of people who have given their lives to defend this country.
We are not going to see any kind of negotiated end to this war unless there are security guarantees that people feel comfortable about.
The Trump administration abruptly ending the West's efforts to isolate Russia and raising fears of handing Putin too much power. As part of those high-level talks, the U.S. and Russia agreed to re-establish embassy staffing and improve diplomatic and economic ties. In Washington, Julie Sulkin, NBC News.
Thank you so much for that. But with that, we're absolutely out of time on this edition of Business Lunch on CNBC-TV18, leaving the Nifty at still holding on to 22,900 levels. Thank you so much for tuning in. Up next, you have Midcap Radar.
Advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing $30,000 or 26 lakh rupees in America, and Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year but cancelled at the last moment. Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk and other EV makers a concessional 15% duty as opposed to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk be able to secure lower tariffs from India without a manufacturing commitment? That remains to be seen. For the moment, what we know is that Elon Musk had a very positive 50-minute meeting with Prime Minister Modi in Washington, D.C., where everything from electric mobility to space cooperation was discussed.
Ranveer Alabadia has been spewing dirt, has shown the dirt in his mind, has been vomiting on air. Why should we protect you? Ominous words coming in from the Supreme Court aimed directly at Ranveer Alabadia post the India's Got Latent controversy. So that entire controversy involving Ranveer Alabadia, Samir Raina, moving to the doors of the Apex Court. The questions we're asking: who's the one who's knocked on the doors of the Supreme Court? What reliefs are they seeking? What did the Supreme Court have to say about it?
Good afternoon and welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I am Vivek Iyer and with me today is Mangalam Maloo. Good afternoon, Mangalam. It's a very volatile trading session. Nifty once again has slipped into negative territory, and it's the mid-cap IT and even some of the large-cap IT stocks that are seeing quite a bit of selling pressure emerge.
They are seeing some selling pressure because they were, big supporters in yesterday's trading session. The Nifty banks doing well. But yesterday when we were talking about, the mid-caps, they were severely beaten down. We had seen an underperformance from the mid-cap index. Today it looks like the mid-cap index has done well to start mid-cap radar, up around 1.2% with 2,000 stocks in the green. So what we do is talk about all the top stories that we're tracking this afternoon for you. The market shrugged off concerns over US President Donald Trump's announcements that he will impose 25% tariffs on pharma and auto. Mid-caps shine. Auto, IT and pharma come under a wee bit of pressure, but realty and PSU banks surge.
Defense and railway stocks on the up move. RVNL surges after receiving a 554 crore rupee order from Rail Infrastructure Development. Defense stocks like Mazgaon Dock and Cochin Shipyard surge over 7% each.
Nava surges after its boards approved a buyback of up to 360 crore rupees. The stock up nearly 9%.
Blue Jet Healthcare and Suvain Pharma surge at the back of Macquarie's NERT. Brokerage firm says India's contract research, development and manufacturing sector is benefiting from secular growth as well as regulatory tailwinds.
US President Donald Trump's comments on a possible 25% tariff on pharma imports and concerns over the ability to clear US FDA inspections hits pharma stock. However, the Nifty Pharma stock, which is the worst performing index today, stocks like Aurobindo Pharma, Zydus Life correct over 2%. These stocks have come off the lows. So we're talking about mid-caps doing well this afternoon, right? Just take a look at, names like Hindware Home up around 14%, Aegis Logistics up around 11%, RVNL after a small order win, the stock has seen a big up move as well. These are stocks which have nearly halved from their highs. So, we are seeing some traction out there. Swiggy is the other one as well. After today's move, the stock has gone back above the IPO price of 360 rupees. Remember, it's been struggling down around 40% from the highs, but now seeing some traction as mid-caps continue to do well. But let's talk about some of the buzzing names, mid-cap movers, our favorite segment on Mid-Cap Radar, and Vamakshi's by the wall telling us what are the mid-caps that are moving around in trade. Vamakshi.
Well, Mangalam, it's a nice day for the mid-caps, right? This index overall is up nearly 1%. And let's pull up the list of the stocks that are gaining momentum in trade today. That includes Tata Investment. That stock is up nearly 14% today. Minda Corp is another counter that is above 10% higher. Aegis Logistics trading near the day's highest point, up nearly 11.5%. And GRSE, that is Garden Reach Shipbuilders, is also seeing a very strong up move today. Railway stocks are also abuzz. Of course, there's an order win for RVNL. That stock is seeing an uptick of 11%. Ircon, IRFC, Texmaco Rail are all up anywhere between 4 to 6%. Defense stocks are the other, pack of companies that are abuzz today. Mazgaon Dock is up nearly 8.6%. Cochin Shipyard, Bharat Dynamics, as well as Data Patterns are just some other counters that are abuzz today. Apart from that, on the flip side, let's also look at the stocks that are declining in an otherwise strong market for the mid-caps. That includes Credit Access Grameen. That stock is at the day's lowest point, down nearly 5.7%. PTC Industries these two trades lower, down nearly 5%. Archean Chemical as well as Godavari Power continue to decline in trade today. Let's also look at the stocks that are moving on the back of very strong volumes. This list includes Gillette, that stock is up nearly 5%. APL Apollo, BSE is also started at the day's lowest point, is now trading at the day's highest point, up nearly 7.5%. And Radhiko Khaitan is another name that is abuzz in trade.
Thank you so much, Mamakshi, for joining us and giving us a sense of what's exactly moving as far as the broader end of the markets are concerned. Let's now slip into a short break. We will be joined by the management of Garware Technical Fiber on the other side to discuss their Q3 earnings.
If any, what are the protections, if any, that the Supreme Court has granted? Well, to begin with, it's Ranveer Alabadia who's knocked on the doors of the Apex Court seeking protection. Mind you, he's facing at the very least 3 FIRs that at least we know of: Maharashtra, Guwahati, as well as Jaipur. And what's interesting is that, and that's an interesting side story, representing him in the highest court of the country is none other than the son of Justice D.Y. Chandrachud, the last Chief Justice of India. It's Abhinav Chandrachud that's appearing for Ranveer Alabadia. Now, Abhinav put up a valiant argument, a valiant battle here before the Apex Court, where he argued that he's not at all defending the comments or the conduct of Ranveer Alabadia, but rather he's citing multiple FIRs, that this is tantamount to an abuse of process. Also going on to say that not just Ranveer Alabadia, but even his mother, his associates are beginning to receive death threats, and that is something that requires the intervention, the protection of the highest court of the country. Now, there were 2 very clear halves to the hearing. In the first half, the Supreme Court absolutely squarely condemned the content as well as the conduct of Ranveer Alabadia. The Supreme Court said that he's been spewing out venom, he's been vomiting, and that this does not call for intervention or protection of the Supreme Court. Further, the Supreme Court went on to say that as far as the conduct itself is concerned, it would bring shame to fathers, to mothers, to parents, to society in general. In fact, the Supreme Court then went on to say that just because Ranveer Alabadia is popular, that is no grounds, that is no reason for him to take liberties with societal norms, to openly flout them, and that this behavior should be squarely condemned. In fact, the Supreme Court did not stop there. It said that the Supreme Court has not been sitting in some ivory tower. It has been, in fact, going through social media. It knows that these comments came not originally from Ranveer Alabadia, but from an Australian show, and that this is something that is not acceptable here in India, that such conduct which reflects on society, which reflects on his own thinking, is not something that the Supreme Court will look very kindly on. But having said that, the Supreme Court also said that we have constitutional courts in the country. It is not a kangaroo court. It is not a court of public opinion. And it is on that count that the Supreme Court, taking note of the fact that there have been previous instances of multiple FIRs against senior journalists such as Arnab Goswami, senior journalists such as Amish Devgan, the Supreme Court, keeping in line with that precedent, has granted the twin protection to Ranveer Alabadia after that hearing. Number one, he cannot be arrested, at least as far as the FIRs that have been registered so far, Jaipur, Guwahati, Maharashtra. He cannot be arrested basis those FIRs. Further, the Supreme Court has also said that no further.
Welcome back to Midcap Radar. Well, Garware Technical Fiber is the first management on our radar. The company's Q3 revenues grew 21%, while margin remained flat at 18.5%. To discuss this and more, we are now joined by Shujail Rahman, CEO at Garware Technical Fibers. Thank you so much, sir, for joining us. First up, give us a sense of how exactly Q3 panned out. We do understand that there are a few headwinds that you faced, but despite that, you've managed to sustain the 20% growth rate. Outlook as far as Q4 is concerned, and what is the kind of guidance that you're giving as far as FY26 is concerned?
Thank you. Good afternoon, and thank you for having us on the show. Yeah, Q3 was very good. 21% growth top line is very encouraging. 2 segments did very well for us. One is geosynthetic, which is a primarily domestic business in infrastructure construction. It's done very well, and aquaculture, which is the global aquaculture, where we are part leader. These 2 segments have given very good volume growth and also margin increased for us in terms of overall margin profile. As you mentioned, it's been around 18.5% or so. The outlook is positive. The Q4 outlook is very positive. We are at the end of February, almost at the end of February. Things are looking good. Normally, Q4 is a good quarter for us, so we hope to have a very good Q4, and hopefully we'll have a good year. So far, year has been good, 17% growth in 9 months in terms of top line and 60% growth in bottom line. These are encouraging numbers.
So you think you will do better than that? Because the third quarter you've grown 21% on the revenue, margins at around 18.5%. For the first 9 months, your margins are closer to 20% mark. By the end of FY25, do you see the margins cross 20% and your revenues cross 1,500 crores? Is that a possibility?
See, if you look at 9-month margin, we are at 19.9%. So we'll be Q3 was I think less on margin, a little drop in margin. So we'll maintain the overall 19.9% range that we had for first 9 months. Q4 normally is a better quarter for us. Aquaculture business is very good in Q4. So overall, we'll maintain the growth that we are having in first 9 months. Margin may be slightly improving.
All right. Speaking about aquaculture itself, and you were last time we spoke very bullish on the geosynthetics business, geosynthetics part of your business itself. How much does it account for in your overall business right now? Because you had said that it's seen a 40% increase in profits earlier. Where do you see this number going in terms of contribution to your revenue?
So this business was about 10% for us, let's say 3 years back. Because of the 40% or more than 40% CAGR growth that has exhibited, we are now geosynthetics about 15% for us now. So as a percentage, it's increased from 10 to 15% last 3 years. This year also, it's done well. The segment of float protection, which is in the area of railways and in road construction, has done very well. So has this segment of hazardous waste management, which is mostly in the private sector.
Understood that. You majorly cater to the international markets, especially to Europe. Any headwinds you're facing over there? And also give us a sense of the current order book position. What kind of order inflows are you expecting as far as FY26 is concerned?
In terms of demand, there are no headwinds. The segment that we are in, the volume growth is about 4%. Fish production increase is close to 4% if you look at last 4 years, 5 years data, the salmon production increase. So if there's a 4% increase in production, obviously it amounts to much higher increase for us in terms of volume and in terms of tonnage that we sell. There are certain headwinds. Supply chain is definitely a big challenge for us. What is happening due to Suez Canal closure, we have to take almost 8,000 kilometer extra route, which is obviously adding almost 40 days to our transit time for most places in South America and America. So that is a little bit of a problem. But what we are doing is we are managing the relationship with the customers. We are planning to ensure our production is optimized. So we are trying to manage that. But I think overall, if you look at the numbers, we have done well despite the headwinds.
Right. On the domestic versus export mix itself, you had earlier said that you are looking at increasing your focus towards the domestic market. The rupee has weakened. So even as there are export headwinds coming in, international headwinds coming in, a weaker rupee should be better for your margin. So in that regard, how do you view your export versus domestic mix going forward? Will it stay at 60-40? Or do you see more contribution coming in from domestic?
So if you look at for the 9 months, we are 60% export and 40% domestic. And because export has also done well. So we will have a good this kind of 60-40 ratio, but over a period of next 2-3 years, probably would like to improve domestic to about, let's say, 45% and export to 55%. There are, apart from geosynthetic, the industrial segment in India is also doing well, which is in the construction safety and those kind of segments, which are where we are doing well. So over a period of 2-3 years, hopefully we'll be able to have 55-45 kind of ratio. That's the intent.
And what are the margin differentials between domestic and exports? Because if you are making more margins in exports, then it makes sense to stay there itself, right?
No, the margin is pretty much the same. It depends on which segment we are growing in export. If aquaculture is the highest margin segment for us, if we grow at a much faster pace in aquaculture, the margin improves. But overall, domestic margins are also very good. The segment that we operate in domestic, we are also having a lot of innovation in pipeline, new products in pipeline, which will help us in domestic business. And all the innovation that we have typically are at better margins.
Mr. Rahman, another question. At the end of Q2, you had actually given an all-time high volume guidance for FY25 of close to 520,000 gross weight ton. Do you stick to that guidance? And what is it that you will be able to grow on that base in FY26?
Normally, we don't give volume guidance. Normally, we give profit guidance. And that will also normally in the 15% range. So we are not focused on volume, we are focused on profit. So, what we are planning to do is maintain this 15 to 20% growth in bottom line. That's our intent. That's the guidance that we can give. But the focus is never on volume, because if you look at 80% of our products are value-added products and 20% is the commodity, which we are also trying to upgrade. So the focus is on profit and value-added products and innovation.
All right, and 50-60 crore capex that was expected in the sports segment, how much is that likely to yield in terms of revenues and margins, and by when?
This 50 crore capex is not in export, it is overall. We have two plants.
Sport business.
Sports business has been doing well. It's still about 15% of our overall company. The position is good, order book is good. We had some headwinds due to supply chain issues and also some stock correction at distributor points in the USA. Now the order book is very good, and this quarter 4 will be good for sports, and outlook for next year also.
Thank you so much, Mr. Rahman, for joining us, giving us a sense of how Q3 panned out and what is the expectation as far as FY26 is concerned. Let's now slip into a short break. Up next, we will get an exclusive conversation with the top management of MobiKwik. Stay tuned.
As far as the India's Got Latent controversy is concerned, will be filed against the person in question, which in this case happens to be Ranveer Alabadia. But there are some tough conditions that the Supreme Court has imposed. Number one, Ranveer Alabadia will appear as summoned by all of these authorities. Number two, Ranveer Alabadia will cooperate with all these investigating agencies, will not interfere, will not interrupt. Number three, he will not do any further shows in the interim. That is something that the Supreme Court said as an afterthought, but very clearly pointed in the direction of Abhinav, in the direction of Ranveer Alabadia, that no further shows for now. And also importantly, has put restrictions on overseas travel for Ranveer Alabadia, saying that you will need to deposit your passport at the local police station. So strict conditions being imposed on Ranveer Alabadia, but nonetheless, the Supreme Court, after that flurry of condemnation, granting that protection to Ranveer Alabadia.
Mid-cap index is doing extremely well. Let's talk about one of the debutants in the recent debutants, MobiKwik, which saw stellar listing, has corrected nearly 50% this year. So how has life been for them post-listing? How does the company plan to grow ahead? Discuss all that and more as Shireen Bhan caught up with the company's co-founder, ED and CFO, the entire top brass, so to say. Upasana Taku, who's the founder and the head of the company, MD and CEO Bipin Preet Singh. Let's listen into excerpts of that exclusive conversation as we take your leave on Mid-Cap Radar.
I want to start by talking to you about 18th of December 2024, because that really has been in many ways that milestone moment that you've both been working towards and waiting for. And I want to link this to your comments that was made on one of our programs, Upasana, where there was a sense of frustration, a sense of anxiety, but also a sense of excitement कि भाई ये IPO हो क्यों नहीं रहा है, right? That was a comment that you made saying everybody is getting cleared but not us.
Right. So I think what they say, that things that you've worked really, really hard for, finally when you achieve them, I think the sweetness of that victory is amazing. And I think that kudos to all the tech entrepreneurs in India who have gone public recently, also in 2024. But I would say that the journey for us was, I think, far more tumultuous, far more arduous for various reasons. I think some people have also said that whatever can go wrong has gone wrong from a climate and environment perspective. So I think it was a not so great year for fintechs to go listed in India. And I think many things happened during the year, also ups and downs in the market. So it was therefore a harder sort of journey for us. And people are talking about it because 1 year we filed our DRHP in January and we completed the IPO in December. But I want to tell you that we were working on the IPO for 21.
Yeah, I know.
We had also attempted once in 21.
Absolutely.
And we had some bad luck, even though everything that we had done was perfect with Solution.
How's life changed for you? And I'll ask you this in the context of the fact that you had a great listing. From the peak that you touched in December of over 600 rupees, it's down 50%, but the markets have also corrected quite significantly. Does that now put pressure on you? You've had a difficult quarter, with the losses widening quite significantly. Has that changed the way that you think about the business?
Not really. If you see, one of the first things I did when I knew for certain that we are getting listed is I talked to one of the very well-respected entrepreneurs based in Silicon Valley. He's also an Indian founder. And I asked him, how has your psychology changed since your company got listed? And one thing he advised me, and he said, one thing you follow every day, don't look at the stock price. And so what he meant is, and what I understood is, see, these markets and even I would say BFSI sector, macros, what's happening in US, these are beyond our control. So I cannot control all of it. What I can only control and we can control is our business. And that business has scaled to a level where we achieved certain numbers last year. We became profitable. And by the way, we did it since 21 was the last fundraise. We did it without raising any additional funds. And we got to almost 890 crores of revenue and some 30-40 crores of EBITDA. So we know we can do it. We know how to build a scaled and profitable fintech company. So full stop. We know how to do it. And we have done it. But does it mean that the macros will always be the same? Does it mean that things will not change or you will not have 1 or 2 quarters up and down? The answer is no. And I think we are very, very bullish on MobiKwik, on what we can build and what we are building today. Because just I was discussing before our conversation, is that the opportunity of digitization in finance, what have we done and achieved in India? It is nothing. It is not even single-digit percentage. Whether you talk about UPI, whether you talk about wallets, whether you talk about stock market investing, whether you talk about digital lending, it's all in single-digit percentage penetration, whether you talk about insurance. So all we have to do is keep building it, but keep building it the way we have done in the past, which is keep costs under control,
Right.
be efficient, and now, like we were discussing, now with AI in the mix,
Yeah.
you can be super efficient
Huh.
in terms of how you build your business. So I think the platform and the foundation is there. I see the IPO. Many people think IPO is like the culmination of something.
No, it's this actually could potentially be the start of a whole new chapter.
We didn't sell a single share in the IPO. Neither did any one of our shareholders. That tells you about what they think about the future of MobiKwik. I will not comment on things like what the valuation is or what the valuation was or what the stock price is today.
Sure.
But these are the people who have seen us perform over so many years, overcome challenges and demonstrate resilience to getting us here. So now, we have 500 crore plus that we've raised in the IPO, which is in the bank, which we didn't have. So I would like to think the future is bright and we keep building.
I want to really address this issue and get both of you to talk about this, because people don't understand what it actually takes to not just build a business, but to cross the kind of milestones that you've been able to cross, to go through the kind of challenges that you've been able to go through in a regulated sector, in a sector where you are not just dealing with the government, but you're dealing with the Reserve Bank of India. And anything that the regulator can do can in fact cause an existential issue for people like you. And I don't think people realize that. And, I had an interesting conversation with the Kamath brothers at Zerodha, and they were talking about the same thing. They said, with one stroke of a pen, the regulator can shut you down, essentially. How has that been for the two of you to kind of deal with?
Oh, it's been crazy. And I had mentioned this to some of the relevant people here when I was attending a meet related to fintech industry growth prospects in Delhi a few weeks back, is that, when you're sitting here in Delhi or Bombay and we are passing regulations and or taking action, we think positive and negative, we don't realize that the people who look at companies like us, whether it is private or public, how they think about these decisions and what they understand and comprehend, because it becomes like a pretty big black box where the clear conclusion for a lot of people is maybe the regulators and the government don't want fintech.
Which they've clarified, to try and send out the message that no, that's not the case, that we do want to support and encourage.
The actions that take place actually point to the contrary, right, for many of them. And then it's hard to justify that actions are against certain entities only, and it's not against a particular sector.
India and the Gulf Cooperation Council, we are at this moment negotiating about having a free trade agreement. As far as Qatar is concerned, both sides are exploring the possibility of signing a free trade agreement in future, and that was one of the discussions that took place in this round of talks. As far as the strategic partnership establishment agreement is concerned, it actually elevates the present state of bilateral relations to a strategic level. What we are looking at is deepening cooperation in the fields of trade, energy, investment, security, as well as in the regional and international fora. As you know, within the GCC, India has got signed strategic partnerships with UAE, Saudi Arabia, Oman, and Kuwait.
Hello, good afternoon and welcome to CNBC TV18. You're watching Your Stocks. I'm Vinny Motiwala coming in live from CNBC TV18 Motilal Oswal Studios. Thank you so much for tuning in. And market seems like a good day coming in because market is managing to hold it to 22,900 levels. Flip-flopping between the red and the green as of now is what the Nifty is doing. Yes, off the day's highest point as of now, but nonetheless 22,900 is what it's holding on to. It's recovered from the day's low as well, so do not forget that part. But second half of the trading session is going to be key. Will we be sustaining this level or will we see a fall coming in? That's something to watch out for. Mid and small cap are something that has continued to outperform in today's trading session. Nifty Bank holding on to gains of 0.7% and most of the banking names are doing well in the Nifty 50, especially the private banks. But yes, that's how the market setup is looking like. On that note, we'll get started with the stock-related queries that all have sent us. And to solve all the stock-related doubts, we have asked the Giant Research Analyst at Hem Securities, as well as Somal Mehta, Head of Alternate Research, Capital Market Strategy at Mirai Asset Sharekhan, joining in with us to solve all those queries. Good afternoon, Asta, as well as Somal, and thank you so much for joining in with us on the show. Let's start with the first query for today. This query is coming in on HAL. We have Sriram, who's writing to us from Chennai. They're holding 90 shares of HAL at a price of around 3,500 rupees per share. Currently, they're making a loss on this one and wants to know if they should actually continue to hold or look to sell this at the current levels. Somal, good afternoon, and let me start with you for this one.
What I have witnessed here in HAL is that a 5-wave decline has completed. If we get a positive close today, I think that 5-wave decline will be complete. In the very short term, I think the retracement or the bounce, which we say is till 3,530, that will be first hurdle. And the next hurdle would be 3,665. So these are the two hurdles I'm looking for, and the bias will be positive. So I'll be looking for at least 3,500, 3,600 levels in the short term.
Okay, 3,500, 3,600 levels is what you're keeping an eye out on the short term for HAL. Asta, good afternoon, and what are you looking at in terms of HAL, this defense name? Do you think that the run-up that we'd seen in the last year for the stocks, was that something that is coming back for HAL?
Hi, good afternoon to both of you. I think this run-up will come, but not in the shorter term or the near term. But in longer term, we are positive on this counter, recommending a hold with a price target of 3,500 to 3,800 in the longer term. Talking about this quarter, the results were good, profitability was in line, and mainly it was due to the high operating leverage as well as the scale this company is enjoying. Also, the most positive point about this company is its order book, because they have seen the order inflow of around rupees 135 billion in this quarter, and now their order backlog, it stands at around more than trillion, in trillion now it is standing. So this is giving a strong order pipeline and the revenue visibility for at least coming 3 years. So I think that this counter will perform well, but not in the shorter term. Here the time horizon should be longer term, and in longer term our targets are 3,500 to 3,800. So remain invested in this counter.
Remain invested in this counter. That's the word coming in for HAL. Let's move on to the next query for today. We have Namita Sinha, who's writing to us from Bihar. She's holding 35 shares of Power Grid, and this is at a price of 287 rupees per share. Wants to know the view on the stock and also wants to know should she continue to hold or sell this one. Somin?
Definitely hold. On the weekly charts, I'm expecting a positive close this week. A longer term trend line has been holding now, and we've got a good bounce from that trend line. Now we are already trading about 20 and 40 hourly moving average, which is a very good sign in the short term. Momentum indicators have given a buy signal. So I think in the very short term, I'm eyeing for at least 275 to 282 levels in the very short term. The stop loss has to be a little stricter. 259 will be the stop loss in the very short term.
Okay, keep an eye out on those levels over there for Power Grid. And Asta, your view on Power Grid, what are we watching out for? Obviously, yesterday also we had seen some news flow that came in about it being a successful bidder in some projects, and we've seen the stock run up as well yesterday. But Power Grid, how are you seeing this for the medium to long term?
Yes, when you are rightly said, now due to these wins, now it has gaining the market share of more than 50% in the new project wins. That is what we are seeing, because they are really getting strong order pipeline now. I think this counter is well poised to show some more upside from here. So yes, we are positive on this counter, because again the order book backlog for this company is at around 1.9 trillion, I suppose. So it is a very strong order backlog, and on the basis of these order backlog, definitely the revenue visibility always gives a good relief to us. So I think all in all, it is a good long-term story to bet upon. Remain invested in this counter as well. Our price targets are somewhere at around 290 to 305 in the longer term.
Okay, let's move on to the next query then. This one is coming in from Vedant, who's writing to us from Bangalore, holding 125 shares of Kotak Mahindra Bank. This is at a price of 1,750 rupees per share, making profit on this one. Wants to know if one should continue to hold or look to sell this one. Your view on this one, Saumil?
A good high top, high bottom formation, momentum indicators on the buy side. I think in the medium term outlook, in the very short term outlook, looks great. However, in the short term, we may see a very sideways correction type of a consolidation here in Kotak Mahindra. But however, keep a strict stop loss around 1930, and you can hold on to the stock for a short term. In the medium term outlook, the stop loss would be a little deeper, which is 1860, and you can hold on to the stock. I'm expecting the stock to make new highs above 2100 levels.
Okay, keep an eye out for the 2100 levels from Kotak Mahindra Bank. And Asa, your view on Kotak Mahindra Bank? Today we have those private banks doing well. But on the fundamentals, do you think Kotak Mahindra Bank is a good bet, and the viewer should continue to hold this one?
Yes, I do think because first of all, I think that their diversified portfolio, especially their secured lending as well as SME advances, is really working well for them. In fact, they have gained more from their capital market related subsidiaries also. So their contribution, these subsidiaries are also giving strong contribution in their earnings. So I think all in all, it is a good bank to bet upon on the basis of tight cost control this bank is implementing. In fact, they have got very robust capital adequacy ratio with a very strong and stable margins. So I think this bank is well poised to show more upside from here. 2100 to 2150 are our immediate target for this counter. So in fact, our idea is also to remain invested in this counter. In fact, buy on dip strategy can also be applied to this counter.
Okay. Buy on dip strategy is what Asta is suggesting also for Kotak Mahindra Bank. But on that note, let's move on to the next query. And this is also a private bank again, IndusInd Bank. Now, Manu Verma is writing to us from Kerala, holding 200 shares of IndusInd Bank at a price of 1,326 rupees. So he's clearly bought it at a higher price. Currently, the stock is trading at 1,033. Wants to know the long-term view on this one. Asta, let me take this to you first. Fundamentals for IndusInd Bank, what is your view?
At least for the quarter gone by, they have not posted very strong set of numbers. The loan was slow. In fact, I think the bank is facing some sort of stress from their MFI loan book as well. So in the longer term, maybe this bank can show some sort of turnaround and post good numbers. So idea here is if one has a horizon of more than 6 months to 9 months, then remain invested in this counter. There is no need to book losses at this juncture. Maybe on the higher levels of around 1120 to 1150 are the better levels to make an exit in this counter if anyone wants to make. But right now, our idea is to hold this counter.
Okay. Your idea is to hold this counter, but Saumil, what's your view on IndusInd Bank? Because, you know, after its fall coming in somewhere in October, it had remained in that range between that 900 to 1,000 range, and now seems like it's just seeing an uptick in the last 1 month specifically. So IndusInd Bank, what are we watching out for in terms of levels?
In the last 1 month, we've seen a very good rally. That consolidation you're talking about, that consolidation has broken on the upside now. And that rally which we've seen in the last 1 month, now it has been retraced by 38%. I'm expecting maximum 50% retracement. So we can keep a very strict stop loss at 985, and I'm very bullish on this stock. I think the next target is 1150, and above 1150 would be 1200 in the short to medium term outlook.
Okay, that's the view coming in on IndusInd Bank from Somil. But on that note, we're going to slip into a very short break. But here's some good news that is coming in for our viewers. India's business news leader is now a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the app, that is a CNBC TV18 app from the Apple Store or the Google Store, or you can just scan the QR code on your screens.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18.
Welcome back. Thanks for staying tuned into your stocks on CNBC TV18. We still have Asta Jain of Hem Securities as well as Somil Mehta of Mirae Asset Sharekhan to answer all your stock-related doubts. Let's move on to the next query now. This one is on Happiest Minds. We have Jay Ganesh who's writing to us from Bangalore, who's saying that he's holding 927 shares of Happiest Minds at price of 835 rupees per share, making a significant loss on this one. He says that he had bought the shares for the long term but is not too happy with the stock movement. And wants to know if he should continue to hold this, sell or sell at the current levels. Asta, what's your view coming in on Happiest Minds? Should they sell the stock and look at some other IT names, anything that is looking exciting there, mid-cap IT side, or continue to hold this?
So I would recommend to exit partially from this counter. So here the quantity is as 927. So I would suggest that in 400 or 450 stocks, one can make exit and remain invested in the partial quantity. Now, the reason here is that their edutech vertical is not working well in the favor of a company. And in fact, company has reduced its revenue guidance from 30 to 35% to 27 to 28%. So significant fall in the guidance which we have seen. I think when such kind of guidance tapering off comes off, definitely that is not paying well for the company's future stock performances also. So idea here is to exit partially from this counter, and one can make entry into the other large cap names like Infosys, and for that matter, in fact, mid cap name like Tech Mahindra is also looking good to us in the IT space. So idea here is to book partial loss and remain invested in the partial quantity. However, on the upside, we can see the target still 700 or 720, where one can have opportunity to exit fully in this counter.
Okay, sure. Thanks for that advice. Coming in, partial exit is what Asta is suggesting. Maybe you could look at it and then look at some large cap names that is there. But Somil, your view coming in on Happiest Minds, because the stock in the last 6 months has seen almost a 12-13% correction. So what would your suggestion be for Happiest Minds? Similar to what Asta is saying, book your profits, partial profits, or would you say complete exit or hold?
I agree. I mean, this stock is not looking good. I would recommend total exit to it. Lower top, lower bottom on the higher time frame as well. The momentum indicators on the sell side, the averages trading below averages. It's not looking good at all. It's been a very long time that this stock has been in downtrend. Tech Mahindra is a good option to enter booking profits from this stock and enter into Tech Mahindra.
Okay, that's a word coming in from both our analysts. Maybe, book out some profits, partial profits, and maybe look at something else also is a better option. Let's move on to the next query. This one is coming in from Gurmeet Babecha, who's writing to us from New Delhi. He's holding 300 shares of Ambuja Cements at a price of 525 rupees per share. Wants to know the view for a 1-year time period, medium-term outlook, mainly a 1 to 2 year time period. And he also wants to know if he should continue to hold, sell, or maybe look to buy some more and average out Ambuja Cements. What's your view coming in for Ambuja Cements, Asta?
So I would recommend to hold this counter with the initial price target of somewhere around 520 to 25, which is the cost price also. Now talking about this counter, results were ahead of the expectation, but there was an element of a higher other income and the other incentives that led to the positivity or a growth in the financials. But looking ahead also, I think this company has a capex and they are planning to increase their capacity from 97 MTPA to 118 MTPA. So I think this will work well in the favor of the company. And in fact, the company is also working on the cost optimization measures that will really help the company posting strong margins going ahead. So I mean, on the basis of all these factors, we are recommending hold. Initial price target can be set at around 515 to 525 odd levels.
Okay, and your view on Ambuja Cements, Somil?
I'm positive actually. It's been in a downtrend in the short term, in the medium term. However, the rally which we have seen from 2023 to last year, within a year's time, it has gone from 320 to 700. So at the moment, the stock has retraced 61%, and this is the right time to actually enter. However, I'll just wait for a quick weekly positive close on the stock, and once we get a weekly positive close on the stock, I think we can enter the stock, and the targets on the upside would be around 520 and 560 levels in the short to medium term outlook.
Okay, thanks for that view on Ambuja Cement. Let's move on to the next query for today. We have the next query coming in from Narayan Reddy, writing to us from Warangal, who is saying he's holding 500 shares of Ola Electric. This is at a price of 74 rupees per share. Currently, the stock is trading at 60 rupees. Wants to know if you should continue to hold this or look to sell this one. And long-term view coming in on the stock as well. Asta, your view on Ola Electric surely has taken a beating, with the concerns around it in the recent times, and especially since its listing. So what are we watching out for there?
Yes, but I'm optimistic about the Gen 3 portfolio. So I think that can be one of the driver for this company. In fact, company has worked hard to reduce its turnaround time also. So I think that is also looking positive to us. Although we should not avoid that the fact that company has not posted very strong set of numbers, and there was a basis of that because of the strong marketing expenses. They have not shown very good numbers on the profitability front. But in the longer term, I think it's better to stay invested in this counter rather than booking losses at this point of the time. So hold is a strategy from our side for this counter. Initial price target which we are giving to this counter is at around 70 to 72 rupees.
Okay. And Somal, I know there's not much charts to read for this, but any view on Ola Electric that you have?
I think it's making lower tops, low bottom. The momentum indicators on the sell side. It has made a small flag pattern, which is bearish for the stock. I think it will again make a new bottom. Probably 58, 57 levels are on the cards. You can keep a stop loss of around 62 and you can go short on the stock.
Okay. That's a view coming in from Somil, is there? Let's move on to the next query. Now we have the next query coming in from Amrita Nandini, who's writing to us from Bangalore. 40 shares of Keynes Technology she's holding at a price of 5,000 rupees per share. She wants to know if she should continue to hold this or look to sell this. What's your view coming in on this one, Asta? EMS players are surely doing well. You know, we keep hearing the scope of growth for these companies. So what is your word? Should she continue to hold this?
So first of all, would like to give a disclaimer that we might have this stock in our portfolio because we run PMS, that is game PMS. So that can be a stock in our portfolios as well. Looking after this counter, I think it's better to hold this counter with a price target of 4,500 to 4,600. The reason being that their order book is very strong. They have seen around 50 to 60% jump in their order book that is now at around 60.5 billion. So that is a soothing factor for us. And in fact, their revenue and profitability will also improve going ahead because two of their verticals, that is industrial as well as automotive, has shown a strong performances. So all in all, it's a hold from our side. 4,600 is a price target which we would like to give to this company.
Okay. But that was the last query for today on Keynes Technology. So thank you so much, Asta, as well as Somal, for joining in with us on the show and giving us the queries-related answer and helping our viewers solve that out. But with that, we are absolutely out of time on this edition of Your Stocks on CNBC-TV18. Remember, you can always write to us on the address that is flashing on the screens and email us your queries, and we will address them with our viewers. Don't go anywhere. Up next, we have Closing Well to take you through the last hour of trade, so stay tuned in.
Very good. One of those massive words, you know.
Let's talk about Canva's startup story.
220 million people that use Canva as a product as well. They launched with 5 languages in 2016. They then ratcheted that up to 100 languages in 2017, including Hindi, Tamil. I think India could be huge, so it's our 4th biggest market at the moment. I think it could reach the #1 position, very soon. We've been able to move large parts of the company towards thinking in an AI-first manner.
Interesting.
24 million now.
Breaking news. The last few years have really been about the shiny objects, and 2025 is probably going to be much more about real use cases.
We've now matured our ML and our AI teams to adapt to this new technology, and we've pivoted every product team inside Canva now to think AI first.
Comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Mood is definitely a lot more downbeat, a lot more cautious, circumspect. Although nonetheless, given how stock prices have fallen in the last few weeks, there is a lot of interest in checking if this is the time to buy or there's more downside. In some cases, investors meeting their portfolio companies, just trying to figure out what the outlook is like. As far as the Trump tariffs are concerned, yes, we agree with you, and that is one of the reasons why I guess globally we're seeing a bit of a slowdown. When there's uncertainty, typically businesses tend to pull back. They hold back on their investments, their expansion plans, and that actually is the bigger damage than perhaps the direct impact of the Trump tariffs. You know, there could always be some walking back, or there could be renegotiations, and one day there are tariffs, the other day they're postponed. So those kind of things keep happening and will likely keep happening. We will live in a more volatile world.
In the event that there is some sort of ceasefire between Russia and Ukraine, peace settlement down the road, what does that mean? That means Russian sanctions on Russia come off, and that probably brings Russian oil supplies up quite considerably, and that's going to put downward pressure on the oil price. So I think oil is going to stay quite soft over the next several months, and that will obviously be helpful for Indian inflation. Trump is on this tariff gig now, reciprocal tariffs, if you want, if you like, where he's saying, if countries overseas have got high tariffs, which India does have, well, we're going to put high tariffs on their imports as well. Now, it's been the case for many years, as you will know, that developing countries trying to build for the future from a low base, very often do try to protect their infant industries, which is a classic economic.
To understand the reasons for the day's movers and shakers, and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng, Taiwan Index, that's seeing a bit of a negative start coming in.
Way up, the 40 hourly is 23,014, which will be the first resistance.
At the same time, they are committing to increasing sourcing from India much more.
First rates up on your screen, 22,820.
Yes, the penetration is still very, very low. A long way to go. So for investors who have a slightly longer term horizon, let's say 3 to 5 years.
25, there's a lot of uncertainties, and Trump is being just one of them.
Seems like a good morning shaping up, at least for the broader markets for sure, because they're outperforming.
The threat of tariffs and everything which is happening globally, gold continues to be a safe haven.
Governments to start working on a trade deal, a multi-sectoral trade agreement.
It's a very volatile trading session. Nifty once again has slipped into negative territory.
Okay, well, that's a day so far, and after all of what we've seen over the last many hours now, we're down a little bit on the index. So 60 points lower on the Nifty, but banks are doing much better. Nifty Bank is up 0.5%, and we'll focus on that a little bit more. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleagues Surabhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon. And the mid-cap market is alive again. I mean, I don't want to jinx it by being too excited, but we haven't seen this screen in a while, right? Look at the advance decline ratio, almost 2,000 stocks advancing. The index is up. Stocks are coming back.
Well, that's right. Just 15 minutes ago, actually, the markets look much better. So the indices that are on top of the screen, they were well in the green.
That's true.
I think in a matter of close to around 15 minutes, the Nifty has fallen close to around 100 points. The intraday chart will tell you the picture out there. And on the Nifty Bank, the 20 DMA is being a bit of an obstacle out there, because that one as well has slipped from the high of the day. The Nifty Bank and the 20 DMA should come up for you. And, that in fact is proving to be a crucial resistance mark. But I think we can still celebrate that we have 3 stocks that are advancing in comparison to 1 stock that's declining at the high of the day. In fact, that ratio was close to around 6:1. So not too bad a day, but hopefully the last hour isn't too weak.
Yeah, absolutely. I don't think we can go away from the chair. Yes, take your point that from the highs we're a little low.
Yeah.
But Prashant, given the kind of brutal battering that the Bulls have received, this is beautiful, I would say, isn't it?
This is it's all relative, right? And absolutely, it's much better looking screen. Actually, look at the small cap index. Yesterday you had the Nifty, which was okay, Bank Nifty, mid cap index was also okay. Nifty, the small cap index was down 1.8% nearly. That is coming back up today. So it's just some reversals here. So 1.8 higher for the small cap index, even as the rest are doing a little lesser. The mid cap index is still higher. And of course, the Nifty Bank, as we mentioned, is up. The Nifty, we'll see what happens. So, lots happening beneath the surface as far as individual stocks, etc. are concerned. And I suspect volumes are also looking a little better. Market volumes actually had fallen. Cash volumes had fallen quite a bit over the last many days. And hopefully that will start to pick up a little bit as well. So, lots of names, well tracked. And we'll discuss them, Swiggy, etc. You're seeing large volume activity right here. So, you need a few days of decent price action to get some of that confidence. Confidence essentially has been the big casualty over the last many days, with the market just falling non-stop one way without any buyers really. And I think yesterday and today, that feeling is back that maybe at lower levels in select counters, etc., there is buying activity. There are bids which will come in as well. Surabhi.
Absolutely. Okay, let's talk about where the bulk of the buying is, and I'm going to start with mid caps because that's the real headline. On the PSU side of the screen, there's a fair amount of action that's taking place. The PSU bank space, overall PSUs, of course, defense stocks. That's where we're seeing plenty of action. So stocks like a Mazagon Dock Shipyards about 9 to 10% higher. RVNL is managing about an 11% up move. Then there are the private sector names as well. Remember Zentech? Zentech has been smashed. The 15-20% gone, more than 20% gone actually in the last couple of trading sessions. Today it's reviving. Today it's coming back in a big way. 10% up on Zen Technologies. Data Patterns, another private sector name that's linked with the defense space, also doing fairly well. And beyond defense as well. It's not just a very narrow defense kind of a move. You've got other names. Today's listing, Hexaware. That's done well, 10% up now on Hexaware. That's the PSE index, which is, of course, doing really well. Hexaware is one stock. But, yeah, lots of names out there. Bikaji Food, Minda Corp, plenty of names. The fact is that there is some excitement in the mid-cap market, and the bulls will want to hope that they go home with some of these gains. They can take it back, and it doesn't sort of go away in the next 60 minutes.
Well, that's right. Hexaware is good, actually, because it didn't have overwhelming subscription till the final few hours, and then it got subscribed. Until yesterday, if you look at the grey market premium, in fact, it was negative or flattish. So, and today it surprised positively. So, that'll bring some kind of confidence back as well. Currently at the high point of the day, stock up close to around 10%. How do you position yourself, though, in the final hour of trade? Mitesh Thakkar is with us. Mitesh, it seems we have hit into some resistance around that 23,050, 23,100 odd mark. There's a dip right now. We were down close to around 90 points. We're still down close to around 70 points. Buy the dip or stay away?
So I think, Nigel, good afternoon. One more, possibly a test of 22,800 looks likely to be on the cards, and buying should be done around those levels. Take a stop at 22,720, so you have a 70-80 point kind of risk profile. But you're right, I think on the upside, despite the fact that the market has been oversold, has been bouncing back time and again from the same level, the upside reversal is not coming in, which is a bit of worry, but let's see how it goes. You still need to believe that there could be a chance when the bounce back from 22,800 is strong enough to give a reversal. Else, otherwise, there's a strong chance that we'll eventually break below it. So for the time being, I think, keeping our options open. But as I said, from a pure risk-reward entry point, I think 22,800, 780 is my preferred area to buy. And from there, a 70-point stop loss has been working out well. It's worked well for 2-3 times, but let's hope, if we can get a stronger reversal. But as we discussed, that will happen only once we see the markets get and capture of the 23,100, 150 zones. So till then, waiting for that level to arrive, that's where the trade comes in.
Okay, all right. That's on the index. Mitesh, what about individual stocks? And today is a very lively market out there. So what are you trading in the last hour?
I have a sell call Sun Pharma with a stop at 1691, a target of 1640. In fact, the entire pharma pack, has had some kind of a negative opening because of the news flow possibly. And then we have seen some, selling pressure emerge despite the fact that there was midday recovery. So Sun Pharma is a sell for targets of around 1640. And on the buying side, the one which I like is Apollo Hospitals, which I would recommend buying if it crosses just the day's high of 6430. Buy then with a stop below levels of 6370 and look for 6550 as the near-term target.
Okay, all right, Mitesh, thanks for that. We'll come back to you for some more trades in a bit, but let's move on to an exclusive story that we are tracking. Sources are telling CNBC-TV18 that the insurance regulator has formed a new committee on the Insurance Act amendment. We have Yash joining in with the details. Yash, so you were earlier alerting us, and this amendment was supposed to come through in the budget session of Parliament. What's the latest?
Well, Survi, it's taken about 2 years that we've been talking about this bill. There are consultations. It reaches a point where the industry feels that it finally might get through this time around, and something or the other keeps coming, taking it back on the drawing table. This time, the same thing has happened. Very recently, of course, the Department of Financial Services issued a consultation paper on the bill, and it was expected whether this parliamentary session or the next parliamentary session, most likely the bill would be taken up. But again, there's something new, right? The regulator, what it has done is that it has decided to form a 7-member committee which will be headed by former SBI chairperson Dinesh Khara. The 7 members of this committee have representations coming in from the life insurance industry, general insurance industry, RBI, starting from Dinesh Khara, as I said, who would lead this committee, to NS Kannan, the former MD and CEO of ICICI Prudential Life Insurance, Girish Radhakrishnan, former CMD of United India Insurance, Rakesh Joshi, who's the former member of the insurance regulatory body, Saurabh Sinha, former ED of the Reserve Bank of India, Alok Mishra, the MD and CEO of MFIN, and finally L. Vishwanathan, legal expert. These 7 members would have the responsibility to submit their individual views and opinions on all those things which have been recommended by the government under the Insurance Act amendment. The reason this time around is that these Act amendments include changes which will impact not just the insurance sector, but also the banking sector, also the microfinance sector, also various other ancillary financial services sector, and hence a representation from these ancillary sectors have also to be taken. What we've been given to understand from our sources is that the committee will have the responsibility to submit its views in the next 2 to 3 months, after which those views will be submitted with the regulator, who will submit it with the Department of Financial Services. Finally, the call will be taken by DFS whether to bring out a fresh consultation paper or straight away from the old consultation paper strike out things which do not find a consensus within the committee and approve things which find a consensus.
Okay, all right, got that. Thanks very much, Yash, for the details over there. Let's go forward and discuss this and other market issues with our first guest on the show. We have Prakash Diwan joining in. Prakash, so yeah, I mean, insurance, who's to say, a lot of regulatory changes always one way or the other. But on the stocks now, given the market correction, are you comfortable buying anything, life or non-life insurance?
Good afternoon, Surmi. So I think insurance regulations have been pretty dynamic. We've seen some changes. We've seen a lot of talk about many more changes that are in the offing. And this time, the budgetary speech from the finance minister actually kind of put a rather flagged off a significant shift in terms of where the regulations would be headed. So I think this whole thing of setting up a committee with very wide representation from banking to the regulators to technology to legal experts and of course the non-life place. This probably will bring about a little bit of a semblance of level playing field from quite a few players, which they've been asking for, they've been seeking. And remember, the sector can grow at a faster pace than what it has. If you compare it with the equity markets, where financial inclusion has helped grow so many fronts on within the equity market, the same thing hasn't applied to insurance as yet, and this could probably pave the way for that. So, on your specific question, what to buy? Again, my answer is always buy a basket. Don't rely on one because everybody follows different trajectories and models. But I think a basket of 4 life insurance plays and the 3 non-life plays makes for a great portfolio addition. But don't expect anything to happen within the next 6, 12, 18 months. This is more like a 5-year. This is typically the coffee can portfolio, as they call it. It's something which you need to just set aside for a decade or so to really see the best out of it. But very, very positive on the sector. There's nothing which upsets anything from a secular structural point.
Okay, all right. Let's talk about some more stuff. Prakash, and I don't know whether you saw that, that editors roundtable chat that we had when we were talking about the QSR space, and Mangalam was big-hearted enough to treat us to some burgers, pizzas as well. So I don't see anything around Mangalam. I'm hoping you're sending something down here. Yummy. But tell us what Goldman Sachs has to say.
Well, I think that time I was big-hearted. This time around, Goldman Sachs should be big-hearted and send some burgers and pizzas.
Whoever, Mangalam, whoever.
Whoever sends it. But be that as it may, glad to see some, confirmation coming in on what data had suggested, what my hunch was at that time as well. And Goldman Sachs now reiterating that the tide is turning for the quick service restaurant place. Why is that? Because they believe that, after a very long time in the third quarter, they've gained share within the food delivery market itself. The sales growth narrowed versus the aggregator's gross order value. Remember, we were talking about how Zomato's gross order value growth has slowed down, and in the third quarter was the slowest that we've seen in the last many quarters. On the other side, we saw the delivery channel see extremely strong growth for the quick service restaurants, even ex of Jubilant Foodworks, which was doing better than all the others for the last couple of quarters already. The most important point, dine-in sales, which were declining, have now seen an arrest to that as well, and as a result of which, after many quarters of negative or low single-digit growth, they've grown by about 4.2%. They've also introduced several value offerings. So when inflation is high, customer sentiment is low, everyone migrates towards value offerings that these quick service restaurants make, and as a result of which, there would be order-led delivery recovery for the sector going forward. What is it that they like in the QSR space? Pretty similar to what the consensus was as well on account of valuations and the underperformance of stocks. We have Sapphire and Devyani, which is something that is their top pick on account of the structural story in KFC. But they also like Westlife, given the company bringing back their focus on value and innovations. Jubilant Foodworks, remember the stock has already seen a 60-67% rally from its 52-week low. So not much in terms of valuation upside. So in that, if you have to play, then Sapphire, Devyani and Westlife is something that Goldman Sachs likes.
Well, Mangalam, it was a brilliant presentation that you put out as well on Editors Roundtable. I'll tell you what, mate, this Friday, I believe that we have some space again. Like you to join in. What about presenting something on United Breweries, United Spirits, and then, popping it in there, Stone Cold Steve Austin
I think Nigel is going for it. He's going for the jugular here. He's not leaving anything to chance.
I have a feeling that Nigel will, take the bait on the United Breweries, United Spirits thing. Though, unfortunately, I don't think we can show those products. So if I do a presentation on Varun beverages, maybe I'll get you a bottle of Pepsi.
Okay, Mangalam.
We welcome everything. We're fine. We're agnostic.
Done. So then Nigel will take...
We love consumer conversations.
Nigel will take over post-ERT then, Mangalam.
Just don't ask me to present on Raymond and all these guys, because suits are something I won't be able to afford for the entire team.
Thanks a lot, Mangalam, for that. Well, Prakash, let's get you into the conversation. I'm sure you as well would be interested to know about, would like to see a presentation followed by some goodies. But for the time being, the goodies are the QSR space. Mangalam had given us a heads up. Now, Goldman Sachs believes there is value on various counters. Tell us, what's your pick from that pack?
So, Nigel, I think, though Jubilant is something that we spoke about a few months back, and it's kind of shaped up pretty well. This is a classic example of where companies make certain errors in judgment in terms of a business strategy and then course correct. And when they do, you see the results. The improvement is still, of course, underway. It's work in progress. I don't think it reaches old past glory levels in that sense from the business standpoint, not just the stock. But my sense is, given that context, given where things are on the QSR space, and remember, when we talk about the budget, letting people be left with more money to spend, this is one of the biggest areas and beneficiaries of that consumption trend. I would believe Westlife definitely stands a very good chance because they've been around, they've seen enough cycles, they've seen consumer preferences evolve so rapidly, unlike, KFC and Pizza Hut and all, which are fairly small in terms of, the presence. Westlife is omnipotent in that sense. So I would believe they will be the best beneficiaries of this. And you just have to live with the fact that the valuations might seem stretched, given that there's more, work to happen for those justification to, for the P multiples to be justified. But on a PEG basis or whatever, it might still seem reasonable. So I'm not too much fond of the other names, but I would believe Westlife is probably the one that I would put my money into if I had a choice.
Okay, all right. You know, the stock of this hour itself is actually Manappuram. Just pull up the stock. You know, it's moved to the high point of the day. Massive volumes out there. The stock is up close to around 9%. It has that valuation comfort, though every now and then you get some kind of regulatory hurdle. And as has been the buzz, that could potentially be some kind of deal. Unconfirmed, but that's the buzz out there. Just take a look at the stock. You know, if we just pull up a last 1 month chart, the stock has recovered, I think, from around 160 all the way to around 205. Prakash, from the gold financiers, you know, this one's always had that valuation gap with its larger peer. That's Manappuram. Muthoot. Manappuram with Muthoot. At around 205, you know, what's your view on the stock?
No, I mean, I'm not sure what's propelled the stock today in terms of, you know, this move, which is close to almost double-digit percentage. But I think the issues that came through in Manappuram's case are not something that have got resolved so easily or so quickly. And I would still give the benefit of doubt to Muthoot because it runs a far more stronger, robust franchise as compared to Manappuram, and they don't have to face, you know, all those issues related to the microfinance portfolio as well. So definitely Muthoot is far more insular, far more resilient. And from a valuation standpoint, I don't think you're overpaying for Muthoot for the quality that you get. But remember, gold finance as a whole is something which a lot of the banks are competing with now. And it's not just small banks. Even SBI talked about such a big build-up in the gold loan portfolio. So it's going to be different. The competitive intensity is going to be different. But if you had to allocate money to a pure gold play, gold finance play, it would be Muthoot Finance.
Muthoot Finance. Okay, got that. Prakash, before we let you go today, we have to talk about this big rally in PSUs again. Now, maybe they've just been so badly broken down, beaten down, so maybe there's a trading bounce. I don't know how people, whether they'll sell at these bounces, or so whether there's any sense in buying further or not. But what would your approach be to those who have these stocks in the portfolio and are waiting for this bounce? Should they exit? And others, should they be entering?
No, so that's a tricky one because, you know, the range of movement has been so wide. So we from the peaks to from the bottoms to the peaks, and then from the peaks to the current bottoms. That you know, depending on where you have plugged into the story, you would have to take calls. But on a more generalized basis, I can tell you the reason why the sense that I'm getting why defense stocks have made this comeback. There's the first instance of where everything is started getting bought into by smart investors, is primarily because the tariff tantrums that you were anticipating, and there could have been a big possibility of the defense sector getting impacted adversely if, let's say, the US insisted that we would have to kind of, you know, allow them to import much more than what we are currently doing, which is quite a bit. But this whole Atmanirbhar move that you were seeing in defense could probably be stalled or could have been kind of stymied in some way. But that is not happening. And it's like a relief that the tariffs is leaving this sector untouched. And from here on, the order book execution will start kind of making sense. In the last 1 year, what's also happened is that the earnings growth has been fairly decent for most of the names, barring a few where there's some accidents. But the shipyard companies, the electronic names, you know, the BELs of the world, some of these smart companies that have come into in recent years, all of those will start actually doing well once the PE multiples contract and come within reasonable levels. So I think you should panic and exit from here thinking this is a bounce back for you to get an exit. If you bought in at decent levels, these, you know, reasonably low levels, I think you should hold on for the next round of upside that will come through. It could take some time, but it will certainly do. If you haven't bought into it earlier, needless to say, there's a great chance that you could buy into at very decent levels as compared to what recent highs we've seen in most of these names.
Absolutely. And a steep correction. I was looking at Garden Reach, for example. A high was about $2,800. It fell down to today actually, because today is the first day of a strong bounce in the name. It had fallen to about 1,200, from 2,800 straight to about 1,200, right? I mean, that's a crunching fall. The previous big high, if you want to go back to, was about $1,000, but that was in September of 2023. So it actually retraced a fair bit of this one-way rally on Garden Reach, and I think that will be the sort of situation with most other names like Mazgaon, etc. Mazgaon maybe actually lesser so. In Garden Reach, of course, the fall was much, much larger. Zomato, by the way, is up 4%. Swiggy is up 8%. You know, the other question, typically, Prakash, what will happen is people will ask, what did well earlier? Will that, I mean, is that essentially what you, and stuff which has fallen, is that what's going to do well here from here out as well? Or will there be a bit of a change and should one look for newer stuff which one did not already own? What's your sense, Prakash?
So, very difficult to identify stocks on the basis of just the fact that they did well and they're not doing well anymore. And will they continue doing well now when the next move of the next up move comes? But I would make it a bit more simpler, go back in terms of this thing saying, in times like this, Prashant, when, the risk aversion is very high, people will tend to look at buying into stories or stocks where there is visibility, right, of earnings growth. And if that is intact, or it's come back, or it's making a comeback, I don't see any reason why those stocks won't do well. Which also means in the last 5 years, 4 years, 8 years, there are a lot of stories where you see there's no stock price movement which has been very favorable, but the earnings growth has been significant. So, for example, private sector banks, and it's quite stark. I mean, we talk about these names every day, like Kotak and all. Earnings have grown so phenomenally in the last 5 years, but the stock hasn't gone anywhere. So these are names which will probably be the first port of call when fresh money comes back into India, and that could probably be FIs returning in June or whenever. So you would be rather invested into these names than a Swiggy or a Zomato, which continue to give you this uncertainty on the path to profitability. But and that's the reason why the fact that you mentioned is defense names. They have visibility of earnings. They have the order books. So it's just about as the execution kind of grows towards this level, everything will start kind of becoming positive. But I don't think that's the criteria to look at in terms of buying these stocks just because they've fallen, and they will certainly do well from here on.
Yeah, no, absolutely. And I think the point actually, maybe to put it differently, you get anchored to a price, right? Something has fallen from 1,000 rupees to 500 rupees. So now point is 1,000 was unjustified. But you saw 1,000, now you think it'll go back to 1,000. But 1,000 was unjustified in the first place. So it's come back to reasonable. So should you buy now at 5 because it's fallen to 5? That was largely the question. I think
I just want to tell you that is working in favor of some of the names like Trent and all. I mean, I don't see any reason in terms of change, but you're absolutely right. It's a classic example.
Yeah. I think we lost the line froze. But I think, Prakash, if you're hearing me, take that point. Can't hear you. But appreciate you joining us with that perspective as always. Markets, by the way, making a bit of a comeback. Nifty is down just about 20 points. Shiv Sehgal is with us of Nuvama Capital Markets on the other side. Stay tuned.
Very good. One of those massive roads today.
Let's talk about Canva's startup story.
220 million people that use Canva as a product as well. They launched with 5 languages in 2016. They then ratcheted that up to 100 languages in 2017, including Hindi, Tamil. I think India could be huge, so it's our 4th biggest market at the moment. I think it could reach the #1 position, very soon. We've been able to move large parts of the company towards thinking in an AI-first manner.
Interesting.
24 million now.
Breaking news. The last few years have really been about the shiny objects, and 2025 is probably going to be much more about real use cases.
We've now matured our ML and our AI teams to adapt to this new technology. And we've pivoted every product team inside Canva now to think AI first.
With tariffs, it's always been the case that poorer countries, developing countries, emerging markets have higher tariffs, than developed economies. And I think that, it is what it is. I'd be very surprised if India is absolutely right in the forefront of this reaction that Trump is coming up with. I think he's focused a bit more on other countries, frankly. But yeah, he has mentioned India, so we have to watch it.
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing $30,000 or 26 lakh rupees in America, and Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges.
Okay, welcome back. Shiv Sehgal is with us, President and Head of Novama Capital Markets. Shiv, good to have you back on the program. Thank you very much for your time. Let's get straight to your conviction call from here. Shiv, you're saying in the next 1 to 3 months, markets can see a strong between 6 to 14% rally, right? Here, between now and the next 3 months. So tell us the shape and structure and of what you expect to see, where you expect to see the maximum, force of this move coming in. Will this be fleeting? Just talk us through that. Yeah.
Sure. Thanks, Prashant. Firstly, a very good afternoon to you and your team. Let's just take a step back. You guys have been discussing a lot on your channel and, on what Trump is doing. So I just want to kind of reflect 2 minutes just on what's happening globally. Trump wants US deficit to vanish from all countries. As you rightly have, pointed out, India has around a 40-45 billion surplus with US. India needs to pay attention to that going ahead. US tariffs on India goods is around 2.5 to 3%, while Indian tariffs to US are exceptionally high, around 10 to 11%. So there's going to be a bit of give and take there. It's very good to see that Modi was one of the first leaders to acknowledge that and have very meaningful dialogue with the White House administration. But the reality is that I do want to point out that there's something else going on globally, and that is why what's reflected in the markets as well. I'm not sure how many of your viewers knew that the day before, Xi Jinping sat down with China's tech elite, and in what looked like a very serious course correction to me. And we had the likes of Jack Ma from Alibaba, Ren Zhengfei, Huawei head, and this threatened as to what the development is happening in Washington, and it doesn't like what it's seeing. The Trump administration is moving very fast, rolling back regulation, cutting deal with industry giants. And it's not only pushing AI, semiconductors, and defense tech, but it looks like, there is a new space race there going on as well. And there is a massive stark contrast between what the US and what China has been doing the last couple of years. The US is fusing, government and private enterprise at the highest levels, bringing in CEOs, founders, and investors to shape policy in real time. Meanwhile, China has kind of moved the other way in the last couple of years. And that is why, if you look at, where India and Hang Seng has done. So if you look at just the Nifty, Nifty versus the Hang Seng since COVID, there is a very stark contrast. Nifty since COVID is up about 200%. Our mid caps and small caps, mid cap index is about 370%. Small caps had a phenomenal rally of 400% as well. So meanwhile, China, if you look at what Hang Seng has done, Hang Seng is basically flat, right? There is a global allocation moving away from, the laggards of the last couple of years. Yes, Jan 2025 has been slightly different. We have seen money move back into China. Hang Seng is up about 13-14%, but the similar trend is happening in Europe as well. Mostly everyone that came on financial media said that, Europe is doomed, there's no growth, XYZ. But if you look at what's happening in terms of markets, DAX is up almost 13-14%, similar story in France, similar story across Europe. So there is a global shift of money from asset allocators, not only back to the US, but also in some of these laggards.
No, absolutely, Shiv.
Yeah.
Absolutely, Shiv. And while you were speaking, we just put up that chart of, India, Nifty and Hang Seng over the last 12 months. And they always say that, people were always saying that the Chinese rally is a flash in the pan. It's a tactical trade. But when that trade runs for 12 whole months, it starts getting painful, right? Look at the stark disparity between these two markets and when the on-ground inputs from China are still a little weak, I guess, in terms of actual movement. But take your point fully. Global markets have marched ahead. It's not just the US, it's a lot of other markets as well. Where does that leave us? I was also going through, the earnings note that your team put out, and it's pretty bleak after the third quarter. And in fact, that note ends by saying that some of these estimates of 13, 14, 15% earnings growth for FY26 and 27, there's a risk of disappointment to those estimates, and the downgrade ratio is still pretty high. So what will make things turn here for us here in India?
So Surbhi, again, I want to clarify a few things here, right? Market is absorbing what happened in 2024 in India, right? It was a complete banner year in terms of, just look at some stats. In main board IPOs, India raised about $19 billion, another $1 billion in SMEs. If you look at what PE and VC exits happened, they were close to about $13 billion as well. And if I look at insider selling, that was another $5 billion. When you add up all these numbers, they're quite staggering, given the fact that in September, FPIs have been kind of exiting India into other markets. So we are, what started off in September as a healthy consolidation, and a lot of people kind of were expecting a time consolidation and a small pullback. Unfortunately, that given the last 2-3 weeks breadth has turned out into a more painful pullback. But if you look at the technical indicators, and this is where, coming back to your earlier point, Prashant, why I feel that we are at the cusp of an inflection point. If you look at Nifty 500, the market breadth is at historical lows. 87% of Nifty 500 stocks are trading below 200-day moving average. If you look at just the 50-day moving average, that number is even staggering at around 92 to 95%. So the capitulation has already happened. To being bearish at this point is not going, to be a little cautious in September, October was the right trade. To be cautious right now, while yes, there has been a multiple derating, which was kind of, on frothy levels. But what's happened is in this carnage, we have also seen very good quality stocks have collateral damage. So I think that's where the rebound is going to happen. We are going to see the rally is going to be led by good quality stocks, and we are going to see new winners emerge. And that is why a momentum and new highs will indicate to us which is the sectors that are going to lead. And, we are all in a wait and watch mode. There has definitely been a lot of pain, but we are getting quite constructive in the BFSI space. I'm super bullish on how metals are going to play out, how energy is going to play out. The India bullish theme remains intact. It's just that we have seen a global reallocation in terms of of money flow, but that will readjust. And I'm also expecting in the same breath the noise and the volatility from the Trump administration to slow down as the next few weeks progress.
You said energy, metals, and BFSI. If you could just elaborate on some of these themes, Shriv. And energy is interesting because, I mean, globally we're talking about crude oil prices probably coming off even more because there's baby drill, and then there is, if the Russia-Ukraine issues sort out, then the Russian oil comes to the market full flow as well. So can you just elaborate on these themes which you think will be the new leaders?
Sure, Surbhi, great point. What I meant was renewable energy. I think, Indian government and the private sector is very bullish. We want to be energy independent by 2047. We are still meeting a lot of companies. And I think this year you will see a lot of solar and renewable companies come in the public domain as well. We are meeting a lot of private companies that are showing some great numbers. And the amazing thing is, we had our conference last week. The underlying trend from corporate India is actually not that bearish. Yes, the tape is indicating a different story right now. But if you look at corporate India, there is a rural revival happening. The budget has been very conducive for consumption themes as well. But what has transpired is that multiples got re-rated at a very fast pace in the last 2 quarters. But my sense would be that next quarter earnings could be on a more positive trend, especially given the kind of pullback that we have seen. We have been speaking to a lot of FPIs as well. Some of the large long-only allocators who had been waiting for a pullback are looking to deploy back in India. And I also think that what is going to happen is, there were a lot of QIPs, prefs, blocks coming to the market, which absorbed a lot of domestic flow. And I think that is going to slow down. So what's going to happen is a lot of flow is not going to move into the primary market, but back into the secondary markets where the pullbacks have happened. And people are going to go back and buy high-quality stocks back again. And I think that's going to drive the thesis that we are about to see a rebound. It could happen today, it could happen tomorrow, next week. I'm not here to time it. But the reality is that given these levels, I think the India story is going to come back very strong post the noise of what's happening geopolitically between India, US, China, US.
Okay, cheers to that then, and we'll hold you at that, Shiv. Thanks a lot for joining in. You're sounding far more bullish, and as you said, some part of the street is cautious, but you think that this is the right time to start deploying and be selective and start nibbling in. Thanks a lot for joining in and giving us that quick take. By the way, the markets from the time we started the show have recovered. The Nifty has moved into the green, so that dip has got bought into. Encouraging sign out there. The Nifty Bank is above the 20-day MA, which is good again. And select mid-cap stocks are doing well. You have Swiggy that's moved to the high point of the day, swinging it away. You have Reddington as well that spiked up. Both these two on rather large volumes. Slip into a short break, come back. Nimesh will be standing by to tell us what he's picking up on D-Street Chatter.
Tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year but cancelled at the last moment. Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk and other EV makers a concessional 15% duty as opposed to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk be able to secure lower tariffs from India without a manufacturing commitment? That remains to be seen. For the moment, what we know is that Elon Musk had a very positive 50-minute meeting with Prime Minister Modi in Washington, D.C., where everything from electric mobility to space cooperation was discussed.
Ranveer Alabadia has been spewing dirt, has shown the dirt in his mind, has been vomiting on air. Why should we protect you? Ominous words coming in from the Supreme Court aimed directly at Ranveer Alabadia post the India's Got Latent controversy. So that entire controversy involving Ranveer Alabadia, Samir Raina moving to the doors of the Apex Court. The questions we're asking: who's the one who's knocked on the doors of the Supreme Court? What reliefs are they seeking? What did the Supreme Court have to say about it? And what are the reliefs, if any? What are the protections, if any, that the Supreme Court has granted? Well, to begin with, it's Ranveer Alabadia who's knocked on the doors of the Apex Court seeking protection. Mind you, he's facing at the very least 3 FIRs that at least we know of: Maharashtra, Guwahati, as well as Jaipur. And what's interesting is that, and that's an interesting side story, representing him in the highest court of the country is none other than the son of Justice D.Y. Chandrachud, the last Chief Justice of India. It's Abhinav Chandrachud that's appearing for Ranveer Alabadia. Now, Abhinav put up a valiant argument, a valiant battle here before the Apex Court, where he argued that he's not at all defending the comments or the conduct of Ranveer Alabadia, but rather he's citing multiple FIRs, that this is tantamount to an abuse of process.
Welcome back. As promised, let's get straight to D-Street chatter. Nimesh is standing by. Nimesh, what are you picking up in terms of flows and how sentiment today?
Hi, Nigel. So the good, the big talking point for today is the recovery in the broader market names. So that's a clear theme, and that's backed by FI buying. In fact, institutional buying. I've been saying this for the last couple of days. Even when the broader markets went down, that there is selective buying happening. And that's the flow today as well. So that selective buying in some broader market names continues from the institutional desk. Overall, the flows are quite mixed. There is selling in some large private banks as well as in some PSU stocks as well. But it's the broader market, the mid cap, the small cap, which is where you're seeing a bit of traction now. And there is a lack of selling as well. We saw, in fact, yesterday was a classic day when there was a lot of stocks which were falling on very thin volume. So that shows that there is a bit of selling exhaustion now, and now you're seeing a bit of recovery in the broader market names today. From an expiry point of view, the broad sense is that maybe for this expiry, the range seems to be 22,800 on the downside, and on the upside 23,500, 23,550 could be a level to watch from a resistance point of view. So that's the overall range. But clearly, the big theme today is the recovery in the broader market names, and that's backed by some institutional buying as well.
Okay, all right. Let's get to individual stocks. Then, Nimesh, what are you picking up?
So, as I said, there is a lot of interest in broader market names. So, the first stock is Acme Solar. After a long time, I'm seeing some bit of interest back in that particular stock as well. So, the stock is locked at 5% upper circuit, but there is delivery-based buying from larger FIs in that particular name. So, that's the first stock. Similarly is the case with Swiggy as well. A big move in that stock as well. Remember, the Swiggy has corrected all the way from 600 to 350, and at these levels, some buying has emerged from institutional desks. So, again, expect high delivery volumes, and there is buying interest in Swiggy at current levels. The third stock is Cummins. Trending in a strong market, that stock has underperformed today, largely on back of sell flows. So, post the Q3, post the quarterly con call, there was mixed brokerage views, but there is selling as well from larger FIs in Cummins. And the last is Manappuram Finance. Everybody's been talking about the potential deal which can come, but interestingly, the flows have resumed. Remember, the stock is banned, so can only buy in cash, and some larger HNIs seems to be quite actively buying into Manappuram in the last couple of days.
Okay, all right, Nimesh, thanks a lot for that. By the way, the stock of the last few minutes has been BSE. Yeah. That stock is now up closer on 10%. Big move is what we're seeing. Pull up the intraday chart out there of BSE. Solid move. It saw that correction, I think, from around 6,000 rupees, closer to around 5,000 rupees. And one day, up 500 points thereabouts. So the capital market plays, don't count them out as yet. There's still plenty of interest out there.
And it's Nigel, it's moved about 150 rupees in the from 245 on. It's a big mover.
Someone's tanking up.
The biggest volume-led gainer on the NSE. Number one volume-led gainer on the NSE is BSE. So, I think somebody was pointing out, we'll have to check the data, that if you look at the option volumes, because the change was one contract, one weekly contract per exchange that was implemented only late last year, and people have been tracking every week what has been happening. BSE has gained share in terms of the market share, etc. But that's a big one. Although there was, I think, a news report which also on that settlement guarantee fund, which essentially is what marred their results for the third quarter, BSE's numbers a little bit. There was a news report I read where NSE is sort of demanded for a certain amount from in terms of BSE's contribution to settlement guarantee fund. But for now, I think that's being ignored. The stock's up in a big way.
Absolutely, and overall the mid-cap market is really holding on to that gain. When we started the show, the number of advancing stocks was just below 2,000. Look at it now; it's 2,070 odd stocks. So this is building. and building on, in a nice way. Large cap indices are still flip-flopping between negative and positive. Mid caps are looking absolutely stupendous today. Well, perhaps, who knows whether Hexaware was a lucky charm or not, because I mean, a good day to list after several very, very tough weeks with the market. Hexaware's listing today happened when the stock itself has done well. The mid-cap market sentiment has changed, and it's still looking at a gain of about 9% right now. And in fact, let's bring Vamakshi in to get the numbers and the math right. Vamakshi, so what did you pick up? We, of course, spoke with the management as well after that listing, and it's really done well. So it's a good homecoming back to the street for Hexaware.
Well, absolutely, Surbi. You know, the stock is surging higher in trade today. Keep in mind that the stock's issue price was 708. It listed at 745, and through the course of the day, the stock has only surged higher. Now, the stock is performing better than expectations, but when you look at the grey market premium, it was rather flattish. Even the overall subscription was rather muted at 2.66 times, with the QIB portion at 9 times, the retail at 0.1 times, and HNI at 0.2 times. Now, let's also understand how Hexaware stacks up against some of its peers. Now, Hexaware is most compared to Persistent as well as Coforge. Now, the reasons for the same are that because both of these companies are similar to the size of Hexaware, and all three have outpaced the growth that the industry has posted. Now, keep in mind that the size of Hexaware is slightly bigger than Persistent and Coforge. Now, when you look at Hexaware's valuation, it is definitely trading at a discount to Persistent as well as Coforge, but when we compare it to the rest of the mid-cap IT pack, it is trading at a premium. The one-year forward valuation for Hexaware is at 28 times. The reason Hexaware trades at a discount to Persistent and Coforge is because they have grown faster than the company. Keep in mind that in calendar year 23, the revenue growth for Hexaware was 12.8%, which is lower as compared to both Persistent as well as Coforge. Now, when we look at the market cap of all three of these companies, the market cap of Hexaware is at 46.5 odd crores, somewhere there about, while for Persistent it is at 92,000 crores, and for Coforge it is at 52,000 crores. Now, just to sum it up about the company, the company seemed very confident about growing faster than the industry going forward. The company has also highlighted that their dependence on some of their top clients has been coming down. But the only risk out here is that, Carlyle, which owns nearly 74.5%. So if that does happen in the future, that could be lead to some pressure on the counter. But as of now, the stock is flying away in trade.
Okay, all right, it surely is. Thanks very much. And that's very helpful data and comparisons as well, Vamakshi, in terms of size and valuations and just, the market cap that is being ascribed to these companies. So Persistent, Coforge and Hexaware kind of in the same band in terms of revenue size, but of course, the market values are very, very different. Let's quickly move on and go back to Mitesh for some final advice. Mitesh, so how is it looking on the index? I mean, what are you taking home? And then final trading advice as well on stocks.
I have two BTST calls, Ashok Leyland, something which I've recommended time and again. I think still does well, and I have a pending target of 235 here. So BTST with a stop at 222.8 for targets of 230, 232 for tomorrow. That's one. And the other stock which I like is a BTST on Hind Petroleum, HPCL. That's a BTST with a stop at about 321 and a target of 330.
Okay, all right. Thanks a lot for that, Mitesh. We'll slip into a short break. On that note, you come back, we'll wind down the markets for you. We'll also get, Amrish Paliga, who will be joining in to help us out with some fundamental picks. Stay with us.
That not just Ranveer Alabadia, but even his mother, his associates are beginning to receive death threats, and that is something that requires the intervention, the protection of the highest court of the country. Now, there were two very clear halves to the hearing. In the first half, the Supreme Court absolutely squarely condemned the content as well as the conduct of Ranveer Alabadia. The Supreme Court said that he's been spewing out venom, he's been vomiting, and that this does not call for intervention or protection of the Supreme Court. Further, the Supreme Court went on to say that as far as the conduct itself is concerned, it would bring shame to fathers, to mothers, to parents, to society in general. In fact, the Supreme Court then went on to say that just because Ranveer Alabadia is popular, that is no grounds, that is no reason for him to take liberties with societal norms, to openly flout them, and that this behavior should be squarely condemned. In fact, the Supreme Court did not stop there. It said that the Supreme Court has not been sitting in some ivory tower. It has been, in fact, going through social media. It knows that these comments came not originally from Ranveer Alabadia, but from an Australian show, and that this is something that is not acceptable here in India, that such conduct which reflects on society, which reflects on his own thinking, is not something that the Supreme Court will look very kindly on. But having said that, the Supreme Court also said that we have constitutional courts in the country. It is not a kangaroo court. It is not a court of public opinion. And it is on that count that the Supreme Court, taking note of the fact that there have been previous instances of multiple FIRs against senior journalists such as Arnab Goswami, senior journalists such as Amish Devgan, the Supreme Court, keeping in line with that precedent, has granted the twin protection to Ranveer Alabadia after that hearing. Number one, he cannot be arrested, at least as far as the FIRs that have been registered so far, Jaipur, Guwahati, Maharashtra. He cannot be arrested basis those FIRs. Further, the Supreme Court has also said that no further FIRs, at least as far as the India's Got Latent controversy is concerned, will be filed against the person in question, which in this case happens to be Ranveer Alabadia. But there are some tough conditions that the Supreme Court has imposed. Number one, Ranveer Alabadia will appear as summoned by all of these authorities. Number two, Ranveer Alabadia will cooperate with all these investigating agencies, will not interfere, will not interrupt. Number three, he will not do any further shows in the interim. That is something that the Supreme Court said as an afterthought, but very clearly pointed in the direction of Abhinav, in the direction of Ranveer Alabadia, that no further shows for now. And also importantly, has put restrictions on overseas travel for Ranveer Alabadia, saying that you will need to deposit your passport at the local police station. So strict conditions being imposed on Ranveer Alabadia, but nonetheless, the Supreme Court, after that flurry of condemnation, granting that protection to Ranveer Alabadia.
Welcome back. Here with us on Closing Bell, and we are in the last leg now, the last stretch, where the headline indices are still at the flat line, blinking red and green for the time being. Let's put the spotlight on the defense space, because we've seen a big comeback on defense stocks, both on the PSU side as well as several private sector names. We have Upasana joining in. She's mapped the fall, then the recovery that we've seen, and of course the earnings and what these companies are saying. Upasana, tell us more.
Well, certainly, defense sector remains in focus today after the stocks have seen a good rally after a steep correction. Now, let us look at the valuation of these stocks and fall from the recent highs. First up is Bharat Dynamics. The stock is down 41% from its highs, trading at 37.2%, 2 times the one-year forward PE, followed by BEL, which is down about 26%, trading at 33.1 times. BEML is the next one, which is down about 52%, trading around 25.2 times. Cochin Shipyard is also down about 56%, trading at 27.6 times. Next up is HAL, which is down about 41%, trading somewhere around 26.1 times, followed by Mazgaon Dock, which is down about 27%, trading around 24.5 times. Zentech is also down nearly about 60% after the stock remained in focus after its Q3 results, which is currently trading at 24 times. And lastly, Data Patterns is down as high as 58%, down 32.5 times. Now let us look at how these companies have performed in their Q3, and the common trend seen is their revenue growth was really good for these companies on the back of strong execution, but margins of these companies were under pressure, but the companies have retained to their FY25 guidance. Now, Bharat Dynamics numbers were above estimates, but there was a big miss on the margin front. Coming to BEL, the company's revenue saw a strong uptick of 39%. Margins were also up 330 basis points at 28.7%, and company has also retained its EBITDA margin guidance between 23 to 25%. BEML, the company is confident of achieving its revenue growth in FY25 despite seeing a revenue downtick of 16%. Cochin Shipyard, the numbers were overall weak. This was mainly dragged by company's key segment, that is shipbuilding segment. Revenue was up 7%, margins were down 870 basis points. Next up is HAL. The revenue saw an uptick of 15%, margins were up 40 basis points. Now, margins were lower due to execution challenges is what company has indicated. Zentech revenue has seen an uptick of 53%. Margin saw a downtick of as high as 1400 basis points, and company says that it is on track to meet its revenue guidance of 900 crores for FY25. And lastly, Data Patterns. Revenue has seen a downtick of 16%. Margins stood up 320 basis points at 46.2%, and company sticks to its FY25 revenue guidance of 20 to 25% and EBITDA margin guidance of 35 to 40%. So all in all, defense sector remains in focus, and the commentary from these companies after their results also remains quite upbeat, sticking to their FY25 guidance.
Okay, all right. Thanks a lot for that, Upasana. Well, independent market expert Amrish Palika is with us. Amrish, hi. Good afternoon. Good to see you, Ben. Plenty of stocks have fallen, but there are some good ideas as well. So give us your top idea.
See, my top idea today is from the pharma sector. This is despite President Trump's threat of 25% tariffs on imported drugs. And I believe that in the longer term, America cannot afford higher healthcare costs. So I think it could be more of a political negotiation tool. So in the longer term, I believe the stock, which is Cipla, I think should perform. It's the third largest pharma company in India, a global leader with about 46 manufacturing sites worldwide, and produces 50 plus dosage forms and over 1,500 products, which are distributed across about 78 countries. They have a range of complex generics and drugs across key therapeutic areas like respiratory, urology, cardiology, anti-infective, CNS, and many OTC products also. And they have about 168 approved ANDAs and NDAs and around 112 tentatively approved or in process. So this is a very decent pipeline. R&D spend is about 1,500 crores per annum, which is about 6% of the top line. And if you look at the Q3 earnings, they were decent. Revenue was in line. You had the EBITDA and PAT were much better than expected. In fact, PAT was about 1,573 crores, which is about 47% higher Y&Y. So my expected EPS for FY27 is about 68. And with that, my target price is 1,904.
Okay. Amrish, so given that Cipla does have a fair amount of exposure to the US generics market, you're not too worried about any potential increase in tariffs there?
No, that's what I mean. Because of the threat of increase in tariffs, I mean, there is talk of that 25% increase in tariffs from April. And because of which we have seen that even on a day like this, the stock has been, a bit under pressure. In the morning, it was lower. Now it's improved from those lower levels. But what I believe is that these tariffs may not stay for too long, because overall, it's going to increase the healthcare costs in US, which surely the government can't afford. So this could be a political negotiation tool, and maybe in the next 2 or 3 months, it could be off for all you know.
Okay. All right, Amrish, stay on. We'll just quickly go through the market close and then come back to you. And the headline really is that it's all about the mid-cap recovery, and that's very heartening to note. The Nifty hasn't done too much, but the Nifty also has managed to, come back towards the flat line. It's been a slightly volatile day for the headline index. The net result is about a 22-point dip. If we talk about the key movers and shakers on the way up, BEL, because of course the entire PSU and defense pack was rallying higher. BEL is the biggest winner on the Nifty right now, 3.5%. Other names included Hindalco, Eicher Motors. A couple of banks have done really well. The Bank Nifty has been rock solid today. What a comeback by the Bank Nifty, 1% higher. So ICICI Bank, Axis, Kotak, IndusInd Bank, all of these have done really well today. Aside of banks, some names like Eicher Motors, like I mentioned, there's Tata Steel, BPCL, and ONGC also on the upside. What didn't work was IT. TCS, Infosys slightly lower. Some of the names from the pharma space like Dr. Reddy's were a little weak as well. And some selling seen in HUL. HUL is down about 2%. So consumer, IT, pharma, not quite in vogue. But banks have been the big story on the large cap screen. But Prashant, I guess mid caps are looking really good.
Oh yeah, actually, small caps and mid caps are the real sort of winners today. And maybe just 5-6 names we can mention. BSC, of course, is a larger name, but still in that space. Tata Investment Corp, both of them, BSC and both market related. Swiggy went up about 8%. Zomato was up smaller, but of course Zomato fell less as well. Zomato up about 4%. Your names like RVNL, which was up sharply. Aegis Logistics, very large volumes and gains. KRN Energy, recent listing, did well. Reddington, PG Electroplast, the EMS name, after some time saw some buying. Minda Corp was up sharply. There was all consumer names in a way, right? Bikaji was up sharply. Goldium, the lab-grown diamond, the hotel company, Taj GVK about 20% higher as well. So enough and more really coming through, and a good day overall for portfolios. Heaving a sigh of relief, literally, after what has been very, very painful for many weeks now. Well, we'll wrap it up here in this edition of Closing Bell, but stay with us. Ruby and I'll take you through markets forward in just a bit. Sensex and Nifty end absolutely flat. The Nifty Bank, though, outperforms. Market stages some recovery in the broader space. Financials, real estate stocks gain. Mid-cap makes some gains as well. Overall, a range-bound session, but for the broader markets, it's a good day.
Despite muted subscription, Hexaware Technologies relists at a premium to the offer price of 708 rupees per share. While the interest of qualified institutional investors was running high during subscription, Hexaware IPO saw lukewarm response from other category of investors.
Sources tell CNBC-TV18 the insurance regulator IRDAI has formed a new 7-member committee led by former SBI Chairman Dinesh Khara. The committee will independently review and submit their suggestions to amend the amendments which were proposed to the Insurance Act. You're with us here on a fresh new edition of Markets Forward, your go-to program where we wrap up the day and also look ahead. I'm Prashant, with me, my colleague Surabhi. Surabhi, hi.
Hi, Prashant. Well, not a bad day, I guess. And finally, the broader market seeing some green. So not much on the headline index, but I guess bulls will still be happy.
Yeah, I mean, small cap index 2%, mid cap index up 1%, and Nifty Bank up 1%. So, yeah, I mean, the only index which in a way sulked a little bit was the Nifty. I mean, the Nifty didn't go anywhere by close. After some promise. By the way, at the day's highest point, we did briefly take out the 40 hourly exponential average. I mean, so you got to get past the hourly averages, and then you'll get to the 20 days, etc. 20 days, etc. is still far away. 23 and 14 is the 40, and we breached that. But then, of course, couldn't hold on to those levels. For the Bank Nifty, we're very now close, and it was a good session. Nifty Bank looks like more and more that's the index which is bottoming out and making a bit of a move. Here, the previous high comes into focus, not very far away. I think it's less than 0.5% away. 49,836 is the previous high for the Nifty Bank, and we'll see if we're able to do that tomorrow. Small cap index 2% gains. As I said, mid cap index 1%. Advances outnumbering declined some 3-1. And of course, Vivek will talk about stocks, the kind of names which moved. There is one irritation, of course, and that is all the talk of tariffs from Trump, and Trump again and again. In not every interview, but occasionally specifically mentioning India as a high tariff country and high taxation country, wanting to impose tariffs, etc. So that's the irritation which is causing a little bit of anxiety, I guess, in many sectors, many parts of the market. What will eventually happen, we'll only know by the beginning of April. But I think that's at the margin. Something which is keeping people a little cautious. Surabhi.
Absolutely. If you talk about, the big headline today, like we've been telling you, it's really the mid-cap and small-cap part of the market. The fact that there were gains, the gains were well digested, and they remained intact. I mean, look at that graph. It's not too choppy. There wasn't too much of nervousness. And the small-cap index is really soaring away, 350 points higher, looking very, very good. And the advanced decline ratio, don't even remember the last time we had more than 2,000 stocks advancing on the screen, but that's exactly what played out. I mean, the greens were outnumbering the reds by a huge distance today. And one sector that stood out really was the defense space, but broader PSUs as well. I mean, stocks like RVNL, etc. Many of them found takers today. So the PSE index or the CPSE index, these were doing well. Even the PSU banking space was quite smart, but defense really stood out as a theme. Having said that, there are lots of other stocks as well, mid-cap stocks beyond defense, that also found plenty of takers, and we will tell you about them as we go forward. In fact, let's tell you what's coming up over the next half hour or so. We'll, of course, put the spotlight on the specific movers and shakers. We'll have, Vivek joining in with a blow-by-blow account of what transpired today. One of the stocks in key focus today, of course, is Hexaware. It has come back to the street. The relisting happened, and it was well received by the market, almost 9% higher. We'll get you some of the details around that listing as well. And finally, insurance in focus once again, as the insurance regulator has formed a 7-member committee to recommend any changes to the proposed amendments to the Insurance Act. So more coming up on that as well. And then, of course, the events to watch. Let's kick it off then with the day's trading account. Over to Vivek for that.
Well, thank you so much for that. A very volatile trading session, but like you mentioned, the breadth very, very strong towards the end of the trading session. List of movers today, much stronger compared to what it has been over the last few weeks. First, like you mentioned, the banking pack. Today, they made a very strong comeback, especially some of the beaten down names. AU Small Finance Bank. Remember, this particular stock has seen significant selling pressure, but today ended as the top gainer as far as the bank pack was concerned. And along with that, even a whole host of other large cap banks too, all of them saw gains and ended with gains of over 1%. One stock from the broader end of the market that did very well in the NBFC pack was Manappuram Finance. The stock ended higher on very strong volumes, over 6.5%. It's been a very volatile trading week as far as Manappuram is concerned, but today it was on the right side of the move, over 6.5% higher. Like you mentioned, railway stocks, different stocks today staged a very sharp comeback. Look at RVNL, RailTel, ILCO, all of the railway stocks did very well, and some of the defense shipbuilder names too did very well, over 10% higher for both Garden Reach as well as Mazagon Dock. One stock from the broad end of the markets was Nava. There was a buyback announcement, the stock ended higher by over 11.5%, and one stock from the pharma pack that actually outperformed significantly was actually Suven Pharma. Ended higher by over 5%. Remember, today you saw a very long report from Macquarie Capital, initiated coverage on 4 names, the top pick being Suven Pharma, ended higher by over 5%. But on the other hand, The entire pharma pack, especially all of the generic names today, took it on the chin. Sharp recovery from the intraday lows, but still ended the day lower. All of the generic names are Aurobindo, Zydus, Natco. All of them ended lower on the back of worries of tariffs coming in. IT stocks, that was the other pocket of the market. So the defensive didn't do very well today. TCS, Infosys amongst the top drags today. LTI, Mindtree, TechM. Some weak commentary coming in from Capgemini yesterday is something that actually spooked the IT stocks today. And one stock from the broader end of the markets, top laggard on the NSE 500 was Credit Access Grameen. In fact, saw selling pressure actually accelerate the last half hour or so of the session today.
All right, Vivek, thank you very much for that. I mean, Credit Access, I'm not sure. There was no real news flow per se, but the stock was down 7% on very large volumes. But that's a good summary of what went and what moved today. Let's bring in Amrish Baliga, who's with us to run us through what he made of things. Jay Thakkar of ICICI Securities is also with us. Jay, a quick word on the price action yesterday and today. Do you think it's looking like the initial stages of that much awaited, even if it's temporary, a bounce at least?
Afternoon to you, Prashant and Surbhi. Of course, Prashant, I think that there is a very high possibility that we would see a bounce back coming in February, and we're just 7 trading sessions away now till the month end. See, a couple of reasons I would say, Prashant. One is that historically, if you see that Nifty has not closed in the negative territory for the 5 consecutive months. This is the 5th month. We've already seen 4 months in negative. Historically, we've seen that happening in 94, 98, 2001. Right, and post that we've seen a bounce back of at least 3%, minimum to 10% on the upside. So even if we say 3%, and if Nifty has to close positive, particularly this month, then 23,500 should be back by next Friday, and 3% positive should be in another say 24,000 or so. So going forward, I think 24,000 to 24,200 levels can be seen on Nifty after 4 months of negative close, and if this happens to be the 5th month, then it will be the first time in history. Right, for Nifty. And secondly is that the mid and small cap indices, Prashant, has seen a good amount of panic, I would say. We saw Nifty 50 did not make a new low. Bank Nifty, it did not make a new low on a closing basis. Bank Nifty did not make a new low. In fact, the breadth of Nifty was quite positive. 32 stocks did not make a new low. Only 18 of them made a fresh lows as compared to the previous bottom of 24th Jan. And Prashant, was mid and small cap where the panic was this time around. We did not see IVs of Bank Nifty and Nifty going up, but then mid cap Nifty IV was up until up to 31. And historically, if you see of past 2 years, that has been the upper end of the range, and that's reversing now. And that is where we are seeing mid cap Select Nifty or the mid cap Nifty, small cap Nifty, all of them are bouncing back. So I think that the pain out there was there, the panic was there, and we are seeing a rebound there. It was just Nifty IT Pharma which created a pressure today on the index. Else, Prashant, I think 22,600 on a closing basis on Nifty. If those levels are held, there's a fair chance that Nifty bounce back to 23,500 at least until the end of February.
Okay, all right, Jay, got that. Thanks very much. We will go to our next guest in just a bit. Amrish is also with us, but let's talk about some of the interesting stock movers today, and one of them definitely was the new listing, or shall I say relisting. I'm talking about Hexaware. It was a good homecoming for Hexaware. This is a company that exited the market, delisted in 2020, but decided to list again. And that listing happened with a gain of almost 8% today. This is despite, of course, slightly muted subscriptions to the issue. Vamakshi is here with more details on Hexaware, their business, and how they stack up compared to some of the peers. Vamakshi.
Well, absolutely, Surbhi. A good comeback, right, for Hexaware today. When we look at the issue price, that is at 708 for the share. The company listed at 745, and throughout the course of the trading session, the stock was up and away. The stock is performing much better than expectations, especially after the grey market premium was rather flattish. Overall subscription was also rather muted at 2.66 times. Let's also understand how Hexaware stacks up against some of its peers. Now, Hexaware is most comparable to Persistent as well as Coforge. The first factor being that because all of these companies are mostly similar in size, and the second factor is that these three companies have been outpacing the growth that the rest of the industry has been seeing. Now, Hexaware, when you talk about the valuations, trades at a discount. Hexaware is trading at a 28 times 1 year forward multiple. This is at a marginal discount to Coforge, which is at 30 times, but it has coming in at a significant discount to Persistent, which is at 38 times. Now, it is also at a premium compared to the rest of the mid-cap IT pack. The reason reason Hexaware trades at a discount to Persistent as well as Coforge is because both of these companies have actually managed to grow faster than Hexaware. When we look at calendar year 23 revenue growth, Hexaware saw an uptick of 12.8%, but the growth in revenue was much higher for Persistent as well as Coforge. The market cap for Hexaware is also lower than Coforge and Persistent. Now, let's also understand something about the company. The company said that they're confident about growing faster than the industry. They've also reduced their dependence on some of their top clients. But a key risk key risk for this counter is the stake sale that could maybe take place in the future of PE promoter Carlyle, and they currently own nearly 74.5%. So, given those factors, Hexaware was in focus today.
Okay, all right, Pamakshi, thanks very much. Let's go to Amrish with this. Amrish, I don't know, I mean, if you had a look at the company recently when this issue was coming back, but what do you think? How might it stack up against some of those mid-cap IT names?
No, I mean, see, if you look at the valuation, I don't think the sellers, left anything much on the table for the IPO subscribers. So clearly, I mean, it was not expected to have a great listing as such. But I think, they're quite fortunate that they've been relisted on a day when the advanced decline ratio, became about 4:1. So I think that's what played in its favor, and we have seen close to a 7-8% sort of a hike from the issue price. But do I expect this to continue and moving up much more from here? I doubt, because even at these levels, like I said, it's quite steeply priced. So I really don't see much of an upside. Maybe at slightly higher levels, in case it goes to 790, 800, we could see some selling coming in from the subscribers who clearly would be getting much better than they would have expected.
Absolutely, got that. Let's actually listen to the CEO of Hexaware on what he sees as the company's growth outlook.
In our case, manufacturing accounts for just about 16%. That's the industry that gets first order impact from tariffs. For us, 84% of business has no first order impact from tariffs. So actually, we are quite bullish about administration policies on our overall demand. We continue to remain bullish that we will outgrow the industry quite a bit. I think demand for us at this stage, I will describe it as secular across all of our industries, except for manufacturing and consumer. And frankly, I think that was before the Trump era threat of tariffs. And I think tariffs will potentially or have the potential to make it slightly worse. But I'll say outside that pocket, our demand is secular.
Okay, demand is secular. So that's essentially what investors, I guess, want to hear. Now, the insurance regulator, IRDAI, has formed a committee which will recommend changes to the amendments to the Insurance Act. Right, so this is now going to get more delayed, I guess. Sources tell my colleague Yash that this committee will be led by former SBI Chairman Dinesh Khara. Yash, quickly take us through what you're learning.
Well, Prashant, it's the same story which is getting repeated again. And so many times it's happened just when you're, when I say when you, means the industry thinking that the insurance amendment bill is closer to its approval in the parliamentary session. There's something which comes up, indicating a further delay into it. The same things happened this time again. Just when we thought that it could be taken in the next parliamentary session, the insurance regulator has formed a new committee. This is a 7-member committee which the regulator has formed. And this committee is tasked with the responsibility of giving their individual and independent views in terms of, the Insurance Act amendment and all the changes that it's expected to get as far as the insurance sector is concerned. As I said, a 7-member committee headed by former SBI Chairperson Dinesh Khara. It will have representations from various sectors. N.S. Kannan, the former MD and CEO of ICICI Pru Life, will be a part of it. Girish Radhakrishnan, the former CMD of United India, so representation from life and general insurance industry. Rakesh Joshi, former member IRDAI, so regulators representation. Saurabh Sinha, former ED RBI. Alok Mishra, MD and CEO MFIN, and finally L. Vishwanathan, legal expert, would be a part of this committee, and they would be giving their views expected in the next 2 to 3 months. once those views are submitted with the regulator, that is the insurance regulator IRDAI, IRDAI would submit those views with the Department of Financial Services or DFS, and then the DFS will take a call whether the views are very, very different from what came before, and do they need to issue a new consultation paper, or can they just strike out things which do not find a consensus and keep the things which find a consensus from the old consultation paper itself.
Okay, all right, Yash, thank you very much for that. So that's insurance stocks in focus. Again, the waiting perhaps period gets a little longer, not for the policies, but I'm talking about the waiting period for more clarity on this insurance amendment bill. Well, with that, let's move on and talk about the defense space, because defense stocks had a nice, strong rally today in trade. Upasana is looking at a deep dive into how much the valuations have cooled off in this market correction and where the earnings are actually still spelling a good picture. Upasana.
Well, certainly, Surbhi, defense stocks rallied in trade today after the steep correction. Now, let us look at the decline from the recent high and valuations in terms of one-year forward PE. First up is Bharat Dynamics. The stock was down 41% from its recent highs, trading at 37.2 times one-year forward PE, followed by BEL, which is down about 26 times, trading at 33 times its one-year forward PE. BEML is also down 52%, trading around 25 times. Cochin Shipyard is down 56%, trading around somewhere 27.6 times. HAL is also down about 41%, trading around 26 times one-year forward PE, followed by Mazgaon Dock, which is down 27%, trading around 24 times one-year forward PE. Zentech is also down 60%, trading around 24 times. And lastly, Data Patterns is down 58%, trading around 32.5 times. Now, let us look at the Q3 results of these companies. And one of the common trends that we are seeing is the strong revenue growth these companies have reported, but margins are under pressure for the most of the defense companies. But companies are retaining their FY25 guidance. Now, let us look at Bharat Dynamics Q3 result. The revenue was up 38%. Numbers were a big miss in terms of margins, but revenue was above estimates. Now, BEL, strong growth reported by the company. It was a beat across the board, and company has maintained its margin guidance between 23 to 25%. Next up is BEML. The company is confident of achieving revenue growth in FY25 despite reporting a revenue degrowth of 16% in Q3. Cochin Shipyard, the numbers were weak in Q3. This was mainly dragged by company's shipbuilding segment. HAL, the margins were lower due to execution challenges, while the revenue is up 15% and margins up 40 basis points, but the margins are lower than the street estimates. Now, Mazgaon Dock, company is guiding for a revenue growth of 10 to 12% in FY25 and FY26, and revenue also stood strong, revenue growth of 33%. Zentech, revenue up 53%, and company says that it is on track to meet its FY25 revenue guidance of 900 crores. And lastly, Data Patterns, revenue is down about 16%, margins up 320 basis points, and company sticks to its FY25 revenue growth guidance of 20 to 25% and EBITDA margin guidance of somewhere around 35 to 40%. So all in all, defense sector remains in focus, and commentary also from these companies remains quite upbeat, retaining their FY25 guidance.
All right, Upasana, thank you very much for that. So that is defense, right? I mean, it's one of those first sectors which peaked out. And today, for the first time, we saw across-the-board buying in that space. Jay and Amrish, thank you very much for joining us. Shorter conversation today, but appreciate your time here as always. We head into a quick break. We'll just leave you with the soundbites from Sridhar Sivaram of Enam Holdings. He thinks this year is going to be tough. We also had Pratik Gupta of Kotak Institutional Equities, still saying mid-cap, small caps are trading at elevated valuations. We're back on the other side.
25, there's a lot of uncertainties, and Trump is being just one of them. So what happens to tariff, how that plays out in the market. I think currency is the other issue, how our currency plays out. And my fear is that the currency can take the market up or down. If we have a stable currency, then the markets can be stable. If we have a volatile depreciating currency, if China does anything. So many variables. So in my view, 25 could be sort of the negative year we haven't had 8 positive years, and it's highly possible that 25 is the year where we get negative returns. Micro will dominate. Macros are not very favorable. Let me put it that way. Years we had significant outperformance. That has reversed in FY25. We think that FY26 numbers could also get revised downward because there is some slowdown in consumption. We saw the FM also using the budget to boost consumption. So there is some slowdown in consumption. So gold has matched stock returns over a very long period of time. So I'm not so worried about what happens in the short term. It's an asset allocation. I'm still very bullish.
The earnings side, we're still somewhat conservative. We think we'll see modest earnings downgrades. At Kotak, for the Nifty, for example, we are projecting about a 15% earnings growth for the Nifty in FY26 and another 14-15% in FY27. We think there could be some modest downgrades to FY26 earnings estimates. As far as the market as a whole is concerned, I think the large cap space, we think there is value emerging over there. That's a segment we typically like. We don't see too much downside over there. But the small and mid caps, by and large, and there will be exceptions, but by and large is still trading at expensive multiples, the small cap index in particular.
India and the Gulf Cooperation Council, we are at this moment negotiating about having a free trade agreement. As far as Qatar is concerned, both sides are exploring the possibility of signing a free trade agreement in future, and that was one of the discussions that took place in this round of talks. As far as the strategic partnership establishment agreement is concerned, it actually elevates the present state of bilateral relations to a strategic level. What we are looking at is deepening cooperation in the fields of trade, energy, investment.
Welcome back. Let's, get you some of the key corporate voices that we picked up during the course of the day. First up is NHPC. The company's management is guiding for a capex target of 13,000 crore rupees in FY26. The company adds that in coming years, it will attain a capex target of 14,000 crore rupees. Commenting on the renewable energy arm, the management says that it's all set to launch the IPO of this arm in the next 2 years. Next up, KIMS Hospital. Management expects Q4 to improve for KIMS Sunshine. It expects the number of beds to increase to 5,300. This influx of new beds is expected to boost the company's revenue in coming years.
All right, well, that's a management commentary. Before we wrap, let's get you a quick list of things to watch out for as we come back tomorrow. Vinny standing by with that. Vinny, over to you.
So firstly, we'll watch out for the Nifty weekly expiry that is tomorrow. Maybe we could see some bit of a volatility on the back of that. Global markets, what are we watching out for? US initial claims, that's important data point from the US. In China, the loan prime rates are important, as well as in Japan, the inflation rate that will be coming in early in the morning. So first thing, maybe we would see Asia reacting to that. Other than that, global earnings, we're watching out for Standard Chartered's earnings. And on the domestic front, we do have CIE Automotive that will be reporting their Q3 numbers. Lastly, do not forget, tomorrow is going to be Delhi CM announcement that will be coming in, and he'll be taking the oath. So keep an eye out on that.
All right, short and sweet. Vinny, thank you very much for that. Well, it's a wrap of this edition of Markets Forward. We are back with more news and updates on the other side. Stay tuned.
as well as in the regional and international fora. As you know, within the GCC, India has got signed strategic partnerships with UAE, Saudi Arabia, Oman and Kuwait.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Yet another volatile session on Dalal Street ends with marginal losses for Sensex and Nifty, but financial, mid-caps and small caps buck the downtrend with the sharp rally. US President Trump says he expects America's 25% tariffs on automobile, pharma and semiconductors imports will begin in April. Tells Fox News it's unfair that Elon Musk has to build a factory in India to avoid tariffs. Reiterates that he has made it clear to Prime Minister Modi that India will not be spared from reciprocal tariffs. Tesla is likely to drive into India as early as April. Sources say the company is considering importing electric vehicles from Berlin and has already identified showroom locations in Mumbai's BKC and Delhi's Aerocity. Adds that while Tesla has not committed to manufacturing in India yet, it's likely to source components worth $1 billion in 2025. Hexaware Tech returns to Dalal Street on a firm footing. Shares list at a 5% premium to the IPO price. The $1 billion IPO was subscribed nearly 3 times. US President Donald Trump criticizes Ukraine's Zelensky after the latter complains of being excluded from the peace talks in Saudi Arabia. Says Ukraine could have made a deal earlier to avert the war. The US government says both Moscow and Washington have agreed to appoint high-level teams to begin working towards ending the conflict. A top Hamas spokesperson proposes releasing the remaining 6 Israeli hostages in one go and return the bodies of 4 others in exchange for Palestinian prisoners and a permanent ceasefire in Gaza, but rejects Israel's call for its disarmament and its removal from the enclave. Salary hikes this year are likely to be the lowest in 3 years. A survey by On predicts a modest 9.2% increase across sectors. Also says the automobile and engineering design sectors could see double-digit increments. All right, let's start with the market action. Sensex and Nifty ended with marginal losses after a volatile session, but financial stocks along with mid-caps and small caps bucked the downtrend. Nifty Bank Index was up 1%. The mid-cap and small-cap index fared even better. Prashant Nair is here with a market wrap.
Well, once again, like yesterday, one has to say it was a good session, although it didn't show up very much as far as the Nifty goes, which was absolutely flat by close. Now, the Nifty Bank was much better. It actually picked up pace in the last 30 minutes of trade. When we started at 2:30 last hour, the Nifty Bank was up 0.5%. It ended about 1% higher through the course of the day by 3:30. And of course, broader markets even better. Small cap index, almost 2.5% gains in the small cap index. It was the sole loser yesterday, while the rest of the market did see recovery. So today it made up for that. Mid caps also ending higher, but underperformed what the small caps did. Remember, these are, of course, all just recoveries we are seeing for the very first time in a strongish kind of way after many, many days of lower markets. Now, what was up on the Nifty? BEL was number one. There was Hindalco and Aisha, which were higher as well. On the downside, there were names like Dr. Reddy's, there was TCS, Infosys, and HUL, which ended lower as well. Strong market breadth. I'll start with what was higher in the broader market. So defense names, Mazgaon, Garden Reach Shipbuilders, Data Patterns were some of the names. The number one volume-led gainer on the NSE was Bombay Stock Exchange, which is back above 5,500. Tata Investment Corporation, again, a capital market play. It was up strongly. It was up 15%, but ended slightly off that level. Swiggy was another consumer name, along with Zomato, which did well. RVNL, AG's Logistics, KRN Energy, Reddington, PG Electroplast, Minda Corp, BKG, Goldian, and Tar GVK ended about 20% limit up as well. So lots of action as far as single stocks go. On the downside, Godfrey Phillips, nothing very large. Adani Green, Credit Access notably was down 7%. So that was a big volume-led cut today. And a Senco, which had popped 5% higher, gave all of it back today with about a 5-6% cut. But all in all, very strong market breadth, and that really is what matters for portfolios. And one hopes as we get into the fag end of this week over the next couple of days, the repair and recovery continues. Back to you.
Thank you, Prashant, for that. Gold prices fell as investors booked profits following after the yellow metal's recent record-breaking bull run. Now, safe haven demand also eased amid talks between the US and Russia to pause the conflict in Ukraine. Onto the energy markets, where crude prices edged higher. This after oil flows through the Caspian pipeline consortium were reduced by 30 to 40%. Disruptions in US oil supply owing to cold weather conditions also weighed on prices. Right, US President Donald Trump's tariff threats continue. This time, he wants to impose tariffs of 25% on automobile, semiconductor and pharmaceutical imports. Trump said he will most likely make the announcement on auto tariffs on April 2nd. Indian pharma stocks, including Dr. Reddy's Laboratories, Lupin, Zydus and Cipla, slumped in today's trade. The projected tariffs will hurt Indian drug makers who sell over 38% of their exports in the United States. India currently imposes a 10% import duty on US medicines. If Trump imposes a 10% duty on India's exports, Nomura says it could erode FY26 earnings estimates of some of these companies by 6.5%. Granules, Gland Pharma and DRL have the highest exposure to the United States, with the country accounting for over 50% of the revenue. Here's more on what Trump said about his plans.
Donald Trump has played his next move on tariffs. The US president said Tuesday that he would impose levies of about 25% on imported cars. and similar duties on drugs and chips. Trump says his action on tariffs is already producing results.
I do want to say while I'm up here, I've been contacted by some of the biggest companies in the world. And because of what we're doing economically and through tariffs and taxes and incentives, they want to come back into the United States. And we'll be announcing various very large companies, the biggest actually, and they'll be coming back having to do with chips and having to do also with cars.
Trump also said more details on the auto tariffs would come on April 2nd, a day after cabinet members are due to report to him on options for new measures. He has long complained about what he sees as unfair treatment of US automotive exports. The EU, for example, imposes a 10% levy on vehicle imports, or 4 times the duty imposed by the US. However, Washington collects a 25% tariff on most imported pickup trucks, protecting a lucrative part of the market for domestic makers like Ford and Chevrolet. Trump says tariffs on drugs and chips will also start at 25% or above, and then go substantially higher over the course of the year. He didn't set a date for starting those levies, saying he wants to give pharmaceutical and tech firms time to set up US factories. Since his inauguration a month ago, Trump has stacked an extra 10% tariff on all imports from China. He's also set a March 12th start date for tariffs on imports of steel and aluminum. And while he has postponed measures targeting Mexico and Canada, he's also told his team to draw up reciprocal tariffs matching those imposed by all trading partners.
Right, Trump has reiterated that he will not spare India from reciprocal tariffs. In an interview with Fox News, Trump recalled a conversation that he had with Prime Minister Narendra Modi at the White House last week. Trump said that he told the Prime Minister that US will charge whatever India charges. Trump claimed that India charges the highest tariffs in the world and the import duty is 100% on cars. Trump said, and I quote, "It's impossible to sell a car practically in India. He can argue with me," and reiterated that India will face reciprocal tariffs starting April. Electric car maker Tesla is looking to enter into the Indian market by starting retail operations by April. Sources have told CNBC-TV18 that the company is considering importing its electric car from the Berlin plant. We've also learned that the company has identified 2 showroom locations in Mumbai and Delhi. Parikshit Luthra joins us now with details. Parikshit, what will be the impact of Tesla driving into India on the auto industry at large?
Well, lots been spoken about Tesla's India entry, but let's put things into context for our viewers. Total electric car sales in India in 2024 were around 100,000 units. Tata Motors was the biggest player with over 61,000 units sold of cars costing under 22 lakh rupees. JSW, MG Motor, M&M, BYD, Stellantis were other players selling EVs at a price point under 30 lakh rupees. 95% of total electric car sales, or 94,000 units, were for cars costing less than 25 lakh rupees. The EV market over 35 lakhs price point is small, with BMW, Mercedes, Hyundai, Volvo and Kia being the major players, and this market was just 3,700 units strong, or 3.7% of the total EV market in the whole calendar year 2024. Overall, electric car sales could double in 2025 to 2 lakh or 2.5 lakh units. Launches by Maruti, Hyundai will increase the EV market. JSW, MG Motor, M&M will ramp up their EV play in the premium electric vehicle segment. Mahindra & Mahindra is looking to sell at least 50,000 units of BE6 and the XEV9e in 2025. JSW, MG Motor is launching the Cyberster under 1 crore rupees. Now, according to Indian industry sources, Tesla's main competition would be from M&M and luxury players. The BE6 and the XEV9e are priced between 26 to 30 lakh rupees. And Tesla may launch in India at a price point of rupees 39 lakhs if you include the 70% duty structure, or 49 lakhs if it goes for a higher variant. BMW iX1 is the most affordable luxury electric SUV right now at a 49 lakh rupee price point ex-showroom. Cost of other luxury electric cars is over rupees 60 lakhs. As per some estimates, Tesla may see initial sales of 10,000 cars per year at a 39 lakh rupees price point and 5,000 cars per year at a rupees 49 lakh price point. So why is Tesla yet to make up its mind on manufacturing in India or making in India? Well, here's the most possible reason. Tesla sold around 1.79 million units in 2024. The company's global sales fell by 1% over 2023. Tesla has been offering several discounts to woo buyers, not just in America, but in different geographies. China's BYD sold 1 January this year. India is offering them a 15% concessional duty rather than 100%, but Tesla must commit $500 million in manufacturing in India and must also generate 7,500 crores in revenue by the 5th year of operations if it applies and gets this 15% concessional duty. This is what many familiar with the company's strategy are telling us. Tesla has to also consider when it can actually break even or become profitable after investing in India. After all, $500 million is not a small amount. The company has already plants in US, China, Germany, and the plant in Berlin cost them around $5 billion just in 2022. Then, Donald Trump has now urged companies to make in America rather than other nations. In fact, he told Fox News that Musk can manufacture in India, but that would be very unfair to America. So clearly, starting sales by importing cars is the easier option for Musk rather than immediately committing to manufacturing in India.
All right, thank you, Parikshit, for that update. And staying with trade relations between India and the United States, the Commerce Ministry has scheduled an inter-ministerial meeting today to discuss trade ties between the two nations. Sources have said that the meeting is being held to seek inputs for the multi-sectoral trade deals with the US. We've also been given to understand that US Commerce Secretary and Indian Commerce Minister Piyush Goyal will meet soon. United States Securities Market Regulator has reportedly sought help from the Indian government in its probe against Gautam Adani and his nephew Sagar Adani. This investigation is pertaining to the alleged securities fraud and $265 million bribery scheme. A report by Reuters has suggested that SEC said that both Adani and his nephew are located in India and hence it requires seeking assistance from the Indian government. Right, coming up next, salary hikes this year are likely to be the lowest in 3 years. A survey by AON predicts a modest 9.2% increase across sectors.
With Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Mood is definitely a lot more downbeat, a lot more cautious, circumspect, although nonetheless, given how stock prices have fallen in the last few weeks, there is a lot of interest in checking if this is the time to buy or there's more downside. In some cases, investors meeting their portfolio companies, just trying to figure out what the outlook is like. As far as the Trump tariffs are concerned, yes, we agree with you, and that is one of the reasons why I guess globally we're seeing a bit of a slowdown. When there's uncertainty, typically businesses tend to pull back. They hold back on their investments, their expansion plans, and that actually is the bigger damage than perhaps the direct impact of the Trump tariffs. You know, there could always be some walking back, or there could be renegotiations, and one day there are tariffs, the other day they're postponed. So those kind of things keep happening and will likely keep happening. We will live in a more volatile world.
In the event that there is some sort of ceasefire between Russia and Ukraine, peace settlement down the road, what does that mean? That means...
Welcome back. On to a CNBC-TV18 exclusive. MobiKwik co-founder Bipinpreet Singh says Indian regulations in the fintech sector can become like a big black box for investors. Speaking with Shireen Bhan, he also added that India hasn't even scratched the surface in terms of becoming truly financially inclusive. Speaking with Shireen Bhan, co-founder Upasna Taku also revealed that they had to defend the Indian fintech sector first and then the company during their IPO roadshows.
You know, when you're sitting here in Delhi or Bombay and we are passing regulations and or taking action, we think positive or negative, we don't realize that the people who look at companies like us, whether it is private or public, how they think about these decisions and what they understand and comprehend, because it becomes like a pretty big black box where the clear conclusion for a lot of people is maybe the regulators and the government don't want fintech.
Which they've clarified, to try and send out the message that no, that's not the case. That
but
we do
the
want
actions
to support
that
and
take place, the actions that take place actually point to the contrary, right? For many of them, and then it's hard to justify that actions are against certain entities only, and it's not against a particular sector. But the media blow up that results from that. See, somebody sitting in Singapore, I met, a very, very big Swiss bank. We were talking to them earlier in our roadshow. I spent 1 hour with that analyst, a very well-respected analyst, just discussing what does the regulator want. And it was not about MobiKwik. He didn't spend 1 minute on MobiKwik, and I had to educate him, saying that this is what is happening. It's because I think there is a gap in the communication, and that gap, has to be closed. Because fintech as a sector, I still see as a sunrise sector, but with this kind of environment now, if you see who is investing in fintech, whether it is private companies, is not the preferred sector for investment. But India needs billions of dollars in investment in fintech to make the dream of truly inclusive finance happen in India.
I want to tell you that we met many 1,800 investors in our roadshow in October, November last year. Typically all these meetings are 1 to 1.5 hours. In most of these meetings, first we were defending the sector, fintech India. Then we are defending, our segments of business within that, and then we are defending our own numbers and our competitive position.
Well, appraisal time is around the corner, and if we were you, we will sum up the Aon survey by saying you should not get your hopes too high. The survey reveals that salaries will increase around 9.2% this year. That's a marginal decline from last year. The survey analyzed data from over 1,400 companies across 45 industries. Shivani joins us now. Shivani, which are the sectors that are expected to top the chart this year?
Well, yes, salaries in India are set to grow at a slower pace next year. According to Aon's latest survey, Indian companies are expected to hike salaries by 9.2% in 2025, slightly lower than 9.3% in 2024, marking the third straight year of moderation. Salary growth has cooled from 10.6% in 2022, reflecting margin pressures and a cautious business outlook amid global uncertainties. Sector-wise, auto and engineering design services are set to lead the pack with projected hikes of 10.2% in 2025. While the banking sector is expected to see the lowest increase at 8.8% average. The technology sector, once the star performer, is likely to see salary hikes of just 7.7% next year, the weakest across industries. Real estate is also losing some steam, with projected increments easing to 9.7% from 10.6% last year. Meanwhile, companies are holding on to their workforce. Attrition rates have fallen from 17% to 17.7% in 2024, down from 18.3% in 2023, and significantly lower than 21.4% in 2022 following the Great Resignation time. The survey says that India's economic prospects remain stable, but geopolitical tensions, global trade shifts and a rapid rise in AI are making companies cautious, prompting a sharper focus on talent retention, workforce skilling and cost optimization. Back to you.
Right, thank you, Shivani, for that. The stakes will be high when India faces Pakistan this Saturday in the ICC Champions Trophy, not only on the field but off it as well, with online betting applications bracing for a rise in activity. The rise of such platforms in India have also given users an opportunity to bet on the outcomes of questions that go beyond the world of sport. Ashmit Kumar is here with more. Ashmit.
Today marks the beginning of the ICC Champions Trophy, and that's important not just for cricketing aficionados, but that's also important for a very large and wide online gaming and betting space. And betting and gambling is the key word here. That's the big concern, especially since there are reports which seem to suggest that these betting and gambling activities spike whenever there's a large cricketing tournaments like the Champions Trophy, and more so in case of the India-Pakistan match. That's always a big draw. February 23rd, that's the key day, and there's an anticipation that there will be a spike in these online betting and gambling trends come that India-Pakistan match on February 23rd. And the newest kid on the block that is in fact being a part of this, these online activities are options, are opinion tradings. Now bear in mind that these opinion trading platforms or opinion trading applications, they essentially provide questions in a yes or a no format. So for instance, the question that could come up on one of these platforms come the India-Pakistan matches, who's going to win the match, and then there'll be a yes and a no option, and that will allow users to come online and then subsequently place their bets on either yes or no. Now, this is something that many experts say falls foul of the IT rules. Now, bear in mind the IT rules do not allow intermediaries to host betting or gambling applications. In fact, very clearly, the IT rules define wagering and betting to be a case of betting on an outcome, which this clearly appears to be. In fact, very recent reports as to how far and wide these trends are of online betting and gambling. A recent report by the Rashtriya Raksha University points out that as way back as 2003, the online volume that were being seen was to the tune of 3 lakh crore rupees. By 2017, this grew to about 10 lakh crore rupees. And more recently, the run rate that we are seeing is to the tune of around $1 billion every month. That's the strike rate that you have, almost 9,000 crore rupees in deposits by users at these online betting and gambling platforms every given month, and this subsequently leads to heavy tax losses as well. Further, what's important is that there appears to be a regulatory void. This very same report points out that state legislation does not deal with online betting and gambling, that the central legislation, which in this case happens to be the IT Act, has very limited powers. There's no dedicated legislation, there's no dedicated regulator. These betting and gambling provisions are not a part of scheduled offences under the PMLA, and these in fact are some of the recommendations. So clearly, the concerns being cited by multiple stakeholders with respect to betting and gambling, and more specifically with respect to opinion trading online.
All right, thank you, Ashmit, for that. With that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
On Russia come off, and that probably brings Russian oil supplies up quite considerably, and that's going to put downward pressure on the oil price. So I think oil is going to stay quite soft over the next several months, and that will obviously be helpful for Indian inflation. Trump is on this tariff gig now, reciprocal tariffs, if you want, if you like, where he's saying, you know, if countries overseas have got high tariffs, which India does have, well, we're going to put high tariffs on their imports as well. Now, it's been the case for many years, as you will know, that developing countries trying to build for the future from a low base, very often do try to protect their infant industries, which is a classic economic argument, with tariffs. It's always been the case that poorer countries, developing countries, emerging markets have higher tariffs, than developed economies. And I think that, you know, it is what it is. I'd be very surprised if India is absolutely right in the forefront of this reaction that Trump is coming up with. I think he's focused a bit more on other countries, frankly. But yeah, he has mentioned India, so we have to watch it.
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India's sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing $30,000 or 26 lakh rupees in America, and Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in
Let's talk money.
Hello and welcome to this week's edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Women and money. It's an important issue. Sometimes it can be a tricky issue. But today we are here to explain why this issue goes well beyond just the money you have in the bank. It's about liberation. It's about the freedom to pursue your dreams and the confidence of having financial security, which enables you to face all sorts of potential life situations. Yes, ladies, we need to talk money. And joining us to do that today are Suranjana Borthakur for Mirai Asset Mutual Fund, as well as Mrin Agrawal of FinSafe India. Ladies, thank you so much for joining in. Great to be sort of speaking to both of you. We have Suranjana right here with me in the studios, and Mrin is joining us all the way from Bengaluru. So welcome to the show. And three women talking about why more women need to talk about money. This is an interesting one. Opening thoughts, Suranjana. You've been in the financial services business for a long, long time. You're talking to a lot of clients, I'm sure. So where have we reached in the journey of more financial awareness and more control that women are willing to take on their wealth and finances?
Hi, thanks, Surbi, for having me on this show. I think the journey has started, and I would say a lot of trends are changing in the mutual fund industry now. You know, if you see in terms of participation of women, earlier it used to be much more limited, and people would also have apprehension in terms of, starting off with the journey. I would want to say one thing that, whether people are working or not working or, dependent on someone, it should not be, financial dependence should not be confused with financial, literacy or ignorant. Being ignorant is not what is okay. You have to be able to upgrade yourself. A lot of times the journey of women in India have been where there's some untoward event that happens, or they lose some loved one in the family. That is when they suddenly get aware and suddenly start, really learning more about finance. Maybe that should not be the journey. The journey should start early. You should start getting involved in financial conversations at home. Whenever, whatever assets, liabilities, debt, whatever is there in the household should be a thing which needs to be discussed by both parties, the men and the women. And once they do that, it is also important to have certain assets in the woman's name. I have had situations where I have heard from friends who, went through a divorce situation and they knew that all the investment is in the man's name. And, it was a discord which could not be resolved, and which is where this lady had to start from zero, which is something which can be very hurtful. So it is important to have assets in your name. It is important to know about the documentations. A very basic part of the journey is knowing about the bank accounts, knowing about your insurance, knowing about how do you go about, taking care of things if somebody is not there to help you. It's also important to actually understand that, when you build for the future. You do not just build for today. You have to know that if you're saving up for your retirement, for your child's education, for your own, whatever you want to do in terms of your journey. It's a long-term thing. And also to keep probably reviewing things, while you are doing that. It's also when you identify your mistakes and then you correct them and then relook at it. It's a very different way.
I think you gave us a very powerful headline to begin with. And this applies to a lot of women who are not earning. Maybe they're sort of, dependent on, the members of the family, their husbands, spouses, father, brother, someone else, perhaps a sister. Financial dependence does not equal financial illiteracy. Just because you're financially dependent doesn't mean that you can be okay by being financially illiterate. That's a very powerful statement. And thank you for putting that on the table. Marin, I know you folks were also doing, I think, a survey amongst a lot of people that you work with, women that you work with. Can you tell us if anything interesting came out, and what are you seeing around you when it comes to women taking more ownership of their finances?
So good evening, Surabhi, and it's lovely to be on the show today. I do see more and more women. So in my last, I would say 29 years of journey, 20 years of being an advisor and then being an educator, I would say that a lot has changed in the last 5 years, where women are taking more interest in managing money, I would say prioritizing it more, because they understand that at the end of the day, you need money for everything, right? So that's a good thing. But again, of course, I would still say that a lot of the typical investor mistakes that we see are still happening. But the good thing is that women are slowly prioritizing money management. And one of the surveys that we do on an annual basis is among working women professionals. And one of the findings of that survey was that 68% of the women actually said that they're not sure if they have enough for financial needs. And then a lot of women were also very worried whether they have enough for emergencies. So I would say that while these worries exist, the good thing is that people are thinking about it and want to do something about it.
Absolutely. We've got that chart up on the screen right now. So, I mean, the issues that dominate women's mind when it comes to their own finances is a good thing. At least they're thinking about it, right? So saving for life goals, saving for emergencies, these are some of the top priorities that women have spelled out. And we are here to try and sort of answer some of those questions and help you get to those targets. So, let's break this down to make matters a little simple. Between women who are earning, so they're dealing with their own money, and those who are not, so therefore they're part of maybe the family wealth, or like I said earlier, could be dependent on others for their, financial goings on. So starting first, Mrin, with the former category. Now we're talking about women who are earning. What are the bare basic house rules that you would like to put on the table when it comes to just taking ownership and not overlooking things that can be very, very important later on in life?
So the first thing that I would say for women who are earning, please do not equate financial independence with economic independence, because a lot of times I see that women feel that we're earning money, so we're financially independent. No, if you're earning money, it's great, you're supporting yourself, but financial independence is really about having enough to meet all your financial goals and all of your expenses, right? Now, in order to get there are a few basics that you need to keep in mind. And, I would say that today we really need to work backwards and work on these basics, because what I'm actually seeing is that there's so much focus on what fund to buy, what stock to buy, that we've forgotten the basics. So the basics is really about having a budget. And I know it's not the most interesting thing to do in life to budget, but it is important to do so. And it's very important for you to track your expenses, because, one of the focus areas needs to be about putting the right amount into investing. So everybody is investing, but are you actually investing the right amount? And I would say that right amount is 30 to 40% of your take-home income, right? The second
The reason I'm laughing is that a lot of viewers, including, the younger viewers, even middle-aged viewers, will say, what is Mrin saying? 40%? But we're going to come to that math. I know you have an example, and we'll come to that, because that investing point is really important. But actually, Mrin, allow me to club a viewer query with this question, because we're talking about independent earning women. So there's actually a question that's come in. So let me throw that back at Mrin to answer. This is a query from one of our viewers, Asha. She's 33 years old. She's written to us on Instagram, and she says that, I'm a working woman right now. I don't know about my next life choices. I'm not sure if I remain single or what happens. But please tell me the basic steps which will help me build a secure financial plan. So, Mrin, there you go. Now, here is Asha. She's asking you exactly that question that you were talking about, that earning is not equal to financial independence. But Asha actually wants to get there. How to get a robust financial plan going. So please continue.
Okay, so first is, of course, do the budgeting and ensure that your loans are limited to 30% of your take home, and you try to save at least 30% of the take home. The second thing is that you need to ensure that you have financial security, and financial security in form of having an emergency cash, which has 6 months of expenses, and having enough insurance. So again, Surabhi, it's very commonly seen that everybody has life insurance and health insurance, but is it the right amount, right? So two things, what I would say is that please focus on health insurance in a very big way. Our own survey found that a large majority of women had not thought about what's going to happen to their health insurance in case if they decide to stop working, right? And in today's environment, given the medical inflation and giving the medical expenses, I would say that you need to have at least 10 to 20 lakhs of medical insurance, which means that have the employer insurance, but you need to think much beyond the employer provided insurance and have that external cover. Since you're only 33 right now, the cover may not be so expensive. You can look at some of the super topper plans that are available because they turn out to be much cheaper. So this is on financial security. And then, of course, you do need to work on a financial plan based on what your goals are and decide your investments based on that. So, I would highly recommend that you work with a financial planner for that.
Oh, absolutely. Let me come to you, Suranjana, on this as well. Both the categories. Like you mentioned, that even the non-earners, they need to take more ownership. But even for the earners, what are the basic house rules that you would want to put on the table as a finance professional?
See, I would like to put across a thought that I think, firstly, women need to have a mindset change. I think what happens with women is they think this is not their job. This is something that they're not good at. And I think this is a lot to do with the social fabric that we come from. I think we, as a country, we have evolved from, joint families where having a conversation about money was not the most pleasant thing. Women used to feel that if they have a conversation, firstly, they're ill-equipped and they don't have enough information, and men do the job better. Or they also feel that there could be a certain level of mistrust that could build in if you talk too much about money. So dinner table conversations were never about money, so which is where we come from. Yeah. But now things are changing. People are actually saying that I notice one thing which happens, a number of women investors may go up, but a lot of times the decision making is not done by the woman. It's actually, like you mentioned, the father or brother or spouse, somebody who's taking the decision on their behalf. But women are actually taking so many important decisions in life. They are actually, there's a survey which says that 80% of decisions about children's education is taken by women. 70% of all household decisions are taken by women. In fact, women are doctors, lawyers, corporate honchos. They take so many important decisions, but when it comes to finance, they sort of take a back step. So I think firstly, the thought needs to change. That once you can actually start thinking how you take control, you can actually look at the space very differently. But when you start with the journey, I think it's very important that you start with a learning. Like what Mrin also mentioned, the fact that you have to be aware of what the budget is, how you want to manage very basic things like budget, saving and investment, the difference between the two. A lot of people are not really thinking through it. It's also important to start small. A lot of times people feel that I don't have enough money to invest, so I'll invest when I do have the money. But it's not about the quantum. It's about starting small and starting early. It's also about professional guidance. A lot of times, in fact, survey says that women are more akin to taking advice from professionals. They actually believe friends, family also, but advisors are a great way of, going for women. So that is something, again, they can think of. I think for women, community learning or, actually women coming together and discussing their issues and actually helping each other learn is something also which is very strong. In fact, they say that men always look at digital medium or other mediums of learning, whereas women actually go by somebody else's advice. So which is where community learning or camaraderie is something
we love to
that
talk.
we love to talk.
Why don't we talk money? Absolutely.
Exactly. And also, I think it's important that women think long term, because I feel women are more committed when they think of a goal and they think of being disciplined, they actually commit to it. Which is why long term, any plan that they make, when they look at a goal, it becomes much better for them, and then review it.
Absolutely, great points.
Frequently.
Absolutely. So we've set the basic house rules in order. Now we come to the specifics. We'll take a break, and after the break, we prep you up. Whether it's creating a safety corpus, whether it's starting on that investment journey, or the bigger goal, planning for retirement, we've got some solutions for you after the break.
Let's talk money.
There were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year, but cancelled at the last moment. Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk and other EV makers a concessional 15% duty as opposed to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk be able to secure lower tariffs from India without a manufacturing commitment? That remains to be seen. For the moment, what we know is that Elon Musk had a very positive 50-minute meeting with Prime Minister Modi in Washington, D.C., where everything from electric mobility to space cooperation was discussed.
Ranveer Alabadia has been spewing dirt, has shown the dirt in his mind, has been vomiting on air. Why should we protect you? Ominous words coming in from the Supreme Court aimed directly at Ranveer Alabadia post the India's Got Latent controversy. So that entire controversy involving Ranveer Alabadia, Samir Raina, moving to the doors of the Apex Court. The questions we're asking: who's the one who's knocked on the doors of the Supreme Court? What reliefs are they seeking? What did the Supreme Court have to say about it? And what are the reliefs, if any? What are the protections, if any, that the Supreme Court has granted? Well, to begin with, it's Ranveer Alabadia who's knocked on the doors of the Apex Court seeking protection. Mind you, he's facing at the very least 3 FIRs that at least we know of: Maharashtra, Guwahati, as well as Jaipur. And what's interesting is that, and that's an interesting side story, representing him in the highest court of the country. Abhinav put up a valiant argument, a valiant battle here before the apex court, where he argued that he's not at all defending the comments or the conduct of Ranveer Alabadia, but rather he's citing multiple FIRs, that this is tantamount to an abuse of process. Also going on to say that not just Ranveer Alabadia, but even his mother, his associates are beginning to receive death threats, and that is something that requires the intervention, the protection of the highest court of the country. Now, there were two very clear halves to the hearing. In the first half, the Supreme Court absolutely squarely condemned the content as well as the conduct of Ranveer Alabadia. The Supreme Court said that he's been spewing out venom, he's been vomiting, and that this does not call for intervention or protection of the Supreme Court. Further, the Supreme Court went on to say that as far as the conduct itself is concerned, it would bring shame to fathers, to mothers, to parents, to society in general. In fact, the Supreme Court then went on to say that just because Ranveer Alabadia is popular, that is no grounds, that is no reason for him to take liberties with societal norms, to openly flout them, and that this behavior should be squarely condemned. In fact, the Supreme Court did not stop there. It said that the Supreme Court has not been sitting in some ivory tower. It has been, in fact, going through social media. It knows.
Let's talk money.
Welcome back. You're with us on Let's Talk Money, and this week we're talking about how women can get smarter with their money, and it all starts by taking more interest and then taking ownership and charge. Well, now we are going to talk about three stages very, very quickly: creating that safety net, then coming to the investing journey, and then talking about longer-term goals like retirement and give you a sense of how you can go about it. So, Suranjana, let's take step number one, which is having a safety corpus in place. How do you do the math? And then do you leave this money in the bank, or should you go the mutual fund way, look at maybe some debt fund?
Sometimes a trigger is to start when an incident happens. And that is something that we need to really think about. We also need to think about that, you know, when we look at the corpus, we have to have a growth mindset. You cannot have money lying in your savings account, and because that is not going to earn you enough money to be able to build a corpus. It's also important that you actually build a resilience, like building, you know, a corpus which actually takes care of your insurance or takes care of your emergency requirements. That is extremely, extremely important and a complete non-negotiable. It's also important that you review this, whatever you are planning. It's important to have a check in place, and periodic checks will also tell you if you've made certain mistakes and you need to correct them over a period. I think mutual fund becomes a great tool to actually look at. See, essentially mutual fund's purpose is to get everybody's money together and give it to an expert. The fund manager is the expert who's managing it on your behalf. So you don't need to be the expert there. The other thing is that, you know, in India, mutual funds are a very egalitarian solution. It does not differentiate between a large investor and a small investor. So that is something which is very important from a point of view that anybody can start investing. You don't need enough corpus to start. You can start with very small amounts, and then you can also sort of diversify your risk, because there are so many vehicles which are available to invest within mutual funds.
Absolutely. So plenty of options there, and you can start with the funds that are right for you and get the right advice on it as well. Actually, speaking of starting the investing journey, we have a query coming in from another viewer. Shilpa wrote in to us, and she's saying that, and actually it was a pretty lengthy query. For the sake of keeping it short, we've sort of made it a little brief. She's saying that she's actually a homemaker, and she's been investing on her family's behalf for 20 years, and a fair amount of money is in mutual funds. But she says over the last couple of years, she also did a lot of direct stock investing, and now those stocks are sitting on substantial losses. So she's saying, what is a better option? Should I just go back to mutual funds? And how do I look at the whole investment process? Rin, let me come to you with this question and with a broader question as well on, using the right investment approach, both to have a safety net and then to start really creating that big corpus. How to go about it?
With respect to Shilpa's query, what I would like to say is that it's easy to buy stocks when the markets are going up, and it's difficult to own stocks when the market are down. And I think it's a good time for you to really evaluate these stocks as to why you bought them, what did you see in these stocks, and you really, if you can hold them further or not. You probably would need help of an advisor to do this as well. But in my opinion, Surabhi, I always believe that mutual funds are always a better vehicle, because as they say that leave the stock stock picking to the experts. As individuals, it's very difficult for us to figure out what segment is going to do well and where the markets are headed. And, all the information that's available is really not enough to take the right stock decision. So, I would always say that mutual funds are a much better option. And, again, a lot of people get daunted. Like, when you work on these goal planning calculators, you get very daunted by the amounts that come up in these calculators, right? So what I would say that, again, a good way to really look at increasing your wealth. And, again, given the fact that the IWD theme this year is accelerating action, I would say, keeping in mind the accelerating wealth action aspect, I would say a great tool that actually exists today is the step up SIP. Right. And if you're finding it really difficult, like you worked on a goal planning tool and it tells you that you need to invest this X amount and you feel, oh my God, how do I actually do this? The step up SIP is much easier. So I'll give an example. Let's say if somebody does a SIP of 50,000 rupees for 10 years and we are assuming a 12% return. So in a normal SIP, you can expect a value of, let's say, 1.16 crores. But if you say that, I'm going to invest this amount and I'm going to do a step up of 10% every year, wherein I'm going to increase this amount by 10% every year, you're ending up with a much larger corpus of about 1.7 crores, So what I'm trying to say is that, again, move this focus away from saying that I want to get this 15-20% return, right? Focus on two things. One, do you actually have the ability to manage that investment? And two, on the corpus. I think that really needs to be the focus area, for which step-up SIP is a great option.
Mrin, I want to take a step back. That step-up SIP example is great because, the accumulation just really improves, right? The moment you decide to commit more, a little more every year. But I want to take a step back. Your assumption was 50,000 crores going into a SIP every month. Let's take a step back in terms of how much we really need to save. Now we're talking about an average woman who's probably looking at retirement and, probably has goals maybe a decade or two down the line. So now what is the math? Tell us the math, because I saw those numbers that you put out. They look a little scary in terms of how much we need to start saving and investing.
Yeah, so, actually, on an average, Surabhi, I'll say people need at least 6 to 8 crores of corpus. But let's say you're 30 years old today and you've got expenses of 1 lakh rupees per month, which is easily doable in a city like Bombay, right? And you want to retire at 50. So let's also remember that as far as retirement is concerned, the age at which people want to retire is actually coming down, right? So you want to retire at 50, you will actually need a corpus of 11.5 crores and you need to invest 1.5 lakhs every month to actually reach this particular goal. If you assume an 8% return, so I'm assuming, let's say you're just doing the EPF, for example, right, which is the Employee Provident Fund, right? But, if you can add some equity to this now, then the investment amount is going to come down to 1.32 lakhs, right, per month, I'm saying, okay? So hence, what I would like to say is that whatever stage of life you are, it's important to start saving, especially if you can start saving early. Then, you have time to basically build your assets, and you need to have a good amount of equity allocation if you want to beat inflation, because remember, the value of our goals is also very high at this point in time.
Absolutely. Those are some sobering numbers there, numbers to definitely think about. Well, it's helpful. At least it puts us on that thinking track. So, Suranjana, coming to sort of final thoughts and summing it all up, let's say if you were to give the 3 most important tips for women, just, quick checklist, what should they keep in mind when they're planning their finances?
I think most important is to start. The start does not happen. And I think that is where people need to push themselves. There is no requirement of thinking of everything else, all the variables. It is just about taking the plunge. That is the most important. Emergency corpus, like we mentioned, is something which a lot of people don't pay attention to. And that is something, again, which is very, very important. And it's also very important to keep putting a check of what you are doing, rather than just putting some investment and then just completely forgetting about it. While that can have a different result because you are not paying too much attention to the market volatility, but the fact is that you need to have a clarity in terms of what you are going towards, rather than just adding to your investments without a thought in mind. The why is very important, I feel, in investing.
All right, the why is important and starting is important. So at least make a beginning somewhere. Ladies, thank you very much, Amrin, as well as Suranjana. It's been a pleasure having you on the show, and thank you for getting these conversations going. Well, with that, we are out of time. We have to take your leave. It's a wrap on this special edition of Let's Talk Money. Remember, keep sending us your queries, your comments, and any other thoughts that you have. We'll see you again with another theme next week.
Let's Talk Money.
Came not originally from Ranveer Alabadia but from an Australian show, and that this is something that is not acceptable here in India, that such conduct which reflects on society, which reflects on his own thinking, is not something that the Supreme Court will look very kindly on. But having said that, the Supreme Court also said that we have constitutional courts in the country. It is not a kangaroo court. It is not a court of public opinion. And it is on that count that the Supreme Court, taking note of the fact that there have been previous instances of multiple FIRs against senior journalists such as Arnab Goswami, senior journalists such as Amish Devgan, the Supreme Court, keeping in line with that precedent, has granted the twin protection to Ranveer Alabadia after that hearing. Number one, he cannot be arrested, at least as far as the FIRs that have been registered so far. Jaipur, Guwahati, Maharashtra, he cannot be arrested basis those FIRs. Further, the Supreme Court has also said that no further FIRs, at least as far as the India's Got Latent controversy is concerned, will be filed against the person in question, which in this case happens to be Ranveer Alabadia. But there are some tough conditions that the Supreme Court has imposed. Number one, Ranveer Alabadia will appear.
Hello and welcome to News Center. I'm Parikshit Luthra. US President Donald Trump says it is unfair to expect Tesla and Elon Musk to build a factory in India to avoid tariffs. He also reiterated the threat of reciprocal tariffs. US broadcaster Fox News conducted a joint interview of Donald Trump and close aide and Tesla CEO Elon Musk. Trump said he told the Prime Minister that US will charge whatever India charges. Trump claimed that India charges the highest tariffs in the world and the import duty is 100% for cars. Trump said, and I quote him, "It's impossible to sell a car practically in India." End of quote. Sources, meanwhile, tell CNBC-TV18 that Tesla is planning to start sales in India from April and has already zeroed in on two locations, one in Delhi's AeroCity and the other in Mumbai's BKC. Tesla, however, is yet to commit to Make in India. It is likely to source components worth $1 billion in 2025, a number that could significantly increase in the coming years. Donald Trump remains firm on reciprocal tariffs. He expects America's 25% tariffs on automobile, pharma and semiconductor imports will begin in April. Remember, United States is India's biggest pharma market. It accounted for 31% of India's pharma exports last fiscal. Joining me right now are former Commerce Secretary Anup Vadhavan and Jayant Dasgupta, former Indian Ambassador to the WTO. Let me go across to Mr. Vadhavan first. Mr. Vadhavan, what's your sense? Do you think India, which has now begun interministerial consultations on that bilateral trade agreement with the US, do you think there will be some very significant concessions that we will have to give the United States? And which could be some of those early areas where we could have to make those concessions?
Yeah, thank you, Parikshit. So you see the trade agreement, in a sense, takes off from where things ended in President Trump's last term. We were discussing various trade issues. They had, access issues on various tariff lines, and we had similar, ambitions from them and other concerns, including visas and totalization of social security contributions. So in a sense, that process was interrupted. So this takes off from there to certainly some concessions will be extended. But, by definition, almost a trade agreement is balanced and reciprocal, to use a term used by President Trump. So certainly we'll be giving some concessions, but in return we'll have our own, wants and ambitions. and those will get fulfilled too. The concern is that this ominous sort of reciprocal tariff issue is spoiling the turf, so to say. And I think our sort of position on that should be that if this reciprocal tariff issue has to be addressed, and it has to be addressed outside a trade agreement, then whatever concessions we give in return for whatever concessions we get from them have to be on an MFN basis, and American companies need not necessarily benefit. So I think the US should not go down this reciprocal tariff route, and since we've agreed to have a negotiation for a kind of trade agreement, that is the route to follow, and then all those concessions will be on a bilateral basis, and American companies will benefit. So those are my thoughts.
All right, let me go across to Jayant Dasgupta now. Jayant Dasgupta, on the issue of automobile tariffs. Today, Donald Trump has gone on to say that he would like to impose 25% tariffs in the auto sector, in the pharmaceutical sector as well. How do you think this will impact the Indian industry, especially the pharmaceutical sector? 38% of our exports from the pharmaceutical manufacturing go to the US.
Well, the pharmaceutical exports will suffer if tariff of 25% is levied on Indian imports. But the point is that the US is a net importer of pharmaceutical products, and it also imports a lot of active pharmaceutical ingredients, APIs, from China. So I don't see how this 25% tariffs will enable the American pharma industry manufacturing in the US to fill up the gap in between the import requirements and their own domestic production. So this 25% reciprocal tariff, which President Trump has been talking about, is going to apparently be imposed on all countries. So that then will be a kind of a level playing field for India and other pharmaceutical exporters to the US. So I think the impact would be there, but it would not be enormous. As far as automotives are concerned, India is not a major automotive exporter to the US. And the US also does not export much by way of automobiles to India. So I don't think that is really going to matter very much. As far as the previous conversation that you were having about Tesla is concerned, Tesla has been trying to enter India on this completely knockdown or semi-knockdown condition and assemble cars in India. And the Indian government very legitimately had said that we can give you concessions, but you will have to give a roadmap of manufacturing in India, a substantial part. Yeah. And that is what Elon Musk has been shying away from.
Right. Mr. Vadhavan, coming back to you, now when it comes to Tesla, they have had an on and off relationship, conversation with the Indian government over tariffs, over an India entry. This is not the first time that they've started hiring for the India market. Do you think it makes sense for them to just import cars and sell in India right now rather than manufacturing, considering their global EV sales have declined by 1%? There is a massive drop in sales for them in countries like Germany and France. Then you've got Donald Trump. In fact, he just told Fox News that Tesla can go ahead and manufacture in India, but that would be very unfair to America. Looking at all the circumstances, do you think for the moment Musk would only want to sell in India?
It's quite clear that Musk is keen to enter India and enter within the framework that he has now. And that framework is that if it's a car that is fully assembled, then it comes in at 110% duty or 70% duty. Semi-knockdown, it is 35%. Fully knockdown, it's 15%, I think. So that is one window through which he comes in. But my suspicion is that he wants to go whole hog and end up eventually manufacturing. So he comes in that, $500 million investment in 3-year window, which allows him to import 8,000 cars per year, fully assembled at 15% duty. And eventually in 5 years, he has to, of course, do 50% value addition on that. And there is some talk of, Tesla having plans to invest $30 billion, including $15 billion in battery manufacturing, $3 billion in developing a small car or a cheaper version valued at around $25,000. So my suspicion is that he might come in right now in the window, based on semi-knockdown, fully knockdown assembly operations. But then that itself, will take time to set up. And in the meanwhile, to the extent he has to import fully built up cars, then that 15% window with $500 million investment is open to him. So my suspicion is that given by what the grapevine is, he seems to be keen to enter in that window, actually invest and start manufacturing. And the fact that he's advertised these positions means he is going ahead, and he's obviously okay with whatever is the policy framework at this time. Notwithstanding what President Trump is saying, I don't think we can take that very seriously, because he would, of course, like all manufacturing to happen in the US. But at another level, Musk cannot ignore the Indian market, and to the extent he's going forward now, he's obviously got some comfort with the framework that exists today by way of policy and regulations in India.
All right. Mr. Dasgupta, do you think India should make those concessions right now for Elon Musk, reduce tariffs on fully built cars up to $40,000 below 70%? Right now, the 70% duty structure exists. Do you think India has room to slash tariffs even further?
Well, it all goes back to a case which was there in the WTO in 1996 on automotives against India. And India had, made a precondition that, it would allow imports, of course, with high duties, but the manufacturing base had to be set up in India. And that continued. Of course, we lost the case. But the fallout of the case was a positive fallout, that we maintained the tariffs and the condition for quite some time. And that enabled many foreign auto manufacturers to come and set up base in India. It also compelled, in a sense, because of the large growing Indian market. This is, again, the situation now, because we are moving towards electric vehicles in a very big way. And Elon Musk has technology, he is the leading electric car manufacturer in the world. If he sets up base here, it will help the Indian automotive industry also. But the point is that we can't have freeloaders or freebies given right, left and center, especially to the largest electric car manufacturer in the world. So he has to make a commitment that he will start production maybe 3 years down the road, or whatever program he has. He can't just keep on importing and selling cars in India at a lower import tariff.
Right. Let me go back to Mr. Vadhavan at this stage. Mr. Vadhavan, when it comes to automobile tariffs, we've got very small number of cars which are actually exported to US every year. Do you think it will actually hurt India to reduce tariffs, or the problem is that if we give concessions to America, other countries will also seek the same concessions?
Yeah, so certainly, unless we do it as part of the trade agreement with the US, and we then do it on an MFN basis, so all countries benefit. So as far as, duties on autos are concerned, the automobile sector has been protected now for several decades, since, these companies invested. The foreign companies came in and invested a few decades back. And since then, they've had a lot of protection So at one level, it is not good for us also to indefinitely protect an industry which we claim is a success story. Autos and auto components are a success story. But at some point, they must face up to competition. Otherwise, again, you see, it will affect their competitiveness. It will affect their productivity. Even now, you see, if you talk to experts in the field, they will say that our automobile manufacturing is 10 to 15 years behind the developed countries in terms of the models, in terms of the technology. So protection has to have some phase out. You can't indefinitely protect because it will undermine, competitiveness, undermine innovation, undermine quality. So certainly, I think there is room for bringing our duties down in a phased manner on an MFN basis for our own good. So the indefinite protection is not going to be, good in the long run.
Right. So indefinite protection is not good in the long run, and that's what several government officials have said in the past as well. Ambassador Dasgupta, one final question to you would be about the threat of reciprocal tariffs. Trump has said that these reciprocal tariffs will come into effect from the 2nd of April. Currently, the US federal agencies are carrying out a study, and then reciprocal tariffs country-wise could come into effect. Which sectors in India do you expect to be the worst impacted, and where do you think we should have an urgency to have some sort of trade agreement with the US?
Well, there are two parts of the question. The first one is about the sectors which will affect reciprocal tariffs, will affect India the worst. India exports textiles, machinery, gems and jewelry, petroleum products. Now, if reciprocal tariffs are imposed, textiles is one area where we will perhaps suffer. In terms of the other products, gems and jewelry, for instance, I don't think it will really matter very much because the kind of market penetration that we have, and we also import a lot of diamonds and precious and semi-precious stones from the US, which we convert into jewelry and we sell it back to them, and as well as polished diamonds. So I think it is going to hurt the US also equally in terms of employment and in terms of business. So textiles is one area. Machinery, which is basically engineering goods exports, that is likely to get affected. But again, China and Korea, Japan, Taiwan, the Europeans, they are competitors for us. So if they are also slapped with the same tariffs, I don't think it's again going to matter very much.
All right. Thank you very much, Ambassador Dasgupta and Mr. Vadhavan, for joining us on that very important story. Let's see which way these trade negotiations go, and very soon the US Secretary for Commerce and the Indian Commerce Minister will sit down for trade talks as well, and hopefully these trade talks will be concluded by fall when Donald Trump will visit India. On that note, we take a short break here on News Center. When we return, we will speak about bourbon whiskey tariffs. We saw the Indian government slashing tariffs on bourbon whiskey imported from the United States, and we spoke to the Distillers Council for America, and they told us that they are hoping for a zero tariff regime. That interview coming up on the other side.
Of these authorities. Number two, Ranveer Alabadia will cooperate with all these investigating agencies, will not interfere, will not interrupt. Number three, he will not do any further shows in the interim. That is something that the Supreme Court said as an afterthought, but very clearly pointed in the direction of Abhinav, in the direction of Ranveer Alabadia, that no further shows for now. And also importantly, has put restrictions on overseas travel for Ranveer Alabadia, saying that you will need to deposit your passport at the local police station. So strict conditions being imposed on Ranveer Alabadia, but nonetheless, the Supreme Court, after that flurry of condemnation, granting that protection to Ranveer Alabadia.
US whiskey makers have lauded India's decision to slash tariffs on bourbon whiskey from 150% to 100%. The Distilled Spirits Council of the United States have thanked President Trump and Prime Minister Modi for their collaboration, as they believe this will pave the way for greater whiskey exports to India. In 2024, India was the 23rd largest export market for American whiskies. American whiskey exports to India totaled $8.8 million in 2024, and India was the 23rd largest market. American spirits makers have for long called India's tariffs prohibitive. Joining us right now is the President and CEO of Distilled Spirits Council of the United States, Chris Swanger. Chris, thank you very much for joining us here on CNBC-TV18. First of all, give us a sense of how bourbon whiskey makers in America are reacting to this development.
Really excited, and thanks for having me. On behalf of the Distilled Spirits Council and American whiskey makers, India is such an amazing marketplace and the largest whiskey market in the world. So really, we're excited about the opportunity, and with much appreciation with Prime Minister Modi and President Trump, this is a great step forward. Great step forward for consumers, a great step forward for Indian consumers, certainly, to be able to explore and try American whiskey. But at the same time, it's a great step forward for American whiskey distillers, too.
Right. I would also like to ask you, how do you see this increasing overall bourbon whiskey exports to India?
Well, we know you take the U.S. and the EU. In 1997, the U.S. and the EU agreed to 0 tariffs for EU distilled spirits and American distilled spirits. And we saw tremendous growth for both EU distillers and American distillers. And that's what fair and reciprocal trade can create, a win-win for both markets. And most importantly, this will be a win-win for American consumers, hopefully to try Indian whiskey products and Indian distilled spirits. But at the same time, on behalf of American distillers, we're happy that this is a positive step in the right direction.
Right. What would be the wish list? For example, currently, the Indian government has slashed import tariffs on bourbon whiskey from 150 to 100%. Is there an expectation or a recommendation that you have to the US government and the Indian government as far as whiskey tariffs on India go?
Yeah, with great appreciation of Prime Minister Modi and the relationship that he has established with President Trump. President Trump recognizes the benefits of fair and reciprocal trade. And we hope that this is a step forward to where ultimately there'll be 0 tariffs between the United States and India on distilled spirits products. And what we've seen when there has been 0 tariffs, it enables both markets, the distilled spirits industry in both markets, to thrive. And we hope this is a positive step forward and look forward to working in close collaboration with the Trump administration and the Indian government, of course, with great respect, to keep moving forward. So it's a win-win for Indian consumers as well to try great American whiskey products.
It's also normal, Chris, for the Indian alcohol industry to seek equal access. And even now they're saying that we are fine with reduction on tariffs on bourbon whiskey. We only hoped it would have happened in a phased manner, but at the same time, we would also look for equal market access. When it comes to issues in alcohol trade between the two countries, are there certain other non-tariff issues which you would also like to flag with regard to regulations, with regard to standards, which may be holding trade from the Indian side to America?
I think we'll be looking at that for sure. Certainly the tax rates in some of the provinces and states are extraordinarily high as well in India. So that's something that we'll be talking to the United States Trade Reps Office and the Trump administration about. And of course, we also want to hear and understand if there's any kind of trade barriers that Indian distillers might be having in the U.S. market. So it is, a principal viewpoint of President Trump is what he calls fair and reciprocal trade. And I think based on the tone and the tenor of the press conference between Prime Minister Modi and President Trump, I think there is an opportunity, the geopolitical map of the world, the partnership between the United States and India is so significant on many other levels, and a great starting point and building block for these two great economic powers is to come to a positive agreement to make sure American and Indian distillers and American and Indian consumers can relish the best both of our countries have to offer.
Right. And not just bourbon whiskey. Are there other segments where you are seeking lower tariffs on other alcohol spirits?
I think the whiskey market is a big opportunity for sure, but America creates great rum, great vodka, great cordials and liqueurs, and just great products altogether. So we'll be looking at all of that and working in close concert with the Indian government and certainly the Trump administration really to knock down any kind of trade barriers, because we know with our industry, and the example that I cite is the US and the EU, when there's 0 for 0 tariffs and no trade barriers, the uniqueness of our distilled spirits industry is we're all interconnected. Assets are invested in India and vice versa, and we want to make sure that given the distinctive nature of whiskey products, both markets can really thrive as a result of fair and reciprocal trade.
Right. My final question, Chris, would be at a larger level. Now, this would be one of the earliest trade deals that Donald Trump would be signing in his second administration. What would be the larger significance of this trade partnership, of this trade deal with India once it is signed for the US industry as a whole, not just for the spirits and alcohol industry?
Well, just the economic power of these two great nations would be significant. And of course, I'm a passive observer of the relations between India and the United States. But I think with the leadership of Prime Minister Modi and President Trump, the bond and the friendship that has been established, so many great things can happen between these two economic powers for more job creation, economic vitality within both markets, whether it's agreeing on terms of great technology issues or space travel. This was just part of the narrative of the press conference between the Prime Minister and President Trump. And certainly, the American and Indian distilled spirits industry can be great benefactors of that. And let's just not forget about Indian consumers and American consumers enjoying and appreciation the products of our two great nations.
All right, Chris Swanger, thank you so much for joining us here on CNBC-TV18, giving us your view on the Indian government's decision to reduce tariffs on bourbon whiskey and how the larger economic partnership between the two nations can be beneficial.
India and the Gulf Cooperation Council, we are at this moment negotiating about having a free trade agreement. As far as Qatar is concerned, both sides are exploring the possibility of signing a free trade agreement in future, and that was one of the discussions that took place in this round of talks. As far as the strategic partnership establishment agreement is concerned, it actually elevates the present state of bilateral relations to a strategic level. What we are looking at is deepening cooperation in the fields of trade, energy, investment, security, as well as in the regional and international fora. As you know, within the GCC, India has got signed strategic partnerships with UAE, Saudi Arabia, Oman, and Kuwait.
Hello and welcome to Commodity Champions. I'm Manisha Gupta. The ONGC's chairman and managing director, Arun Kumar Singh, believes that the impact of geopolitical tensions of the sector will pass eventually. In a conversation with me at the India Energy Week 2025, Singh also spoke about the company's tie-up with BP as well as its exploration plans going forward. Let's listen in.
Geopolitically, probably, it is not that it is first time happening. So it is difficult, but not tough. But this also shall pass. This much we know. Our main issue remains our insatiable energy demand. And we believe now that world has plenty of supplies. Only thing, it is artificially getting blocked here and there. Otherwise, if the world had been truly global with no friction, no limitations, probably energy flow to any part of the world, because if you add all the capacity today available with the world, it is a world of surplus. So either it is some group of countries come together to block the supply, or some geopolitical issue comes up, some sanction comes up, some trade restriction comes up. So, but it will settle. It will settle. It will, because it is artificiality don't last long.
With the way we are looking at crude oil prices in a range, but very volatile within that space as well, where would you say, as ONGC, what range are you comfortable with?
Anything above 70 is okay with us. So, because as you may be knowing that we are not the highest cost producer. We are, maybe you can term us as a medium cost producer. So anything what I said is country and our interest both gets balanced at $70 environment.
I'll come straight to India Energy Week, and the last couple of days we've heard that you've had various meetings with global as well as Indian counterparts there. Would be interesting to understand, with the kind of tie-up that you've done with BP to begin with, what does that bring to table?
So BP basically is, BP tie-up is basically for enhancing our production from our biggest reservoir called Mumbai High. So their, somehow their understanding of such kind of reservoir is seemingly better than, because of their size and the experience of the world, is better than us. So this tie-up we did basically to enhance our production substantively. It is not as incremental small increase. We are looking at it almost, to almost near, the offer itself is 60% plus. So it is substantive demand, a substantive increase in our production from Mumbai High. With that aspiration, we got into the tie-up with BP.
Mr. Singh, I was listening to your panel where you were part in the day-to-day and you talked about, there was a guidance cut that we heard about 2025, but on the other side, you sounded very bullish about explorations going forward.
In fact, 2-3 things. First thing that we have total sedimentary basin of, say, 3.36 million square kilometer, and out of that almost 1/3 was out of bound. So that government released some time back, and we feel that it holds a good amount of hydrocarbon itself, maybe in liquid form, it may be in gas form. So we need to explore that very fast. And that's how we said that one of the expectations we have from IEW is that last round we, to look for more partners, but for both sides to cover our, little deep water particularly, and ultra deep water was most of it, out of 0.19 million square kilometer, that is 190,000 square kilometer, which is on block in round 10. Almost 93% is deep water, ultra deep water. So one of the expectations we have is that we will collaborate, that regardless of what happens in collaboration side, we would love to have more partners, but we'll go ahead and explore these waters, at least for country, because as a national oil company, this is our responsibility, as well as we have resources to do that.
Well, absolutely. Mr. Singh, I was reading an IEA report which says that in 2024 there was a $3 trillion of an investment in energy. $2 trillion of that went to clean energy. So as India, as ONGC, are we also aligning to that kind of quotation in sense of numbers?
It could be happening in India. I don't have numbers of India, but one thing is true.
But is it like 1:2 as we see globally?
Yeah, it was 1:1 2 years back, but it must be swinging. May not be 2:1, but definitely 1.8:1 or something. We can't. That number appears to be correct.
Okay.
So world over, investment in renewables is going up. In development and E&P space is almost 600 to 650 billion is going, remaining going in other space. So in hydrocarbon sector, it is true that it is, investment is less than renewables. And moreover, one more thing we are observing that in hydrocarbon also the stress is more on development than on exploration.
Really. Mr. Singh, when it comes to clean energy, and I keep reading your quotes, and there's a lot of conversation that ONGC seems to be doing around the gas, and with the way LNG seems to be exploding world around and the kind of import numbers that India is seeing, what numbers are we anticipating going forward from here?
So it all depends on gas price, and abundance of gas is in offing, because if you go by what is happening in some geography and what happens in the Middle East, so the LNG is bound to go up substantively. In rather, it is every 25, 26, 26, 27, there should be a substantive jump in LNG availability. Definitely by 2028 March, LNG supply will be really very, very handsome. And in that space, naturally, if we are not, because if we are able to not discover big something, then our import dependence will keep going up if we want to aspire and achieve 6% to 15% of gas in our energy basket. So gas here in India, either domestic or foreign, is a very strong candidate for at least next 2 decades.
It is. And with the kind of targets that have been set for 16 until 2030, would you say are achievable from where we stand?
Whether it comes from, so if the price is, say, reasonable, then an India per capita income or economy doing well, suppose it grows at 7-8% for next 3-4 years, I see very distinct possibility, very high possibility of 2030 being the, gas volume being substantively more than what it is today.
Mr. Singh, how are you reacting to the very, very volatile currency at this point in time?
For us, in fact, it's something, we are domestic producer. So for us, currency really doesn't matter much except for the fact that it hurts country. But it is also at the same time, for those who are in export business, it makes their life easier. So, but it is something that, in my view, if you ask me, substantive correction has already happened. So let's see how it goes from here.
I just want to come back to my question of MOUs and conversations that you've had around IEW. I do know that there were various meetings. I've seen you come in and out of various rooms there and doors. What is it that we're chatting with Qatar at this point in time?
Qatar is today also, Qatar is our one of the largest supplier of LNG to us. Plus also we have renewed the contract country has renewed, all the PSUs have renewed their contract for fresh contract from 2028. So naturally it's a very strategic and important partner. Plus also, they also want to supply more to India, and India also is evaluating all the options. So naturally, this conversation is a good sign.
I was also hearing something, that a conversation that you had with NTPC. What was that about?
No, NTPC, we formed a company with NTPC.
Right.
And we are in the process of acquiring I don't know how to term it, big or small, but a company which is having almost 2 gigawatt of producing renewable, and another 2 to 3 in the making. So you'll hear soon.
All right. Mr. Singh, again, a lot of conversations around IEW do suggest that while the central policies are amazing and in line with what the companies want, the concerns are really sometimes with certain states. Would you agree to that?
Is this something that, we have a federal structure. So naturally, sometimes interest clashes. So naturally, it has to be navigated through some negotiation and process of ultimate understanding. It is what is good for the country and what is good for the state. So somebody may be having some wrong understanding, but if it is somebody becomes irresponsible, both pay a price. If it is responsible, understanding the whole context, then it's good for us, good for state, good for central government. So, but these don't bother you much, because ultimately it gets sorted out.
All right. While there has been lots said about on when the oil demand will peak out and what the way countries are really trying to make their mix, would you say it's more regional, trying to get into the global as a space? Every country really seems to be trying their own mix. How would you describe India's mix currently, and where are we headed?
See, we'll continue to grow in oil, at least for, as you know, last year we grew by 3 to 4%. I don't foresee growth coming down below 3 to 4% for India.
Until?
But at least for next 10 years.
Okay.
But I don't foresee the same growth for other geographies. Rather, I'll be very surprised if the three largest or four largest economies of the world, if they grow at all. So now it depends on, developing world versus developed world. And if, you may be fully aware that push in two geographies are very strong towards renewable. So what is happening in those two geographies are definitely, I can't predict when will peak oil happen, but India, I think peak oil is far away. But globally, maybe peak oil is very close.
All right, so when it comes to India, well, the conventional energy growth is estimated 3 to 4% at least for next 1 decade is what the ONGC head tells us. Well, on that note, it's time for a short break, but don't go anywhere. We get you more conversations with leaders from the energy sector when we return.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable.
Welcome back, and let's now shift focus to startups that are making news in energy space. Navgati, which is a finalist at IEW 2025, has secured funding also from GAIL. The company's fueling app already has 2 million users and aims to get that figure to 5 million by the end of this year. Listen into my conversation with the company's CEO, Vaibhav Kaushik.
Navgati is India's first fuel aggregator startup. So what we essentially do is that we have a consumer-facing offering that people use to navigate to a station on their route. So assume that you're going from Delhi to Jaipur. You would want to know which station on your route has CNG availability, and what is the fuel price, right? So all that information is provided by Navgati. Every fuel station in the country is listed on the app.
Okay.
And we have close to 2 million users. This is on the consumer side of things. But as you rightly pointed out, as a startup, making money from consumers is a very, very big pain point, right? So we primarily charge the companies, oil and gas companies, a small subscription fee to monitor their outlets and provide insights to them.
Okay.
So every outlet in the country has cameras as mandated by the government, but those cameras are not used to actually generate insights. So we use the existing infra, cameras, dispensers, compressors to tell the company these are your repeat customer rates and these are the things that you can do to improve your sales.
Okay. So what is the plan from here? Is this going to be the business, or are you looking to expand it, grow further from here?
So, we effectively control both the demand as well as the supply. A close parallel to this would be Zomato for, buying food, actually ordering food. So in our case, we want every fuel station in the country to be onboarded onto our B2B vertical SaaS offering. We call it Aveg. And every consumer, whoever buys a new car or a new bike, should have Navgati fueling app, right? All fuel types, petrol, diesel, CNG, electric, even hydrogen. We saw a lot of hydrogen companies here. Even if, hydrogen powered vehicles are there, you would, presumably use Navgati fueling app to navigate to a station. And we intend to go global. We are setting up entities in Sri Lanka, Malaysia as we speak, right? To take this product global. Yeah.
So how many consumers do you have following you on your app right now, and is there a target there?
So we've reached 2 million users all organically, right? We want to reach about 5 million consumers in India by end of this year.
Also, India's hydrocarbon story is 50 years old, but the pace has picked up in the last decade or so after introduction of new hydrocarbon policy as India reads for cleaner energy. Let's listen in to Dr. Pallavi Jain, IAS DG at Hydrocarbons, on understanding policies and plans for the sector. What would you say on what kind of strides or leaps or progress has India made in this sector?
India has been singing or talking about its hydrocarbon story for nearly 50 years, more than 50 years now. But a very important step was taken about 10 years ago when a new policy for hydrocarbon exploration called Hydrocarbon Exploration and Licensing Policy was introduced by the government, which is a marked departure from the earlier policy, which was a production sharing contract regime, if I may call it that. And now it's more modern, in which there's only a revenue share involved, and there's also a lot of substantial ease of doing business. So the 26 basins of India, they are now attracting a lot of investment into this field, and we are very hopeful that the production, which is important, the hydrocarbon exploration and production, which is important for the energy security of the country, for providing affordable access, that is something which we are well on our way to establish.
There's one thing called availability, and then affordability, and then commercial affordability. Where would you put hydrocarbons to right now?
Hydrocarbon, whatever is explored in India, produced in India, that is eminently affordable. And in fact, a company which is going into hydrocarbon production does it on the basis of commerciality, only if it's commercially viable. I should also mention over here that a lot of freedom now has been given by the government for pricing. Earlier there used to be a lot of pricing controls, who you can sell it to, at what price you can sell it to. All that has been opened up. So companies are free to explore who to sell their production to, and that is giving them much better returns.
Well, from hydrocarbons, let's look at the role of digitization in the energy transition. In an exclusive conversation with me, G. Balaji of ABB India underlined the key applications that can be used in energy transition, which broadly include forecasting demand and maintenance of assets in the sector.
There are two aspects to digitalization, I would say. The whole energy transition is being supported by digitalization. So this is happening in many ways, I would say, but especially around when you talk about distribution of petroleum products, especially the natural gas. There is a lot of application towards predictive maintenance of assets that is distributed geographically, ability to forecast the demand for the future depending upon what's the demand that has been in the past. So a lot of niche opportunities to apply digital solutions in the distribution network.
Where would you say has India made progress when it comes to this?
In terms of in terms of energy transition, I would say that India has leapfrogged in many ways. Not many countries have an energy mix that India has. Right, in terms of the conventional energy to the newer energy, renewable energy inclusive of solar. So not only while you're making very fast strides in renewable energy, India has also been relying on utilizing natural gas as a medium of energy transition. We clearly see actions on the ground to move from a higher carbon fuel to low carbon economy.
Right.
So I think in terms of adoption of natural gas, piped natural gas, compressed natural gas for automotives, to LPG for the rural, I think a lot of progress has been, a lot of actions has been done, not just words.
And as renewables took centre stage at IEW, Sumant Sinha of Renew tells us that India renewable story is becoming bigger. He added that if the government wants to meet its 2030 targets, it will need to set platform for better transmission, higher availability of land and grid management.
Renewables in India is a very well understood story. It's something that the government has been very actively pushing for several years now, and it's becoming bigger. It's becoming a more central part of India's energy sector, and I think the fact that it's becoming a central part of the conversations here, which is India Energy Week, just tells you that same story. And I'm glad to see that, because obviously for India there are a number of reasons why renewables has to be important. Apart from the fact that it's cheap, it's good for the climate, there's the energy security angle, there's a national security angle. So I think from all standpoints, renewables certainly for India works extremely well.
How would you say was the year 2024 for you as Renew, and what are your plans now for this year?
I think for us the year was quite good. We added almost 2 gigawatts of capacity in the last financial year, which was a pretty steep increase from previous years. And I expect for us to keep going at that or at a higher pace than that in the years to come. We won a lot of new capacity that was auctioned off. So while we have 11 gigawatts of commissioned capacity, we have another 15 gigawatts that is in the pipeline of projects that we've won, where partly the PPAs have been signed, partly they will get signed. So we made a lot of progress in terms of crystallizing our growth ambitions a little bit more clearly.
What's your sense with the kind of targets that Minister Puri put out for 2030, and then there is this net zero until 2050? How are you looking at those numbers now?
Yeah, so look, I think that India's, if you just look at the basic numbers, India's electricity demand is growing at about 6 to 7% a year. Just to meet that demand growth from renewable energy, which is the cheapest form of new electricity in India, therefore naturally should be the first port of call for meeting this demand growth, we will need about 60 to 70 gigawatts of new capacity of renewable energy. Clearly we're not going at that pace. So if anything, we need to ramp up the execution capacity that we're doing every year up to 40 to 50, which is really what the government's target is. And if we do that in the next couple of years, that will allow us to reach the 500 gigawatt target that the government has set. But I think I'm also conscious of the fact that even beyond that, we need to keep growing at very, very significant levels. And we'll almost need to add 500 gigawatts every 3 to 4 years after that of new renewable energy capacity. So we need to set the platform for that growth now over the next 4 or 5 years.
Well, that's all the conversations at India Energy Week. And on that note, it's a wrap on Commodity Champions. Thank you for watching.
In 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
Mood is definitely a lot more downbeat, a lot more cautious, circumspect, although nonetheless, given how stock prices have fallen in the last few weeks, there is a lot of interest in checking if this is the time to buy or there's more downside. In some cases, investors meeting their portfolio companies, just trying to figure out what the outlook is like. As far as the Trump tariffs are concerned, yes, we agree with you, and that is one of the reasons why I guess globally we're seeing a bit of a slowdown. When there's uncertainty, typically businesses tend to pull back. They hold back on their investments, their expansion plans, and that actually is the bigger damage than perhaps the direct impact of the Trump tariffs. You know, there could always be some walking back, or there could be renegotiations, and one day there are tariffs, the other day they're postponed. So those kind of things keep happening and will likely keep happening. We will live in a more volatile world.
In the event that there is some sort of ceasefire between Russia and Ukraine, peace settlement down the road, what does that mean? That means Russian sanctions on Russia come off, and that probably brings Russian oil supplies up quite considerably, and that's going to put downward pressure on the oil price. So I think oil is going to stay quite soft over the next several months, and that will obviously be helpful for Indian inflation.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Yet another volatile session on the Wall Street ends with marginal losses for Sensex and Nifty, but financial, mid-caps and small caps buck the downtrend with the sharp rally. US President Trump says he expects America's 25% tariffs on automobile, pharma and semiconductors imports will begin in April. Tells Fox News it's unfair that Elon Musk has to build a factory in India to avoid tariffs. Reiterates that he has made it clear to Prime Minister Modi that India will not be spared from reciprocal tariffs. Tesla is likely to drive into India as early as April. Sources say the company is considering importing electric vehicles from Berlin and has already identified showroom locations in Mumbai's BKC and Delhi's Aerocity. Adds that while Tesla has not committed to manufacturing in India yet, it's likely to source components worth $1 billion in 2025. Hexaware Tech returns to the Wall Street on a firm footing. Shares list at a 5% premium to the IPO price. The $1 billion IPO was subscribed nearly 3 times. US President Donald Trump criticizes Ukraine's Zelensky after the latter complains of being excluded from the peace talks in Saudi Arabia. Says Ukraine could have made a deal earlier to avert the war. The US government says both Moscow and Washington have agreed to appoint high-level teams to begin working towards ending the conflict. A top Hamas spokesperson proposes releasing the remaining 6 Israeli hostages in one go and return the bodies of 4 others in exchange for Palestinian prisoners and a permanent ceasefire in Gaza, but rejects Israel's call for its disarmament and its removal from the enclave. Salary hikes this year are likely to be the lowest in 3 years. A survey by ON predicts a modest 9.2% increase across sectors. Also says the automobile and engineering design sectors could see double-digit increments. All right, let's start with the market action. Sensex and Nifty ended with marginal losses after a volatile session, but financial stocks along with mid-caps and small caps bucked the downtrend. Nifty Bank Index was up 1%. The mid-cap and small-cap index fared even better. Prashant Nair is here with a market wrap.
Well, once again, like yesterday, one has to say it was a good session, although it didn't show up very much as far as the Nifty goes, which was absolutely flat by close. Now, the Nifty Bank was much better. It actually picked up pace in the last 30 minutes of trade. When we started at 2:30 last hour, the Nifty Bank was up 0.5%. It ended about 1% higher through the course of the day by 3:30. And of course, broader markets even better. Small cap index almost 2.5% gains in the small cap index. It was the sole loser yesterday, while the rest of the market did see recovery. So today it made up for that. Mid caps also ending higher, but underperformed what the small caps did. Remember, these are, of course, all just recoveries we are seeing for the very first time in a strongish kind of way after many, many days of lower markets. Now, what was up on the Nifty? BEL was number one. There was Hindalco and Aisha, which were higher as well. On the downside, there were names like Dr. Reddy's, there was TCS, Infosys, and HUL, which ended lower as well. Strong market breadth. I'll start with what was higher in the broader market. So defense names, Mazgaon, Garden Reach Shipbuilders, Data Patterns were some of the names. The number one volume-led gainer in the NSE was Bombay Stock Exchange, which is back above 5,500. Tata Investment Corporation, again, a capital market play. It was up strongly. It was up 15%, but ended slightly off that level. Swiggy was another consumer name, along with Zomato, which did well. RVNL, Aegis Logistics, KRN Energy, Reddington, PG Electroplast, Minda Corp, BKG, Goldian, and Tar GVK ended about 20% limit up as well. So lots of action as far as single stocks go. On the downside, Godfrey Phillips, nothing very large. Adani Green, Credit Access notably was down 7%. So that was a big volume-led cut today. And a Senco, which had popped 5% higher, gave all of it back today with about a 5-6% cut. But all in all, very strong market breadth, and that really is what matters for portfolios. And one hopes as we get into the fag end of this week over the next couple of days, the repair and recovery continues. Back to you.
Thank you, Prashant, for that. Gold prices fell as investors booked profits following after the yellow metal's recent record-breaking bull run. Now, safe haven demand also eased amid talks between the US and Russia to pause the conflict in Ukraine. Onto the energy markets, where crude prices edged higher. This after oil flows through the Caspian pipeline consortium were reduced by 30 to 40%. Disruptions in US oil supply owing to cold weather conditions also weighed on prices. Right, US President Donald Trump's tariff threats continue. This time, he wants to impose tariffs of 25% on automobile, semiconductor and pharmaceutical imports. Trump said he will most likely make the announcement on auto tariffs on April 2nd. Indian pharma stocks, including Dr. Reddy's Laboratories, Lupin, Zydus and Cipla, slumped in today's trade. The projected tariffs will hurt Indian drug makers who sell over 38% of their exports in the United States. India currently imposes a 10% import duty on US medicines. If Trump imposes a 10% duty on India's exports, Nomura says it could erode FY26 earnings estimates of some of these companies by 6.5%. Granules, Gland Pharma and DRL have the highest exposure to the United States, with the country accounting for over 50% of the revenue. Here's more on what Trump said about his plans.
Donald Trump has played his next move on tariffs. The US president said Tuesday that he would impose levies of about 25% on imported cars and similar duties on drugs and chips. Trump says his action on tariffs is already producing results.
I do want to say while I'm up here, I've been contacted by some of the biggest companies in the world. And because of what we're doing economically and through tariffs and taxes and incentives, they want to come back into the United States. And we'll be announcing various very large companies, the biggest actually, and they'll be coming back, having to do with chips and having to do also with cars.
Trump also said more details on the auto tariffs would come on April 2nd, a day after cabinet members are due to report to him on options for new measures. He has long complained about what he sees as unfair treatment of US automotive exports. The EU, for example, imposes a 10% levy on vehicle imports, or 4 times the duty imposed by the US. However, Washington collects a 25% tariff on most imported pickup trucks, protecting a lucrative part of the market for domestic makers like Ford and Chevrolet. Trump says tariffs on drugs and chips will also start at 25% or above, and then go substantially higher over the course of the year. He didn't set a date for starting those levies, saying he wants to give pharmaceutical and tech firms time to set up US factories. Since his inauguration a month ago, Trump has stacked an extra 10% tariff on all imports from China. He's also set a March 12th start date for tariffs on imports of steel and aluminum. And while he has postponed measures targeting Mexico and Canada, he's also told his team to draw up reciprocal tariffs matching those imposed by all trading partners.
Right, Trump has reiterated that he will not spare India from reciprocal tariffs. In an interview with Fox News, Trump recalled a conversation that he had with Prime Minister Narendra Modi at the White House last week. It's impossible to sell a car practically in India. As an example, India. End of quote. He also said that it's unfair that Elon Musk has to build a factory in India to avoid tariffs. Trump went on to say that nobody can argue with me and reiterated that India will face reciprocal tariffs starting April. Electric car maker Tesla is looking to enter into the Indian market by starting retail operations by April. Sources have told CNBC-TV18 that the company is considering importing its electric car from the Berlin plant. We've also learned that the company has identified 2 showroom locations in Mumbai and Delhi. Parikshit Luthra joins us now with details. Parikshit, what will be the impact of Tesla driving into India on the auto industry at large?
Well, lots been spoken about Tesla's India entry, but let's put things into context for our viewers. Total electric car sales in India in 2024 were around 100,000 units. Tata Motors was the biggest player with over 61,000 units sold of cars costing under 22 lakh rupees. JSW, MG Motor, M&M, BYD, Stellantis were other players selling EVs at a price point under 30 lakh rupees. 95% of Volvo and Kia being the major players, and this market was just 3,700 units strong, or 3.7% of the total EV market in the whole calendar year 2024. Overall, electric car sales could double in 2025 to 2 lakh or 2.5 lakh units. Launches by Maruti, Hyundai will increase the EV market. JSW, MG Motor, M&M will ramp up their EV play in the premium electric vehicle segment. Mahindra & Mahindra is looking to sell at least 50,000 units of BE6 and the XEV9e in 2025. JSW MG Motor is launching the Cyberster under 1 crore rupees. Now, according to Indian industry sources, Tesla's main competition would be from M&M and luxury players. The BE6 and the XEV9e are priced between 26 to 30 lakh rupees. And Tesla may launch in India at a price point of rupees 39 lakhs if you include the 70% duty structure, or 49 lakhs if it goes for a higher variant. BMW iX1 is the most affordable luxury electric SUV right now at a 49 lakh rupee price point ex-showroom. Cost of other luxury electric cars is over rupees 60 lakhs. As per some estimates, Tesla may see initial sales of 10,000 cars per year at a 39 lakh rupees price point and 5,000 cars per year at a rupees 49 lakh price point. So why is Tesla yet to make up its mind on manufacturing in India or making in India? Well, here's the most possible reason. Tesla sold around 1.79 million units in 2024. The company's global sales fell by 1% over 2023. Tesla has been offering several discounts to woo buyers, not just in America, but in different geographies. China's BYD sold 1.76 million EVs in 2024 and was a very close second to Tesla. Tesla sales fell 60% in Germany and France in January this year. India is offering them a 15% concessional duty rather than 100%, but Tesla must commit $500 million in manufacturing in India and must also generate 7,500 crores in revenue by the 5th year of operations if it applies and gets this 15% concessional duty. The company has to have a business case to make in India and export at a time when its global sales have fallen and their existing plants are not fully utilized. And this is what many familiar with the company's strategy are telling us. Tesla has to also consider when it can actually break even or become profitable after investing in India. After all, $500 million is not a small amount. The company has already plants in US, China, Germany, and the plant in Berlin cost them around $5 billion just in 2022. Then, Donald Trump has now urged companies to make in America rather than other nations. In fact, he told Fox News that Musk can manufacture in India, but that would be very unfair to America. So clearly, starting sales by importing cars is the easy option for Musk rather than immediately committing to manufacturing in India.
All right, thank you, Parikshit, for that update. And staying with trade relations between India and the United States, the Commerce Ministry has scheduled an inter-ministerial meeting today to discuss trade ties between the two nations. Sources have said that the meeting is being held to seek inputs for the multi-sectoral trade deals with the US. We've also been given to understand that US Commerce Secretary and Indian Commerce Minister Piyush Goyal will meet soon. United States Securities Market Regulator has reportedly sought help from the Indian government in its probe against Gautam Adani and his nephew Sagar Adani. This investigation is pertaining to the alleged securities fraud and $265 million bribery scheme. A report by Reuters has suggested that SEC said that both Adani and his nephew are located in India and hence it requires seeking assistance from the Indian government. Right, coming up next, salary hikes this year are likely to be the lowest in 3 years. A survey by AON predicts a modest 9.2% increase across sectors.
Trump is on this tariff gig now, reciprocal tariffs, if you want, if you like, where he's saying, you know, if countries overseas have got high tariffs, which India does have, well, we're going to put high tariffs on their imports as well. Now, it's been the case for many years, as you will know, that developing countries trying to build for the future from a low base, very often do try to protect their infant industries, which is a classic economic argument, with tariffs. It's always been the case that poorer countries, developing countries, emerging markets have higher tariffs, than developed economies. And I think that, you know, it is what it is. I'd be very surprised if India is absolutely right in the forefront of this reaction that Trump is coming up with. I think he's focused a bit more on other countries, frankly. But yeah, he has mentioned India, so we have to watch it.
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India's sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing $30,000 or 26 lakh rupees in America, and Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years.
Quick co-founder Bipinpreet Singh says Indian regulations in the fintech sector can become like a big black box for investors. Speaking with Shireen Bhan, he also added that India hasn't even scratched the surface in terms of becoming truly financially inclusive. Speaking with Shireen Bhan, co-founder Upasna Taku also revealed that they had to defend the Indian fintech sector first and then the company during their IPO roadshows.
You know, when we're sitting here in Delhi or Bombay and we are passing regulations and or taking action, we think positive and negative, we don't realize that the people who look at companies like us, whether it is private or public, how they think about these decisions and what they understand and comprehend, because it becomes like a pretty big black box where the clear conclusion for a lot of people is maybe the regulators and the government don't want fintech.
Which they've clarified, to try and send out the message that no, that's not the case. That
but
we do
the
want
actions
to support
that take place, actually point to the contrary, right? For many of them, and then it's hard to justify that actions are against certain entities only, and it's not against a particular sector. But the media blow up that results from that. See, somebody sitting in Singapore, I met, is a very, very big Swiss bank. We were talking to them earlier in our roadshow. I spent 1 hour with that analyst, a very well-respected analyst, just discussing what does the regulator want. And it was not about MobiKwik. He didn't spend 1 minute on MobiKwik. And I had to educate him, saying that this is what is happening. It's because I think there is a gap in the communication, and that gap has to be closed. Because fintech as a sector, I still see as a sunrise sector. But with this kind of environment now, if you see who is investing in fintech, whether it is private companies, is not the preferred sector for investment. But India needs billions of dollars in investment in fintech to make the dream of truly inclusive finance happen in India.
I want to tell you that we met many 1,800 investors in our roadshow in October, November last year. Typically all these meetings are 1 to 1.5 hours. In most of these meetings, first we were defending the sector, fintech India. Then we are defending, our segments of business within that, and then we are defending our own numbers and our competitive position.
Well, appraisal time is around the corner, and if we were you, we will sum up the Aon survey by saying you should not get your hopes too high. The survey reveals that salaries will increase around 9.2% this year. That's a marginal decline from last year. The survey analyzed data from over 1,400 companies across 45 industries. Shivani joins us now. Shivani, which are the sectors that are expected to top the chart this year?
Well, yes, salaries in India are set to grow at a slower pace next year. According to Aon's latest survey, Indian companies are expected to hike salaries by 9.2% in 2025, slightly lower than 9.3% in 2024, marking the third straight year of moderation. Salary growth has cooled from 10.6% in 2022, reflecting margin pressures and a cautious business outlook amid global uncertainties. Sector-wise, auto and engineering design services are set to lead the pack with projected hikes of 10.2% in 2025. While the banking sector is expected to see the lowest increase at 8.8% average. The technology sector, once the star performer, is likely to see salary hikes of just 7.7% next year, the weakest across industries. Real estate is also losing some steam, with projected increments easing to 9.7% from 9.6% last year. Meanwhile, companies are holding on to their workforce. Attrition rates have fallen from 17% to 17.7% in 2024, down from 18.3% in 2023, and significantly lower than 21.4% in 2022 following the Great Resignation time. The survey says that India's economic prospects remain stable, but geopolitical tensions, global trade shifts and a rapid rise in AI are making companies cautious, prompting a sharper focus on talent retention, workforce skilling and cost optimization. Back to you.
Right, thank you, Shivani, for that. The stakes will be high when India faces Pakistan this Saturday in the ICC Champions Trophy, not only on the field but off it as well, with online betting applications bracing for a rise in activity. The rise of such platforms in India have also given users an opportunity to bet on the outcomes of questions that go beyond the world of sport. Ashmit Kumar is here with more. Ashmit.
Today marks the beginning of the ICC Champions Trophy, and that's important not just for cricketing aficionados, but that's also important for a very large and wide online gaming and betting space. And betting and gambling is the key word here. That's the big concern, especially since there are reports which seem to suggest that these betting and gambling activities spike whenever there's a large cricketing tournaments like the Champions Trophy, and more so in case of the India-Pakistan match. That's always a big draw. February 23rd, that's the key day, and there's an anticipation that there will be a spike in these online betting and gambling trends come that India-Pakistan match on February 23rd. And the newest kid on the block that is in fact being a part of this, these online activities are options, are opinion tradings. Now, bear in mind that these opinion trading platforms or opinion trading applications, they essentially provide questions in a yes or a no format. So, for instance, the question that could come up on one of these platforms come the India-Pakistan match is, who's going to win the match? And then there'll be a yes and a no option, and that will allow users to come online and then subsequently place their bets on either yes or no. Now, this is something that many experts say falls foul of the IT rules. Now, bear in mind, the IT rules do not allow intermediaries to host betting or gambling applications. In fact, very clearly, the IT rules define wagering and betting to be a case of betting on an outcome, which this clearly appears to be. In fact, very recent reports as to how far and wide these trends are of online betting and gambling. A recent report by the Rashtriya Raksha University points out that as way back as 2003, the online volume that were being seen was to the tune of 3 lakh crore rupees. By 2017, this grew to about 10 lakh crore rupees. And more recently, the run rate that we are seeing is to the tune of around $1 billion every month. That's the strike rate that you have, almost 9,000 crore rupees in deposits by users at these online betting and gambling platforms every given month, and this subsequently leads to heavy tax losses as well. Further, what's important is that there appears to be a regulatory void. This very same report points out that state legislation does not deal with online betting and gambling, that the central legislation, which in this case happens to be the IT Act, has very limited powers. There's no dedicated legislation, there's no dedicated regulator. These betting and gambling provisions are not a part of scheduled offences under the PMLA, and these in fact are some of the recommendations. So clearly, the concerns being cited by multiple stakeholders with respect to betting and gambling, and more specifically with respect to opinion trading online.
All right, thank you, Ashmit, for that. With that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
Often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year but cancelled at the last moment. Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk and other EV makers a concessional 15% duty as opposed to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk be able to secure lower tariffs from India without a manufacturing commitment? That remains to be seen. For the moment, what we know is that Elon Musk had a very positive 50-minute meeting with Prime Minister Modi in Washington, D.C., where everything from electric mobility to space cooperation was discussed.
Ranveer Alabadia has been spewing dirt, has shown the dirt in his mind, has been vomiting on air. Why should we protect you? Ominous words coming in from the Supreme Court aimed directly at Ranveer Alabadia post the India's Got Latent controversy. So that entire controversy involving Ranveer Alabadia, Samir Raina moving to the doors of the Apex Court. The questions we're asking, Who's the one who's knocked on the doors of the Supreme Court? What reliefs are they seeking? What did the Supreme Court have to say about it? And what are the reliefs, if any? What are the protections, if any, that the Supreme Court has granted? Well, to begin with, it's Ranveer Alabadia who's knocked on the doors of the Apex Court seeking protection. Mind you, he's facing at the very least 3 FIRs that at least we know of: Maharashtra, Guwahati, as well as Jaipur. And what's interesting is that, and that's an interesting side story, representing him in the highest court of the country is none other than the son of Justice D.Y. Chandrachud, the last Chief Justice of India. It's Abhinav Chandrachud that's appearing for Ranveer.
Hello and welcome to a fresh edition of Startup Street. I'm Ritu Singh. Here are the key headlines from the startup space. Indian regulations in the fintech sector can be like a big black box for investors, says MobiKwik co-founder Bipinpreet Singh. Goes on to add there is a miscommunication in the fintech sector. That's a CNBC-TV18 exclusive. Deep tech startup Probus Smart thinks focused on smart grid application has raised $5 million in Series A1 led by Unicorn India Ventures. The round also saw participation from US-based and Indian family offices. The current round is a mix of equity and debt financing. Probus has raised more than $8 million in funding till date, including this current round. Tata Sons questions Big Basket's slow growth amid quick commerce boom, calling it a strategic misstep that led to the firm falling behind rivals like Blinkit, Zepto, Swiggy and Instamart. The Economic Times has reported, citing sources. The company has asked Big Basket to seek to raise as much as $1 billion via external funding rounds to stage a comeback. US President Trump says he expects America's 25% tariffs on automobile, pharma and semiconductor imports will begin in April. Tells Fox News it is unfair that Elon Musk has to build a factory in India to avoid tariffs. Reiterates that he has made it clear to Prime Minister Modi that India will not be spared from reciprocal tariffs. Tesla is likely to drive into India as early as April. Sources say the company is considering importing electric vehicles from Berlin and has already identified showroom locations in Mumbai's BKC and Delhi's AeroCity. Adds that while Tesla has not communicated or committed to manufacturing in India yet, it is likely to source components worth $1 billion this year. OpenAI co-founder Ilya Sutskever is raising more than $1 billion for his startup Safe Superintelligence at a valuation of over $30 billion, according to a Bloomberg report. Now, this round marks a significant valuation jump from the $5 billion that the company was worth before. Elon Musk's social media company X is in talks to raise money from investors at a $44 billion valuation. Bloomberg News has reported Musk bought X, formerly known as Twitter, for the same price in 2022. Talks for the new financing round are still ongoing. And healthcare platform Tata 1mg seeks to raise $300 million to expand its omni-channel distribution in order to ramp up quick deliveries. That's a CNBC-TV18 exclusive. Well, those are the headlines that we're tracking for you today. Now, on to the latest in the Byju's insolvency case, where the National Company Law Appellate Tribunal has refused to grant any interim stay on NCLT's order, which refused the proposed settlement with the BCCI and had directed the Byju's Committee of Creditors to decide on the matter. Now, Riju Ravindran, the suspended director of the firm, had approached NCLAT challenging the NCLT order. BCCI, remember, had initiated insolvency proceedings against Byju's over non-payment of 158 crore rupees, and Ravindran had proposed a settlement seeking the payment of dues. Now, moving on from that, here's another exclusive that we're tracking for you today. Sources tell CNBC-TV18 that healthcare platform Tata 1mg is looking to raise $300 million to expand its omni-channel distribution platform in order to quickly ramp up its quick deliveries. Rashna Dhanrajani has been tracking that story and is here with more. Rashna, tell us about this and the significance of this funding.
Well, we are picking up an exclusive on Tata Digital's latest fundraising plans. Sources have told CNBC-TV18 that Tata Digital is looking to raise $300 million for its digital health platform, Tata One MG, as it looks to expand operations. The focus is on strengthening its omni-channel strategy with an emphasis on offline expansion and quicker deliveries. Currently, Tata One MG delivers within 4 to 5 hours in select locations, primarily in Delhi NCR, and also offers an express delivery option for certain products within 30 minutes. We also understand that Citibank has been roped in to manage this fundraise. Tata Digital holds about 63%, that's a majority stake in Tata One MG, and has previously secured investments from major firms like Sequoia Capital, Intel Capital, Omdear Network, and the Bill and Melinda Gates Foundation. The company was last valued at $1.25 billion in 2022, and this fresh funding is expected to strengthen its position in the digital healthcare space amid growing competition. CNBC-TV18 has reached out to Tata MG for a response, and we will update you as soon as we hear from them. Back to you.
Well, Rachna, thanks very much for bringing us that update, and we'll keep coming back to you as and when you hear more. Now, moving on to what's brewing today, banking tech provider Zeta has raised about $50 million in fresh funding in a strategic funding round, pushing its valuation up to $2 billion. Now, that is a 1.7 times jump from its previous pre-money valuation of $1.15 billion in 2021. Now, its platform enables financial institutions to launch extensible and compliant asset and liability products rapidly. It has supported more than 25 million accounts so far on its cloud-native processing platform and is on track to add another 25 million. So what's next for Zeta? To find out, we're joined by the company's global CEO and co-founder, Bhavin Turakia. Bhavin, thanks very much, and congratulations on this $50 million funding round. Welcome to Startup Street. Can you share more about this strategic investor, who it is, and the valuation jump by 1.7 times in under 4 years? What really drove this kind of a surge?
Sure, yeah. So it's a strategic investor. It's a Fortune 5 company based in the US, and predominantly we weren't looking out for capital, actually. So this wasn't a conventional sort of go out and look for funds like we did last time in 2021 when we raised about 300 million at the 1.15 billion pre-money. So it just happened to be that there was a strategic investor that wanted to invest. We don't currently have any sort of specific allocation or use of the funds either, but it's going to serve as a sort of a good buffer to add to our existing cash reserves, and potentially some of it towards sort of expansion on investments behind our technology platforms.
Well, tell us more about that, Bhavin. What are these expansion plans? How will you use this fresh capital apart from building your buffers? Are there specific product innovations you're looking at, specific markets you're looking to enter? What's the plan?
Absolutely. So Zeta is currently operating in the US market and in the India market. That's where predominantly our clients are. These clients are generally large banks and financial institutions and fintechs that use our platform to launch credit cards, debit cards, deposits, loans, a series of sort of financial services and products. We can replacing legacy platforms and legacy technology providers. We have, primarily few areas of focus, I would say, in 2025. I think 60 to 70% of the company is going to focus on some really large deals that we've signed in both US and India, working with large institutions. In India, we work with HDFC Bank. In the US, we work with Merrick Bank, CardWorks, Sparrow, and many other sort of large institutions to ensure that we can deliver on the contracts that we've signed and expand our sort of footprint with them. And then about 30 to 40% of the firm's focus is going to be on signing up new logos. We're currently in talks with about 15 different institutions in the US and almost half a dozen institutions in India that are interested in some point in time in the journey of the next 2-3 years implementing Zeta for their customers. And so the goal will be to close about 3 to 5 logos from that set. So these are 2 areas we're primarily going to be focusing on. And as I mentioned, we were healthy in terms of cash reserves from our last fundraise, which is about 300 million a few years ago. We are fairly clearly on the path getting to break even in March 2026. So we're looking at this being sort of a cash buffer for us.
Well, we'll get to that break-even point in just a bit. But, these 25 million accounts that you claim to have in the pipeline to support through your platform, could you give us details on this? What's driving this adoption, and which geographies are you seeing higher traction in?
So bulk of that is in the US. There's 2 large customers, one with about 6 million accounts and the other one about 14 million accounts that are currently using competitors who are sort of legacy providers who've been around for decades. And these accounts will be migrated over to Zeta after we finish implementation. And then a few million accounts from our Indian customers and the banks and institutions we work with in India.
Okay. Well, Bhavin, you were telling us that you're about to break even. Give us a timeline of when, because in FY24, your parent company, at least, the profit surged about 5.4 times. Revenue growth was 9.42% or so over the previous year. For Zeta, what's FY25 looking like?
Sure, yeah. So, I mean, I think revenue numbers you're quoting are probably for Zeta India, and Zeta currently generates revenue across Zeta US, Zeta India, UAE, a bunch of sort of countries in Europe also. And so they might not be fully reflective of both our revenue and expenses, but we have been consistently reducing our burn rate. You know, we started off with sort of a burn rate was also almost about 60 million. Last year, that is FY25, will end at a burn rate of 20-ish million. And then by the time we get to FY26, which is March 2026, we will actually be profitable a few months before March 2026 already from a run rate basis, and as of March 2026 from a annual, results basis. So, so this next financial year, starting April 25 to March 26, will be the first financial year where we'll be completely profitable across the globe, across all our investments, and then continue to be profitable from there on.
Okay. Well, FY26 is the year. Then, Bhavin, what next in terms of milestones? Perhaps a public listing in any of the markets you're in?
Everybody's asking that. So, eventually, yes, I think Zeta will at some point potentially look to IPO, and this might be, in India and the US, kind of, depending on what strategically makes sense. But you asked about, kind of more near-term goals, and there's, I think, really three buckets that we're focused on heavily. One is improving or increasing the number of logos that we currently have. We work with about, several dozen institutions, about 5 to 6 really large ones. I'm hoping to add, between, 4 to 5 other really large institutions across US and India over the course of the next couple of years. Our goal is to double our revenue from where we are. And our goal is to continue investing behind building our technology platform. So I would say any potential contemplation or consideration for an IPO is at least 3 to 4 years away. For now, we're kind of blinders on these objectives.
All right, an IPO is at least 3 to 4 years away. But Bhavin, before we let you go, what should we say is the biggest shift that we can expect to see in Zeta's business, say over the course of the next year or two?
Sorry, what is the biggest one?
A shift in business that we can expect to see from Zeta in the course of the next couple of years.
Primarily focused on kind of growing our existing client base and incorporating those new 25 million accounts into the platform. I think that's really where the primary focus is going to be.
Well, Bhavin, and we wish you the best with those plans. Thank you very much for your time here on Startup Street. It was a pleasure speaking with you.
Likewise, thank you so much for having me.
All right, on that note, we're going to slip into a short break. But on the other side, sustainable devices as a service platform Swish Cloud has procured about $4.5 million in a pre-Series A funding round. We'll speak to the company's founder about their growth plans ahead and this funding on the other side. Stay tuned.
Abhinav put up a valiant argument, a valiant battle here before the Apex Court, where he argued that he's not at all defending the comments or the conduct of Ranveer Alabadia, but rather he's citing multiple FIRs, that this is tantamount to an abuse of process. Also going on to say that not just Ranveer Alabadia, but even his mother, his associates are beginning to receive death threats, and that is something that requires the intervention, the protection of the highest court of the country. Now, there were two very clear halves to the hearing. In the first half, the Supreme Court absolutely squarely condemned the content as well as the conduct of Ranveer Alabadia. The Supreme Court said that he's been spewing out venom, he's been vomiting, and that this does not call for intervention or protection of the Supreme Court. Further, the Supreme Court went on to say, just because Ranveer Alabadia is popular, that is no grounds, that is no reason for him to take. The Supreme Court has not been sitting in some ivory tower. It has been, in fact, going through social media. It knows that these comments came not originally from Ranveer Alabadia, but from an Australian show, and that this is something that is not acceptable here in India, that such conduct which reflects on society, which reflects on his own thinking, is not something that the Supreme Court will look very kindly on. But having said that, the Supreme Court also said that we have constitutional courts in the country. It is not a kangaroo court. It is not a court of public opinion. And it is on that count that the Supreme Court, taking note of the fact that there have been previous instances of multiple FIRs against senior journalists such as Arnab Alabadia after that hearing. Number one, he cannot be arrested, at least as far as the FIRs that have been registered so far. Jaipur, Guwahati, Maharashtra, he cannot be arrested basis those FIRs. Further, the Supreme Court has also said that no further FIR.
Welcome back. You're watching Startup Street. Now, sustainable devices as a service platform Swish Club has secured a pre-Series A funding of $4.5 million in what is a mix of debt and equity. Now, Swish Club claims that its digital-first approach is helping businesses cut their annual IT costs by 40% and ensuring access to the latest tech with zero upfront investment. This funding is expected to help the company accelerate product innovation, expand its offerings, and drive revenue growth. To discuss this funding round and what lies ahead, we have with us today Dushyant Sapre, who is the founder and CEO of Swish Club. Dushyant, thanks very much for being with us here on Startup Street. Tell us about this $4.5 million funding round. Can you walk us through what this capital infusion is going to mean for Swish Club and how you'll deploy it?
Absolutely, Ritu. Thank you for having me here. So this $4.5 million that we have brought in essentially allows us to accelerate our product development. Number one, that's I think most critical, given that we, unlike a lot of other startups, we are fairly young. We are just 1 year old. So product development, enhancing and developing more and more technologies for our customers is very critical at this juncture. That's our number one use. The second use is, of course, now as we are getting more and more customers, we need to essentially have more people, star sales people who are coming in, engineering folks, engineering talent coming in, that allows us to essentially build and accelerate our product development efforts. And once we end up doing that, I think the third critical factor is expansion. Currently, we serve a certain set of customers that has been working very well, but our eyes are on the larger prize where we want to essentially become extremely valuable for super large enterprises of the country as well. So that's the total use that we're anticipating over the next 12 to 18 months on how we want to utilize the funds.
All right. You've also set yourself a target of reaching over 100 crores in annualized operating revenue run rate in the next 1.5 years or so. What are the key levers that are going to drive this kind of growth for the company?
So there are two factors over here that we are looking at. One is, of course, since we are talking about device as a service as a concept, it's a fairly new concept in India. Historically, you see most of the companies and most of the enterprises in India, they're very used to buying all their IT assets upfront. And what we see predominantly, sustainability and climate impact becoming a very big question mark for every company in their overall operating strategy. We feel that the time is now right for India also to adapt and adopt this entire new proposition where instead of taking goods, instead of taking these IT assets upfront, they can actually take it on a leasing or a renting model where they still get the latest technology, they still get the brand new devices, but instead of paying it upfront, they are paying over a period of say 2 to 3 years. Now, coming to the part around the software part, I think software is where we feel we'll end up creating an extremely unique, differentiated feature for the customers. What we have seen so far over the last 1 year, every customer that we have spoken to is not only looking for devices, and gone are the days when device itself was good enough, right? And what we now see is that customers are looking for devices and are also looking for the software to come in together, which is why what we have done is we have built a lot of software in-house and bringing asset management portal, mobile device management, device cleaners, all bundled into one, which essentially takes away that entire headache of managing multiple partners.
Well, speaking of building products, we understand you're looking at an agentic AI-powered device telemetry product, which you're looking to launch in April this year. What exactly is this product and what is the kind of additional revenue this is going to unlock for the company?
Yeah, that's a great question. So I think the way we see it, given AI has now become available and has become mainstream, we started looking at what can we do more for our customers in a much more fundamentally different way. And one of the big challenges that we see is that this entire concept of support, this entire concept of employees in different companies, I'm sure you and I have gone to our IT guy at some point of time and said, hey, look, my laptop is running slow. Can you do something about it? And we felt that what can we do fundamentally we can change so that this question does not exist ever. And that's where we see that we want to essentially automate and eradicate this entire concept of L1, L2 IT support that is given by companies to their employees. In order to do that, we have been able to build this telemetry product. What this telemetry product does is it essentially automates the entire support that is required for the employee. At the same time, it is able to help IT visualize and have a clean observability, a clear observability as well across their entire asset base to know which devices are working well, which devices are actually having an issue, and what kind of hardware is not functional anymore. At the same time, it also is able to create a unique score which helps CIOs essentially decide which devices I need to change and by when. Once you bring in all of this together, thanks to the power of agentic AI coming in, we feel we'll be able to help companies cut on their capex and secondly automate the entire L1, L2 support, which basically means this entire team, the IT teams will be freed up and they'll have more time to essentially focus on business projects.
Sure. Quickly, since we're running out of time, surely India is not the only, country where you're going to find clients for this kind of a product. Are you looking at geographic expansion outside of India? What are the markets you're eyeing, if at all?
Yeah, absolutely. So see, I think given that we are all coming from India, we're based out of Bangalore, our first focus, fortunately, has been the fact that most of the larger organizations today have their IT teams based out of Bangalore. So that's a great advantage that we have in terms of getting us started from a telemetry standpoint. But gradually over time, we are definitely seeing that there are enough customers who are now calling us and asking us, can you expand into other adjacent markets? So we definitely see, and our eyes are there on Middle East and Southeast Asia at some point of time to expand. From a telemetry product standpoint, I think the feedback that we are getting from our pilot customers is that this can actually work across the world. So we haven't taken a conscious call on what exactly we are going to do, but the picture will get clearer closer to the launch and over the next 3 to 6 months.
All right, and we'll touch base with you in 3 to 6 months when that picture does get clearer. Dushyant, thanks very much for your time here on CNBC-TV18. It was a pleasure speaking with you.
Thank you so much for having me.
All right, moving on. 2025 will be a steady year for startup investments as valuations correct and activity picks up. That is a word coming in from Gopal Jain, who's managing partner at Gaja Capital. Now, he was speaking to my colleague Shilpa Rani Peta on the sidelines of the IBCA conclave, where he said he's betting on financialization, digitization, and the discretionary consumer space for this year's themes. Take a look at that conversation.
I think 2025 will be another steady year. But if, as valuations correct, there could be a pickup in activity.
Right. And where do you see the pickup happening in terms of activity? What are the sectors that you're really betting on?
There's some very powerful themes in India. Long-term secular trends around financialization, digitization, discretionary consumer, B2B software. There's a significant amount of excitement about these trends.
Right.
We might have some ups and downs in terms of pace and trajectory, and there is a significant amount of capital that's interested in these opportunities.
Right. In terms of the capital also, over the past couple of years, the main theme that we're seeing emerging when VCs are writing their checks is sustainability when it comes to the business, a clear path to profitability, right? How are you looking at this year? Have you seen how a change in how founders are also doing business when they come to you to pitch also for capital, right? Are you seeing a change in focus in founders, and how are also VCs looking at companies when they're coming to raise funds?
There's been a significant shift since September 21 in the global world of venture capital. Companies have gone back to basics and a focus on what you describe as sustainability and what we see as unit economics, the ability to grow without raising capital, a focus on consumers rather than investors.
Right. Fair enough. And, do you see more in terms of exits? Do you expect more primary market IPOs, or do you see more acquisitions? How do you see that panning out this year? Where do you see the larger opportunity? Because, even the larger conglomerates we're seeing are looking at smaller companies. We saw HOL buying Minimalist. We saw ITC buying Prosuma. Do you see more activity on that end, or do you believe IPOs will continue to rule the trend here?
These are not two things at the cost of each other.
Okay.
And the Indian IPO story was a spectacular story last year. We'd all love for that to continue. It's created a significant amount of exits for the industry. M&A needs to pick up. Large businesses in general in India, but also global companies. So M&A can certainly pick up speed, and we're all hoping it will. But right now, the expectation is that this IPO market will continue.
Right. I mean, even global investors, how are they looking at the Indian market currently?
Many global investors look at India through the lens of emerging markets. Emerging markets is right now struggling relative to, let's say, the US. But India independently is an increasingly strong story. And the India private equity story is no longer about global investors. It is also about domestic capital. And the interest domestic capital has in the India private equity alternative story is becoming bigger by the day.
Right. But because, earlier in one of the panels, there was a discussion about how India is a pricey market. What is your view on that?
Well, since GFC, India has never been a cheap market except for 2 or 3 very brief occasions. And that's how India has been. It's always been a year or 2 years ahead of fundamentals.
Right.
I think we as Indians are very optimistic people.
Okay.
I don't see that changing because we have a very long runway, which is not very difficult for people to see. We are a positive, forward-looking set of people. So corrections in India in the last 15 or 16 years have been far and few, brief, but mostly the markets have been a year to 2 years ahead of fundamental.
All right, Gaja Capital there, quite positive on the India story. On that note, it's a wrap on this edition of Startup Suite. But stay with us, more news and updates will come up on the other side.
The India's Got Latent Controversies concern will be filed against the person in question, which in this case happens to be Ranveer Alabadia. But there are some tough conditions that the Supreme Court has imposed. Number one, Ranveer Alabadia will appear as summoned by all of these authorities. Number two, Ranveer Alabadia will cooperate with all these investigating agencies, will not interfere, will not interrupt. Number three, he will not do any further shows in the interim. That is something that the Supreme Court said as an afterthought, but very clearly pointed in the direction of Abhinav, in the direction of Ranveer Alabadia, that no further shows for now. And also importantly, has put restrictions on overseas travel for Ranveer Alabadia, saying that you will need to deposit your passport at the local police station. So strict conditions being imposed on Ranveer Alabadia. But nonetheless, the Supreme Court, after that flurry of condemnation, granting that protection to Ranveer Alabadia.
What changed to make quick commerce a high conviction bet?
2020, when we were sort of raked through the coals for ruining a perfectly good food delivery company and like bringing their stock price down, I think we had a lot of conviction that this will work.
When Dipi puts out a note to shareholders to say that this is actually going to be the engine of growth over the next 10 years, how does that make you feel?
Over the years, we've gone through enough to not sort of be either in the vindictive zone or to be in the celebrity zone. I think we try to stay very stoic about it.
how are you looking at the race that's currently on?
A lot of those bets are being taken for sector-focused quick commerce companies. And they will probably do a better job for those use cases than we will.
Freezers and heaters, you've got Dyson hair dryers and so on and so forth available on Blinkit as well. Are there going to be any limits at all?
Come March, people were searching for like air conditioner 15,000 times a day. We didn't think that, people would be searching for, car accessories and car repair things on our platform, but they do.
Doing the deliveries yourself, what did that teach you?
The most love that we get is when parents forget to print out something for their kids the next morning, right? And then they use a print service. Somebody forgot their hair dryer at 6 in the morning,
yes.
right?
Yes, me. So what are the 4 or 5 things that you're prioritizing today?
We are very keen to solve the problems around pharma and access to, timely access to medicine.
There is going to be a discounting war, and what does that mean as far as profitability is concerned?
We are a way to for the customers to live a better life. So we can't be gouging them for pricing, like we said, right? We can't be like, hey, you pay 20% extra just because I'm coming to your house in 10 minutes.
Kunal Kamra has been tweeting about the landlord mentality of companies like yours.
The gig economy in India is actually not a lower cost structure. Most of the gig economy workers in India actually earn higher than they would if they were actually making wages, like as a full-time employee.
Let's get into Bistro, because this is the latest in the chapter of love and hate between you and the Restaurants Association.
Not me. I think this is a matter for.
Do you cook?
Yeah, I do, actually.
In 10 minutes?
I think I take a lot longer.
How different is Albinder Dinsa today from the 22-year-old version?
I think I was fairly nerdy, so I thought I would be an engineer of some sort. Stopped worrying about who I am as much as,
just getting the job done.
And
enjoying it while you're at it.
Yeah, I think that's way more important.
Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. There's not a lot that people agree on these days, but there is certainly a consensus call that worked through 2024. And that was the fact that quick commerce in India has been a great disruptor. It's been a game changer, not just for the commerce business or digital commerce business, but it has changed customer expectations, fulfillment expectations across different sectors and across different categories. What will the future look like? What will be the lines between quick commerce and e-commerce, or is it going to just be one? To talk to us about all of that and more, we have with us the man who is the current market leader in the quick commerce wars, and these wars are getting very, very competitive. Albinder, thanks very much for joining us here on CNBC-TV18. It's great to have you back on Young Turks. But, that's what I want to start with. I mean, the degree of skepticism. The skepticism was founded on the fact that this was not a model that worked. It was a model that you tried a decade ago in 2015 with Grofers. It didn't take off. And suddenly, in 2022, things changed. I want to understand from you, what changed to make quick commerce a high conviction bet?
So I think when we started in 2015, the challenge was that the ecosystem of customers was not mature enough. There were not enough customers in the top cities to support a very hyper-local focused business. The other issue was that even though the customer adoption was there, the customers liked the service, there was just not enough of them. The second issue was that there was not enough capital to support a large scale build out, especially in our cities, which can be very expensive if you're going to build out infrastructure, if you're going to build out, large scale warehousing. A lot of the investor capital wasn't there because of the fact that there were not enough customers. And the third part was that, we really suffered in 2015 from a lack of last mile support, right? Which over the years after 2015, because of food delivery and because of horizontal e-commerce and a number of other players, there was enough of a gig economy ecosystem which got created, which brought a lot of predictability to last mile fulfillment in especially the large metros. And I think when we started again in 2020, when we opened the dark store again in July of 2020, that was way more smoother than what it was 5 years before that, right? That was because a lot of these problems were solved. There were now more customers that were exposed to e-commerce in one shape or form, whether through horizontal commerce, whether through cabs or food delivery or travel. So they now were transacting online. There were more customers which are transacting online. Of course, there was also, because there were now more customers, there was also the amount of capital that you could also get from the market was higher. And because food delivery in large part had solved the gig ecosystem problem for last mile delivery, it was just easy for us to also tap into it and say, okay, we will just replicate that and start another hyperlocal business all over again. So I think these are the three large factors which in 2020 were very different from what it was in 2015. And then, we saw that, because of that, we had the conviction to just sort of pivot the entire business towards quick commerce. And this time it worked, right?
And as I pointed out, I mean, this has really been the story of 2024. Did it take you by surprise as well? Because it certainly took everybody else by surprise. The strength, the pace of acceleration, the customer love and adoption. Did it take you by surprise as well?
Not really. So, like I said, right, between 2020 and 2022, when Zomato acquired us, right, we had already gone through this journey of knowing that this is a way better product market fit in this model than what we were operating in as Grofers, which is why we also changed our name, right? So we had seen that journey throughout, right? So in 2020, when we were sort of raked through the coals for ruining a perfectly good food delivery company and like bringing their stock price down, I think we had a lot of conviction that this will work, this should work, unless we really go out and mess this up. Thankfully, that didn't happen. And I think 2024 was just the acknowledgement of the market also realizing that, okay, this is different. And this is actually like, something which might work over here even faster than e-commerce did in the country.
So how does it make you feel today? You just talked about the fact that you were hauled over the coals, so to speak, when the Zomato acquisition of Grofers took place, and then you, of course, became Blinkit. But today, when Dipi puts out a note to shareholders to say that this is actually going to be the engine of growth over the next 10 years, it's going to outpace the core business. How does that make you feel?
I think, I just have a lot of gratitude for the fact that, we are here, we get to do this. It is a very interesting business to build. I think over the years, we've gone through enough, as a team, we've gone through enough, highs and lows to not sort of be either in the vindictive zone or to be, in the celebratory zone. I think we try to stay very stoic about it, that, this is just, we should just be grateful that,
we're still here.
We're still here.
And we're doing what we love to do.
Yeah.
Well, so let's talk about where things are today and what the future looks like and what potentially quick commerce could evolve into as far as India is concerned. Let's start by talking about the headroom for growth from here on. I mean, is this still over the next 5 years or so likely to be a top 10, top 20 city business? I mean, what are we talking about? I mean, there's all kinds of addressable market numbers. What's the number or what is the assumption that you're working with?
I think our assumption is also changing. So over the last, 2 years, we've been progressively opening newer cities. And we're finding that there is a different fit for the business model in smaller cities. We are actually building a supply chain for a lot of products, which traditionally has not reached, let's say, the 200th largest city in the country, right? And that is finding acceptance overall because I think consumption is going up. There is more affluence in our tier 3, tier 4 cities. So there is a demand for, better products and better services to be available there as well.
So how different are things for you from Blinkit's perspective when you deal with customers in Delhi or building out the supply chain in Delhi versus building it out in Alwar or Vellore?
So I think there are two parts to this. One is, what is the customer, how is the customer different, right? So what we are realizing as we go into the smaller cities is that the audience is a lot more, a lot more older. The majority of our audience tends to be slightly older. Their demands are slightly different, right? Whereas in the metro cities, we are seeing that our customers are skewing younger and younger as more of them get to work, they start working. This is like a more convenient way for them to deal with it. The supply chain part, I think that has been a revelation because traditionally a lot of the supply chain solutions that were built for our smaller cities. They were built on the back of the sale of FMCG products.
Right.
And that is a supply chain that has been operating for 70, 80 years.
Yeah.
Right? But that also had its limitations in what breadth of products and what kind of products could actually flow through that pipe. Right? Now, when we are going and we're building a new supply chain, which is a lot more sort of open for anybody to be able to access, then we are seeing that penetration for products which have never reached those places because of supply chain restrictions. Now, they are actually finding adoption over there, right? So D2C brands have a higher salience in smaller cities because those are products that consumers would like to consume.
But didn't have access to.
Right. Their only access to them was horizontal e-commerce.
Yeah.
So whatever was the restriction of horizontal e-commerce, right? So for example, if it's a 60 rupee soap, chances are you're not going to be able to get it on horizontal e-commerce because the shipping cost would not be justified.
Yeah.
Right? So those kind of use cases suddenly open up when we go and actually build the supply chain.
So, typically now, given the expansion plans that you have for yourself, how do you see the mix changing as we move forward between grocery and staples and non-grocery and staples?
I think the mix has, grocery I think is still a large consumption basket, right? So the mix doesn't change that dramatically as people would generally think because that is still the largest consumption basket. You would always buy grocery products more than you would buy any other products in the market. So I think the mix change is there. Like, the other products salience would increase, grocery salience will go down, but it is not super dramatic. Right? It also happens at a very, very, very slow pace. Right. But what's interesting is that, we have to build solutions in quick commerce for a lot of different use cases, right? We started with categories like electronics and beauty.
Yeah.
But if you exit from here, you will today see like a large order fleet, which is delivering everything from like geysers, air conditioners, heaters. We launched laptops and all of these things. All of these are like different supply chains that you have to invest behind and build. Right? There's an entire back end which makes it possible. And I think we will have to build these capabilities in order to be able to give people an opportunity to sell their products on these supply chain rails. Right, because now we allow pretty much everybody to now come and list their product and sell. But if we don't have the right supply chain to be able to cater to them, then they will not be able to sell their product.
So let's talk about whether there are going to be any limits that you put in terms of what will go through these pipes. You were just talking about geysers and heaters. You've got Dyson hair dryers and so on and so forth available on Blinkit as well. Are there going to be any limits at all that you foresee in terms of what goes through these pipes?
I think there will be. Right, our point of view is that a lot of the high assortment categories are not something that we will be able to do that well. But again, we learn more as we walk and we see what the world is doing with the product that we've built. Right? Because a lot of the time the customers tell us that this is what I would like in 10 minutes. Right? And that is our cue to pick up that in data and then say, okay, let's
So what are they telling you today? What would they like in 10 minutes that you're not already giving them?
I think every month it is different. Like we get a lot of these empty searches, which we didn't think. For example, last year was actually when we realized that we need to do air conditioners because we had decided in January that air conditioners are just not something that we'll be able to sell. And come March, people were searching for like air conditioner 15,000 times a day. And all of a sudden we were like, okay, we should have done air conditioners. So at least let's do coolers. So we did coolers last year. Hopefully this year people will throw up something new altogether, right? I think our latest addition in the pipeline has been automotive, right? Which is, we didn't think that, people would be searching for, car accessories and car repair things on our platform, but they do. So now we have an entire selection of them. I think a lot of these products just come out of like what, the customers tell us that, okay, I would buy this if this was available on Blinkit. And I think our job is to make sure that we make it available as soon as possible in the right way, with the right experience, all of those.
India and the Gulf Cooperation Council, we are at this moment negotiating about having a free trade agreement. As far as Qatar is concerned, both sides are exploring the possibility of signing a free trade agreement in future, and that was one of the discussions that took place in this round of talks. As far as the strategic partnership establishment agreement is concerned, it actually elevates the present state of bilateral relations to a strategic level. What we are looking at is deepening cooperation in the fields of trade, energy, investment, security, as well as in the regional and international fora. As you know, within the GCC, India has got signed strategic partnerships with UAE, Saudi Arabia, Oman, and Kuwait.
A lot of the skepticism of the business has been like, look, let's not talk about innovation and all of that. There's no real innovation here. It is a labor arbitrage game that's actually playing out. And this continues to be part of the conversation or part of the criticism or the argument that is put forward. How do you respond to that? And, you know, there is some legitimacy to the labor arbitrage argument. How do you see that changing as well as this business grows, as more and more competition comes in and there is an escalation, so to speak, of the landscape?
See, I think let's talk about the flaws that people point out, that maybe it's only about labor arbitrage, which we believe is not the case. But I think it is still important to understand that it is not about labor arbitrage either, right? I think if you look at the gig economy in India in general, right, it is different from what it exists in the West. The gig economy in India is actually not a lower cost structure, right? It actually solves for very different issues, right? The nature of employment, the nature of flexibility. But if you look at sort of, the wages or the earnings that these partners would make against the wages that they would be able to earn, most of the gig economy workers in India actually earn higher than they would if they were actually making wages, like as a full-time employee. And I think, so that is important to understand.
Yeah, but flesh that out for us, because again, there's a lot of, and it's a visceral issue, and it gets people sort of excited about it as well. I mean, you I don't know if you saw, but Kunal Kamra has been tweeting about the landlord mentality of companies like yours. Now, how do you address this? And when you talk about the fact that they are making more money than they typically would have had they been working in a regular job, what are we talking about? What are the numbers?
So I think normalized, if I'm not mistaken, like our latest number was somewhere around, like normalized for the same hours that they would have worked in a job. I think our partners take north of 25,000 rupees a month. And I think that that number will change depending on how the rest of the employment ecosystem changes, right? I think if you look at a ecosystem where you have, millions and millions of people who are signing up voluntarily to become gig workers, that is information and that is data, that this is something which actually works for them. Now, there's an argument that could be because of lack of opportunity.
Sure.
If that is lack of opportunity and that solves, then of course,
And that's not your problem.
That's we are playing in a market, right? So if let's say there is more demand for workers in regular jobs which are not gig work, I think we will have to pay more.
Yeah.
Right.
But do you foresee having to pay more given how competitive it's getting? I mean, now with Amazon and Flipkart and Big Basket and just about everybody getting into the quick commerce space, is the cost of human capital likely to go up significantly?
I think it is likely to go up, but not because of competition within the space, not because of competition within gig work, right? So I think if we have more manufacturing jobs come into the country, right, we have more services jobs come into the company, we have a higher skilled workforce which is actually able to find different opportunities. I think those are much larger factors that will cause us to have to pay out more to attract more people to come and do the gig work.
Talking about the cost of services going up, and again, that is something that, that periodically there's outrage on social media about what is happening as far as the platform fee is concerned, what's happening as far as the convenience fee is concerned, and so on and so forth. How much room do you believe that you have to be able to expand that further, to be able to get the consumer to willingly pay more for your service?
I think.
How much elasticity do you believe you have there?
See, we always believe we are at zero elasticity, so we have to do a better job to basically be able to ask the consumers to pay more.
Yeah.
And I think our learning over the last few years has been that if you build a service which is reliable and you build a service which actually adds value to the customers, then they will pay, right? You can't just arbitrarily charge anything, right? And I think to do that, our services have to get better, right? Like we have to be able to deliver a wider assortment of products in a certain timeline, make sure that they're always high quality, make sure that they're always delivered on time. A lot of these things, if we keep doing better and better, that is when customers pay us more.
Yeah.
And if you look at the customer behavior also, right, customers will happily pay for a service which adds value to their life, right? Because they will find different reasons. We were talking about tier 3, tier 4 cities.
Yes.
A lot of the older population which transacts with us, we never thought that, they would also be willing to pay for delivery. But they really rationalize it. They don't want to take their two-wheeler at their age and then drive to to get simple products. They're like, I'll happily pay 15 rupees to just save that effort, to save the petrol. So I think consumers are very rational.
I know you've been spending time actually going out there and doing the deliveries yourself. What did that teach you? That process of actually being there in the dark stores, packing and then going out there and delivering. What did that teach you?
I think the first time that I did it, I think my perspective on what our business means to customers changed, right? And it is good and bad, like most things, right? Like the good is that, of course, customers love us because they see us as an upgrade to their lifestyle, right? But the reason that we are an upgrade to their lifestyle is because the other friction in their life is just so high.
Yeah.
Right? The inability to sort of, be able, there is so much, we were talking about traffic today, right? That is a feature of everybody's everyday life.
Yeah.
If you are a working mother of two and then you have a job, you have to go back home and you have to take care of the children, right? There is just so much coordination and friction in everyday life. If there is a service which takes some of that anxiety down, that, I forgot something, right? I think the most love that we get is when parents forget to print out something for their kids the next morning, right? And then they use a print service. It is a thing to see that, suddenly the anxiety when it goes away, you were talking about, somebody forgot their hairdryer at 6 a.m, right?
Yes, me.
And that when you deliver that product, right? And that customers, you see the anxiety melt away on their face.
Yes.
Right? Oh no, I was in panic and all of a sudden, okay, this is here.
I'm not panicked anymore.
I'm not panicked anymore.
Yeah.
And that actually has an impact on their life quality. And I think that changed our perspective. That changed my perspective on the business. That our business is actually, we're not in the business of selling things. Right? We're in the business of sort of making sure that people can live better lives in our cities. They wouldn't be less anxious.
From your own personal experience, what are the pain points that are yet to be addressed? Where can you take out the friction from that you aren't already?
I think the most audacious one that we've taken on is the ambulance service, right? Because we want people, whether they're in large cities or small cities, that we want to play a part in making their everyday lives better, everyday lives easier, right? And I think, that's how we come up with problem statements, whether it is a print service or whether it is this or doing a lot of the other products which we do. And I think ambulance was sort of right on top of that list. But the challenge of getting it off the ground has been one that, it is a very, very disaggregated sector. It's not been really formalized in a certain way. So wherever we initially wanted to do it in partnership with a lot of other people, But we realized
you couldn't find the other people.
We found the people, but we realized that they don't sort of adhere to the level of safety and standard and that we would need. So unfortunately, which basically meant that now we have to do a lot of the heavy lifting ourselves.
Who are you talking to at this point in time to ensure that this does get the kind of momentum it requires?
So I think a lot of it is, talking to the healthcare providers, which could be, the services that provide paramedics, talking to the folks that provide a lot of the equipment which goes into our ambulances. And the third is obviously the primary healthcare, which is, hospitals, talking to them about, how will, from everything from like getting patients to be able to offload them in a timely manner, to also be able to relay information to them in advance that here, this case is coming in with so-and-so complications so that they can be prepared ahead of time. So we're doing all of this.
Yeah, so what are the 4 or 5 things that you're prioritizing today, which could potentially be engines of growth over the next 2 to 5 years?
I think the largest ones where we're working on, apart from the ambulance service, we're also trying to sort of democratize the access to our supply chain for anybody who wants to sell. And I think that's a very different...
The marketplace.
The marketplace itself. And I think that has the potential to change a lot of the way that we think about what quick commerce is going to stand for 5 years down the line for the end customers. We are very keen to solve the problems around pharma and access to, timely access to medicine. But it is
in a space which continues to be grey, where you continue to be litigated in court between the Chemists Association and the online pharmacies. Is this legal? Is this not legal? Is that really a space that you're looking at?
I think we, because of all of these complications, it is something we've not gotten into. But we feel that it is a worthy cause to try to figure out if we can do it well, if we can do it while making sure that access to medication is available in a proper way. And I think we're just like what we are realizing a lot with the ambulance service, right? Like I think over time the rules of engagement for everybody in the sector are going to become more clearer and equal. And I think when that happens, we also want to be ready to be able to roll out a service like this.
Okay, so that's 2.
There's Seller Hub. There is this. We're working on fashion, which I don't know if it'll go anywhere, but that would be an interesting space to also explore and figure out whether we can build a quick commerce business into it. Of course, we have also launched Bistro, which is essentially food in 10 minutes, and that is something also very interesting and exciting because it is. I never thought I would know so much about food science that I do now.
I'm going to talk about food science in just a second, but let's get into Bistro because this is the latest in the chapter of love and hate between you and the Restaurants Association.
Not me. I think this is Zomato folks.
So now you're in that space as well.
Yeah.
But and you've come out on Twitter and said, look, this is different. It's not Zomato. It's not Blinkit. It's outside of both of them, and we're not really taking on either the data or partners who are working on either of those 2 platforms. But how do you see this? How do you see this evolving? And do you believe that in a way you kind of lose out on the love of this ecosystem that's so necessary for Zomato, and is that going to be a challenge that you foresee?
See, just like everything else that we've done when it comes to the kind of products that Blinkit is able to offer or the services we're able to offer. So 2021, we had actually launched fresh food on the platform on Blinkit, right? We were still called Grofers at the time, but we had launched fresh food. And we had seen a decent enough response, but again, that was just sort of the regular model of, some seller was coming to the stores every day, keeping, 5 or 6 of their products, and then they would sell out or they would take them back, right? But the quality of the product, what the consumers were expecting, that did not align. So we didn't scale it up. We basically sort of let it be. But that has been a question that we keep getting asked from customers. Like we see those searches coming in, right? We see those customers looking for
10-minute food.
Right, which when you think about it, the same reasons that quick commerce works for packaged products or for all of the other categories is that the access to the customer, the hassle of actually like being able to, get diapers in 10 minutes.
Yeah.
That is a problem that we solve for the customers in the package space. When it comes to food as well, that same problem exists.
Yeah.
Right. That, what is my best way to sort of get something in a hurry? Is it going to be good for me? Is the quality going to be good? Is the taste going to be good?
Yeah.
So we believe that sort of quick food delivery is sort of the same kind of a platform that like a QSR or a food court would be for, the offline world, right? So when we started thinking about the problem, the solution was obviously that now you actually have to build out the supply chain, like we have to do it for quick commerce, right? Which means that we can't really sort of say that, okay, make something a day before, freeze it, and then microwave it and send to the customer.
So that's not what you're doing.
That's not what we do, right? I think what we're trying to do over here is, what is the best way to sort of put together this food, right? So that it, the last step is basically not going to be more than 5 minutes, but it still retains the goodness of the ingredients, it still maintains the goodness of the taste, right? So like a very simple example is, right, if you basically sort of make rajma and like keep it overnight, right, it is not going to taste the same tomorrow, right? What we have to, the challenge for us is how do we put that dish together so that it feels like it is freshly made rajma.
So what are you doing? What's the secret sauce?
So they come separately. There are like 4 different ingredients which are prepared in different boxes. They're like freeze dried, they're frozen, and they're like shipped to the front end.
Right.
And at the last moment that is when you're actually putting those ingredients together.
So you will keep I would imagine the assortment will be limited on this just so that you are able to consistently deliver on the quality.
Yes.
Yeah. So how do you break bread now with your friends in the NRAI and get them to sit at the table with you on this issue?
I think for me the job is a lot easier. Like we are very open to working with anybody that wants to sort of put their dishes onto the platform. Our objective function is to solve this for the customer.
So that's number 3 or 4.
I think that was 4th.
That was so. What's the 5th?
What is the 5th one? Actually, the large-scale supply chain, the intra-city supply chain, that's one of the most challenging supply chain problems. Like I used to think that solving large-scale warehousing for grocery products in India was a hard supply chain problem. But I think solving for this intra-city transit for a very, very large assortment of products, close to like 28,000 products, I think that is going to be, that is one of our toughest problems, because now we are investing for the first time, I think in our life, we are investing sort of 5 years down the line, that this is what our network and our warehousing infrastructure is going to look 5 years down the line.
So 5 years down the line, what is that going to look like, both in terms of warehousing, in terms of the number of stores, in terms of the number of cities that you operate in?
So I think we don't have that good an estimate of what the scale of the business would be, but we have to invest ahead of time in basically saying, hey, we are going to have some sort of large-scale warehousing in this region as well. Right, and that is going to be the basis of sort of how we set up the other locations, right? So we are essentially like, maybe we will set up 2 out of the 4 locations that we say today, but we know that in 5 years, all 4 of those warehouses are going to be there. So the network that we have to build out for that is what the call we have to take, and the work we have to do today, that this is what the network will look like 5 years out.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Mood is definitely a lot more downbeat, a lot more.
The aspiration on the SKA side, whether it's 25,000 or 28,000, and given what the data is telling you today, what could we be talking about in terms of what goes through the supply chain for you?
I think in terms of categories, or you're talking just in numbers?
Yeah.
I think